yesterday. European futures today pointing lower by 0.2%. We're watching oil, of course, the energy, given that oil is a little softer in the session today. Tech as well. TSMC didn't perform very well over in Asia in terms of the stock performance. FTSE 100 futures currently flat. DAX futures currently probably lower by 25 points, pointing lower by 0.1%, Anna.
Let's talk about some of the individual stocks in focus and one sector for you, Tom. Let's go for Alstom first. So the train maker, the ADRs over in the States were substantially weaker yesterday. Shares expected to be weaker today after the French rolling stock manufacturer withdrew its guidance for the full year. So we're watching that one. Watch telecom stocks as well on two fronts. Firstly, we've got M&A in place, so a consortium including Bouygues, Iliad and Orange. They've entered exclusive negotiations to buy SFR, so there's consolidation, but there's also guidance from Ericsson in the telecom equipment space that looks pretty negative on costs. Now, Delivery Hero also in focus as well. Uber raising its Delivery Hero stake so we'll watch that one, basically. Guy, at the start of trade. Keep it simple.
Absolutely. Let's keep it simple this Friday. That seems like a very good piece of advice. Okay, right. Let's show you some numbers. Let's get going. FTSE 100 is absolutely flat. I think there's a note out from BNP Paribas this morning on the oil stocks, to keep an eye on that as well. You've got some of the names that Anna's just been mentioning in terms of what we're going to see in the action in the telecom space, telecom equipment space, and also maybe in some of the industrials. Stock 600 is down by 0.2%. That tells me that actually the action is elsewhere outside of the FTSE 100. We'll see how the DAX and the CAC both trade this morning. The CAC's flat. The AEX is down a touch. We'll see what's happening there. The IBEX is barely budging. So it feels like after this massive week that we've seen in terms of equity markets and the moves that we've seen, that maybe Europe is taking a little bit more of a cautious approach this morning. A lot of strategists are out there talking about the fact that actually it's going to be hard to see upside from here for European equities. And maybe today speaks a little to that. We've seen a big run back. Do we continue it? A little bit of caution maybe starting to creep in this Friday. Tom, what are we seeing on the sector story?
You've got media at the top of the list right now, up 0.5%. It was a strong session for the sector yesterday. Travel and leisure, which was under pressure yesterday on concern about the airlines and jet fuel and what's happening in the Middle East. Currently, that sector is actually up 0.2%. Majority of sectors in negative territory, but to your point, this looks like a European market that is somewhat flatlining. The biggest losses coming through for autos right now. That sector down 1%. Basic resources also off by 0.5%. You talked about the AX over in the Netherlands. ASML is down a little over 1%. It's been a choppy week for the maker of lithography machines. It's lower right now, ASML, so that's a drag over on the Dutch index.
Yeah, we keep in mind when we see autos weaker that Mercedes is ex-dividend, so that's an added complexity. But we don't have a huge amount of direction coming through then at the start of trade, do we? We're down 0.1%. The CAC 40 is pretty flat. Diving into some of the individual stocks that we were watching, some of them are not open yet. That's the case with Alstom. That is not yet open. Ericsson is open and it is down by 4%. This on the back of the warning basically about the rising cost of chips, and this is a story that could have impact on other buyers.
Yeah, it's had a good run. I think you just need to kind of see that in the context of having a good run. We are seeing a little bit of turbulence maybe, but some of these stocks have done well as they become more AI oriented. And Ericsson certainly has been one of those.
Up 40% prior to today, over 12 months. Some of the other individual names that we're looking at this morning, so I mentioned ASML, currently impairing some of the heavier losses at the start of the session, currently down 0.8%. Ericsson is one amongst the biggest losers, as we've mentioned. Some of the energy space, RWE is down close to 2%. And then in terms of some of the gains, Mercedes up 1.7%. Interestingly, gilts opening as well, Guy.
Yeah, we're seeing so yields are generally higher this morning across Europe. So 1.2, 1.3% in terms of what we're seeing at a 10-year tenor for a lot of Europe this morning. The UK 10-year is up a little bit more than that as we start to price in maybe some of the risk around Keir Starmer's future. You're seeing maybe a bigger move at the front end, where yesterday actually we were kind of seeing yields coming a little bit lower. So sort of repositioning of the curve. But generally, gilts are underperforming this morning, and that would seem to point to maybe a bit of a sort of political story beginning to concern people.
Yes, one we continue to monitor, of course. We'll get an update on that later in the programme. Let's step back, though, think about where we are on these markets as we bring another week to a close. Christian Müller-Glissman joins us, Head of Asset Allocation Research over at Goldman Sachs. Christian, really nice to have your perspective on the programme today. So we've seen an incredible rally. Guy was talking about some of the stats that really stand out, the strength of these markets, the rebound we've had has been quite incredible. We look as if we're on track for 3 weeks of gains of more than 3% on the S&P, and this just doesn't happen very often. Is this sensible? Does this look proportionate to the situation on the ground?
Yeah, no, I think you mentioned already, we've been in this fast and furious recovery phase, kind of news flow, relief, and it's probably been exacerbated a lot by technicals. I think we look at systematic investors, options positioning, hedge funds. There's been a lot of de-risking throughout this period, and there's a lot of forced re-risking, so that has contributed. Now we're all stepping back and trying to understand if this rally can continue. And I would argue that normally there's like 3 reasons why you want to buy a dip. The first reason is you get a major valuation or positioning flush out, and we haven't really gotten that this time around. I actually find that a lot of the investors we speak to outside of the fast money have done very little, which is not a bad strategy around geopolitics because it's so difficult to get the twists and turns right. The second reason why you would buy the dip is a second derivative improvement in the macro data so that things don't get worse. But we're still in the process of things getting worse. We're still learning about supply disruptions, the inflationary impacts. Seems a bit too early. So then we come to the third reason why people would buy a dip. And this is a lot linked to whatever got you into trouble getting better. And I think that's what's at the core currently of this relief rally. Obviously, oil prices, energy shock, Middle East war. And I find that we're going into the deadline next week and we don't have necessarily incremental information compared to the fact that they're talking, so markets are taking a bit of a step back.
Are we seeing a mismatch, though, between different assets? I mean, the fact that we can be so much higher on stocks and we're still, what, $30 higher on oil prices. And that's not the physical market. The physical market's way higher than that. But is there a disconnect between what those 2 asset classes are assuming about the economy from here?
Yeah, there's multiple disconnects. I mean, first of all, you have the energy prices not coming down that much yet. You have the equity market having rallied a lot, but also what we found is credit has lagged versus equity a bit. So you start to see that there's much more divergence. Why is that? I think the equity market, first of all, is always the fastest moving asset, the one that might actually have most systematic investors as well. Systematic investors don't trade credit as a macro market. They trade equity as a macro market. That might contribute. The other thing is obviously that equities are more exposed to AI. And AI has been an absolute steam train continuing to deliver good results. Semiconductors were mentioned earlier. So from that perspective, that helps equities maybe on a relative basis a bit. But I think one thing is important is the rates market. So equity and credit, both of them have seen relief. Equity maybe a bit more. But the rates market has not retraced as much. And as was mentioned earlier, actually this morning is selling off a bit again. And in order to keep this recovery, this rally resuming, I think we need central banks to shift back to a bit to where we were before. We need the rates relief to come in.
Yeah, and we heard from Scott Bessent this week saying stocks live in the future. That was his reason for it. But yeah, talking about AI and talking about the strong recovery we've seen there, it feels like that. Either that or the clouds.
And so that's really interesting. Guy was noting, obviously one of the dovish members of the Fed, at least for now, calling for 4. Was it 4?
Stephen Myron said about 3 or 4 rate cuts this year. I think he's kind of.
Then we've got Kevin Walsh waiting in the wings, and we don't know what the confirmation process is ultimately going to look like. But just to kind of drill down on this, this equity market rally cannot continue in a sustained fashion unless we get central banks pivoting back to being dovish.
Well, we still have very healthy earnings growth, and that can always support equities a bit. Like, look at the US, we look at earnings growth of close to 15%. In Europe, it's a bit lower, but that means the baseline trend for equities is up as long as earnings are growing. Yeah. But then the question is, can you actually deliver returns that are a bit better than normal and or a good Sharpe ratio? And I think that requires the rates picture stabilizing and possibly providing a bit more relief from here. Because the rates picture is still kind of a drag on certain businesses, and it's also a drag on valuations because equities have recovered, but obviously yields are higher, which means the equity risk premium is lower. And so from that perspective, if rates stay where they are, it's going to be more difficult for equities to resume the uptrend at the same pace where we were before.
And rates get that lower momentum, yields come down if we get a more dovish response from central banks. But can we get that more dovish response in this inflationary environment that we are currently in?
Great question. I mean, like you were earlier saying, equities are living in the future. The question is, will the central bankers live in the future and look beyond the shock we have in the data right now? We have obviously seen headline inflation kind of go above 3%. That's the danger zone. Like what we found in our asset allocation work is if inflation is above 3% and keeps rising, that's usually a very unfriendly type cluster you might establish. Obviously, if it's a supply side shock, an oil price shock, which is about to reverse, you can look through that. But if oil prices stay where they are, as has been the case so far, central banks need to tread a bit more carefully. They're obviously itching to somewhat shift a bit more dovish. We've seen it in the commentary around the IMF as well conference, where we've seen Andrew Bailey, we've seen multiple central bankers starting to pivot a bit to the dovish side, hoping that we get the Middle East war to an end.
Can I just come back to where we started, which was what is happening with fast money? Do you get a sense that the fast money re-risking is nearing its end? Is there more still to come? Are the hedge funds kind of, they've obviously taken on a lot of leverage over the last kind of week or so. The CTAs clearly have bought a lot. What are you hearing in terms of that process coming to an end, or is it still got further to run?
So our trading desk, they're running a CTA model, and that actually indicates some of the largest buying on record from CTAs.
Yep.
So you could say that this is starting to moderate now. Similarly, kind of we've seen a decent amount of options-related buying. That should also come to an end. We have expiry today as well. So then we come to the hedge fund community, and if you look at the net leverage right now, it's still quite low. So if you look at the net leverage coming into all of this, it was one of the highest levels on record. Then we've seen one of the largest de-riskings outside of 2022 and obviously COVID. And I would say, based on the data I looked yesterday at, we retraced a third of that decline. So the hedge funds, they still have capacity to re-risk a lot more. That doesn't mean they add beta, to be clear. It's the net leverage, so there might actually be more kind of alpha type trades or style trades. It doesn't mean they buy the S&P, but certainly there's a lot of risk-taking capacity left in the hedge fund space, I would say.
Okay. Why were they late? And how conditioned are they? I keep coming back to this question. How conditioned are they now by what happened around tariffs, Independence Day, what happened on that Pfizer moment around COVID? We are increasingly seeing these V-shaped recoveries that we get in markets, and you have to chase it.
Yeah.
And it feels like the CTAs go first, then the hedges re-risk, and everybody kind of piles from one side of the boat to the other side of the boat. Is this just now normal in terms of the way that markets are going to trade? Is this something that we have to get used to? Is it a Trump phenomenon? Is it? I don't know what it is, but it does. I'm seeing more and more examples of it.
Yeah. I think we are dealing with structurally higher geopolitical volatility, and we wrote about this quite a bit, about this idea of deglobalization, both economically and politically, potentially driving more events like that. And I think you want to think about, generally, the response for most investors should be to those events to do relatively little. I always say the first line of defense against geopolitical shocks is diversification, robust portfolio construction, and you should preferably not market time at all and just sit it out, because geopolitical shocks eventually wash over, and then you deal with the impacts, which are often underneath the surface. They're less about asset allocation. But I think the hedge funds, they're in a difficult situation because they are very tactical. They need to take advantage and risk manage. And this time around, they had a lot of positions that were hit hard by this type of shock. Short-dated rates they were receiving. They were positioning for lower rates, short the dollar, certain carry trades that they were long. So net-net, they were hit particularly hard. So in every of these geopolitical shocks, there's always the risk that one of the investor groups is actually forced to de-risk more than they should. Like in the COVID crisis, I would actually, in the tariff crisis, I would actually say the institutional investor community de-risked much more than they should have in hindsight, because they struggled to get back to where they wanted to be for a few months.
Maybe that's why they're doing nothing now.
Yeah, absolutely right. I think there's a once bitten, twice shy type exposure, but I think the hedge funds this time around, they were the ones that were de-risking.
Yeah, you always fight the last war. Great to see you. Thank you very much indeed for joining us. Christian Muller-Glissman, Head of Asset Allocation Research, joining us from Goldman Sachs. Call 6 looks like this. Let's talk about what we are seeing in these markets this morning. A more cautious market feel. You're seeing SML under a little bit of pressure. You've seen some big runs, though, in some of these tech names. I think that's worth bearing in mind as well. Schneider, there's an Ericsson story kind of floating around. Luxury feels a little flatter this morning. Pharma's actually had a good few days. That's interesting to watch as well. What's Louise Moon looking at in terms of what the radar screen looks like this morning? Let's find out. Let's start with Ericsson.
Exactly. Talking of Ericsson, shares down over 3%. This is after their first quarter results. Profits missed estimates, higher input costs, predominantly on chips, weaker demand in terms of the whole telecom sector, weighing on Ericsson this morning. Shares down into the red. Next up, we're looking at Alstom over in France, the train maker. Now, their shares have currently been halted. They did initially plummet about 16% and now currently halted. That's after they've scrapped their financial guidance. Some of their projects are lagging and weighing on the company as a whole, so halted at the moment. Moving on to Delivery Hero, Uber's taken a larger stake, so they've bought a stake from the largest shareholder, Prosus, boosting Delivery Hero shares up over 2%, almost 3% there, into the green. That's after Uber want to kind of expand their food delivery options. Prosus having to sell down a bit of their stake for antitrust reasons, but boosting Delivery Hero shares this morning at open. And then finally in the UK, we're looking at Workspace. Now, they've actually cut their dividend, weighing on shares down over 13% into the red, also expecting weaker profits. This is as businesses, there's weaker demand from businesses there for their offices and renting from Workspace, so really weighing on them sharply into the red as markets opened.
Louise Moon, thank you very much indeed. Coming up, off-screen drama as Netflix misses second quarter earnings expectations and co-founder Reed Hastings stepping down from the board of directors. Details next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Alstom's just opened. Take a look at the numbers on the screen. We're down by 35% on the French industrial company. They're having issues with train contracts. The market response is epic. That is brutal.
Guys lost for words on this.
This is the market we're in right now.
Yeah.
Is that if you miss, if you have a problem, you are getting smashed.
This is a train company. This isn't a meme stock. And
what he said is some large rolling stock projects have progressed more slowly than anticipated, weighing on near-term margins and cash. So that is the time difference. But time value of money right there, I suppose.
You do not want to miss in this kind of world. In a world where markets feel like they are very fragile and there is kind of the swings from one side to, I just think, look at that. What does that tell us as well about kind of, if you are, earnings have got to be good, and the earnings season, the expectations around earnings are really high right now. And if you don't deliver, and if you see a few more of these are going to skew the numbers.
Yeah, good or perfect.
Yeah.
There was a missed expectation when it comes to Netflix. So I'm about to read this line, and then I'm thinking of the context of Netflix shares slumping. Well, in the context of what we're seeing with Alstom right now, it's not much of a slump. But nonetheless, look, down almost 10% for Netflix in after-hours trading, of course, after second quarter earnings results came in short of analyst expectations. The streaming giant also announcing that co-founder and executive chair Reed Hastings, who is also on the board of Bloomberg Inc., would be stepping down from the company after 29 years. With us now is Mandeep Singh, Global Head of Technology Research at Bloomberg Intelligence. Fantastic to have you around the state, Mandeep. Normally in the US, of course, for us. So great to have you here with the take on what we're seeing in Netflix, and then we'll get some other questions to you as well. What do you make? How concerned should we be about Netflix? The quarter that they came through with was actually a beat. It was the forecast for the current quarter where the concern lies.
Yeah, look, in this environment, if your top line is decelerating and your earnings growth is going to be 8%, I mean, clearly margins are compressing. And look, Netflix, to my mind, they raise prices. I don't think they are growing subscribers the same way they were growing in the past. And to me, there is no AI story here. Yes, they are not pursuing that acquisition anymore, the big one, and that's why the stock had a nice bump. But at the top line level, you compare it to a Meta growing, high 20%, or that's the expectation for this quarter. Low teens growth is just not enough. And then on top of that, you're seeing some margin compression.
Mandeep, I want to move on to thinking about AI, because the market seems very keen to move on from thinking about war in the Middle East onto earnings. Yes, some of them not great like Netflix, but some of them fine, and thinking about AI. How much concentration are we going to see around this AI story, or how much are the gains going to be distributed?
I think among the hyperscalers, you will see all of them actually beat and raise. And when you think about, Alphabet growing 20%, Google Cloud business is expected to grow 50%. When you have a $70 billion run rate, 50% growth is phenomenal. And so Amazon AWS, probably they will see a nice bump up in their top line growth. Microsoft, even though the stock hasn't done very well, I expect them to beat and raise. So overall, you see AI infrastructure being really strong, and that's going to get reflected in the cloud businesses. Yeah. I mean, we know the private companies on the application side, the model side like Anthropic are doing very well. But with the public companies, the AI infrastructure would be the thing to watch.
Is a beat and a raise enough? NVIDIA hasn't hit a new high since October. The numbers in that period have been very good. Is a beat and raise enough to get NVIDIA moving? Is a beat and a raise to get some of these other stocks moving? Microsoft's gone down quite a lot. Yes, it's had a little blip higher, but what do these companies need to do to get the market back on side?
So clearly, they are being held to a higher bar in terms of beat and raises. And you're right, NVIDIA hasn't moved, but that's partly because how well Anthropic has done. And Anthropic is tied to the Google GPU ecosystem. So the market is perceiving NVIDIA really has a big challenge on its hand when it comes to all the deals that Anthropic is doing and Google GPUs ramping up. And they are probably thinking in the out years, NVIDIA's growth may not be as strong as it's currently reflected in the consensus. But in terms of the overall AI market, it's still very strong despite all the macro headwinds that we have seen. And, a company like Anthropic adding $9-10 billion of revenue in 1 month.
Yeah.
That's huge. That's
Yes.
a nice, very nice tailwind.
And they're slowing themselves down, aren't they? With Mythos, they have released it only to a handful, really, of customers, and that is intentional, and that's because of its power. So help me understand something, Mandeep, because this has been bothering me. How do we ever get to a point where they can release this just widely into the market? Because they've released it to what they call defenders first, so that they can protect themselves from attackers. But what about all those small businesses that won't be able to protect themselves, won't get that early release?
Well, Anthropic was designated as a supply chain risk in the U.S., so they had to do something to really, I think, kind of get on the right side of the government when it comes to, highlighting the security risk for a model like this. And I think that will certainly help them with that situation. And look, over time, given the supply constraints there are on the compute side, it's probably a better thing that they're not releasing the model, because what's the point if you release the model and you don't have the compute to serve the model? So this kind of allows them to get more compute, and when they're ready, they can roll it out to all of their customers.
Okay, so it will go out widely at some point.
I'm sure it does.
Yeah,
I mean,
somehow.
they want to maintain that lead over the other frontier model players.
How constrained are the frontier labs right now by that lack of compute? And does that constrain the scaling laws that they've been relying on?
I mean, every company that you speak to right now wants to allocate more budget towards, AI compute. And in some cases, I think Uber said that they burned through their entire year of budget in 3 months. And now they have to allocate more budget for these tokens. So from that perspective, you have seen a significant step up in how these frontier model companies are charging for their tokens and how much revenue they have added. Now, will that continue at the same pace? Yes, it may slow down a little bit, but there's no doubt that right now the demand is insatiable when it comes to using coding agents and some of these use cases that these models are exposing.
So we are confident that all the money that is being put into data centers at the moment is going to deliver the kind of rate of return that is currently priced in.
Well, I mean, look, these are long-term assets. So you are buying a chip, you want to monetize for the next 5-6 years, and we know NVIDIA will keep releasing their new architecture. So right now, the supply-demand mismatch is such that even their previous generation GPUs are seeing a step up in rental prices. Now, will that carry through? My guess is yes, at least for the next 12 to 18 months. And we'll see how much the supply catches up to demand in that time period, and that will determine what the rental prices are going to be down the line.
Mandeep Singh, thank you very much indeed. Global Head of Technology Research at Bloomberg Intelligence.
That build-out's going to need some energy, isn't it? Let's have a look at Alstom and the share price there. The good news for Alstom is it's pared its loss, but it's only pared it to 29%. This after the company, of course, the train manufacturer, withdrew its financial guidance for the fiscal year, citing slow progress on some of its key roles.
So I'm another company. The world is in chaos at the moment. I'm thinking about withdrawing my guidance. I look at this. Do I want to withdraw my guidance right now and look at this kind of market reaction? I'm going to think maybe of a different plan. Okay, coming up, the UK and France will host a summit to secure the Strait of Hormuz and attempt to silence US claims that they are not doing enough. We're going to talk about it next. This is Bloomberg.
We've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Happy Friday. This is the opening trade. We're 30 minutes into the Friday session. You're seeing a market looking arguably for more information out of the Middle East. President Trump talking up the prospects of a deal. Currently across the benchmark, you are flat. Lift the hood, there's a little bit more interest when it comes to the individual indexes. Over in France, the CAC 40 is up 0.3%. The German DAX is up 37 points. Here in the UK, FTSE 100 currently down 0.1%, dropping 11, close to 12 points. Guy.
Much more balanced market this morning. 343 up, 234 down. Little bias to the upside. Volume continues to be something you want to pay attention to. The internals within these markets don't look quite so good as we see kind of just key parts of the market buying and rushing to kind of relever. The CTA is coming back in and back in hard. Okay, let's talk about some of the single stocks that we're watching out for this morning. Leaders and laggards. Delivery Hero up. This is on the Uber story. Richemont, the luxury names are coming back. Deutsche Börse is also up quite strongly as well. A fairly eclectic mix in terms of the narrative, but luxury stocks certainly coming back. We saw that huge move in MS earlier this week, which has kind of changed the narrative within the space quite significantly. Let's talk a little bit about what else is happening. I think it's Bank of America that's moving on that. Alstom is, Ericsson is down, not as much as it was. ASML is down. You've seen a big move to the upside. So kind of working our way backwards. Ericsson, on the back of its numbers, a little softer relative to the move that we're seeing in Alstom. 28% to the downside. That is huge. The industrial sector is under real pressure as a result of this. And I keep coming back to it. If you are a company CEO, CFO, thinking about saying, we don't know what's happening right now, there's a lot of moving parts in the world right now, we're just not going to give you as much guidance as we once did. This is the reaction that you might expect in the market, and I think people will pay attention to that, Anna.
Yes, let's get an update on some of the other stories we're covering this morning then, Guy. A consortium including Bouygues Telecom, Iliad and Orange have entered exclusive negotiations to buy billionaire Patrick Drahi's telecom company, that's SFR, for 20.4 billion euros. The deal would mark a significant consolidation of the French telecom market, reducing the number of players from 4 to 3. The former Treasury Secretary Hank Paulson is suggesting that US authorities prepare a backup plan in order to avert a potential future collapse in demand for treasuries. He says the breakdown could come from long-running concerns over the federal debt load, an event that he warned would have, quote, vicious effects. And President Trump says the US and Iran could clinch a permanent ceasefire soon, and that talks between Washington and Tehran could resume this weekend. Meanwhile, Israel and Lebanon have agreed to a 10-day ceasefire, with Trump calling on Hezbollah to, quote, act nicely during that period. Tom.
Meanwhile, the UK and France will host a summit to discuss setting up a naval force to ensure freedom of navigation in the Strait of Hormuz. It comes as Europe seeks to rebut US claims that it's not doing enough to secure the waterway. Oliver Crook, Bloomberg's chief Europe correspondent, joins us now. What more do we know about this initiative, Ollie? Is it concrete? What exactly can UK, France and others do to play their role in reopening the Straits of Hormuz?
Tom, it is not concrete, and that is the question we're hoping to be able to answer after this afternoon in this meeting that is chaired in Paris by Emmanuel Macron and Keir Starmer. We understand that the German Chancellor will be present in person, as well as Giorgia Meloni, the Prime Minister of Italy, but also dozens, apparently, of other nations that will join by video call in order to try to bring together this sort of coalition. I think we can call it the coalition of the begrudging, on the day after, trying to build this sort of alliance in order to get this architecture in place for the day after. We should say what this is not. This is not a military force. This is not supposed to help the U.S. blockade side of things. This is supposed to help ease the flow of ships through the Straits of Hormuz, potentially things like demining, but really for the day after. There's a question about that. Does the war need to be fully over? Could we have an extended sort of ceasefire? Would that be a sort of condition in which these nations would be participating in trying to ease the flow of traffic? These are a number of the different issues. The other issue is how exactly are they going to, they've not yet articulated how exactly they want to bring this into being. But again, I think the ambition here is to appease Donald Trump, to bring together a plan, to start to present to the President of the United States, so that maybe he'll stop talking about NATO and Greenland quite as much as he did last week.
Ollie, let's just talk about how the Europeans, and to a certain extent some of the Gulf states as well, see this story developing. The President of the United States seems to be hinting that we're going to have peace soon, like maybe after the weekend. But others take a less sanguine view and maybe expect actually it will take time. Give us a kind of idea of the time frame that people are talking about.
So we have some reporting out. We spoke to some of the people in European capitals as well, and some of the Gulf nations, saying that basically, again, I think that the way that we are attuned to think about diplomacy in the Trump era is, you know, Steve Witkoff is here, J.D. Vance is here, deal, no deal, deal, no deal. But really, for the European perspective, this is a very long process. They'll remember being involved in the JCPOA. That took a very, very, very long time to negotiate. So from the people that we're speaking to, they're saying that a 6-month timeline is a much more realistic sort of period of time to consider for how much time it's going to take to get an actual deal. Now, if you get an extended ceasefire, does that count sort of as a deal? I mean, again, there's a lot that we don't know. I think what is most interesting about this guy is that if the sort of base case is that you're going to need at least 6 months to get this through, obviously that's relevant to the discussions in the Middle East, but then there's a big conversation to have here in Europe about energy policy for the next 6 months. Most people that we've spoken to and the leaders that we've been hearing from, they're talking about a sort of short-termism. They have sort of deployed little policies here and there to blunt the shock. But if we're in this for another 6 months, and that means that gas prices are going to remain elevated, oil prices are going to remain elevated, and to say nothing of the fact that European gas storage today is at 29%. That needs to fill back up before the winter, and that is the lowest level it's been since 2022, the beginning of the war in Ukraine. So I think there's going to be a very large conversation still needing to happen about what the policy response is on energy, and that is a conversation that's really going to kick off in earnest next week. We're going to get some proposals from the European Commission, but of course those European leaders are descending on the island of Cyprus there to have a high-level summit on Thursday and Friday, and they'll be discussing, obviously, energy and how to move forward.
Ollie, thank you very much. Bloomberg's Ollie Crook live in Brussels with the latest on those meetings taking place. And that is what is going to preoccupy the UK Prime Minister in the very short term, that meeting in Paris. But gilts are on the move this morning as calls increase for UK Prime Minister Keir Starmer to resign. It's been revealed the Foreign Office granted Peter Mandelson security clearance ahead of his appointment as US Ambassador last year against the objections of vetting officials. Now, this does have some kind of read across into markets, at least in part. Let's bring in Bloomberg Markets Today editor Kit Rees, who is with us. And Kit, I should just point out that we've actually seen some of the reaction in gilt markets pared back. So now we were seeing some selling, and now we don't seem to be seeing so much of that. The gilt market seems to have fallen into line, at least at the 10-year horizon, with what's happening across Europe. But yesterday we saw yields spiking a little on nervousness around the Prime Minister's future. Talk us through how much pressure he's under then right now.
Yes, so we're definitely seeing a little bit of a re-emergence of political risk coming into the gilt market. So this follows the revelations that Peter Mandelson was appointed US ambassador despite failing the vetting process. So we're seeing calls, we saw calls on Keir Starmer to resign, and he'll be addressing Parliament as expected on Monday. So we'll see what happens there. But we saw a similar thing in February. We saw a bit of volatility over political risk in the pound and in the gilt market, and that simmered down. So it's hard to say how much of an impact it's going to have longer term, but for now it is a little bit of political risk creeping back into the market. But obviously there's lots of other concerns going on at the moment, the Iran war, inflation, those kind of things, but it's certainly unhelpful.
Yeah, it could be a poison chalice for whoever takes over, if indeed there was that challenge and if indeed the Prime Minister stepped down. But we do have local elections coming up in May. How are the markets, Kit, pricing around that political event?
You know, I think it's really difficult to disentangle the political risk coming up with the local elections from all the other stuff that's going on. So for the past 6 weeks, we've really been thinking all about the Iran war, rising inflation worries, what central banks are going to do. Are they going to raise interest rates, which seems, you know, a potential thing on the cards. And obviously the cost of living worries. We've got fuel prices rising, energy costs potentially going up, mortgages might be getting more expensive. So there's a lot of worry out there for people, for households. And this will put pressure on the government. So at the moment, there's just so much going on, and we've got a lot of uncertainty with Iran and the talks, and you know how that's all going to shape up. So it's really hard to say. But the UK 10-year gilt yield just have one of the highest gilt yields of the developed market. So there's a lot of risk priced into there. But we'll just have to see how it all shapes out. Lots of risks events on the horizon. We've got UK CPI data, Bank of England meeting. So yeah, it's a very difficult time at the moment.
Do you think, therefore, the market waits until May before we actually start to get some clarity on this picture, that we're going to see some oscillation? Why would you make a political move before May?
Yes, that wouldn't be the right. I mean, given the Iran war, it's a very difficult situation, so it would be difficult to make a political move. Yeah. And who would want to lead at that kind of time? It's a really difficult time. So we'll have to see. I think we need to see more clarity on the economic fallout, and also whether it depends on how long the Iran war lasts, how long energy prices stay elevated. And so if all kind of simmers down, things might go relatively back to normal, but there will still be an impact. So, yeah, it's kind of difficult to say, but, yeah, I think I would agree with you that markets are kind of waiting and seeing.
Yeah. OK, Kit, thank you very much indeed. To the point made earlier, gilt yields on the 2-year right now down 2 basis points, so money moving into the front end. At the back end, the 30-year yields up just 1 basis point, 10-year are largely unchanged at 4.85. Kit Rees, thank you very much indeed on the political risk here in the UK and the fortunes of the Prime Minister. Coming up, AI in focus on the back of updates from Anthropic. Fred Fagola, CEO of Simpro Group, joins us to discuss the outlook with a view on cybersecurity, mythos, and how to integrate AI. That's coming up. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome back. This is the opening trade. Friday, everybody. Friday the 17th of April, to be precise. And European equity markets, from a top-down perspective, are going absolutely nowhere. We do have some divergence, though, and some interesting stories underneath, Alstom being one of those. That is certainly weighing on the French market. Basic resources, though, is the worst-performing sector across Europe. Media stocks, best performing.
Let's get back to tech and what's happening in terms of AI, because Bloomberg understands the US government is preparing to make a version of Anthropic's AI model, Mythos, available to major federal agencies. For a conversation on how AI can impact physical trade and infrastructure, we're joined by Fred Vocola, the CEO of Simpro Group. Fred, fantastic to have you in the studio. We want to get into what Simpro is doing in terms of providing software and AI solutions to the trades, to plumbers, electricians, and how that can be leveraged. But we did want to get, given your experience, your more than 2 decades experience scaling software companies and within cybersecurity, to get your take on the question of Mythos, which is kind of dominating the conversation for so many right now. How concerned should we be about the risks involved and encased in this model? How are you thinking about the impacts of this?
Yeah, so cybersecurity is interesting, and AI makes cybersecurity even more interesting and more concerning. So cybersecurity, if you think about what AI can do, AI is a big disruptor. It's a force multiplier that we've never seen as a society before. And the force multiplier helps both the good guys and the bad guys. So when we think about things like Mythos and the supply chain risks that it represents, it's pretty substantial. So if there are fundamental flaws or disruptions that are caused there, the impact on the entire supply chain can be almost immeasurable. Now, there are lots of guards and guardrails and security things that are addressed to take care of it. The AI aspect of the threat actors is very real. So the criminals are always taking the tools to the most potential first. The white hats, or the good guys, are always playing defense, and they're a little slower.
Yeah.
So the advantage usually falls on the black hats. However, in the case of what we're looking at in defense supply chains and overall cybersecurity risk, there are so many firewalls that are in place. I think the risk is minimal. However, it's a disproportionate risk, because if something happens, it is a catastrophic risk.
The banks in the US have got hold of this, some of them.
Yep.
Anthropic told us this week UK financial institutions will start getting hold of it within the next week. Presumably your business isn't going to get hold of it for a while. So once it's released more broadly, what does it mean for a business like yours? How closely are you scrutinizing your own internal cybersecurity in preparation for this?
Yeah, well, cybersecurity is all about layers. It's about layering defense, right? So there's multiple layers that you have. So the idea is not to have one single point of vulnerability that can be, exfiltrated or excluded that'll really hinder everything. So when we look at it, when it becomes available for someone like us, we'll look at it. We'll make a determination of cost-benefit analysis for it. Of course, our cyber teams will look at it. It's going to be no different than other models and other types of technologies that do the same thing. It's just understanding how much focus it'll get from the bad actors. Because the bad actors are looking at where's the biggest bang for their buck. So the bad actors are very smart. These cyber gangs are incredibly resilient. They have huge amounts of financial opportunity to gain. So understanding what the risk is from a liability perspective of focus is as important as a layered defense model to protect your business.
Are the big AI companies now cybersecurity companies?
Yes. Yes, I think that in the beginning, it's only been several years, but in the beginning of the large language model era of AI, cybersecurity took a back seat. Now, as large enterprises are embracing it, it's not just how much faster we can develop with these tools and how much more productivity we can get. It's, is it safe? Is it enterprise ready? And are we hardened? And are we hardened enough so that we can release this into our supply chain?
So how do you think your company is going to change over the next year? As you start to integrate AI, as you use Mythos to kind of go to companies, go to your vendors and talk about, and your customers about how they can change what they're doing. I'm used to kind of an update every week. I get a patch. How quickly? What does the rate of change look like here?
Yeah, the rate of change is going to be faster, and it'll be a different format. So if you think about updates to your phone or updates to your application or patches, as you indicated, it's going to be a different context. AI allows things to happen 5 to 50 times faster, very often with humans out of the loop. So it continues to innovate. So you'll see the patches that are there to fix vulnerabilities that can be exploited by the black hats. That cycle will be much, much faster. And the same technology that's being used for the exploitation is being used for the defense.
Right.
So it's the same algo doing both, and we've never seen that before. So how that's going to pan out is going to be very interesting. I think that another type of layer, and companies like CrowdStrike and Kaseya and others are developing AI-specific technologies to defend AI-specific threats for AI-specific usage. And that is an entirely new threat vector, and there's a massive industry being built. And I think for the cybersecurity providers out there, it's a huge opportunity.
Your business, Simpro, good morning to you, Fred. Your business, it helps bring AI to a different set of businesses, to smaller businesses, to trades, to help them quote, to schedule, to manage their jobs, for example. Is there a huge amount of opportunity there, or are some of the things that they do too unstructured to benefit from AI?
So most trade businesses, and defining a trade business, like I said, a plumber, electrician, anyone who's doing a job at a remote location, it's one of the largest aspects of our economy. I always say the trades are the world's second responders. If an incident happens, police, fire, military, healthcare go in. After that, it's getting the lights back on, it's getting the water running. They keep our society going. Most trade businesses are small to mid-sized companies. And those small to mid-sized companies have less than 50 employees. And their profit margins average about 6%. So they're struggling. Even successful trade businesses don't have large profit margins. One of the reasons for that is it's very logistically challenging to run a trade business because it's made up of getting the right worker to the right job with the right materials, the right skills, the right time. AI allows that to happen.
Okay, so you think AI can bring them benefits. The market seems to be concerned about business. Well, maybe it's too early to tell which are the businesses that benefit from AI and which are the ones that kind of get eaten up by AI agents and by more generic AI providers. The determining factor perhaps is data. So do you see yourselves as a business that is built on data, and that means that you're a business that's going to be resilient to other bigger AI threats?
Yeah, so Simpro, as a company, we are the system of record. Our technology runs about 23,000 companies around the world, 23,000 trade companies. So we harness that data and apply AI models to it and our own AI technology to it, to be able to provide automation and capabilities and agents that these trade businesses otherwise would have no access to. And we give them the ability to do things that were literally impossible beforehand. And what that does for the business, it allows their margins to go from 6% to about 20%. So it fundamentally changes the industry. So when I think of the trades are an industry overall that is massively, positively impacted by AI.
Fred, what stops them vibe coding their own solutions using Lovable or Cursor?
Yeah, most trade businesses are companies, like I said, of under 50 people. So if you're a 50-person plumbing company here in London, you have 45 plumbers, an owner, and 2 or 3 people that are working in the office. There's no one to do the work. So one of the big things with this SaaS apocalypse that everyone talks about and what's happening with SaaS companies, the SaaS companies that face risks are whose companies are Fortune companies or larger businesses that will go and have development teams that will vibe code and build their own solutions to compete with and replace packaged software. Software companies like Simpro that are targeting small to mid-sized customers, our customers just don't have the capacity, resources, skill, quite frankly, or desire to build it. So those organizations are looking for people like Simpro to bring them AI, where Fortune companies are going to start to consume and deliver their own AI solutions for themselves.
Really interesting. Fred, thank you very much indeed for coming into the London studio to talk through the impacts of Mythos and what you and the team are doing at Simpro. CEO of Simpro Group, Fred Vokola. We're going to get more now in terms of the market view on another crazy week, Guy, in terms of the upside to come through equities. We're focused on gilts here in the UK as around political risk, and continue to hear from President Trump, who's talking quite positively about a potential deal.
So we've had a crazy week. Today feels like a less crazy day. it feels like markets maybe have calmed down a little bit. You're certainly seeing a calmer picture emerging. The Stock 600 just ticking a little bit higher. We're up kind of 0.1% right now. Media's leading. You're seeing the FTSE on 100 underperforming a touch. Basic resources are down. The utility sector in the UK is down. Apparently, the Chancellor wants to sort of separate out utilities and what the gas price is doing. Anyway, lots of things going on, but a more calm session. So let's get a sense of kind of where we go from here. Morwenna Conyngham is joining us to try and give us that sense. A calmer day?
I would say a calmer day. I think there's a lot of uncertainty, and that's actually been the reigning mood, I think, of the week. Compared to last week, where we actually had some sense of optimism. I think there is still some optimism, but there's very much a wait and see feeling, especially as we head into the weekend. President Trump has indicated that there is a sort of deal within reach, but that hasn't been confirmed elsewhere. No. I think we've seen this back and forth quite consistently over the last 10 days. So markets are, I'd say, tentative and cautious. It has been quite a sort of volatile week. Not seeing the extreme swings that we were seeing last month or even last week. It has overall actually been a sort of calmer, slightly nervous, jittery week.
Yes, and we've noticed, Morwenna, that if you disappoint markets with earnings, that they're not very tolerant of that in the current environment, given how we've rebuilt appetite for stocks since the start of the war. Markets are now quite jittery, and if you don't deliver on earnings, they're kind of punished quite severely. Is that what we've seen so far?
Yes, and we're seeing that this morning from Alstom in France about sort of delayed rolling stock, but also we're seeing some of the technology companies, which I think were always particularly sensitive. So Netflix in the US last night disappointed on forecasts. We've seen Ericsson disappointing in Europe today, and that does tend to get punished by the markets. I think we're really starting to get into the swing of earnings season, so we will start to also get a sense of how much companies are being impacted by the war in Iran, how much supply disruption is starting to impact things, higher energy prices, higher commodities prices. Those sorts of things are going to be starting to come through in forecasts and commentary, as well as the actual earnings themselves. And like I said, the market is quite febrile, I would say, so it's going to definitely be quite an exciting quarter.
Morwenna, with a lens on the UK, how are traders thinking about how the BOE, how are they looking to balance what we heard from Bailey, who was sounding a little bit more dovish this week, versus the political risk?
Well, I think that the political risk is something that we've sort of had to live with for quite a while in the UK. It does seem to be resurging today. It's not being reflected enormously in the bond market. We did see longer dated yields rise slightly at the open, but that's largely calmed down now. And to be honest, there is that slight risk priced in across Europe this morning as well. Not seeing huge moves, so certainly not compared to recent history. I think wait and see is again there, waiting for more data as to what the Bank of England will be able to do next.
Great to see you, Morwenna. Thank you very much indeed for stopping by to see us, Bloomberg Markets Today, editor Morwenna Conyngham. Okay, that's it. Weekend. We can all pause now.
Yes, on a serious front, we're looking for any news out the Middle East. Yeah. But there's also this on the agenda.
There's lots of things going on. Man City Arsenal's going to be critical.
I'm quite stressed about that.
That's Sunday, isn't it?
It's a 6-point lead. Arsenal's got. Man City smells blood.
Yeah, Arsenal have to win this game, I'm told. Bath Quins is the one I'm looking forward to. That's tomorrow. Looking forward to that. Anyway, have a great weekend, folks. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
President Trump says it's looking very good for a permanent ceasefire with Iran, though officials in the Gulf and Europe say it could take 6 months. A bad episode for Netflix as second quarter guidance falls short. The co-founder Reed Hastings also announces he's stepping down after 29 years. And fresh crisis for Keir Starmer, the UK Prime Minister, facing calls to resign after it emerged that Peter Mandelson was appointed as ambassador despite failing security checks. So once again, there is quite a lot going on in the markets. There has been a pretty extraordinary rebound in global equities. That's pausing for the moment as investors hold back from further big bets ahead of the weekend while waiting to see whether Iran and the U.S. can actually extend their truce. Now, when you speak to market participants, whether in the U.S. or Europe, I do want to talk about gilts in the U.K. in a second as well, but market attention will probably once again focus back on fundamentals. If you look at the U.K. gilts, they seem to be having to confront some of the political risks again, given all of the uncertainty of what Keir Starmer is going through. Let's also take a look at the European markets map. Now, at the moment, at least for the last 3 to 4 weeks, it's very clear that European markets were following up from what was happening in the U.S. and Asia. And you can see a little bit of a mixed picture with the CAC 40, but also the FTSE Mid getting between 0.3 and 0.5%. The UK down 0.2%. And finally, Netflix shares falling in pre-market trading after its second quarter forecast fell short of analyst estimates. The company also announced that the chairman and co-founder Reed Hastings is stepping down. We'll have more on Netflix a little bit later on in the show, and pre-market down almost 10%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump says the U.S. and Iran could clinch a permanent ceasefire soon. But Bloomberg also understands that some Gulf Arab and European leaders believe that a U.S.-Iran peace deal will take about 6 months to be agreed.
The stock market is good. The oil prices are coming down. And it's looking very good that we're going to make a deal with Iran. And it's going to be a good deal. It's going to be a deal with no nuclear weapons.
Meanwhile, Israel and Lebanon have agreed to a 10-day ceasefire, with Trump calling Hezbollah to, quote, act nicely during that period. With us now is Bloomberg opinion columnist Mark Champion. Mark, first of all, thank you for everything you do. There's great analysis on also what President Trump has been saying recently, which is basically, look, Iran has made key concessions in negotiations, and that a deal could be announced fairly soon. Is that true?
Well, I think we have to discount very heavily what the president says just based on
past experience. We've been very close to a deal they've been conceding, giving up. He's won. We've heard all this, for weeks now. That said, it is very clear that both sides want out of the war. And that's why we have a ceasefire. He says that this will all get wrapped up at the weekend. If it does, that will be an extraordinary achievement. You have a big file here. The nuclear part is complicated itself. That has taken it time.
Missiles being launched.
Yes, but there does seem to be a ceasefire. It is holding. And as I say, I think the key is that both sides do want out. That doesn't mean it's going to be easy to get a deal. And as I say, my guess is more likely that you're going to have rolling ceasefires. It's going to take a while to get a permanent settlement, which is a different thing.
So what happens to the Strait of Hormuz?
That's a really good question, and again, you can only sort of, conjecture as to how this will work. Both sides are kind of closing off the other's traffic, if you like, and they will both be sensitive, Trump to rising oil prices, the Iranians to the restrictions on imports and exports, and you can also imagine things slipping through as needed. If they can talk about this stuff if they're at the table, if they can have the Pakistanis mediate and talk about this stuff. There will be back channels, perhaps even military, and they can, there are fungible things here. So long as both sides want out and they see a way out, they will find ways to keep things from blowing up.
Mark, I mean, there was a deal. I don't know whether it's too soon to say, but there was a deal that was negotiated under Obama in 2015. I mean, whatever we get next, is it going to be worse than that deal or just different?
It will be different. The time is different. What Iran has is different. So it will be. Whether, obviously, President Trump will, if there is a deal, he will say, this was a deal that made the war worthwhile. It's completely different from JCPOA. The bottom line is, so long as the Iranians retain the right to enrich uranium, it will be some form of the JCPOA of 2015, whether it's, a better version or a lesser good version, it will be different.
Mark, as always, thank you so much. Bloomberg opinion columnist there, Mark Champion. Now let's also bring Paul Wallace, who leads Bloomberg's economic and politics coverage from the Middle East. Paul, so what do we know about this potential U.S.-Iran deal? And also, if you're a Gulf state right now, are you really pushing for the deal?
Hi, Francine. Well, on the first point, it seems as if we're waiting for the U.S. and/or Iran to announce an extension to their ceasefire, the ceasefire that ends, broadly speaking, late Tuesday time, U.S. time, or they might even, as Trump sort of signaled that there's a possibility that they actually announce sort of something more significant than that, like an actual peace deal. So that's what we're waiting on now. There's no guarantee of this, and there is still a chance everything falls apart because the gaps between Iran and the US on a number of issues are still wide. I think the Lebanon ceasefire was a key piece of the puzzle for the US and Iran. The US almost didn't quite seem to get the significance of the war between Israel and Hezbollah in Lebanon when the ceasefire was initially agreed to just under 2 weeks ago, the Iran ceasefire, that is. But they certainly got that message in recent days, and I think that's why you saw Trump pushing hard to get the Israelis and the Lebanese state and, through them, Hezbollah into a ceasefire, which seems to be holding, although it's still very early days. We're only about 12 hours into it. For the Gulf states, I think this is a bit of a relief. Of course, let's say the most immediate thing is the Strait of Hormuz, and that remains shut. So, that they will be looking at that very closely. If there's some kind of extension to the Iran-US ceasefire and or peace deal announced by Trump that reopens Hormuz, I think they will be very happy. What they'll be nervous about is Trump trying to sort of extricate himself from this war without ensuring the reopening of this key waterway. That is something that they will be wary about.
Paul, thank you so much. As ever, Paul Wallace there with the very latest, of course, on the Middle East, but also the view really from the Gulf. Now, Wall Street banks say the dollar's war-driven haven rally is likely over as investors seek riskier assets. Adding his voice to concerns about economic stability, former U.S. Treasury Secretary Hank Paulson called on U.S. authorities to prepare a backup plan to avert a potential collapse in demand for treasuries.
This crisis is different, right? When you hit the wall and you're trying to issue treasuries and the Fed is the only buyer and the prices of the treasuries are going down and interest rates are up, that's a dangerous thing. When are you going to hit the wall? I obviously don't know. It's impossible to know. But the law of economic gravity, you're not going to know that. So, and when we hit it, it will be vicious. So we have to prepare for that eventuality. And I think we need an emergency break-the-glass plan.
Well, with us now is Vasiliki Pachatouridi, EMEA head of iShares fixed income product strategy at BlackRock. Vasiliki, thank you so much for joining us. When you look at the war, I mean, again, so there's been quite a lot of volatility. You don't know what happens to oil or inflation. We spoke to a number of central banks in Washington. So, I mean, broad brush, what does it mean for your investments today?
Yeah, good morning, Francine. Indeed, I mean, there's been obviously a very volatile kind of period, but by and large, I would say markets, equity markets, but also fixed income markets have been very resilient over the past couple of weeks. I think a couple of things that I'm paying attention to, and certainly our clients and investors are doing as well, is the volatility that we're seeing, particularly on the front end of the rate curves. We're seeing that particularly in Europe and in the UK even more so. What does this do? It's weakening the hedging properties of short-term rates. And I think what that means for investors and portfolios, you have to pay attention to cash. There's a lot of cash in the system for different reasons. People have liabilities.
So is that your number one?
My number one would be just think about it. It's often forgotten, but it's a simple thing. There's a lot of cash in the system. Let's not look at cash only for capital preservation and liquidity. It can be a source of return, and it can also be a way to sidestep that duration risk that you have from front-end rate. That would be my number one. Second area would really be credit. We're seeing that in flows this month from bond ETF flows. I mean, just generally ETF flows are seeing re-risking into equities, but also fixed income. Credit in particular has performed really well. And then the last point, very simple, but inflation expectations, they haven't fed through yet into the market, particularly on a longer term horizon. So just think about some hedging.
I mean, like hedging also against inflation.
Exactly.
So is that gold, or do you have like inflation linkers? That means also more diversification.
Inflation link, we haven't seen demand for linkers since 2022 for obvious reasons. We're talking a lot about inflation, but it is really at the very short term that inflation expectations have gone up. We haven't seen that feeding through medium term, long term. So there is no premium priced in. So linkers, I think, potentially could be a good diversifier within a nominal fixed income portfolio.
Vasiliki, what do you do with European fixed income? I mean, if you look at, first of all, the different countries, the UK has different issues at the moment. I mean, is now a good time to get into gilts?
Gilts in particular, they're in a tough spot. Prior to the war, gilts were attractive, at least from a valuation standpoint, with BOE kind of expected to cut rates. I think they're in a more tough spot right now. 2-year gilts have had the most volatile period since 2022, since the gilt crisis. So more cautious on gilts. But again, it kind of paints to me that picture that front-end rates, both in the UK, less so in Europe, there are an area of tension. But overall, European fixed income, we like European fixed income. We like European investment-grade credit. I talk a lot about floating rate instruments, obviously because of ECB repricing expectations. And AAA CLOs is a good place to be because high-quality carry, floating rate bonds, and very good protections embedded into the asset class.
Vasiliki, when you look at Europe, I mean, a number of countries have issues that are domestic. We're looking at elections in France next year and things like that. Is it too soon to take a call on that because everything's driven by what the ECB does and energy crisis?
Right now for fixed, I mean, equity markets have really kind of shifted maybe attention to kind of more enduring market drivers like AI. I think in fixed income, we're still having a lot of the market being anchored to inflation expectations, growth, which is particularly more of a focus in Europe. So ECB being more inflation focused, the Fed being more growth focused. So I think for fixed income investors, understanding next steps for monetary policy will be very important in terms of how they take duration. And I think overall people do look for flexible ways to invest in this market. Correlations can be challenging, so you need some help.
Yeah, we had a good conversation with Christine Lagarde, but also Joachim Nagel of the Bundesbank in Washington earlier this week. And actually, I don't know what you're expecting the ECB to do in April. For me, they were more dovish than I thought. It was very much a, they wouldn't really guide the markets either way.
Yeah, I mean, we had at some point the market expecting like 3 hikes this year. I mean, that's obviously, I don't even think we're gonna see 2. I mean, for now, I think they're going to be staying put, maybe for the next meeting. But certainly, relative to the Bank of England, the ECB has more room to potentially take action relative to the Bank of England. But again, we're not going back to a 2022 scenario, both on the monetary side, but also on the fiscal side. Again, fiscal can be a concern, particularly for bond investors. We heard that also from the US. I don't see we're going to see that level of a response that we've seen in previous periods.
I mean, is there a concern that actually central banks, think of 2022 and again want to act too quickly because they were late last time?
I think there were lessons learned. We are in a different period now, and everything that I hear from policymakers is that there is a more considerate approach to what's needed right now.
Any dislocations in the markets that you're seeing which investors should be wary of?
Yeah, as I've said, I mean, credit, which was all eyes was on credit, IG behaved really well, but high yield also. And last month we had outflows from high yield and emerging market debt in particular. That has all stabilized. I don't see any particular areas of pressure kind of from a rising default perspective. Obviously, rising rates, inflation, the secondary effects of that as they feed through the economy, they can cause some headaches for companies and find out how they're financing themselves.
Vasiliki, thank you so much. It's such a great insight. Thank you for joining us. Vasiliki Pachaduridi, their EMEA head of iShares fixed income product strategy at BlackRock. Now, coming up, the Chinese president seeks to position his nation as a bulwark for international stability. We'll discuss more with Alicia Garcia Herrero, the chief APAC economist at Natixis. This is Bloomberg.
up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A is still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
The conversations that matter and the insights you need. This is The Pulse. I'm Francie Lacqua here in London. Well, the Chinese president has hosted a number of world leaders this week as he seeks to position his country as a source of international stability. Earlier this week, Xi Jinping used some of his strongest language yet to describe the impact of war in the Middle East.
The world is beset by turmoil and the international order is in disarray. How a country treats the international law and order reflects its worldview, its values, its vision of order, and its sense of responsibility.
Well, joining us now is Alicia Garcia Herrero, Chief APAC Economist at Natixis. Alicia, thank you so much for joining us. When you look at China's position right now, first of all, how are they looking at the Middle East and this energy crisis?
Well, they see the Middle East as an opportunity for two reasons. First, they know that the war is not going to continue much longer. I think everybody's counting on the end of the war, and that helps China because if it had been a much longer war, that could have been much more dangerous in terms of maybe a global recession and Chinese exports suffering. But that's not where we are. Where we are is that basically the U.S., the Trump administration, has made a big mistake. That's how China is taking this, and China is very much profiting from this. They have enough oil. They're not suffering from that. They have, most importantly, a lot of refinery capacity that they are bargaining with for the rest of Asia. So in that regard, I think China is a relative winner from this conflict.
Alicia, do they need a resolution now? And do you know if China, does China want to be seen also as a power broker? Or the fact that they've stayed away from this crisis, is it because they're looking for other trade routes or other partners?
I think they're very comfortable with the Pakistanis basically being the brokers because they're behind the Pakistanis. And that's a very comfortable position because if it doesn't work, China is not meddled with the negotiations. So China wants to show that it is magnanimous, that is there, is trying to help to end this war, but it's not at the forefront of that effort.
Alicia, what kind of economic stability could we see actually with China going forward? I know, for example, Pedro Sanchez has been also pushing for a better relationship with China, but that's only if China is also strong enough economically to be a counterweight to the U.S.
Well, I should say that we had China's GDP data yesterday is going well, but that doesn't mean it's going to go well for the rest of the world, depending on China. So let me clarify. China is still growing out of exports. Retail sales grew barely 1.7%. And imports grew a little bit more simply because of the price effect of oil. But that's not Europe. That's not for Europe. So if Europe thinks that China is going to save them out of a very unstable, risky US, I don't think that's going to happen because China is basically integrating, moving up the ladder, competing with Europe in the European market and elsewhere. So in that regard, for Europe, China is simply a humongous competition. That's what it is so far.
But Alicia, and I keep on hearing from European states that they don't have to choose between the U.S. and China, but do they?
I don't think we need to choose, but we need to be fully aware that the U.S. is a much bigger market for European exports than China will ever be. And this is simply because China competes with us in terms of industrial capacity, is actually a much bigger exporter than the whole of the European Union already. So it's not so much choosing, it's knowing who is who. China is certainly relevant if you want to move up the ladder yourself. You need technology. If you manage to get some technology out of China, good luck, but that would be great. For that, Europe is designing this Neo-Industrial Accelerator Act, which basically means that if China wants to produce in Europe, it will need to pass on some of that technology. For the US, it's the market that we care about. So they are not substitutes. This is something that European leaders should understand sooner than later.
Alicia, I mean, the other thing that we're trying to figure out is petro-yuan, right? So because of the Strait of Hormuz and the energy crisis, there are a lot of questions on whether there will be a bold move that could take years, if not decades, away from the dollar into another currency. Can renminbi and China benefit?
Yeah. So if we watch the RMB international use for the last, say, 10 years, we can see that actually it's still very small. But the small hypes we've seen in SWIFT data is mostly about trade settlements, and it hypes simply when there is more sanctions. That was the invasion in Ukraine when we had the largest jump in RMB settlements. It's happening now with Iran, and the reason is very simple. China offers a cross-border payment system that is not in the loop of SWIFT, i.e. the US. Because they have their own messaging system within this CIPS, China International Payment System. That's it. But, you know, if we look at the use of RMB for investment, for example, central bank forest reserves is actually coming down. And rightly so, because the yield on any sovereign bond, Chinese sovereign bond, is actually very low. So there is no investment story for the RMB, not even for the petro-yuan, because they created this market in Shanghai futures market, oil futures market in 2018, and it's barely 3% of total transactions. So it's not happening yet. I'm not saying it won't happen, but it needs a lot of, you know, a lot of things that China still has to do in terms of having a much more liquid market, opening the capital account, everything we've heard so many times.
Alicia, thank you so much. Alicia Garcia Herrero, their chief APAC economist at Natixis. Now, of course, one of the other questions that we'll try and explore throughout the rest of the week, well, into next week, is what happens also with Taiwan. The picture for markets is one of perplexion, I guess. If you're an investor right now, you will have seen exactly what happened with this extraordinary rebound in global equities. That's slowing down a little bit this morning. Again, investors holding back from further big bets ahead of the weekend, whilst at the same time waiting to see whether Iran and the U.S. can actually extend their truce. I'm looking at oil, so we're looking at U.S. markets, but also oil, Brent dropping towards $98 a barrel. Again, after Donald Trump said Iran made key concessions. Coming up, well, he says it's a lasting ceasefire, President Trump, with Iran, and that's possible soon. So we look to discuss the outlook with Libby Cantrell from PIMCO next. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump says it's looking very good for a permanent ceasefire with Iran, though officials in the Gulf and Europe say it could take 6 months. A bad episode for Netflix as second quarter guidance falls short. Co-founder Reed Hastings also announces he's stepping down after 29 years. And fresh crisis for Keir Starmer, the UK Prime Minister facing calls to resign after it emerged that Peter Mandelson was appointed as ambassador despite failing security checks. Now, President Trump is striking an optimistic tone as he says the U.S. and Iran could reach a permanent ceasefire soon. But Bloomberg also understands that some Gulf and European leaders believe that a U.S.-Iran peace deal will take about 6 months to be agreed on. Well, for more, we're joined by Libby Cantrell, Head of Public Policy at PIMCO. Libby, so good to speak to you, and there's so much to talk about in little time, unfortunately, as always. Thank you for joining us. When you look at, what does a peace deal look like?
Yeah, I think that is the open question. I mean, the question for markets is, does President Trump declare victory without actually really achieving any of the strategic objectives of the United States, which, of course, is to really try to neuter the ability for Iran to enrich uranium. Of course, President Trump is sort of the master marketer, so he may declare victory, again, without those sort of strategic objectives achieved. I think politically speaking, and to the point about does this take 6 months, and how long does it actually take for the oil market to normalize? This is something that for American voters, the cost of the price, the sort of gas and groceries, the cost of a gallon of gas, the cost of a gallon of milk, those are the things that are really important. And so if this does take a prolonged period of time, even if President Trump sort of characterizes it as a victory, if gas prices do not decrease going into the midterms, this could really spell trouble for Republicans.
It feels like it started about nuclear enrichment, but now it's also what happens to the Strait of Hormuz. So is Iran in a stronger position than it was 6 months ago?
Well, I think that is the fear, right? So foreign policy experts in the United States fear that we're actually in a worse position than we were in terms of the U.S.-Iran dynamic. And then if you go back to sort of the JCPOA, the joint nuclear deal that President Trump, of course, has been very critical of. He, of course, withdrew the United States from that. Does he get a deal that's actually worse than that? So in terms of the foreign policy objectives, I think it's a real open question of whether the United States has actually achieved those goals. And then politically speaking, again, I just can't emphasize this enough about what a headwind this is for President Trump, but also for Republicans.
Yeah, where's Congress in all of this?
Yeah, so Congress, so theoretically, should have or will vote on authorizing war. That is something that the Constitution sort of enables them or asks them to do. Of course, President Trump, as a commander-in-chief, does have quite a lot of latitude, but Congress will have to vote at some point in terms of sending more money to Iran and also sending more money to the troops, of course, and then also replenishing some of the munitions that we have depleted. So Congress will have to get involved. I think that vote probably is going to be over the next few weeks in terms of voting on some sort of supplemental package. And that is really where the rubber meets the road. You've seen Republicans be pretty accommodating of President Trump so far. That may actually end. And I will say this is something that privately folks are talking about on the Hill quite a bit among Republicans, is that there's impatience around the strategy here, around the goals, around the framework in terms of the definition of success. And I think that patience is very much wearing thin. As the weeks go by without a resolution, I think you're going to start seeing maybe members of Congress start talking about that publicly, and potentially that will inform how they vote as well.
I mean, is the military action? I mean, do voters care, or are they just looking at the energy?
Well, as you know, I mean, the U.S. has sort of this luxury of being more isolated just geographically, and so foreign policy has never been an issue that has been sort of, at least in the modern history, has never been one of the top 3 issues for voters. Again, it is sort of this gas and groceries, and so as long as the price of gas though is elevated because of this conflict, I think it will weigh on voters' minds. And then also, we just have to remember that, of course, President Trump's platform was really to kind of get out of these forever wars. Right. And he did that in his first administration, right? He sort of honored that campaign promise. This second administration with Venezuela, with Iran, potentially with Cuba, he's sort of really going against that. So that is also, I think, could be a political headwind for him. As of now, his base is holding in terms of the vote, the polling. But again, I think there's some fragilities there that if this is prolonged and protracted, especially if it's 6 months, I think you're really going to see sort of a political fallout.
I mean, there's kind of like a half joke in saying, well, it's when gasoline prices hit $5. That's when the U.S. will be out of the Middle East and Iran because they just can't afford it because of the midterms. Is there like an elusive? I mean, is there a price or something that the White House is just really worried because it will have a direct impact on what happens in November?
Well, gas or petrol prices have increased by about 40% already. They are in that kind of $4 sort of on average. Some states, of course, there's a lot of geographic variability. Some states are seeing $6, $6 gallons of gas already. It's interesting. If you look at president approval ratings and you graph that against the price of gas, it is inversely related. It's kind of amazing, honestly. And you saw with President Biden that in 2022, when gas hit $5, that was his lowest of his approval rating. One thing I will just say, though, is that, and we tell our clients this all the time, we should not extrapolate the political environment in April of an election year 7 months forward. So lots can change, as we know. As already in 2026, it's been a very busy year. And so it is just important to keep in mind that even though the political environment right now for Republicans does look pretty challenging, things can change. And Biden was that. It looked very challenging for him in April of 2022. And then after the Dobbs decision, the Supreme Court decision in June of that year, things changed quite a bit. So we can't necessarily sort of project too much. But as of right now, if the election were held today, Republicans would be in trouble, particularly in the House.
Libby, what are you expecting from Kevin Warsh at the Fed? Again, I was at a dinner in Washington. Scott Bessent was quite, he said this doesn't change, this war doesn't change, huge dynamics, but maybe it delays cuts.
Yeah, that's interesting that he said. I think that this is sort of a concession, right? Because, of course, Kevin Warsh, as a chair, will be an important voice, but he's only one of 12 votes on the FOMC. And, of course, you need 7 to change monetary policy. So there is sort of a limited impact, and I think it's interesting the administration is maybe conceding that there is some sort of limitation in terms of the power of the chair. Now, Kevin Warsh, I think there's a good chance that he may not be in maybe until the summer, maybe until the fall. This is all going to be predicated on this DOJ investigation into Chair Powell. If that is not withdrawn, Senator Tillis, the Republican from North Carolina, he is holding strong. He is not going to give that green light to the Warsh confirmation. So I think there's an open question whether Warsh is even in at the Fed. But even if he is, again, he's only going to be one vote.
Yeah, and then President Trump, I think on Tuesday, again went really hard on Jay Powell, saying if he doesn't resign from the Fed, because he can stay on as basically governor. Yeah. He said he'll fire him. The market took no notice of this.
No, because they don't. Honestly, I think it's partly because of the oral arguments around the Lisa Cook hearing that's been in front of the Lisa Cook case has been in front of the Supreme Court. Of course, he's tried to fire the sitting governor, Lisa Cook. The Supreme Court looks like they probably won't allow for that, and And so I think the market's sort of ignoring, much of this. And again, I think they're also just focused on the fact that, all these people are just one vote.
Okay, so interesting. Libby, thank you so much.
Thanks so much.
Libby
Nice to
Cantrell,
see you.
Head of Public Policy at PIMCO. Now, the Barclays chief executive says the bank is still committed to expanding in the Middle East despite the Iran war. Speaking to Bloomberg, Van Can also said markets are looking through the long-term issues facing the global economy.
There is a short-term look-through in the markets, especially the equity markets, as to the prospects of both the war ending quickly and exuberant spirits and investments and IPO calendar and deals. That's what keeps the stock market going. But in the background, humming slowly, are the long-term consequences, which is what will give central banks, pause as to how they deal with this situation.
Well, a sell-off in gilts that started yesterday seemed to be easing ever so slightly. It was sparked by renewed calls for the UK Prime Minister Keir Starmer to resign. It's been revealed that the Foreign Office granted Peter Mandelson security clearance last year against the objection of vetting officials. Well, Bloomberg's Markets Today editor Kit Reese is here. Kit, thank you for joining us. I mean, it just puts Keir Starmer in a really, really difficult position. So talk us through the latest allegations.
Yes, so the latest allegations revolve around the revelation that Peter Mandelson was appointed US ambassador having failed these security checks. So it raises questions over Keir Starmer's judgment. There have been calls for him to resign from the opposition leaders. So it does bring back memories of February. And, it was a similar situation there. And we saw both bonds, gilts and the pound coming under pressure. But the reaction has been a lot more calmer today. This is perhaps because there's just so much going on in the greater scheme of things. Iran, worries about inflation, all those kind of things, kind of raising these risks. But it does introduce this political risk. It cannot be ignored and, raises questions kind of going forward, what's going to happen at the May elections. So, yeah.
I mean, these are a big deal, right? So you have local elections next month, and it looks like Labour may not do as well. So what are the markets pricing in?
It's very hard to disentangle the political risk from all these other things, but it has to be highlighted that the UK gilt does have one of the highest yields amongst developed bond markets. So, there is a sort of a heightened political risk being priced in there, so I wouldn't argue with that. And it also, the whole thing comes at a very interesting point for Keir Starmer. We've got the Iran war, it's raised all these worries over inflation, what central banks are going to do, are interest rates going to go up, the cost of living crisis, all these pressures, got fuel going up, energy costs, mortgages might go up. So there's a lot on households' minds, and there's going to be a lot of pressure on the government. So it's not going to be very, very particularly helpful for Keir Starmer. And I mean, the big kind of worry is if there is a replacement for him, further down the line, perhaps, what will their approach be to spending? There's a worry that they won't be as fiscally prudent, so this could, put pressure on bond markets. So overall, there's a lot for markets to digest at the moment, especially heading into the weekend. We're going to be keeping an eye on what happens in Iran. But it is certainly unhelpful for the UK bond market and for Keir Starmer.
Okay, thank you so much. As always, Kit Reese, of course, our Bloomberg Markets Today editor. Now, coming up, investors look for a sign that Netflix can keep hold of subscribers. How will the departure of co-founder Reed Hastings affect the business? More on that next, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix here in London. Now, the French luxury group Kering is seeking to double future profitability, in part by rejuvenating Gucci, its largest brand. The chief executive, Luca De Meo, has unveiled his strategy 7 months after taking the top job. Now, the former Renault boss has been speaking with Bloomberg's Caroline Conan about the challenges ahead.
I think it's already many years where even the industry is impacted by a strong volatility, also geopolitically everywhere. So this volatility is factored into the plan because we're trying to build a company that is more agile, that is lighter, etc. Exactly to master this volatility. We believe in the region, in the long-term potential of Middle East. I think long-term it will continue to grow, so we have no hesitation to continue to invest as a very important customer, etc. So I think unfortunately I hope that this thing will come down very quickly, hopefully, but we believe in the long term that the Middle East will be a key region for luxury.
Even if the aspirational consumer may not be here right now.
In the Middle East, I think you have a lot of people that are in the core category and in the BIC category. This is the heart of the business there.
Obviously, at Gucci, we also have Demna, who came as a creative director, did the first fashion show in Milan in February. Dior, Chanel also have new creative directors, which is making the market very competitive. How long are you giving Demna at Gucci?
I think, I think one of the issues why Gucci has been, more recently in troubles was the lack of stability, in the management team on the creative side with, many changes. And I think it's very important for me that I can assure stability for the team, both on the management side and on the creative side. So no, it's not about this, it's not about, giving time or etc. I think we just have to all work together to make sure that Demna can express his full potential. He's one of the greatest of this generation, and he has now in his hands one of the most beautiful brands, in this sector. So I'm pretty optimistic that everything will work. And things well done require time, right? And we want to do good things with Gucci.
Well, that was the chief executive of Kering, Luca De Meo, speaking with Bloomberg's Caroline Conan. Now, Netflix has disappointed investors with second quarter guidance that fell short of analyst expectations. Now, the streaming giant also announced that co-founder Reed Hastings, who's also on the board of Bloomberg, will be stepping down after 29 years. Now, we're joined by Mandeep Singh, Global Head of Technology Research at Bloomberg Intelligence. Also with us, Bloomberg opinion columnist Parmi Olsen. We'll talk about AI and the little thing called Mythos that seems to have had wide repercussions also for all of Wall Street. So, Mandeep, let's just start with Netflix first. If you look at Netflix, look, they're not doing great. It's just because there's so much content out there from platforms. I feel like we're in a, real battle for eyeballs.
Yeah, and they're missing that AI story that when you look at Meta or Google, they have that AI tailwind which will get reflected in their growth rates. I mean, Meta is expected to grow high 20%. No. So low teens growth is nothing, that investors want to pay for. And Netflix was trading at a higher multiple compared to, let's say, a Meta.
I mean, I guess the wider, and this is a corporate, Netflix problem. What's also really interesting, Parmi, is what's happening in the AI space. And I do feel like, what we've learned over Mythos in the last 2 weeks, I mean, there's so many questions that we're trying to get answered. What are your top 3 questions?
Well, I'd love to know when Anthropic is going to give greater access to this tool. We know it's only given exclusive access to this new powerful AI model, which had this emergent property of being able to launch its own cyber attacks. Now, we have to remember the newest AI models that are coming to the fore now have agentic properties. So if a hacker previously was using something like ChatGPT to check a site for vulnerabilities, and ChatGPT or Claude from Anthropic was giving them that information, now those tools can actually do things for the hacker. They can actually find the vulnerability and exploit the vulnerability. And that's what is worrying so many people about this tool. And I think it really is a wake-up call for not just the banks that were all assembled by the U.S. Treasury Secretary Bessent recently, but particularly small to medium-sized businesses. There was a report that came out from the UK's AI Security Institute, which found actually well-protected companies should be okay with these kinds of models. It's the weakly defended systems that could be vulnerable.
Yeah, and does it also depend on I guess, regions? Because you need to push for access, as Parmi said, to try and play around with it, but there could be other models from other companies.
I mean, it sounds like right now Anthropic is really leading the pack when it comes to that intelligence layer that can uncover some of these cybersecurity vulnerabilities. So to my mind, Microsoft always had, bugs in their operating system and software, and companies discover that. But obviously, this has become a much bigger deal, given it's coming from a foundational frontier model company. At the same time, I do think companies will adapt to the vulnerabilities. They will obviously figure out what is it that is most exposed and patch it. But this is no different than, what we have seen with software over the past 30 years in terms of fixing the bugs they have.
Parmi, how much of this is hype, either on the good or the bad side?
I think two things can be true at the same time.
True.
I think Anthropic, in teasing a model, it's so powerful we can't release it. OpenAI did that with GPT-2, and then they did release it, and it was fine. But it creates this idea of scarcity and excitement, and that plays in their favor ahead of their IPO. On the other hand, I think it is true. We've had independent verification that these models can be dangerous. And to Mandy's point, patching systems used to be done every month, every few months if you're a bank or you're a software company. Now these zero-day flaws are being found and potentially exploited within hours. The time between a vulnerability being exposed through responsible disclosure and a possible attack has collapsed in the last 4 to 5 years, from like a couple of years to now just 4 to 5 hours. So companies need to move much more quickly in how they fix these flaws because these AI tools are out there.
We talk about companies, but this could also be governments. Right?
Absolutely.
If they get operating systems on how planes fly, this is disaster zone.
I think there was an attack on the Mexican government where some of their data was compromised. So from that perspective, these are very effective tools for hackers to leverage, and really things can happen in real time. So that's what's changed from prior sort of vulnerabilities, that attacks can happen at a much faster pace than they used to with these tools that being out there.
I mean, in terms of timeline, when are we expecting to have just a clearer picture? Because we know that also Europe is trying to understand these systems. If you're a European company, and I've heard this in the corridors of Washington this week, is that actually you have even less access to the models that the U.S. companies have. So if you're, for example, a European bank, you'll have less access than a big Wall Street bank.
Yeah.
So is this region more vulnerable?
Well, I think there was some consternation among European Union regulators that they did not get access to Mythos. However, as I mentioned, the UK's AI Security Institute, based right here in London, is kind of seen as this global neutral arbiter of what makes safe and secure AI. They're staffed with quite a lot of good AI researchers. That's based here in Europe, and that has been providing information immediately once they do their own due diligence. So I think that's something to look to as a good thing. But of course, generally speaking, we need much more transparency from the companies. They're not obliged to share their information with the UK's AI Security Institute. They're doing that voluntarily, and they are becoming more closed with each model. They're providing less and less information, and that needs to change.
And they're providing less information because this is a commercial war. Absolutely. Or, I mean, at the end of the day, they just want to make money. Right? They're selling.
Absolutely. If we didn't have the race dynamics, if we didn't have geopolitical pressure and FOMO among governments and companies, I think they would absolutely be much more transparent. But this is a winner-take-all game. There wants to be geopolitical advantages, and so I think it plays in their favor as much as possible to not release too much information.
And Mandeep, what do we know about China? Again, one of the things that always strikes me as a non-AI expert trying to understand as much as I can is when they say, oh, China's, 6-9 months away from us. I mean, that feels like a very short amount of time.
Yeah, and look, these models are becoming more and more capable. So the Chinese models are also improving in capabilities. And, some of these attacks can come from any model. At the end of the day, I don't think Anthropic knows exactly how hackers are going to use their model, which is very capable. So from that perspective, if you are in the business of hacking, you've got a lot more ideas than, companies that are developing these models, very powerful models. But so from that perspective, the attacks could come from any model.
I mean, presumably, if I need to defend myself, do I use my thoughts as well to tell me vulnerabilities and how I can fix it?
Yes.
And you would hope so. I think that's why they are going through this process where they are having these entities play around with that first, and hopefully they're telling them where the vulnerabilities are, but that's where the risk lies.
There was a JP Morgan person who was saying recently, behind the scenes, that they're very excited about this because now they can use this tool to look for vulnerabilities in their own systems and potentially save costs on human cybersecurity experts. I think that's a little bit short-termist in thinking because cybersecurity is a cat-and-mouse game. You might have this tool, but the bad guys will have the tool too eventually. And so that doesn't mean you can just cut staff. You're probably going to need them down the line too.
I mean, to you both, how much should we be paying attention to AI and how it's also changed the war in Ukraine, but especially in the Middle East?
Yeah, absolutely. I mean, the claim that Anthropic is making is this model has got a lot more intelligence than their prior versions. So from that perspective, it's all about imagining what you can do with a prompt or with an agentic functionality. And if it can really automate a lot of the patching, that can save a ton of time and probably potential cyber attacks. So from that perspective, the capabilities of these models need to be well understood. And I'm sure that will be the case in this trial period when, all these entities are looking closely at the model.
Pardon me, I mean, is it something that also, I don't know whether AI now chooses targets. I mean, there are a couple of things. But is this, I mean, we saw Anthropic, versus the DOJ in the U.S. Is this just going to take much more space?
I think AI is becoming integral to warfare. We saw with Project Maven was a part of the Pentagon. That's been around for quite a number of years already, so the U.S. has really been pushing that. And Anthropic's Claude, before Anthropic, what had that bust up with the DoD, was used to help with choosing targets, to help choose targets to strike in Iran. Not deciding them, but providing the intelligence to do so.
Okay, thank you both. We could talk for another 2 hours, so you'll have to both come back on. Bloomberg Opinion columnist Parmi Olson and Mandeep Singh from Bloomberg Intelligence. Up next, it's Bloomberg Brief, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers, and it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It is 5 a.m. in New York City and 10 a.m. in London. Good morning. I'm Scarlett Fu in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh all-time highs. Stock futures wavering after the S&P 500 and NASDAQ 100 post back-to-back record highs. More assurance that the end is near. Oil tumbling as President Trump again says a peace deal with Iran could come soon. And Netflix is set to decline after its earnings forecast misses estimates and says chairman and co-founder Reed Hastings is moving on from the streamer. Let's show you what's happening in futures right now. We've turned higher, modest gains here across the board for S&P, NASDAQ, and Russell 2000 futures. And this comes a day after the NASDAQ 100 and the S&P posted back-to-back record highs. On Wednesday, the S&P 500 closed above 7,000 for the first time. President Trump now saying the two sides, the U.S. and Iran, may meet this weekend for a second round of direct talks. He also says it may not be necessary to renew the two-week ceasefire that is set to expire on Tuesday. The S&P, if we continue to go along this path, will close higher for a third straight week with gains of at least 3%. And of course, optimism over AI and earnings is really underpinning this advance. You're looking at gains in Treasury prices, so that is pushing yields lower right now. 3.76% on the 2-year, 4.29% for the 10-year. Pretty much has been in a range the last couple of weeks. We should mention there is an 8:30 a.m. retail sales report, very influential for the Treasury market. Of course, after the jobs report and inflation, retail sales is really the temperature of the U.S. economy and consumer spending. And in terms of commodities, you can see declines in crude, both New York crude and Brent crude, of at least 2%. We feel like we're kind of settling down. The volatility has really tapered off, and now we're in the low to mid $90 range for oil. Gold prices moving up just marginally, up by 0.2%. It's found some support here right around the $4,700, $4,800 level. All right, let's get back to equities, and for some stocks to watch, here's Chloe Melly. Hi, Chloe.
Good morning, Scarlett. As you just mentioned, we're seeing a lot of weakness in pre-market for Netflix after its second quarter forecast really disappointed investors, and it also announced the departure, the fact that the co-founder, Reed Hastings, would be stepping down. So this is the first set of results since Netflix walked away from this really contentious battle for Warner Brothers, and now the focus is back on how engaged Netflix can keep those subscribers, and so we're seeing a bit of weakness today. Moving on to Sweden, where Ericsson missed estimates and also warn of rising chip costs, and that is really compounding existing challenges for that telecom sector, including the slow progress on 5G network upgrades. And so we are seeing, well, we had actually a little bit of weakness, but now it seems that the shares are quite flat for Ericsson. And finally, Alstom over in France, the train manufacturer, is down massively this morning, almost 30%, after withdrawing its financial guidance. It said that there were some big delays in major rail projects, and so that was impacting cash and margins. And so we are seeing that reflected in that massive drop this morning.
All right, thank you so much, Chloe Melly in London for us. Now, coming up this hour, We're going to catch up with Citi's Veronica Clark on the Fed's rate path as the Iran war nears day 50, and of course get her take on what retail sales likely look like in March. But first, President Trump claims Iran has made some key concessions in negotiations with the U.S.
I think we have a very successful negotiation going on right now, and I think it'll be, if it happens, it'll be announced fairly soon, and that'll give us free oil, free Hormuz Strait, everything will be nice, and I think your oil price will go down to lower than what it was before, and I think a lot of good things will happen.
Joining us now for more is Bloomberg's Paul Wallace. Paul, so the president's sounding a very optimistic note. He's been fairly consistent in talking about progress between the two sides, U.S. and Iran. This is in contrast, though, with what leaders in Arab states and Europe are saying. They expect things will take a lot longer for there to be any kind of peace deal.
Yes, there definitely is a bit of a mismatch between what Trump is saying and what many other world leaders are saying, and in some senses what the Iranians themselves are saying. So, you know, the next thing we have to watch for is the ceasefire, which ends on Tuesday, late U.S. time. The expectation is now firmly that it will get extended. Our reporting a couple of days ago was that the two sides were looking at a 2-week extension, but it now seems that there's a possibility that Trump will try and go further and essentially announce what, at least in his view, will be a proper peace deal to formally end the war. Now, you know, he might go ahead and do that, and he's got plenty of incentive to do that. He wants energy prices to go down further. Americans, broadly speaking, do not like this war. So, you know, he's got a lot of incentive to effectively say it's over and done, and he will obviously claim victory, strategic victory. But there'll be a lot of skepticism because there are a lot of contentious issues between Iran and the US that are definitely going to take a long time to resolve. Things like the nuclear issue, Iran's enrichment of uranium, its stockpiles of highly enriched uranium, its missile program, its support for proxy militant groups. And then, you know, we've also got the Strait of Hormuz. It is possible that whatever is announced in terms of extending the ceasefire or, you know, a formal deal will entail the reopening of Hormuz. I think if Trump can get that and essentially get an immediate reopening of Hormuz, that will be a big win for him, even if there's still very serious issues of, you know, Iran's nuclear program and its missile program and its proxies are still undecided and still unresolved.
Yeah, that's a pretty long laundry list that you just ticked off for us there that the two sides need to agree on for there to be any kind of more lasting ceasefire beyond the 14 days that was announced. Chief among them, of course, and most importantly for investors, is the Strait of Hormuz. You mentioned that that's the big point here. Who controls the Strait of Hormuz right now? Because the U.S. Navy has imposed a blockade on the strait. However, we have heard reports that a Pakistan-flagged tanker, the Shalimar, became the first carrier to exit the Strait of Hormuz since this U.S. blockade began. Why is that significant? What does that tell us, Paul?
It is significant. I'm not entirely sure if that particular ship had been at an Iranian port or was heading there. If it had, then yes, then it's effectively bypassed or got through the U.S. blockade, whether that's by luck or the U.S. Navy allowing it through. I don't know. But the point is that the strait is still effectively closed. And in terms of who controls it, I think the answer is both Iran and the U.S. right now. The U.S. blockade is pretty strong. From a tactical point of view, it's been effective. You know, it has been successful in terms of stopping the number, or really lowering the number of ships going to and from Iranian ports, which is what it's there for. And then on Iran's side, you know, ships, other, you know, non-Iran linked ships are pretty much staying away from the strait because the risks are still too high. So the waterway is still de facto shut. As you said, for global markets, I think for leaders in Gulf Arab states, and to be honest, in Europe and elsewhere, even Trump, reopening that strait is the most immediate concern. The closure is hammering the global economy, leading to real fears of stagflation. So that will be the most immediate term issue for the U.S. to solve.
All right, Paul Wallace, really appreciate your joining us this morning. Paul Wallace is our managing editor for the Middle East and Africa. Thank you so much. Meantime, over in China, President Xi Jinping wraps up his busy week meeting with world leaders while Washington is occupied with the conflict in the Middle East. Let's get more now with Bloomberg's Laura Davison in Hong Kong. Laura, good to speak with you. Usually we speak stateside, but you're in Asia right now. Tell us a little bit more about the diplomacy that Xi Jinping has been working on in Beijing this past week, because as far as I understand, there hasn't been any formal gathering in Beijing, has there?
Yeah, but despite a lack of a formal gathering, it was really a banner week for Xi and other Chinese officials in terms of meetings with foreign leaders. They had the Spanish Prime Minister, the Crown Prince of Abu Dhabi. They had other high officials from Italy, Sergei Lavrov from Russia. So just To Lam from Vietnam. So just sort of a cross section of the globe in Beijing, and meeting with President Xi and Chinese officials. Really incredible split screen, because at the same time, Trump is actively feuding with Giorgia Meloni, the Pope, Keir Starmer. You have Starmer and Macron leading this meeting Friday to talk about reopening the Strait of Hormuz that actively does not include the U.S. As part of that gathering, and Trump continuing to kind of deepen his isolation as he's kind of picking these fights on social media, as well as demanding that allies come to the U.S. military's aid here in this conflict, and everyone is essentially ignoring him.
Yeah, that's really interesting about this meeting that Europe is kind of leading on the Strait of Hormuz, in particular because they're still waiting for something to happen between the U.S. and Iran before they can really move forward with any kind of action. You had mentioned that China's doing a lot of outreach at the moment, and one of those countries it's reaching out to is Italy. And of course, this comes as President Trump has really widened this rift with the Italian leader, Meloni. Tell us a little bit more about what Beijing is trying to achieve here.
Yeah, Beijing is sort of sees an opening here of what was once Trump's closest ally in Europe, at least sort of culturally and from a sort of philosophical point of view. She has really distanced herself from Trump, as well as cut ties, some formal ties with Israel as well. So she has found an opening here, and we saw a meeting from a high level, for the foreign minister of China, as well as a top official in Italy, to talk about strengthening their geopolitical ties, their economic ties, and this is just kind of an example of having NATO allies who are going to China looking for business opportunities, looking for security opportunities, looking for sort of the kind of relationship that you would expect them to have with the United States in years past. And now China is playing this much expanded role on the world stage, and kind of being chief diplomat in charge.
All right, Laura, I really appreciate your setting up the context for us here. Laura Davison joining us from Hong Kong with what China's been doing here as playing its role in trying to come up with a diplomatic solution, or perhaps positioning here as the U.S. and Iran continue to try to schedule talks to discuss an accord. Now, the teams over at Deutsche Bank and Wells Fargo, among others, are saying that this haven rally we've seen in the U.S. dollar, driven by the war, is now likely over, with the banks boosting their dollar hedging ratios to a 2-year high. That's according to State Street. So let's get some more on this markets angle with Bloomberg's Ven Ram. Ven, good to speak with you. And I look at the Bloomberg Dollar Index. It has been down over the last 2 weeks. Yesterday, it broke that streak a little bit, but we have been on a downtrend here. And I guess a lot of that is just as investors rediscover their appetite for risk, they're moving away from the U.S. dollar, aren't they?
You're absolutely right, Scarlett. I think that, the appetite for further dollar longs is being tested in the market right now. And I think that, it's fair to say that what the markets were doing during the war was run to the safety of the dollar. But now that there are signs that the, ceasefire is going to hold and probably continue for a longer time, I think that, the incremental demand for the dollar hasn't quite come through. And if you look at the speculative positioning in the markets, I mean, it is somewhat bullish. It's mildly bullish on the dollar, but not overwhelmingly bullish, as we have seen previously in the cycle, most notably in 2022. And if you look at real interest rates, which underpin where the US dollar really goes, the trajectory, and those real rates have been pretty steady despite the war. So I think that the additional incentive to buy and hold the dollar is kind of waning, especially if you consider the fact that the Federal Reserve is inclined to, is going to be inclined to cut rates in the near future, given the new Fed chair that we've got. So I think that, all in all, I think that, the additional positioning in favor of the dollar bullishness is kind of lacking.
Okay. In terms of catalysts for financial markets, clearly everyone's kind of just moving on whatever comes out of the White House, whatever comes out of the Middle East. But are there data points that traders are really keying off of? And I ask because we have this retail sales report coming out this morning at 8:30 a.m.
Well, I think that, for me, what is going to matter most, and I think that's true for a lot of traders as well, is what the inflation readout is going to look like. We know that the U.S. economy has been pretty resilient, and I have no doubt that it'll continue to be resilient, even though, the jobs market is off the peak, and but that's not to say that we are going anywhere near a recession. So what you get is a picture of a U.S. economy that is pretty resilient. But what happens to inflation down the line is what is going to be crucial for the markets. Even though the U.S. is a net energy exporter, I think that, the gallon prices, pump prices have shot up about 20 to 30% since the war started. So I think that is going to weigh on inflation, which is why I think that the White House is acutely mindful of that, and which is why they are in fact dialing back on the war noise. So I think that, inflation is going to be the big driver of rates and currencies in the coming months, and of rates and currencies in the coming months. And I think that it'll take a couple of months for those readings to come through.
Got it. Ven, really appreciate your joining us. Ven Ram is our cross-asset strategist joining us from Dubai. Now let's move on to some other top stories trending on the Bloomberg terminal this morning. Hedge funds posting a strong recovery in April, recouping losses driven by the Iran war from the previous month. Point 72 and Jane advanced 2.4%, while Millennium added 2.3%. UK Prime Minister Keir Starmer is again facing calls to resign over the appointment of Peter Mandelson as ambassador to the U.S. Starmer was forced to acknowledge on Thursday that the Foreign Office gave Mandelson security clearance despite objections from vetting officials. Starmer had previously assured the House of Commons that due process was followed in his decision to appoint Mandelson. Industrial metals climbing to a record high on the London Metal Exchange, driven by gains in aluminum. The LME index has rallied by almost 12% over the last 4 weeks and was at an all-time peak at yesterday's close. Coming up on the brief, Netflix unable to break its streak of post-earnings losses. We've got more on the streamer's results next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Versace in Davos, Switzerland, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We ended last year with more than 325 million paid members, and as that number continues to grow, we are entertaining an audience that is approaching 1 billion people, which is an exciting milestone to strive for, and it'll be an exciting milestone to achieve. But even given that number, we still have plenty of room to grow into our addressable market.
Shares of Netflix falling in pre-market trading after its second quarter forecast fell short of the Wall Street estimates. The streaming giant also announced the resignation of chairman and co-founder Reed Hastings from its board. Bloomberg's Neil Campling joins us now for more. So Neil, a disappointing look ahead here from Netflix. And I guess a big part of it is that it's going to be spending a lot more on programming. And this goes to the idea that, in the same way that hyperscalers have to spend a lot on their AI build out, Netflix is going to be spending a lot on live sports.
They do indeed. The fact is that twice in the last year, Netflix have raised pricing for US subscribers. You need to justify the price rises by investing in the content. I think part of the reason why the stock was trading lower in pre-market this morning is because analysts had expected an upgrade to the full year guidance to reflect those price increases, and that hasn't come through. The second element is the fact the stock has rallied 40% from recent lows when it walked away from that Warner bid. And that's also another sign of angst among traders, I think, in that will Netflix, having shown their hand once, be looking for more M&A transactions to build out that pipeline of content? I think that's what people are perhaps expecting them to happen next. In the meantime, obviously, as you mentioned, the founder has decided to retire, to step back from the company.
Yeah, he's going to move on to focus on philanthropy and kind of pursue his other interests after serving on the board. I want to follow up with another question here because the White House is working on a plan to give U.S. federal agencies Anthropic's Mythos AI. How much of a threat does this pose for the financial sector?
The threats being discussed, I think, are around the fact that that it's such a powerful tool. It actually detects where there are compromises in any system. We heard earlier this week that it managed to find flaws in every single operating system that existed. And some of these flaws have taken like 40 years and 5 million tests and not been detected before. So actually, we're using this tool in the right ways. It could be actually very, very beneficial. Now, remember, we have some stats that show that cybersecurity spending is over $450 billion every year. And there's an economic impact of over $10 trillion to cyber crime every year. So if these tools are being used in an effective way, they could actually be very, very beneficial to the economy.
All right, Neil, really appreciate your joining us. Neil Campling of Bloomberg in London. Thank you so much. From New York, this is Bloomberg Brief.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to Bloomberg This Weekend. I'm David Gray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Scarlett Fu in New York. It's time now for your front page news. First up, on the New York Times, the White House shrugging off the shaky economy due to the war in Iran. The Times highlights the exuberance on Wall Street, posing a sharp contrast with the hardship facing many Americans. Next up on the Washington Post, the resignation of acting ICE Director Todd Lyons. He presided over the rapid expansion of ICE to implement President Trump's mass deportation campaign. Lyons, who is a career ICE official, says he wants to spend more time with family. And finally, the Financial Times reporting that J.P. Morgan, Barclays, and other Wall Street banks have started trading derivatives that would benefit if private credit funds run into trouble. According to FT sources, those banks have begun trading credit default swaps against the flagship private credit funds run by the likes of Blackstone, Apollo, and Ares Management. Now, coming up on the Bloomberg Brief, Citi's Veronica Clark, its chief U.S. economist, joins us for more on economic data and the Federal Reserve and what the central bank does next. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City and 10:30 a.m. in London. Good morning. I'm Scarlett Fu in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh all-time highs. Stock futures moving north after the S&P 500 and NASDAQ 100 post back-to-back record highs. More assurance that the end is near. Oil tumbling as President Trump again says a peace deal with Iran could come soon. And Netflix is set to decline at the open after its earnings forecast misses estimates and says chairman and co-founder Reed Hastings is moving on from the streamer. Here's where things stand with futures. We're looking at modest gains with the Russell leading the way here after the S&P and NASDAQ yesterday closed at record highs for a second straight day on hopes that the U.S. and Iran are looking to de-escalate and could perhaps meet for a second round of direct talks this weekend. You look at treasuries, we're looking at higher prices and therefore lower yields, but pretty modest declines right now, especially as we await the 8:30 a.m. retail sales report for the month of March. And oil prices, that is the big focal point the last couple of weeks. They are moving down. You can see NYMEX crude now just above $91, Brent at $96. Volatility has really tapered off in this part of the commodity space. Gold has also found some support right around the $4,800 level. For some stocks to watch, let's go over now to London and check in with Chloe Melly.
Good morning, Scarlett. Netflix is down 10% in pre-market trading this morning after issuing quite disappointing second quarter guidance and also announcing that co-founder and chairman Reed Hastings would be stepping down. So this is the first set of results since Netflix walked away from this contentious and really long takeover battle for Warner Brothers. And so now the emphasis is put back on whether Netflix can really keep those subscribers engaged. And so we're seeing a lot of weakness there. Moving on to Onto Innovation, which is up this morning in pre-market, up about 3% after being upgraded to a buy rating by Stifel. The analysts have said that the preliminary revenue from this semiconductor manufacturer was solid, and therefore we are seeing this vote of confidence reflected in those shares. And finally, Alstom, the French train manufacturer, is seeing a lot of weakness this morning. We're down almost 30% after it withdrew its financial guidance, saying that it was facing big delays for some major rail projects. And so analysts are now saying there's a lack of discipline and of cash discipline specifically, and inconsistent execution. And so Alstom is going to have to work hard to regain that investor confidence.
All right, Chloe, thank you so much. Chloe Melly with our equity movers to watch for. Now, Citi's Veronica Clark, its U.S. economist, is weighing in on the war's impact on the Federal Reserve's rate path, writing, quote, if oil prices remain stable and core inflation cools, as we have seen in last week's data, we continue to think rate markets can rapidly return to pricing cuts and the Fed can deliver before the end of the year. I'm pleased to say Veronica is joining us now. She is, once again, U.S. economist at Citi. Not only are you calling for the Fed to cut, you're calling for the Fed to cut 3 times.
Yes.
And you've pushed back that date to later on in the year. What's the thrust for rate cuts this year?
Yeah, I mean, the next couple months, the focus is absolutely on the inflation data, and we'll probably have some uncomfortable and some weird inflation data the next few months still. Nothing really in that core inflation number that we saw in March, but it's probably just too soon to see it. But as we get to the summer, yeah, if oil prices have come down, I do expect softer demand is going to limit the pass-through of higher oil prices to core inflation. And once we get to the summer, the pattern the last few years has been that we start to get weaker labor market data over the summer. It's really by late summer that the unemployment rate has risen from the start of the year. We expect that pattern to repeat again this year. In the last couple of years, that's meant a Fed cut starting in September, and that's what we have in our forecast.
Yeah, we got jobless claims, and it reinforces that we have this low fire environment, and again, backs up the idea that the labor market is fairly resilient. How accurate a picture of the labor market is this data point painting?
Yeah, claims are very important, of course, and especially if we were ever to see these big layoffs start to pick up, but we haven't seen that. This has been a very low hire, low fire environment for a while, and unfortunately, claims are going to become a worse indicator the longer that the weakening is just driven by low hiring, right? People will enter unemployment, but layoffs are still low. They'll expire those benefits after something like 26 weeks, but they could still be unemployed, just not receiving benefits. But even those jobless claims data, they're helpful because we get them every week. They have had the same seasonal pattern as other labor market data, where really it's in May they start to rise.
Okay, so you're saying that in summer months we tend to see rising claims, and that would be enough to start pushing the unemployment rate higher?
It could be, right? That's been the pattern the last couple of years. This low fire environment has meant that the unemployment rate is rising something like 3 to 4/10 every year. Now there are a lot of immigration, population changes to deal with this year. We experienced that last year too, though, and it's been pretty consistent that demand is just running below whatever that break-even employment rate is. That's been the trend for the last few years, and yeah, I expect that to repeat this year.
Do you think this is something that's well understood and priced in by the market?
I don't necessarily think so. I think maybe these big population changes, and we'll see how that plays out in the summer. Maybe it is enough to keep the unemployment rate from rising more, but it does seem like even market pricing, there's this seasonal pattern where it's really in Q1 we're expecting fewer rate cuts for the Fed the last few years, and then it's really around June we start to reprice how much the Fed could be cutting.
Okay, and of course when it comes to the Fed, we have a meeting coming up at the end of this month, and then the next one won't be till June 17th, and it's a big question mark as to who's going to be leading the Fed in that mid-June meeting, because the Senate Banking Committee has announced the date of Kevin Warsh's confirmation hearing, but the Department of Justice, as far as we know, is still moving ahead with its probe into Jay Powell over the renovation of the Fed headquarters. So, Veronica, are we going to get a confirmation hearing but no vote?
We might. We really have no idea how this is going to play out. Yeah, is this April meeting going to be Powell's last or not? As far as we know right now, Senator Tillis is planning on not, supporting the Warsh nomination until there's clarity on the DOJ investigation, and we really don't know how that's going to proceed. It's only about a month before Powell's term as chair does expire.
So yeah, big question marks on that front. We've got a retail sales report coming out in about 3 hours' time. And for the U.S. market, this is a really important data point because it'll be the first one since the start of the war really sent oil prices surging.
Yeah, March retail sales are, they're reported in nominal terms, right? So they will look strong. There will be this surge in gas prices, so you'll see gas spending that increases. What we want to know is, how much does that subtract from spending on other types of goods, right? You have to spend more on gas. March might be a little bit too soon to know those effects, right? I mean, not everyone necessarily filled up their tank right away, with higher gas prices. So it might take time for that to feed into softer consumption. It is also coming at a time where people did get somewhat larger tax refunds, around these months. So maybe that helps buffer the increase in prices.
Yeah, but it's getting absorbed by higher prices elsewhere, even with those tax refunds. And if people don't end up spending as much as I think a lot of people in the market had anticipated, doesn't that remove one of the big drivers of GDP growth this year?
Yeah, absolutely. Consumption has been slowing. We've seen that for the last couple months already. Whatever you were expecting, the boost to consumption from those larger tax refunds to be should probably be less now in real terms, that a lot will be going to paying higher gas prices. So yeah, we would expect that consumption is slowing this year. The fundamental driver of consumption, first and foremost, is going to be, like, do people have a job or not? Is aggregate labor income slowing? And it will be, but unless you see those larger layoffs, I imagine consumption would hold up well enough.
So we spoke with Hank Paulson, the former U.S. Treasury Secretary, and he was saying that policymakers in the U.S. should not ignore the budget deficit, in addition to kind of looking through everything else and trying to come up with backup plans. He believes the U.S. needs an emergency make or break moment, a break the glass backup plan in case there's a doom loop where demand for treasuries really falters and the Fed becomes a buyer of last resort. How worried are you about something like that over the next year?
Not so much over the next year. I mean, it's obviously a topic that comes up a lot, and who knows what will happen, 10 years or so down the line. But I do think, in an environment where the Fed is cutting, at least biased to be cutting, we don't quite see the, demand backdrop that we had 4 years ago. We're not as worried about that inflation picture. I think there are buyers of U.S. Treasuries out there, and then you're not as worried about that doom loop, maybe.
All right, Veronica Clark, thank you so much.
Thank you.
She is U.S. economist over at Citi. Really appreciate her getting up early for us this morning. Now, former U.S. Treasury Secretary Hank Paulson also spoke on the central bank's independence. Let's take a listen to what he said.
What the war has shown is the dollar is there's no other safe haven, right? So the dollar was declining for a lot of reasons that should have been declining. Frankly, I didn't like to see it declining, but boy, in a crisis, the dollar strengthened. But I believe, to the extent it adds to our deficit, it poses a risk, a longer-term risk. And that's why I really believe the independence of the Fed is so important right now, because at the same time, because the independence of the Fed really increases the confidence that investors have in our economy, in our financial markets, and so on. And at a time when we're piling on so much debt, I think it's really important that we have that.
Has confidence in the Fed as independence already been undermined?
There's issues that are raised, right? But I look at it, I look at, when you have a chairman of the Fed, you want someone who understands markets, who is a good communicator, has a good understanding of sound economic principles. And I think Kevin Walsh meets those tests, right? And he's been before, he's done it. Now, I think his job becomes more difficult because there's independence and the perception of independence. So I think how this transition between Jay Powell, who's just been a star performer and got great credibility and integrity, I think how that transition is handled and how the administration deals with it is either going to make Kevin's job more difficult or, somewhat easier. But Kevin won't have an easy job anyway. And, I compliment the Trump administration on selecting him.
That was former U.S. Treasury Secretary Hank Paulson speaking to Bloomberg's David Weston. Now to other top stories trending on the terminal this morning. Sequoia Capital raising about $7 billion for a new fund, the first under new leadership. The fund will allow Sequoia to expand its bets on large companies, including AI startups like OpenAI and Anthropic. The FAA ordering airlines to cut flights at Chicago O'Hare this summer to prevent overscheduling and flight disruptions. The agency is limiting daily takeoffs and landings by about 400 fewer than what airlines have scheduled. The move complicates a turf war between United and American Airlines at O'Hare as they duke it out over gate access and market share. The cap will be in place from May 17th to October 24th. OnlyFans is in advanced talks to sell a minority stake to San Francisco-based fund Architect Capital. The deal values the platform best known for adult content at more than $3 billion. OnlyFans declined to comment. Architect did not immediately respond to a request for comment. Coming up on the Bloomberg Brief, President Trump's attempt to turn voters' focus from Iran to the economy. We've got more on that effort next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary. We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We had the best economy in the history of our country in my first term, and we're blowing it out now. We're blowing it away now. And despite our little diversion to the lovely country of Iran, we just hit a brand new all-time high.
That was President Trump downplaying concerns surrounding the war with Iran and touting his economic record ahead of November's midterm elections. Joining us now is Jonathan Tamari of Bloomberg Government. And this is something that his team, the White House team, is really pushing for, to focus everyone's minds on the economy rather than the war in Iran. What specifically is the president's pitch beyond stocks have had a record run? Because oil prices are elevated.
Yeah, so what he's talking about and what Republicans in Congress especially want to talk about ahead of the midterm elections are the tax cuts that Republicans passed and the president signed into law last year. In particular, you saw on the sign that was up there behind him, the cuts for taxes on tips and the cuts for taxes on overtime. This is really the centerpiece of the pitch from the White House, from congressional Republicans to voters this year about how they say that they have delivered for working families, for that average family, cuts that they will feel. Now, the problem for them is that polls suggest that a lot of people are not feeling that they're not seeing the big benefits. The average tax refund this year is up about $350, which is certainly great if you're getting that. They had promised something like $1,000 or more on average, so it's certainly falling short of that. And most polls suggest people are much more concerned about the rising gas prices than they are happy about whatever tax cuts that they're receiving right now.
Yeah, so it might be a little bit of a tougher sell than it would have been otherwise. Meantime, the president can, of course, get away from Iran, and he is saying that Iran is making some key concessions here that would pave the way for a deal to end the war. What is he saying now? What is he promising now?
So there's a lot of still vague a lot of what he says is not necessarily very specific. He said something about Iran giving up the nuclear dust in his term, which does seem to refer to some of their enriched uranium that is buried after the strike that he led last year. But it's not all, it has not really been confirmed by Iran. And so he's been talking, obviously, about having a deal being close for some time now. It sounds like they are on track to at least extend negotiations or to have new negotiations and potentially extend the ceasefire if necessary. But I think the details still remain pretty vague. And you don't always know if the president is speaking in specifics or speaking about what he's hoping for. So you kind of have to watch and see also what the Iranian side says as this goes on.
Absolutely. Very well put. Jonathan, really appreciate your joining us. Bloomberg Government's Jonathan Tamari joining us from Washington. Thank you so much. And of course, we're keeping an eye on one stock in particular here in the pre-market, and that is Netflix. You can see it's extending post-earnings declines after a disappointing forecast for this quarter. The streaming giant also announced that its chairman and co-founder Reed Hastings is resigning from the board. Mandeep Singh of Bloomberg Intelligence joins us now. He is in London for the week. Mandeep, just walk us through how significant Netflix's earnings are in terms of setting the tone for the rest of the tech sector's earnings.
Yeah, look, I mean, Netflix really doesn't have an AI story. So when you think about their growth rate, you know, they're guiding for low teens growth. EPS growth will be even lower, around high single-digit percentage. And so, you know, the fact that they don't really have any big content slate coming up, that subscriber growth is going to look muted, and they are pointing to some margin compression. So from that perspective, you know, the bellwethers on the AI infrastructure side will have very strong growth, whether it's Alphabet or Microsoft. Even Meta is expected to grow high 20%. You know, so from that perspective, where there is an AI story, you will see much higher growth, and that's why you see that stock reaction for Netflix.
All right, let's focus in on AI then and stop dancing around it. Anthropic's CEO will be meeting Susie Wiles, the chief of staff, at the White House today. This is according to Axios. Anthropic is really kind of center of a lot of people's concerns in Washington. Walk us through why this is. The U.S. government is preparing to make a version of Anthropic's powerful new AI model, Mythos, available to major federal agencies. How much of a threat is this for the financial sector?
I mean, look, it clearly is a very powerful model in terms of, you know, the size of the model, 10 times more parameters. And, you know, these models are measured in terms of their level of intelligence and the tasks that they can do, you know, on an automated basis. So from that perspective, it has already pointed to, you know, vulnerabilities for existing operating systems and browsers. And what they are saying is, you know, everyone should be looking at this model and saying, what are the vulnerabilities that they're exposed to? And that's why it's limited to, you know, certain entities. I mean, the government has labeled Anthropic as a supply chain risk. So it's interesting that, you know, the CEO is meeting Susie Wiles. And it'll be interesting to see how they go about releasing this model to all the enterprises and making it available to the subscribers, because we know Anthropic has been involved with some of the cyber attacks where Anthropic was used as a tool. So clearly, there is that exposure that's out there.
Yeah, Anthropic has limited the release of Mythos amid concerns that hackers could weaponize its capabilities to steal data or sabotage victim networks. One more story I wanted to get your take on, Mandeep, is Apple's marketing chief for Watch, AirPods, Home, and Health is leaving. We've learned that Stan Ng is retiring after 31 years at the company, but I'm wondering if there's a concern about talent, a brain drain taking place at Apple.
I mean, right now you are seeing talent go to all these frontier LLM companies, notably Anthropic. So from that perspective, Apple also has been sitting out when it comes to, you know, building its AI capabilities or investing in AI data centers. And at some point, I think they will have to come up with a strategy that is appealing for investors as well as, you know, their own employees, because people right now are focused on that AI exposure, or, you know, what is the next leg of growth for a company like Apple.
Right, and so far Apple looks like it's fallen a bit behind the other big tech names, even though it has signed this agreement with Google for Gemini. Mandeep, always appreciate your joining us. Mandeep Singh, Bloomberg Intelligence's chief tech analyst there, joining us from London. Now, coming up on Bloomberg Brief, more earnings and a Supreme Court opinion day. We're going to get you set up for your trading day this Friday morning. Next, this is Bloomberg Brief. Good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good Friday morning. This is Bloomberg Brief. I'm Scarlett Fu in New York, in for Vonnie Quinn. Now a look at what's ahead today. First up, earnings coming in from Fifth Third Bancorp, State Street, and Ally Financial. So the big banks and the financial sector continue to report. Then we've got Fed speak from Daly, Barkin, and Waller throughout the day. We'll bring you those headlines as they cross. And in Washington, it is opinion day at the Supreme Court. Rulings may come, though, through on Louisiana versus Calais and Trump versus Lisa Cook. And again, we will bring you headlines on those as they come through. Here's a quick look at what's going on in the commodity space. You have declines in oil prices. Brent crude and NYMEX crude each off by at least 3.3% right now. President Trump saying Iran and the U.S. may meet for a second round of direct talks this weekend. We'll keep you posted on those developments. He also says it may not be necessary to renew to the two-week ceasefire that's set to expire on Tuesday evening. And gold prices, little change at the moment. You look at S&P 500 futures, they're currently pointing to a higher open. The U.S. dollar, however, declining, resuming its losses over the last couple of days. It's been kind of a slide for the U.S. dollar in the last 10 sessions. And the 10-year yield, little change right now before an 8:30 a.m. report on retail sales for the month of March, which is expected to show an increase because of the rise in gas prices. That does it for Bloomberg Brief. Surveillance is up ahead next. From New York, this is Bloomberg. When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view. As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. when you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're probably in the sort of global relief rally.
Markets are pricing in a resolution.
Equity markets have started living in the future.
This type of environment, you just stay in large caps.
There's a short-term look-through in the market. That's what keeps the stock market going.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from the nation's capital this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, following a week full of verbal intervention.
Iran is in very bad shape. I think they're very desperate. They want to work a deal. They would like to work a deal. They're willing to do things today that they weren't willing to do 2 months ago. There's no nuclear weapons. Free oil, free Hormuz Strait, everything would be nice.
The president claiming Iran is making key concessions, helping to send equity markets to back-to-back record highs, even as some foreign leaders are indicating a peace deal could take 6 months to be fully agreed.
Yeah, here's the issue. We've seen a complete reversal, a violent reversal in equity markets with one of the fastest rebounds ever from some of the lows. And yet, yes, there are some caveats, like it is going to be difficult to discuss the nuclear dust as well as reopening the Strait of Hormuz in any kind of feasible long-term way. It doesn't seem to matter because ultimately people see that there is a desire to prolong this ceasefire. At this point, talks between the U.S. and Iran are focused on simply extending the ceasefire out to those 6 months to get some sort of longer-lasting agreement.
Back-to-back record highs in the equity market, heading towards 3 weeks of gains on the S&P 500 for the first time so far this year, encouraged by the words of the president. The claim, a key claim, claiming that Iran is making key concessions. We've yet to see that come from Iran, and that is a key sticking point.
We've yet to see that come from Iran. Reuters has some reporting that actually Iranian officials told them that maybe it won't be a full-on deal that you can expect before the ceasefire ends or within the next few weeks if a ceasefire is extended, but something more of a memorandum of an understanding to then get to longer-term peace. The president, though, is saying they're making key concessions. I mean, he told me weeks ago on the phone that they're ready to settle. At the moment, there is no deal, but the bombs have stopped. The key issue for this administration, as well as France and the UK, which are hosting this conference, is reopening the Strait of Hormuz.
Now let's work through the stock moves that we've seen over the last 1-2 weeks. The move on the NASDAQ, 12 days of gains on the NASDAQ 100. Looking at energy stocks, down 8% through April. Consumer discretionary, up around 10% through April. That's the big turnaround there. But within tech, we've seen semis absolutely rip. This week, Microsoft is on course for its biggest weekly gain in more than a decade. And the most follow ETF software index that a lot of people were shaken up by several months back. I tell you what, the week that's had, that week for this particular index, that index has been on fire.
Yeah, and some of the last time that we've seen moves like this is going back to the dot-com bubble, which is one reason why people are getting a little concerned, because what you're seeing is winners and losers, and on the whole, you're getting huge dispersion within the tech trade. At the same time, yes, you are getting a number that are completely ripping. Nonetheless, there are winners and losers, and you can see this shaking out with software. The likes of software really kind of struggling in certain pockets, even as others get that rebound. So when you take a look at this, is this a healthy rebound, or does this indicate some sort of blow-off top where there's a lot of concentration risk in a couple of key names.
Equity futures on the S&P so far this morning, positive by 0.25%. Coming up this hour, we'll catch up with Ed Yardeni of Yardeni Research, with stocks on course for a third straight week of gains. We'll speak to Gregory Allen of CSIS on why Anthropic's new AI model is a watershed moment. And we'll speak to the Egyptian Trade Minister, Mohammed Farid Saleh, on the economic impact of the war on the Middle East. We begin this hour with stocks holding steady after reaching fresh record highs. Ed Yardeni of Yardeni Research writing, equity investors certainly have reason for optimism. Ed joins us now for more. Ed, welcome to the program. Let's get to those reasons. What are they?
Well, first and foremost, as the Middle East situation has calmed down, the war isn't over. There's a ceasefire. It may or may not take 6 months to get a full peace agreement, but the main point, as you said, is the bombs aren't dropping and things are calming down. Then, of course, secondly, earnings have been on fire. We've had earnings-led melt-up in the stock market for a while, actually, and as the war occurred, the earnings expectations continued to increase at a faster pace. So the analysts didn't get the war memo, and they didn't get any feedback from the companies they follow that this is just a concern for earnings anytime soon.
Ed, we're getting some feedback from the equity markets, some clear feedback. The enthusiasm for tech again is overwhelming. The 12-day run on the NASDAQ 100. Within tech, it's not just chips. We're seeing the likes of Microsoft, which at one point was really, really struggling, have a fantastic week as well. Ed, what's behind that renewed enthusiasm for that tech trade?
Well, in 2 words, or 3 words, the roaring 2020s. You know, there's a lot of similarities between the current decade and the 1920s. The big one is technologically led productivity gains, which increases the purchasing power of consumers. We're seeing that. It increases the growth rate of the economy. I think we saw that most of last year. I think we had some weakness in the fourth and first quarters, and I blame that on the weather. So I expect to see, remember Chauncey Gardner from being there? I expect in the spring there will be growth. I think we're going to see tremendous growth, and really the economy's resilience has been phenomenal, and therefore earnings have been phenomenal.
Does this type of performance in markets give you comfort or give you pause, given the incredible volatility, the whipsaw, the biggest shift from oversold to overbought, 18-day kind of round trip going back to 2016? I mean, doesn't it scream of something unstable rather than a sense of calm strength?
I'm pretty calm about it all. I'm comfortable with the way the market's behaving, because what it does is it kind of tests out the idea that there's trouble ahead. And so we saw that with artificial intelligence. We had a few corrections in that area, but yet, you know, for all the talk about an AI bubble bursting, that's just not occurring. More money is being spent not just by the hyperscalers, but by people like me who you know, are signing up for Claude and ChatGPT. I mean, I'm using all the models. Some of them do some things better than others. But I find myself using artificial intelligence all day as a research assistant. Now we're creating some AI tools to help us do our job. So it's increased our productivity. So from my perspective, it's all good.
You're going to make me sound like a Debbie Downer, but the more you say it's all good, the more I'm going to try to poke holes in it. And at this point, the other hole that people are trying to poke is, can you have 2 things at the same time? The idea that earnings are coming in better than expected, an economy that's more robust than expected, and commodity prices that are higher than expected without some sort of commensurate inflation that could potentially curtail some of this enthusiasm?
Well, I think everybody's expecting that inflation will be picking up here the next few months. But you know, when we had that inflation burst surge, I should say, in 2021, 2022, a lot of that was first led by supply chain disruptions, which put a lot of upward pressure, particularly on durable goods prices. Then Russia invaded Ukraine, and so we got, on top of that, we've got a spike in oil prices. This time around, we're seeing that the impact of last year's tariffs is probably wearing off. We're seeing that home ownership inflation is the shelter inflation component of consumer price inflation is coming down sharply. The price of oil looks like it's doing another one of these short-term spikes, reminiscent of 2022, without the pass-through that we saw in 2022.
Ed, when it comes to the stock market, how much are you feeling calm, and how much are the recent gains because of verbal intervention from the White House?
Well, obviously that had a big impact. You know, a lot of the concerns that people had that caused the market to go down by 9% from what was it, from January 27th down to March 30th. Those concerns have been around for a few weeks. People kind of kick the tires and realize that there's no flat there. The tires are still inflated and cars still moving forward. And I think that's a reasonable analogy for what we're seeing here in the market is the AI concerns created buying opportunities. And by the way, everybody knows now that geopolitical crises create buying opportunities. So we've got this annoying situation where you don't get a chance to buy for very long. You really have to jump in and just buy on the dip. Otherwise, everybody's buying once they figure, you know, let's look through this geopolitical crisis, and we're getting some really good bargains here. And one of the reasons we're having good bargains is PEs came down not just because you know, valuations crashed, but because earnings really took off. So usually you buy high PEs expecting down the road you'll get better earnings, but we've had almost instant gratification with earnings continuing to significantly surprise to the upside. And it's not just technology, and it's not just energy.
Ed, we appreciate your enthusiasm, sir, as always. Ed Yardeni there of Yardeni Research, constructive on this equity market. How many times have we heard this, that the adverse scenario is so adverse that we won't see it because ultimately they'll look to avoid it? When you listen to the president claiming the Iranians have made key concessions, we don't know if they have. We've yet to see evidence of it. When you listen to the IMF and the World Bank through this week in Washington, D.C., they've been pretty clear. Every day that goes by that a Strait of Hormuz remains closed, you get closer and closer to that so-called adverse scenario.
Yeah, and part of the reason why the IMF is particularly concerned is because every day another country comes to them with their hand out asking for money to try to stave the gap that they have in their budget as a result of trying to buy energy and the fact that their economy is slowing otherwise. So they're feeling it on the ground in the most vulnerable countries. On a whole, this is where the averages mask individual pockets of pain, and the reason why you can get a very different sentiment than the overall averages that speak to a much more resilient kind of economy.
And when it comes to individual pockets of pain, Bank of America Institute has a note out this morning talking about small firms, especially transportation, agricultural. Their spending on energy, gas, diesel, up 25%. And this is now April. This is ahead of key driving season when prices naturally, most normally, go a lot higher.
Heading towards another week of gains on the S&P 500. Despite all of that, futures up by 0.25% with an update on stories worldwide. With your Bloomberg Brief, I'm pleased to say that joining us now is Scarlett Fu. Hey, Scarlett.
Hey, good morning, John. President Donald Trump says the war in the Middle East could end soon. Trump says it may not be necessary to renew a 2-week ceasefire with Iran before it ends early next week because the war could be over before then. He also said the U.S. and Iran could meet for a second round of negotiations this weekend. Meantime, President Trump also says Israel and Lebanon agreed to a 10-day ceasefire. Trump says he held, quote, excellent conversations with leaders of both countries. There was no immediate confirmation from Israel or Hezbollah. And the U.S. government wants to make a version of Anthropic's AI model Mythos available to major federal agencies. A memo seen by Bloomberg did not specify when various agencies would get access or how they might use it. That is your Bloomberg Brief. John?
Hey, Scarlett, thank you. Great work, as always. Looking forward to catching up with Scarlett again later this hour. Some reporting from Axios coming about 10 minutes ago, 15 minutes ago, that the boss of Anthropic will be meeting with the chief of staff of the White House, Susie Wiles, a little bit later on today. There's a bit of a contradiction, some tension here that's worth exploring. That on the one hand, this company is the so-called supply chain risk. On the other hand, they want to use this company within the government across various departments.
And the extra tension is that they already are using this company across a variety of different departments. And you could argue they've been instrumental in the entire effort in Iran, as well as in other conflicts that the U.S. has been involved in. It is a difficult moment. Which side is going to give? And how do you understand this uncomfortable situation where executives have a good degree of power over domestic security and international security of different nations?
We'll catch up with Gregory Allen of CSIS a little bit later this hour on that topic. Up next on the program, closing in on a deal with Iran.
I think we have a very successful negotiation going on right now, and And I think it'll be, if it happens, it'll be announced fairly soon. And that'll give us free oil, free Hormuz Strait. Everything will be nice.
Up next, we'll catch up with Stephen Kirk of the Council on Foreign Relations. Live from Washington, D.C. this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Live from Washington, D.C. this morning. Good morning to you all. Equity futures right now, the S&P 500 firmer by 0.25% following a four-day winning streak on the S&P and a second consecutive day of closing above 7K on the S&P. So far this morning, up 0.25% on the NASDAQ, up by 0.2. Under surveillance this morning, closing in on a deal with Iran.
I think we have a very successful negotiation going on right now. And I think it'll be, if it happens, it'll be announced fairly soon. And that'll give us free oil, free Hormuz Strait. Everything will be nice. And I think your oil price will go down to lower than what it was before. And I think a lot of good things will happen. If there's no deal, fight or resume.
So here's the latest this morning. President Donald Trump saying Iran has made key concessions ahead of potential negotiations later this weekend. Bloomberg's Tyler Kendall joins us now for more. Good morning, Tyler.
Hey, John. Good morning. Well, President Trump says that he may not even need to extend the ceasefire set to expire on Tuesday, telling reporters that progress has been made related to Iran's nuclear program. He says that the country is prepared to turn over its already highly enriched material in what would be considered a major breakthrough for the negotiations. But at this point, Iran has not weighed in on these latest remarks, and at least publicly, recent comments do indicate that the sides still appear very far apart, which is part of why Bloomberg News had been reporting that they were mulling a potential 2-week extension to give time for technical teams to make a little bit more progress. And now some Gulf Arab and European leaders are telling Bloomberg News that they don't see a U.S.-Iran deal materializing for another 6 months. Importantly, this reporting also goes on to indicate that Gulf allies share U.S. concerns that any deal needs to include a permanent ban on Iran's nuclear program. Of course, though, it's not just the nuclear program. We are also learning some more details about how the Strait of Hormuz has been operating, as the Pentagon confirmed yesterday that it has expanded its blockade from just Iranian ports to also include any vessels in the so-called shadow fleet. John, as we await more details, as you well know, the UK and France are holding the summit today with more than 40 nations about deploying a potential naval force known as the Maritime Freedom of Navigation Initiative. The overall sense is that these assets are not going to be deployed until there is that longer-term agreement.
We'll be tracking those negotiations if they happen through the weekend. Tyler Kendall there with the latest right here in Washington, D.C. To build on that conversation, Stephen Cook of the Council on Foreign Relations writing, the Iranians will demand a role in whatever is planned and will not give up whatever leverage they have. Stephen joins us now for more. Stephen, good morning. Good to see you.
Good morning. Good to see you.
Let's talk about some of the claims coming from the president, claiming they've made some concessions. Can you just outline your understanding of what the demands are and what the concessions might be?
Well, the demands have been pretty consistent, that the Iranians have to give up their nuclear program, they have to give up their missile program, and stop arming and supporting their proxies. I don't see any real movement on the part of the Iranians. There may be a negotiation. The Iranians may demonstrate some tactical flexibility in order to get themselves out from under the problem that they've now found themselves with an economy that's teetering on the edge. But they want to live to fight another day. And the people in charge in Iran right now are the hardest of the hard line. I mean, the president keeps talking about this new pragmatic regime. These are people with a history of waging war against the United States and its partners for the last 47 years.
Is the president just basically insinuating they're pragmatic because they showed up to talks? Is that it? Is that the only step we've seen from Iran to be willing to negotiate with the United States, is that they actually showed up in Islamabad?
Yeah, that's precisely it. I mean, they're willing to talk. So essentially the president is Roy Cohening this. He's saying something that he wants everybody to believe, and he's trying to create his own reality on this. But there's no indication that this group of people are willing to meet the United States. They're not willing to capitulate on the battlefield. What makes anybody believe they're going to capitulate at a negotiating table?
You're right to say this administration has been very consistent with what they wanted to see from Iran. But now there's this extra additional need, which is the opening of the Strait of Hormuz. Would the United States or Gulf partners accept the Strait of Hormuz be open, but Iran would get some sort of monetary fund for that, a toll?
It strikes me that the United States will accept that at some point. The Gulf states will be very, very unhappy about this. I mean, think about the strategic setback this is for both the United States and our Gulf partners. Before this war was launched, there was freedom of navigation through the Strait of Hormuz. Now the Iranians have some notional leverage over the strait, although we're blockading it right now. Some resolution of this that gives the Iranians a role is something that no one ever imagined. And can you imagine a situation in which the Emiratis or the Saudis have to pay their primary regional adversary for transit through the Strait of Hormuz to keep their economies going? This is a tremendous strategic setback for the United States, as well as the Emiratis, the Saudis, the Iraqis, the Bahrainis, everybody in the region.
And it's not just about Iran, it's also about China. And the Atlantic Council put out a graph showing that the number of cross-border payments transacted in renminbi has gone up tremendously in the past 6 weeks. I mean, how much do you see China stepping in and trying to create the petro yuan to try to reassert themselves in terms of the voice of influence over the region?
Yeah, you know, I think the Chinese stand to gain here at the expense of the United States. But I think that the Chinese also have a compelling interest in freedom of navigation throughout the world, but particularly in the Strait of Hormuz. They also have a ton of oil in storage. So I think the Chinese are well placed to play a role. They have pushed the Iranians into talks and made their preferences known. But I don't think the Chinese are really wanting to step in and replace the United States here. After all, to the extent that the United States gets wrapped around the Strait of Hormuz, Iran, and the region, there's less time for the United States and less resources for the United States to focus on East Asia.
It is not completely clear what all of the goals are. There is a general goal, though, in the United States and in the Western world: freedom of navigation through the seas, a desire not to see a nuclear Iran. What's Iran's ultimate goal, given the new leadership?
The ultimate goal of this regime is survival.
Okay, but beyond that,
is to continue its nuclear program. I mean, the ultimate guarantee of regime survival, to hold on to the leverage that it now has in the Strait of Hormuz, which is something new, which is almost as good as, if not better, than a nuclear program, because you might be able to make money off of it, and to continue to play a role and put pressure on the rest of the region. The Iranians have not given up, despite the battering that they've taken, any of the basics of their approach to the region and their approach to the United States.
There has been a change of strategy from the United States. There is now a blockade of the blockade. Does that mean Iran has lost leverage, or are they just going to wait this out?
The Iranians look at the world in a very different way, the way we look at the world. We look at the world in 2, 4, 6, 8-year periods, because that's our electoral cycle. Those in charge of the Islamic Republic have a much longer time frame. So they'll wait us out. They'll wait out. A new administration will come in. They'll have some new approach. And even if there is some change, there's a blockade of a blockade, but there's some negotiation that's going to go on about the status of the Strait of Hormuz. They're going to insist that they play some role in it.
But right now, they can't move their product either. And at some point in the next few weeks, analysts say there's going to be shut-ins. They could do some serious damage of their wells, which is oil is basically the main driver of their economy. Do you think that could force them to be a little bit more pragmatic?
Well, certainly the economy is on the verge of collapse. The Israelis and the United States have done tremendous damage from the air, and now this blockade is making things even worse. But keep in mind, as I said before, this is the hardest of the hard line. They'd rather eat dust than capitulate to the United States. So I think this is going to go on much longer. And again, at the negotiating table, there might be some tactical flexibility. They're interested in sanctions relief, but are they interested in solving all the issues between the United States and Iran? I don't think so.
Really tough question to answer, but I've got to ask it, and forgive me. You've got a base case of how long the strait's going to be closed for?
I think the straits are going to be closed for at least the next few months.
The next few months?
I think it's entirely possible that, you know, it's going to take time to negotiate the end of this blockade, that the Europeans are talking about this mechanism. It'll take time for them to get it together, to get naval escorts through the Strait of Hormuz. That's even assuming that the Europeans have the kind of organizational capacity to actually do this kind of thing without the help of the United States. And as I said, I think we're talking about the hardest of the hardliners. There's going to be tactical maneuvering around negotiations, but it could be a while before the Strait is actually opened in a way that the economy can get going again.
Stephen, appreciate your perspective. Thank you, sir. Stephen Cook there of the Council on Foreign Relations. If there are any Europeans in Washington waking up this morning in the IMF World Bank spring meetings, hearing the next few months, I'm sure they'll be immensely concerned. We've seen the rationing take place in Asia, and if the Strait is closed for another few months, you'd imagine you're going to see similar things take place in European nations in the weeks to come.
What did we hear from the IEA yesterday? Fatih Birol talking about that Europe is 6 months away from running out of jet fuel, and we're seeing flight cancellations from European airlines because they don't have access to the product.
Unreal. Yeah, equities are at all-time highs on the S&P 500 and on the NASDAQ at the close on Thursday coming into Friday. Futures up another 0.25% so far this morning. Up next, we've got to talk about this. Gregory Allen of CSIS, as Anthropic's latest AI model has markets and the government very much on edge. That conversation just around the corner. Live from Washington, D.C. this morning. You're watching Bloomberg TV.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Live from Washington, D.C. this morning at the IMF World Bank Spring Meetings. Through this week, equity futures shaping up as follows. On the equity market, on the S&P 500, positive once again, adding some weight to a record-breaking rally. 4-day winning streak on the S&P, up 0.2%. 12-day winning streak on the Nasdaq 100, the longest since July 2017, up another 0.1% so far this morning. On the S&P, looking for a third consecutive week of gains. Haven't seen that all year. For oil, down for 2 straight weeks now. We haven't seen that since the war started. WTI crude and Brent shaping up as follows. Brent down by a little more than 3% so far this session. The front month of the futures curve on WTI, we're down by almost 4% at 91. That's the oil setup. Turn to the bond market. You haven't seen as big a move. We talked a lot about this. Equities have rallied more than 10% of the lows. For crude, we've had a sell-off of about 20% from the highs. But in the bond market, we've settled around 430, another close above that level just yesterday, Bramo. This morning, we're down by 2 basis points, 429.35. There is a takeaway from some in fixed income that just maybe we've settled at a more elevated level because of this war.
Yeah, and ultimately, if you have strength in the economy that can prop up equities to record highs, and frankly, you've got consumers that can absorb the higher costs coming from commodities, well, doesn't that indicate that inflationary pressures are going to remain just a bit higher than they would otherwise be? Right now, if you take a look at Fed funds futures, there are no rate cuts being fully priced into the market by the end of this year.
Which is going to keep this Fed on the sidelines, to the point. That's what the market is priced for now. Even with the new head of the Federal Reserve and a hearing set to take place next week with Kevin Walsh on deck, there is a belief on this market that those rate cuts won't be happening anytime soon.
Even if Kevin Walsh becomes the next Fed chair, I should say when. Everyone believes in Washington. We've had a lot of conversations about this, that he will be the Fed chair. It's just a matter of timing and scheduling, depending on when the DOJ potentially drops this probe. And then Tom Tillis, the senator of North Carolina, can finally give a yay vote to that. Of course, the issue is, and Lisa brought this up the other day, actually, this White House kind of gave cover to the incoming Fed chair, saying maybe now, right now, is not the time to move around when it comes to rates.
Gave cover to the Federal Reserve. I'm not sure about the incoming Fed chair because at the moment, there's no open door for him to walk through.
True.
I've asked that question repeatedly through this week. Everyone I've met in Washington, I've asked the following question. Why won't the president take the off-ramp? He's chosen his man. He's highly confirmable. The Senate wants to get him through, get him a seat on the FOMC. The DOJ investigation could have gone away, and yet they're sticking with it.
You know, I can't answer that question. In fact, I've tried to read several psychology manuals, and frankly, I think it's above my pay grade.
He's doubling down. He really does not like what has happened. I mean, when the president talks about this, he's emphatic. He does not like what happened at the Federal Reserve. He thinks it's gross misconduct in terms of all the money they spent. I mean, he went there with a hard hat to look at this, and he's doubling down, and he's not willing to take the off-ramp yet. Maybe it changes.
That hearing's set to take place next Tuesday. On a raise out this morning, Netflix shares tumbling in pre-market following a weaker than expected outlook. The company's co-founder and chairman, Reed Hastings, separately announcing he will step down from the board in June. Elsewhere, the president claiming Iran has made key concessions in negotiations and a deal to end the war could be announced soon. The president saying the two sides may meet for a second round of negotiations this weekend. And finally, a 10-day ceasefire between Israel and Lebanon is now in effect. The Trump administration ramping up pressure on the two nations after the continuing violence threaten to upend the U.S. truce with Iran.
Look, this is a key part, at least on the part of Iran, to any kind of sustained ceasefire. And the good news is that it is holding for now, that it does appear that the fighting, the bombing has ceased. A question here of Hezbollah, the group within Lebanon, whether they are going to abide by this, whether they have been a part of this. And then Stephen Cook has actually written about this, and I think it's a really interesting point. This idea that if Hezbollah gets sort of downgraded as a party within Lebanon, does that allow Lebanon to normalize relations with Israel, which would be absolutely a setback for Iran? They don't want that to happen. So there are some sort of entrenched sticking points that are going to be very difficult to get over.
There's no way this Iranian regime is going to want to withhold any money and make sure that they want to make sure they continue to support and back all the proxies, including Hezbollah. And in Trump's Truth Social yesterday, he's talking about Israel and Lebanon. No mention of Hezbollah, which is where Israel is fighting. But it could give a little bit more breathing room for both sides of the negotiations to actually have these talks. Because the Iranians, every single time you speak to them and hear from them in their press, they say, well, one of our conditions now is that Israel needs to stop when it comes to the fighting of Hezbollah.
The Strait of Hormuz is still closed.
Yeah.
And every day
oil's
that
at
goes
91.
by, the IMF has said every day that goes by, we get closer and closer to the so-called adverse scenario. I heard from Steve Orth of Federated just yesterday, who's made the point repeatedly that this is so bad that if it can't happen, it won't. That's their view on things. And I think that's the market's view as well. It's so bad that it can't happen, so we can look through it. Yet you speak to Stephen Cook, Lisa mentioned him, we caught up with him just moments ago. He's making the point that this could go on for 2 months. So you've got the analysts looking at the prospect of this going on for 1 to 2 months from here. Maybe longer, who knows? I hope this is wrapped up quickly. But this market is priced for something very, very different.
Well, what's so interesting, though, is that before this conflict began, and there's all these reporting that Trump is potentially going to do this, everyone said, well, Iran would never go for the nuclear option, which is actually closing the Strait of Hormuz. That would never happen. It is too dangerous. It is too much of an economic blowback for everyone, not just the global economy, but also the Iranians themselves. And guess what? They did. They went for that nuclear option, and they decided to close the Strait.
WTI this morning at about 91, Brent crude in the mid-90s. We need to talk about this story too. It's one of the big stories here in Washington, D.C., and for that matter on Wall Street. Anthropic's latest AI model sending shockwaves across Wall Street. The White House moving to give U.S. agencies access, even as officials warn of major cybersecurity risks. Gregory Allen of CSIS writing, Mythos is a genuine watershed in cyber offense. Wall Street's reaction confirms this isn't hype. Gregory joins us now for more. Gregory, good morning.
Great to be with you.
Let's start with what this is. Can you briefly describe what is Mythos?
So everyone who has used an AI chatbot such as ChatGPT or Claude is familiar with that kind of interface. And over the past year, we've seen dramatic progress in these capabilities, not just in chatting with users, but actually writing software programs, and as they get more agentic, building fully fleshed out systems. So if you're really, really good at writing computer code, it's not that far away to be really, really good at hacking computer code. And what we've seen is an explosion, a qualitative shift in just how much these models can achieve. This is the latest and greatest Anthropic model, and it is capable of executing, not just finding a bug, but exploiting that bug, going through all the links of the cyber kill chain to successfully execute attack, and doing so autonomously. Now, why does that matter? Because even though we're talking about computers, cybersecurity has actually been under a massive labor shortage for the past 20 years. If you think about, why aren't we able to patch all of these bugs? It's because hackers are really expensive. These are talented folks who are difficult to train. But now, if AI can do so much of that job by itself, you start thinking about Anthropic as a company having capabilities comparable to that of the National Security Agency in the United States government. And fortunately, Anthropic was the one to get to this future first. They're approaching the United States government, they're approaching critical infrastructure companies, they're approaching the key cloud providers and banks and saying, this is what we've discovered. You live in a different world now. Let's figure out how to secure it.
From your standpoint, are you fearful that this could expose vulnerabilities or hopeful it would improve resilience?
So I think there's a sequencing part of all of this story. This is a capability that is useful for cyber offense, and that means doing bad things, but also doing things that are critical to U.S. national security. But it's also a boon for cyber defense, because you can imagine every new piece of software before it enters the world is going to have to go through the Mythos test, which is to say, can you survive this gauntlet? And the reality is, going through that gauntlet before was, number one, pretty expensive and time-consuming, and number two, not perfect. There was a lot of bugs that weren't discovered, and we know that because Mythos just discovered a giant pile of new bugs and all this stuff. So this does offer a world in which we can secure our software more in a bigger way. The problem is that transition point. There is a massive amount of code, whether that's open source code, and it turns out that much of the infrastructure of the internet relies on stuff that is maintained by volunteers, and also big critical infrastructure providers. We're talking banks, energy companies, and the amount of overhauling that they have to do over the next 12 months is massive. And the question is, how long can we keep the Mythos capability exclusively in the hands of the good guys? How much can we patch before problems start arising?
How far behind is the government from the private sector, and how willing is the government to work with said private sector that there's been some tension between?
So if you're talking about, could the United States federal government create something like Mythos? Could they create something like a frontier AI model? They are very, very, very far behind. They're really not even trying. So the only way that they can get access to these capabilities is to work with private industry, the types of folks who can do this. And in this case, Anthropic has what they estimate to be a 6 to 18-month lead, even over OpenAI, even over all the other best AI labs in the world, which are in the private sector. So that period of time is a critical window to start patching all of this computer code before China catches up, before hacker communities get access to comparable capabilities. And tragically, that window of time is one that the U.S. government is at risk of squandering because of a dispute over contracting terms in Anthropic's working with the Pentagon. Just for folks who aren't aware, Anthropic is a critical provider not just of cyber AI capabilities, but also of AI capabilities that are useful in intelligence and warfighting, literally being used in Iran right now every single day. And despite Anthropic providing all those critical capabilities to key national security agencies, over this contracting dispute, the Pentagon decided to label them a supply chain risk. The type of designation that we use when we find out a company is secretly like a front for Chinese spies. It's completely unreasonable, and the government is in this moment of utter confusion, because on the one hand, they're saying, Anthropic, you've got to help us secure the financial arteries of our economy on cyber. On the other hand, we don't trust you at all, and actually we'd prefer if you go out of business.
When we talk to different executives and we ask them about Mythos, they say, well, there's as much good as there is bad, and we're actually really optimistic. When you talk to them, not on a camera, what's the level of concern right now among executives as well as government officials about what this could do in terms of systemic disruption?
So I think the way to think about it is, what if Anthropic wasn't going down this path? Right? Anthropic is suffering in business terms because they're not offering Mythos to all of their customers right now. They've made a strategic decision to withhold these capabilities, to invite in 40 key companies, to invite in banks and government agencies to try and secure the internet from this degree of cyber power. In the alternative scenario, where this fell into the hands of somebody who wanted to use it to make bets on the market, or somebody who wanted to use it to exploit cyber offense in a national security sense, maybe one of our adversaries, we would be having a completely different conversation. So the executives are probably right. Because Anthropic has chosen this strategy of engagement and support, the long-term outlook is pretty good. What they're really going to be dealing with is an incredibly messy middle.
Gregory, you said that Anthropic is being used right now when it comes to the war. How has Project Maven changed how the U.S. fights war?
So Project Maven started out as a relatively humble project to incorporate AI into analyzing drone surveillance feeds. So if you're familiar with those predator eyes in the sky type of drones, it turns out that here too, there's a major labor shortage. It turns out that the U.S. military has a really hard time getting people to watch all of those screens simultaneously. So Project Maven thought, we can bring in AI computer vision. They can help these analysts by doing sort of the first first processing pass of this type of footage. And that was back in 2018, 2019. What it could do is it could say, hey, in all of these satellite photos or drone photos, this part is all empty water, but right here there's a warship. Fast forward to today, and the capabilities are much more sophisticated, in part because we're incorporating things like anthropic models, large language models. And what that means is that the AI can no longer just say, here is a warship. It can say, hey, there was no warships in this area yesterday. Now there's 10. They appear to be heading in this direction, and it can write the first draft of the intelligence report about what those things might be up to. And it can speed up all of these workflows. When you hear about the fact that, for example, the United States military struck 1,000 targets in 24 hours in the first part of the Iranian war, you know, the benchmark in the U.S. government used to be like 50 per day. And the key thing is not just how many things you can strike, but the fact that many of those targets are mobile, many of those targets are disguised. So when you hear about 1,000 struck targets in Iran, what that actually means is 10,000, 20,000 high-quality intelligence processing and targeting decisions that had to be made. There's no way the U.S. government could have done that without the help of AI.
Gregory, appreciate your time. Thanks for making time for us today. Thank you. Gregory Allen there of CSIS on the latest from Anthropic. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's get over to Scarlett Fu. Hey, Scarlett.
Hi, John. At least 2 more empty tankers linked to Iran have sailed into the Persian Gulf. This comes hours after U.S. Naval Forces Central Command warned it would consider boarding and seizing any sanctioned vessels regardless of location. SpaceX is moving up its vesting schedule for employees. Sources telling us here at Bloomberg it could come as early as next week as the company prepares for its IPO, which is targeting a valuation of more than $2 trillion. President Donald Trump warns that New York City Mayor Zohran Mamdani is destroying the city. Trump says Mamdani's plans to raise taxes on the wealthy will cause harm and chase people out of the nation's largest city. That's your Bloomberg Brief. John?
Hey, Scarlett, thank you. More from Scarlett in the next hour. Up next on the program, bracing for energy volatility.
The situation will gradually improve, but we should be prepared to rather volatile energy markets for some time to come.
Up next, we'll catch up with the Egyptian Minister of Investment and Trade.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from Washington, D.C. this morning. Good morning to you all. Wrapping up our coverage of the IMF World Bank spring meetings with equity futures adding to gains on the S&P 500, up another 0.2%. This headline just crossing from the EU, planning to prepare a joint action on jet fuel if the blockade of the Strait of Hormuz persists. And it looks like for now, at least as far as we know, it's persisting.
I would love to know what the Europeans think persisting, what that timeline is, because the IEA yesterday is saying 6 weeks. That's all they have left when it comes to jet fuel. And basically, they're going to be closing down some flights very soon.
Under surveillance this morning, bracing for energy volatility.
The situation will gradually improve, but it can take up to 2 years to see the big chunk of the production coming back to the before war levels, and some of them may be even longer than 2 years. We should be prepared to rather volatile energy markets for some time to come.
So here's the latest this morning. Optimism rising over an end to the war as major economic risks still remain high for countries across the Middle East. Joining us now, I'm very pleased to say, His Excellency Mohammed Fareed Saleh, the Egyptian Minister of Investment and Trade. Minister, good morning, sir, and welcome to the studio.
Good morning. Thank you.
It's good to see you. Can you walk us through the current state of the economy in Egypt, how resilient things are, the degree of fuel rationing you've had to implement to get through this very difficult period?
As you mentioned, what's happening in the region is indeed affecting, I would say, economies and markets. However, it's all about the response of governments to the current turbulence and how we deal with it from a policy perspective. That's from the one hand, and the consistency of messages and policy as well being undertaken. So in the case of Egypt, we were very, how can I say, foreseeing that this conflict might be taking some time as opposed to initial expectations that it is going to end very soon. Accordingly, we took a very, I would say, quick actions when it comes to rationing, increasing the energy prices across the different products that are being sold in the Egyptian market. And this is coming from a consistent fiscal consolidation policy. So we foresaw that these type of measures and these prices and what's happening in the natural gas prices, in the oil prices, would be having a detrimental impact on our fiscal deficit. And accordingly, we had to ration very quickly and to adjust the prices to reflect what is happening in the oil prices from the one hand. On the other hand, our response to the monetary policy regarding how we're dealing with these type of shocks and the absorption capacity of the economy, the flexibility that we have shown through the Central Bank of Egypt, of course, in terms of the effects to be absorbing some of these shocks, as well had a positive, I would say, impact in terms of conveying to the market the consistency of our reforms. We had embarked and clearly communicated to the public and to investors a couple of years ago or 2.5 years ago that we are inflation targeting. So inflation targeting implies that you need to be capable of using your other tools, such as interest rates, such as FX rates, to curb inflation in the medium term and to act as an absorption to the shocks that are happening. So energy for us, we're in a much better initial condition. We have regasification, I would say, ports in Egypt, one on the northern side and one on the Red Sea side, and hence we don't have a problem when it comes to availability. However, the costing, of course, had increased.
When it comes to the Red Sea, though, do you have contingency plans if, say, Bab el-Mandeb Strait gets closed by the Houthis?
It had happened before, so basically we deal with it as it happens. Of course, we work on on eliminating or reducing the probability of this happening through political dialogue, diplomatic dialogues, and so on and so forth as much as we can. However, we have dealt with this before, and we get to see what is happening currently in terms of the shipments that are passing through the Suez Canal actually had been increasing and recovering gradually from previous halts in the Strait of Bab el-Mandeb. So, yeah.
Lots of reports that it's not just Pakistan, it's Turkey and Egypt behind the scenes helping mediate between the United States and Iran. What has been your role exactly?
Well, as a Minister of Investment, I don't think I have a role here, but maybe the Minister of Foreign Affairs would be having, I believe we have quite a good role when it comes to mediating between the different parties, trying to reach to a common ground regarding the ceasefire, regarding what are the next steps as well. So it's not only about the ceasefire, but the next steps after reaching to a point of conclusion so that we ensure it doesn't happen again. So I'm quite sure that the country itself and as well through the Ministry of Foreign Affairs are doing quite a good communication, I would say, efforts and mediation efforts between the different parties associated. And probably it's not only Egypt as well, you will find Turkey as well part of the equation of these mediation efforts.
While you're here in Washington, D.C., how much are you looking to raise money in case the Strait of Hormuz is closed for, say, months, like an analyst who was just on seemed to suggest?
Our aim today is basically, one, of course, to be attending the relevant meetings and functions at the IMF World Bank. And the second target would be meeting investors, because this period is a convening period for all investors around the world to be participating in some of those meetings. So our target would be explaining to investors what have we done in terms of policy reforms, our consistency in the reform plan, irrespective of what's happening. We cannot be, how can I say, affected by interim problems that are going to happen when we get to see what's happening in the world, starting from emerging market crisis in 2019, COVID afterwards, Russia-Ukraine war, and so on and so forth. So basically, we know that it is a current turbulent period whereby we need to be consistent in our reforms and not affected. We might have to fine-tune some of our reform plans, but it is consistent reform plans empowering the private sector. And that's why the recent figures, for example, of the private sector investments that grew from a 40% of total investments in Egypt to around 58% during the latest quarterly figures. When we get to look at the industrial growth rate of the industry sector in Egypt, it grew by an average of 9% during the last 24 months. All of this resulted in a growth rate of 5.2%, which in itself is a driving force and attracting investors to participating in a young population. 70% of the population is under 40 or 35 years old, a vibrant economy, and so on and so forth.
Minister, I've only got 10 seconds left. I've had so many people ask me the same question. Do you know where Mohamed Salah goes next? That seems to be like the most important question.
That is the most important question, and I would have loved to know, but unfortunately I don't know.
Minister, you're a gentleman. Thanks for giving us some time this morning. We appreciate it.
Thank you.
Enjoy your time in Washington, D.C. The Egyptian Minister of Investment and Trade, Mohamed Farid Saleh. Up next on the program, we'll catch up with Rick Reeder of BlackRock, the Republican Congressman French Hill, Joyce Chang of J.P. Morgan, and the former White House senior advisor Amos Hochstein. The second hour of Bloomberg Surveillance. Up next.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We haven't lost U.S. exceptionalism.
The consumer has remained intact.
There has been a pullback in labor demand.
Inflation expectations in the near term obviously are rising.
The economy is still showing signs of weakness despite the comments about resilience.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
What a record-breaking run in this equity market stateside. Live from the nation's capital this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. A 12-day winning streak on the NASDAQ 100, and we add some weight to that run. On the NASDAQ 100 this morning, up by 0.1%. On the S&P, up by 0.2%. On the Russell, up by 0.4%. Energy has really struggled. Tech and everything else has done anything but struggle. This rally has been explosive.
Yeah, it really has been one of the fastest peak to trough, or trough to peak, I should say, markets that we've seen in recent memory. When you talk about moving from oversold to overbought territory in 18 days, that is the fastest that we have seen going back, I believe, to 2016. A question here about how durable this is and how much this indicates that the U.S. economy in particular is more independent from some of the geopolitical concerns, in particular, the price of commodities.
Well, let's start with the earnings. So the outlook for earnings has improved. It's not worsened based on the estimates. Now, whether that changes in the coming weeks remains to be seen, but let's go with it. We've had some decent guidance this week from ASML. We've had some decent guidance from Taiwan Semi, encouraging that move into the tech trade. And this week, not just about hardware, not just about the semis, also about software, which has had an incredible recovery over the last few days. So let's park tech. Then you've got the situation in the Middle East. Encouraged by the words of the President of the United States, some verbal intervention once again in the last 24 hours, claiming the Iranians are ready to make concessions. That's the claim. We've yet to see any real evidence backed up by the Iranians themselves. The US is talking about talks through the weekend. Let's see if we get those talks, and let's see if it leads to a genuine breakthrough that leads to an improvement in the flow of energy through the Strait of Hormuz.
There's been no verbal evidence from the Iranians, and there's been no physical evidence from the Iranians that they are willing to give up or capitulate, really, on what the president wants to see. He says they're ready to give up the nuclear dust. We haven't seen any of that. At the moment, the success of these talks is the fact that both sides are showing up and that they want to talk. At the moment, strikes, bombs are not dropping, but the facts on the ground have not changed for the Strait of Hormuz. And I'm really struck by what Europe's doing. Not only is Europe, the IEA, saying that they're going to run out of jet fuel, the Europeans are now preparing a coordinated action, a task force basically, to work together if they do get to that point where they're going to have to start working together to get jet fuel. KLM yesterday canceled some flights. You're actually seeing on the margins some companies have to rearrange because they don't have access to the fuel.
Yeah, markets just want to know what they have to discount, right? I mean, I think that it's interesting to note that European equity funds suffered the largest weekly outflow going back to November of 2024. So people clearly are worried about Europe. Over in the U.S., people are saying as long as things don't get worse, we know how to game out some sort of future, and we know how to understand how to discount some of the incoming data.
I think it's beyond that. There is a belief that if things get worse, it'll be so bad it's got to be avoidable, so it will be avoided. That seems to be the take, that the president is actively looking for the off-ramp, that we've seen this before. We saw it last year, and we've seen it repeatedly in between, back in the first term as well, over things like trade. But ultimately, because the president wants it, we'll get it. I'm not sure how simple it is this time around.
Every strategist we speak to says it's not simple at all, and frankly, it looks really terrible. And guess what? We're really pessimistic, and we have no idea what the markets are looking at. And the market says, well, if you take a look, bombs are not being dropped. So guess what? It's getting better. At least it's not getting worse, and that's enough for us.
Equity futures on the S&P getting better once again. Adding some weight to a record-breaking rally, up by 0.25% on the S&P 500. Coming up this hour, we'll catch up with Rick Reeder of BlackRock with the Nasdaq on a 12-day tear, the Republican Congressman French Hill as the Fed chair confirmation hearing looms, and former White House senior advisor Amos Hochstein as President Trump bets on a weekend breakthrough in the Iran war. We begin this hour with stocks sitting at record highs as investors eye a potential U.S.-Iran truce. Rick Reeder of BlackRock writing the immense disruption of trade and global supply conditions will be what truly influences market pricing. Rick joins us now for more. Rick, welcome to the program, buddy. Always a privilege, a pleasure to catch up with you, sir. This move that we've seen in this equity market, we've thrown so much at the stock market over the last several months. AI disruption, private market jitters, and now the Strait of Hormuz remaining closed for almost 2 months now, Rick. And here we are at all-time highs. Does that bring you comfort or make you nervous?
Good question. I'd say a couple things. First of all, I think what it tells you is the technicals in the equity market are extraordinary, and the earnings numbers that are coming through are pretty powerful. And so, you look at the U.S. economy and you look at what's, I heard at the beginning of the show talking about the economy's weak, economy's is strong. Actually, the parts of the economy and the primary drivers are doing quite well. You look at tech. I mean, you look at some of the numbers yesterday that you cited, and you look at these earnings growth. I mean, I was looking at some of the semis. You're talking about 97% earnings growth year on year. I mean, like unbelievably powerful numbers. And then you look at, the high-end consumer, that consumption. You look at retail sales when you break it down. Pretty darn good. So you've got an economy, and by the way, you've got, your housing's not in good shape, lower income's not in good shape. So that is what it is. But what drives the equity market is in pretty good shape. And the technicals, so you had this period of time that nobody wanted to buy stocks, and then you realize, I've said it before, you're going to have an IPO calendar this year that maybe is a couple $100 billion, maybe. We're going to buy back $1 trillion of stock this year. So we're actually, there's not enough stock to buy. So it's just a pretty, you talk about how explosive this is. You realize people sit on their hands, I don't want to do anything, particularly in tech. And then all of a sudden, maybe a little bit of better news, the earnings come in, and then you create this. The technicals and equities, by the way, it's completely different when you think about the treasury market, et cetera, because we're getting, what do we get, $520 billion a week of supply. It's, it's amazing in the equity market how good the technicals are.
Rick, is there a contradiction in the fact that we're seeing such explosive confidence in equities? You're seeing so much cash out there that are looking for places to go. And at the same time, people are expecting inflation to come back down to 2% over the next 5 to 10 years. Does that seem contradictory?
No, I mean, I think, and I've been doing this for a few decades. I've never seen a productivity revolution like this before. I mean, so you go through, almost every company I look at, you see a similar dynamic. I can grow my top line revenue, let's say it's 4 to 10%. Obviously, tech is significantly more significant than that. But then if I keep my labor static to down, and then if I can get my cost of goods sold, and you see this in M&A, if I can create synergies, I can run a higher operating margin. If you can run a higher operating margin, then my ROE is significantly higher. And so then it just keeps driving this dynamic. So you think about what, and by the way, we haven't really seen automation, AI really kick in yet. So I think, there's this transmission. Part of why I think big cap stocks are so powerful is you're building a moat because you utilize data so effectively. We're seeing productivity take place. It buoys earnings. Companies do great. By the way, the counter of that, it's not great from an employee point of view. You're seeing that play out, which is part of what what affects the interest rate transmission. So it's a really good story from a productivity and a corporate earnings point of view. not so much for the broad population.
So, Rick, how bullish are you right now? It sounds like you're incredibly bullish on big caps. I mean, are you essentially going all in? Do you think it is a time to go into equities over bonds, to go into equities over cash, to go into equities over commodities?
I'm not that bullish, but listen, I think, we are long the equity market. One of the things that happens when, you had what happened a few weeks ago when volatility spikes, you can't really, it's hard to have a very long equity position because you can't manage your risk using the volatility markets. Now vol has come down. It allows you to run a bit longer equity disposition. And so, yeah, I like equities. If you said to me, let's look at the credit markets, you say, gosh, where is high yield? Where's investment grade credit? And I say, okay, I've got some beta that I could put in a portfolio. Look at where spreads are, investment grade credit, not interesting. High yield, it carries well. Spreads are not that interesting. So I said, gosh, I'm going to take my beta and orient it a bit more towards the equity market or more towards the equity market where the earnings growth is explosive. I got convexity to the upside and I can manage the risk. That's a better, in a portfolio construct, that's a better disposition than I think than, parts of the credit market are today.
Rick, how do you think the Federal Reserve is thinking about all of this, especially given the fact that we are seeing higher energy costs in the United States? Not as high as Asia and Europe, but they are still ticking higher.
I tell you, there's a pretty extraordinary point in time. And, part of what I was talking about productivity and the employment dynamic. Listen, I think the Fed will be on hold and watch the data. And you'll see, by the way, you're going to see, and we are seeing what will be some, particularly at headline inflation, some heavier numbers on inflation. I think what the Fed has to do and the ECB has to do is think about you having a supply shock. This is not a demand-driven inflation. By the way, you think about what's happening to lower income, middle income people. You're getting hurt on food costs, fuel costs. Why would we raise interest rates to raise your mortgage? It doesn't make any sense. So I think what your synopsis is around that is, gosh, I'll stay on hold for a bit. I'll watch the data. I think the ECB should do the same. Maybe they get ahead of it and hike a couple of times. But I think, when we talked about before, housing, look at the housing numbers this week. You look at existing home sales. When the mortgage rate shifts up, home sales come down. And then you look at the breakdown of retail sales, what's happening. And the dispersion keeps growing. Lower income, middle income having a hard time. That's where the interest sensitivity is. So, listen, I think the Fed has to get the rate down. I still think you'll get a couple of cuts. Do you push it back a little bit? Yeah, maybe. But you're talking about a very two-speed economy where interest rates really affects things, housing, small business, lower income, and it's part of why I think the rate can come down.
So, Rick, let's look across the curve right now. If the Fed's going to stay on hold, that's going to anchor the front end. We've seen a lot of that in the performance of fixed income and Treasury yields over the past few weeks. If you go further out along the curve, it just feels like the 10-year is anchored around 430, which was the upper end of the pre-war range. How does your thinking sort of adjust when you talk about what's going to happen with Fed funds and the relationship between that and how it informs your view of how we'll get some performance further out along the curve?
I got to tell you, Jonathan, when, I hear people come on and say, I think rates are going higher, I think rates are going lower. I actually find the 10-year part of the curve from an asset allocation point of view not interesting. As you said, but by the way, my colleague Russ Brownback talks about on your show all the time. If you go back over the last year or so and you look at the end of every quarter, you look at the end of the year, we pretty much hover around 425, maybe 430, but it's pretty unbelievably stable. There's a lot of discussion about what do you do with the 10-year point. I do think there'll be initiatives, and I do think when Kevin Warsh is confirmed, I do think you'll see a dynamic where can you contain the 10-year point of the curve? Can you keep mortgage rates down? Are there initiatives to actually pull that mortgage rate down that you can have through fiscal stimulus? That's really powerful. My sense is that 10-year note will drift lower through this year as you get the funds rate down a bit. Can you keep the 10-year alongside of it? But I will tell you, Jonathan, in our portfolios, I say, look, particularly for the back end, not interesting. I just want to, what I try and do is keep my front to the belly yield curve exposure, and I just clip coupon. Like this is a year, like if we can just keep giving clients 6.25 type of coupon, type of yield, which you could do without compromising rating, I'm just going to keep staying there and then, let people, get excited about where we're going in the back end of the curve.
Rick, I've got to ask you, what kind of initiatives would bring down rates, yields at the long end of the curve?
So by the way, a bunch of things. From the Fed point of view, you can use your balance sheet effectively. We have 89% of the debt of the Treasury markets in the 0 to 2 year part of the yield curve. It's actually not that much out in the back end. The Fed can actually be very, very effective in how you manage the back end of the yield curve. Second thing you do, you see that the administration through the GSE program is actually buying a huge amount of mortgages, a couple hundred billion mortgages. You can actually do a bit more with regard to that. There are things you can do in terms of creating initiatives to stimulate housing, home builder incentives, et cetera, that pull that mortgage rate down. There's a whole series of things. Listen, I mean, you look at existing home sales, which you talk about, you look at how there's not enough inventory of houses today. It influences labor mobility to the negative because we don't have enough inventory, people can't move. It influences, we don't build enough houses, we don't put enough people to work in shelter. And by the way, you can't bring down shelter inflation because we don't have enough houses. There's tremendous motivation and, quite frankly, the initiative to actually bring down housing costs and to build more inventory to bring down that mortgage rate. You know, I think it has much more benefit than people give credit to.
Rick, appreciate your time. It's always good to hear from you. Don't be a stranger. Rick Reeder there of BlackRock. Thank you, sir. Thank you very much. He's been hot on that point for quite a while, that we need to do something about the pricing at the long end of the curve because of the influence that has, the outsized influence that has on things like housing.
Yeah, and the reason that the Fed should be cutting rates, in his view, is because it disproportionately affects the real world. As he was talking, I was thinking, he's running. You think so? I think he's running. No, I mean, honestly,
Are we done with that?
I mean, well, for Fed chair, but there are other things, you know. I mean, but ultimately,
other
you know,
things. Wow.
well, I honestly, Rick, I'm sorry, I'm just spreading rumors. But to me, the real issue is what you hear from so many different people on Wall Street is there is this huge dichotomy, and something needs to get done, and it isn't necessarily from their world.
Let's give you an update on news elsewhere this morning. We've got Bloomberg Brief. Here's Scarlett Fu. Hey, Scarlett.
Good morning, John. President Donald Trump says the war in the Middle East could end soon. Trump says it may not be necessary to renew a 2-week ceasefire with Iran before it ends early next week because the war could be over before that. He also said Iran and the U.S. might meet for a second round of negotiations this weekend. The gridlock in the Strait of Hormuz is sparking a surge in traffic at the Panama Canal. Tankers and cargo ships in the waterway are facing a wait time of 3.5 days. Sources telling us here at Bloomberg that one tanker paid $4 million to jump the line. And Netflix shares are lower in the pre-market after the streaming company's second quarter forecast missed analyst estimates. Netflix also announced its co-founder and chairman, Reed Hastings, will step down from the board after 29 years. That is your Bloomberg Brief. John.
Hey, Scarlett, thank you. More from Scarlett later this hour. Up next on the program, making the case for Kevin Walsh.
He certainly wants to cut rates. I've been watching him for a long time, but he's very smart, very good. He was the central casting guy that people wanted. Looks don't mean anything, but he's got the look, right? He's got the whole package, and I think he's going to do a great job.
Up next, we'll catch up with the Republican Congressman French Hill from Washington, D.C. this morning. Good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Stocks up again by 0.25% on the S&P 500. Record highs at the close yesterday and added some weight to the rally on the NASDAQ, up by 0.2. Under surveillance this morning, making the case for Kevin Walsh.
He certainly wants to cut rates. I've been watching him for a long time.
Did you have any concerns about his hawkish history of pushing for rate hikes?
He's going to want to do the same thing. I think that, yeah, I've had times when I think you've had to really have rate hikes too. But he's very smart, very good. He was the central casting guy that people wanted. Looks don't mean anything, but he's got the look, right? He's got the whole package, and I think he's going to do a great job.
So here's the latest this morning. Kevin Walsh's confirmation hearing set for Tuesday. The DOJ investigation into the Fed's renovation project threatening to stand in his way. Bloomberg's Tyler Kendall has the latest. Hey, Tyler.
Hey, John, good morning. Well, Kevin Walsh will be in front of the Senate Banking Committee as Senator Tom Tillis holds firm he will not vote to advance the nomination until the legal matter against Fed Chair Jerome Powell is resolved, and he really could make good on his threats. Republicans only hold a 13-11 majority. Now, I've heard it floated before that maybe Republicans would look to use a discharge petition to bypass procedure, but I have to say I called up a few sources on Capitol Hill, and they are saying that that would be a lot easier said than done for a list of reasons, including that that would likely require what's known as cloture being invoked, and that requires a 2/3 majority, which means Democrats would have to get on board, and at this point they're not. In fact, we're seeing a last-minute push by Senate Democrats today to try to delay next week's testimony. Now, John, as you know, the Trump administration was offered a potential off-ramp here after a judge last month moved to block the subpoenas in this case, but even as we know that the legal bar is very high to remove a Federal Reserve official, the Department of Justice is still vowing to appeal that decision.
Tyler, thanks for breaking down the details. We've got the perfect guest to have this conversation. The Republican Congressman French Hill joins us around the table, also the chair of the House Financial Services Committee. Mr. Chairman, it's good to see you.
Great to be with you, and great to have you all three in Washington.
Thank you for hosting us. Thank you for hosting us, sir. Let's talk about this. I've asked so many people this question. I'll ask it you. Why isn't the president taking the off-ramp and getting his man confirmed at the Federal Reserve?
Well, it's what I recommend. I mean, I said back in January that I didn't think Jay Powell had done anything criminal, and that it was a distraction to have the DOJ do that investigation, which is, as I've said many times, doesn't exempt the Fed from criticism. I've had plenty of things that I think that Jay Powell or the Fed board should have done differently over the years. But it's time to move on from this. The petitions to the court have been rejected, and I think it's time to move on from the case and put our attention around getting Kevin Walsh confirmed by the United States Senate.
Do you think there's enough pressure right now in the White House for the president to take the off-ramp?
Well, I would hope so. You see this letter that you just had the reporting on from the Democrats, and Senator Tillis is still very committed to holding his support of the nomination until this is behind us. The House committee or the Senate committee can continue to look at the investigation of the building if they want to and that kind of thing, but when it comes to our oversight of monetary policy, our oversight of the Treasury market structure, the face of just doing our routine work and overseeing the Fed, I'd like to see the new chair confirmed and let President Trump have a new partner at the Fed. Let Treasury Secretary Bessent have a new partner in bank supervision and monetary policy. It's time, and I think it's important to move.
It feels like the president is doubling down. Maybe he doesn't want to lose face. So what could potentially be an off-ramp? I mean, he likes deals. Is potentially, I'm going to drop the DOJ case, but Jay Powell, you're not staying on till 2028?
Well, I think Chairman Powell is interested in seeing his replacement confirmed, and I think Chairman Powell is probably interested in going on to the next phase of his career and his life, quite frankly. So,
but you don't think he's staying on as governor?
Well, I think that depends on, according to Jay Powell, that's how he's inclined to stay on, according to Jay Powell, if Kevin's not confirmed and if this case is not dropped. So this is why I think it's, if you're for the Trump administration and the Treasury moving on, having an economic policy that's in alignment, then I think it's in the president's interest to see the case move on, and let's go forward with the Trump administration's appointees at the Fed.
In the meantime, Rick Reeder of BlackRock was just on, and he was talking about how he would like to see whoever comes into the Fed next work with the federal government on initiatives to try to get mortgage rates lower, try to get benchmark rates lower on the long end as well, in order to keep affordability under check. What currently is in discussion on the House Financial Committee, given the fact that this has got a fiscal overtone as well as potentially a broad-based different agency initiative?
Well, I think the best way to make sure that takes place is to make sure inflation is well anchored, and I think we do that by taking steps on the supply side, to see that the big beautiful bill from last year on the tax side is fully implemented. Let the Americans, both in business and at home in their households, reap the benefits of those important supply side tax changes, and let's continue our work to right-size regulation. Those things would free up more capital to the housing sector, particularly. 6 out of 10 home construction loans are not made by the biggest banks in the country. They're made by banks under $10 billion, and that's what I've had as a focus of the committee. Let's have a deregulatory supply-side housing bill, which the House has passed, and we're negotiating with the Senate on. Let's continue our effort to put in law these tailored regulatory issues that allow our regional banks and community banks to thrive, because they're under the burden in a lot more significant way when it comes to capital levels, return on investment, than the biggest banks in the country are. Putting that into law, I think, does exactly that. It helps anchor inflation, moves capital into the economy, and I think that allows short-term rates to fall, and that in turn has a modest impact on pulling down that 10-year rate, which is so important as a benchmark.
Let's finish on financial services. What are you hearing about Mythos?
Yeah.
And how dangerous this might be? What's your understanding of things right now?
Well, the committee has, both Ranking Member Waters and I are concerned about that. We've actually asked the Treasury, for a brief there. We have noted the Treasury Secretary's engagement and the Fed with the largest financial institutions in the country. When I meet with the private sector, I hear from them that Claude is a very effective AI partner, and that they've been most impressed with it. And that they want to get into a mode where they can see and determine any risks associated with the Mythos product. And that speaks to my philosophy about AI to begin with. We ought to let the compliance sector, meaning the supervisors, the regulators, and the private sector work in a sandbox-type environment, sheltered from someone's network, to see what the impact of these large language models are, because they bring tremendous benefits to consumers, to business, ahead of us, but they also have these risks, and we should make sure that all of our network operators have full understanding of it.
They're making some bold claims ahead of IPOs. They've got an interest to really hype this up over the next 12 months. It's hard to understand what's real and what isn't. In the 30 seconds we have left, do you foresee any hearings to get some of these CEOs in front of you guys and for the public to hear what's real and what isn't?
Well, we've started our hearings on AI, both from a regulatory compliance point of view, and we have done roundtables, meaning not public hearings yet, with the business sector, both the tech sector and the users, and I think you'll see us continue that work this year.
Mr. Congressman, thank you very much, sir. Good to see you, sir. As always, thank you. We'll be back soon. Congressman French Hill there on the latest in the financial services sector and with the Federal Reserve. Up next, Joyce Chang of JP Morgan with risk appetite remaining strong.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Four-day winning run on the S&P 500, 12-day winning stretch on the NASDAQ 100, the longest going back to, I believe, July 2017. Equity futures up so far this morning by 0.25% on the S&P, on the NASDAQ up by 0.2%. The NASDAQ over that period higher by more than 13%. It has been a very, very sharp and quick, fast recovery in this equity market. As we count you down to the open, about 2 hours away, let's get you some single names, some morning movers. Danny Berger has more. Hey, Danny.
Hey, John, a painful morning for Netflix, down 10.6%. Despite a solid first quarter, the issue was their outlook for second quarter. That guide missed expectations, missed the lofty expectations, given that they've been raising prices. Investors wanted more. We also learned that Reed Hastings would be stepping down from the board, so that's down more than 10.5%. Elsewhere this morning, we are looking at Microsoft and Stellantis. Both of them are up. Microsoft has been on a huge run along with all software, really, but specifically this morning's news, the two of them teaming up to get more AI into Stellantis's cars. It is a company that has long been trying to effort a turnaround. Those shares up 2.7% in the pre-market. And finally, some other earnings from Alcoa. Here we had a miss, despite the fact that the price of aluminum is up 15% since the war started in Iran. Instead, what you got from this company was higher expenses and costs. JP Morgan pointing out that they had some shipping issues, some of the problems around that stemming from bad weather. So shares down more than 2% in the pre-market, John.
Danny Berger. Danny, thank you. Thanks for the update. More from Danny in the next hour. On our radar this morning, President Donald Trump claiming Iran has made key concessions in negotiations and a deal to end the war could be announced soon. The president saying the two sides may meet for a second round of negotiations later on this weekend. Elsewhere, the former Treasury Secretary Hank Paulson calling on the U.S. to prepare a backup plan to avoid a future collapse in Treasury demand.
People say, when are you going to hit the wall? I obviously don't know. It's impossible to know. When we hit it, it will be vicious, so we have to prepare for that. I think we need an emergency break-the-glass plan so it's ready to go when we hit the wall.
Paulson adding the U.S. is better positioned to weather the Iran war disruption than anyone else. And finally, the Anthropic CEO, Dario Amodei, meeting with the White House Chief of Staff, Susie Wiles, today. Axios reporting the two will discuss the company's AI fight with the Pentagon. The administration looking to make a version of the company's AI model, Mythos, Anne-Marie, available to federal agencies.
So this is really a confusing story if you're looking at it, like how the U.S. government writ large is using Anthropic. It's 1 foot forward when it comes to trying to use it in certain agencies, but it really is a step back when it comes to this massive fight that Anthropic is having with the DOD. The DOD coming out and saying it's a supply chain risk, as we heard from Gregory earlier today from CSIS. That's what you give shell companies that are basically a Chinese company that is trying to maybe get into the supply chain of the United States. So this is a difficult moment. Susie Wiles potentially could try to basically patch this up between Emil Michael and Secretary Pete Hegseth and Dario Amodei, because clearly the government sees use cases for Anthropic in other areas.
How awkward is this? That so many people in government right now are using Claude, are using all of the Anthropic tools as an integral part of not only national security, but also the ongoing hot war in Iran. Yes, we have a ceasefire right now. So there is this sort of awkward feeling of like, okay, well, you know, we kind of have designated you an evil child, but we also are using you and need you. So can we just patch this up? And there is this sort of undertone right now in Washington, D.C. here.
One thing I hear a lot about this fight, I mean, Emil Michael joined us the morning after he put out that tweet saying Dario has a God complex. One thing I hear from a lot of people is that there's a ton of egos involved in this on all sides. And maybe Susie Wiles can cut through those egos and actually be the one that brokers this truce.
There's also a massive potential conflict of interest, and I've been going on about this now for weeks and weeks and weeks. They have every interest right now to hype up the potential of this company going into the IPO potentially later this year, which is why governments need to aggressively figure out what is real and what is hype. Now, from what we understand from financial services representatives and the conversations we've all had over the past few days, a lot of this technological progress is real. Much of it could be dangerous. It could expose vulnerabilities in the financial system. People are concerned about that and looking to get ahead of it. Let's hope they do. But on the other hand, we can all see why they want Anthropic to be the front page of every single financial publication over the next several months, because there is funding rounds potentially that are going to take place over the next 12, and an IPO that could take place as well. And it could well be that this company has a valuation approaching $1 trillion.
There's a very awkward conversation that needs to be had, which is how do you deal with a private sector that is so far ahead technologically of a government that needs to depend on it while at the same time keeping it in check, and a sense of financial interest tied to said company at the same time that it could potentially transform the way we do business. And ultimately, those tensions are coming to the fore in some of these disagreements, but I think that the underlying one is correct. How do we understand what's truth and what's marketing? And that, I think, has been a big challenge.
What's real and what's hype? Right now, this equity market, those real record highs are on the screen right again, adding some weight to them on the S&P 500, on track for a third straight week of gains. Markets optimistic about an end to the war in Iran. Joyce Chang of JP Morgan writing the speed and magnitude of the relief rally since the ceasefire suggests that risk appetite remains strong and easy financial conditions are still a dominant force. Joyce joins us now for more. Joyce, welcome to the studio. Good morning.
Great to be here.
It's good to see you. You've been here the last few days, I believe, at the IMF World Bank spring meetings. What's the number one takeaway for you so far?
Cognitive dissonance, so heightened geopolitical risk, but also bullish markets. Positioning for fat tail risk are gone. We're going to get some type of ceasefire agreement soon, even if it's light on details. So I think that is the prevailing mood right now. And then there's the AI story. That's still taking a meaningful step up. CapEx is still strong. Now, I worry that is the narrative now, but I worry about the risk around that. So the trade we're in now is fat tails are gone. We're going to get some kind of deal. A lot of people looking at this like last April, is this going to be V-shaped, like Liberation Day, like a trade war? But, we have to really see how these negotiations are going. We have to understand the Iranian position and whether this can be done that quickly, because the clock is ticking. We're going through inventories. We have 13 million barrels per day offline. So if this goes longer than what market is expecting, that's going to lead to, I think, a considerable amount of disappointment here.
So people have reflected on the 2025 comparison, Liberation Day, April 25. I wonder if the similarities in the price action to, say, 2020. I've been trying to work out if this is February 2020 or April 2020. In February, we were at all-time highs.
Yeah.
Oblivious to what was about to happen. In April, we had this vicious rally, hopeful about the future, and if you were late to get on board, you missed out on some big gains. Do you think it's one or the other right now?
Well, I think that's been the pattern, and this is why this drawdown wasn't comparable to COVID. It wasn't comparable to Russia, Ukraine. It wasn't even comparable to Liberation Day. It's come back so quickly every time. So the drawdown this time was much less. But it's very different, I think, than Liberation Day, because that was unilateral. You could sort of begin to bring down the tariffs on one side and take that pressure off. You need both sides at the table. It is like COVID in that we think the way that the pain spreads is, not one shock, it's more sequential. So it started in Asia, it moved to Africa, and then to Europe. And that's why the clock matters here, because you're running through a lot of these inventories and reserves right now. Probably taken about 6 million barrels per day offline just since this started. So that is something where the market is thinking, well, something will happen relatively quickly, 3 weeks, 5 weeks at the maximum. But when we look at negotiations with Iran, that they have not been that quick. And these issues are very complicated, and we don't really hear the Iranian side of it. So I worry that the market, could be pricing in a lot out of the headlines we're hearing, but it's more complicated than that.
I like your framing of cognitive dissonance. And I wonder how much is dissonance between the physical world and the financial world. The idea that in the physical world, there are real constraints, as we've learned since COVID and beyond. While in the financial world, it seems like there's a lot of liquidity. And actually, financial conditions are really easy. How do you square those two ideas and just how easy financial conditions really are?
Well, financial conditions are easy. I mean, there is demand, not just for the S&P 500, but because there's demand for diversification. I think that emerging markets will benefit here. Real assets are benefit here. I mean, there are easy financial conditions that are, being put to work. But that doesn't change the physical constraints or the fact that it's very uneven as far as how different regions are being impacted, with the Southeast Asian, South Asian countries being impacted the most. But part of this is, we've had this pattern where everybody said, oh, well, worst case, it could be a war, or we could challenge Fed independence. And those things all happened, and the market still rallied. But, underpinning of all of this really is the AI CapEx cycle. I mean, you really can't talk about this and, divorce it from that picture. I mean, we have CapEx up from 14 to, more than 18%. And that we have not seen that the AI CapEx investment seems relatively war resistant here and still very much intact.
When we ask different executives of banks, of other companies, whether they have some sort of provable return on investment from AI, no one says yes. Well, so at what point do you start needing to see that in order to justify the ongoing investment to this degree?
Right now, you're not at that monetization phase where people are even discussing it. They are still at the demand, the compute demand, and just meeting that need. And I think with all of the events that have happened over the last few days, it's even a more meaningful step up on those questions. So you get there, but I still think when you ask a lot of people in the marketplace where we are in a scale of 1 to 10 on where we need to worry about the questions that you're asking, and they're saying, well, we're still at this halfway mark where just meeting the demand for compute is sort of the number one investment that's going in right now. So I think markets are, looking at ceasefire, looking at the AI cap cycle, have actually quite a lot of cash on the sidelines. And one thing I would say is just from meeting with all of the policymakers around the world, we would do 10-year bunds over 10-year treasuries. We think core Europe came in with inflation at target, relatively low unemployment, this is one where Europe looks stable. Not saying that there's going to be a single market or something that is a massive change, but I think investors are saying, look, EMFX, emerging markets, also has lower fiscal deficits. Sort of don't have current account imbalances. So I see much more demand for diversification. It's not just the AI story as well.
How different are your conversations with whether or not you're speaking to a participant from Asia or the United States right now?
So I think that there's a lot of questions that we are getting from Asia and also from Europe on whether treasuries are a flight to quality. When we've said dollar is a safe haven, they said, no, it's terms of trade. There is no alternative. But that diversification story is very real. So there is a big difference between talking to U.S. investors who are really looking mostly at the S&P 500 and Asia, where they are actually feeling more of the physical pain of this and asking about diversification and also asking about, are U.S. treasuries a safe haven? Am I better off buying high-grade credit rather than buying, sovereign debt? Or if I'm going to buy sovereign debt, should I do 10-year bunds instead of 10-year treasuries?
My response to that, Joyce, would often be it depends on what the risk is. If I'm facing a demand-side shock, typically I'd expect the bond to perform to provide that risk mitigation. But what we're seeing more frequently over the last several years are supply-side shocks. And I'm not sure whether the risk mitigation characteristics of treasuries or for developed market sovereign fixed income perform in quite the same way in the face of supply-side shock.
We have seen the breakdown of that correlation since 2020. And this is why we're really seeing more of a demand for real assets. But that's also been uneven, if you look at what has happened with gold. So I think part of the reason you haven't seen a lot of de-risking is that there isn't a very good hedge that you can put on in this environment. But there is still the appetite to look at AI and look at that CapEx cycle, and a belief that that is a driver, at least through the end of this year and into next year. And that CapEx is already sort of well, in place and in motion right now.
A lot of portfolios anchored to that story, that's for sure. Joyce, it's good to see you.
Great to see you.
Thanks for being here. Thank you.
Take
Joyce
care.
Chang there of JP Morgan. Equity futures right now on the S&P 500 higher by 0.25% with an update on stories worldwide with your Bloomberg brief. Scarlett Fu's back with more. Hey, Scarlett.
Good morning, John. President Donald Trump says Israel and Lebanon agreed to a 10-day ceasefire. Trump says he held, quote, excellent conversations with leaders of both countries. There was no immediate confirmation from Israel or Hezbollah. UK Prime Minister Keir Starmer is again facing calls to resign over his appointment of Peter Mandelson as ambassador to the U.S., despite links to China, Russia, and Jeffrey Epstein. Starmer was forced to acknowledge on Thursday that the Foreign Office gave Mandelson security clearance even after objections from vetting officials. President Trump's 250-foot triumphal arch clears a key hurdle. A federal arts panel approving early designs for the project. The arch will be built in honor of the country's 250th anniversary and will feature eagles, Lady Liberty, and a line from the Pledge of Allegiance. That's your Bloomberg brief. John?
Hey, Scarlett, thank you. More from Scarlett in about 30 minutes' time. Up next on the program, striking a deal with Iran.
The stock market is good. The oil prices are coming down. And it's looking very good that we're going to make a deal with Iran. And it's going to be a good deal. It's going to be a deal with no nuclear weapons.
Up next, we'll catch up with the former White House senior advisor, Amos Hochstein, live from Washington. You're watching Bloomberg TV.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas
is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up to the minute news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Equities are positive. The S&P 500 higher, adding to a record-breaking rally once again. 12-day winning streak on the Nasdaq, 4 days on the S&P, 3-week winning streak potentially on the S&P 500. Haven't seen that all year. 2-week losing streak on WTI, edging lower for 2 consecutive weeks for the first time since the war started. Bremo, crude, 96, WTI, 91.
Yeah, even though you've got people like Stephen Cook coming out and saying that you could see the Strait of Hormuz continue to be closed for the next couple of months. But right now, the market has moved on. The extreme bad case hasn't transpired yet. And so right now, financial markets are saying, happy Friday. We're going to just take it somewhere else.
Under surveillance this morning, striking a deal with Iran.
The blockade has been incredible. It's held. The stock market is good. The oil prices are coming down. And it's looking very good that we're going to make a deal with Iran. And it's going to be a good deal. It's going to be a deal with no nuclear weapons. They're not very high. If you look at what they were supposed to be in order to get rid of a nuclear weapon with the danger that entails. So the gas prices have come down very much over the last 3-4 days.
So here's the latest this morning. The U.S. blockade of the Strait of Hormuz entering its 5th day. The White House signaling a second round of talks may take place later this weekend. Joining us to discuss is Amos Hochstein, the managing partner at TWG Global and the former White House senior advisor under President Biden. Amos, it's good to see you, sir.
Great to see you all here.
Good morning. It's good to be with you in Washington, D.C. for once. That's new for us, I think, right? I think so.
For you two, not me, but yeah.
Okay, good. Got that out of the way. Don't know why we went there. Alice, let's get to it. So we've got the president saying we can secure a deal pretty soon, and there might be talks over the weekend. We've got foreign leaders of Arab states, and for that matter, Europeans as well, according to our sources here at Bloomberg, suggesting it could take 6 months. What's a realistic time frame to secure a peace deal with the Iranians?
Well, first, it's always a question when the president says very soon. Is very soon closer than almost done, almost complete, which was his statement 4 weeks ago? Or we're almost done, or we've won the war. So I think the president's done a very, very good job on the PR and marketing side. He understands markets very well. He understands the psychology of it. Markets operate based on optimism and hope. As long as you give the market hope and optimism, it will give you back the love. And so he does that every sort of usually on Sunday, Mondays, and Fridays. And no, it's true. I mean, look, the last 4 weeks. And by the way, I don't say this with cynicism. I actually think as the President of the United States, he's managing a crisis. And if the markets are down, his window is narrower and his capability and his capacities and capability is narrower. So, and the Iranians get leverage. So he's doing everything he can to keep the markets up. And that's why for 4 weeks straight, he has said, we're probably done in the next few days.
Well, given the fact that oil prices are depressed at the moment and you have records on stock markets, does this mean maybe he will be more emboldened? We could see a more aggressive Trump?
So let me just adjust what you said a little bit. Oil prices are not down.
On the screen they are.
On the screen they are.
You're right, not physical. But
the physical price of oil is not down because despite all of this, between the two blockades, there's nothing going through the Strait of Hormuz now for several weeks. I just came back from Hong Kong this week at an Asia conference, and they're talking about which day are we going to be shutting down airports. Singapore's said this week that they growth turned negative because of the energy crisis. So this is a regional crisis, not a global one at the moment. So oil prices are actually very, very high in the real economy. You have companies, manufacturers in Japan, Toto announced that some of the line of production is coming off because they don't have inputs. So, but I do think that because the market down, the oil prices on the screen down, for President Trump, I don't know, more emboldened, but I think he feels tougher that he has a better hand in the negotiations. So he doesn't want to go back to fighting. The Iranians don't want to go back to fighting. But both sides don't want a deal that makes it look like, we lost. I mean, if you take the Vice President Vance's comments from last week, that this was about 5-year versus 20-year moratorium on enrichment, well, that's basically the Obama era
JCPOA.
JCPOA. That was 15 years, maybe. That's the compromise.
Is this basically JCPOA with a toll?
Well, I hope not, because the toll would be terrible. The nuclear deal we could have gotten before the war. If we get a victory that the Straits open, that was a crisis we didn't have. So that's where I hope we get to a good solution here on nuclear, on missiles, on regime, on support for proxies, because at least we would get something out of this war.
When it comes to, I mean, you had a moment of reflection there. You like what the Trump is doing. Do you almost wish you were President Biden when gasoline was $5 a gallon, went out and jawboned the market?
Look, we were very different presidents, very different administrations, and jawboning the market is part of the job. I think this is a different place where the market wants to be positive because the AI story is such a strong story, and what you don't want is a disruption here on the physical old school market to disrupt the future type of market.
Which is something that we experienced just about 6 years ago. I'm just wondering, based on what you're seeing over in Asia, how long of a time frame do we have before that starts to migrate first to Europe and then to the United States, in not necessarily the form of energy in the United States, but maybe in the form of chips, maybe in the form of other products that are coming from Asia?
I think you're going to see it in sort of the manufacturing of physical goods, right? Aluminum prices are really, really high. Steel prices are going to go up. But it's going to take time to come here, a few more weeks. Energy crises are the slowest moving crisis, because when they happen, when a disruption happens, I still have ships on the water coming to me for several weeks. Then I have inventories that have to go through. So it takes a really long time to go through the physical market where I get rid of the inventories that are already there before the shortage. But once it hits, it's really vicious, right? Because then there's no ship right now on the water that's going to Asia. So if you're a country that's gotten last shipment, you're like, damn it, I still have now, even if the war ends and the Straits open, I still have 3, 4, 5 weeks after that before I get anything. So, and think about it, a plane leaving the United States going anywhere can't take its fuel with it. So even if we have jet fuel in the United States, it's not like I carry my supplies with me. If the airport where I'm going doesn't have it, then I'm not doing it. Lufthansa in Europe just announced, yesterday, they're cutting a whole bunch of flights. Not because they've already run out, because you don't want to get to the point of running out. So that's how it's going to move across from Asia to here. You have multiple countries at 4-day work weeks to conserve energy.
Across Asia.
Right? So at some point, the question is going to be to the market, if the purchasing power in Asia for American services and goods will matter at any point. Or maybe we're just becoming more really America first and alone, where we're building an island. And how doable is that?
Amos, it's good to see you.
Good to see you too.
Sobering thoughts, but good to see you. Amos Hochstein there, the managing partner at TWG Global and former White House senior advisor under President Biden. Reminds me so much, just echoes of COVID. Obviously, there are massive differences between now and then. Certainly the nature of the crisis is vastly different. But just the price action. I just remember February of 2020 at all-time highs on the S&P 500, if my memory serves me well, February 20th. Going into that weekend, and then things started to shut down in northern Italy, and that's when the U.S. side of things started to wake up to the potential of what was going to happen. I don't know if we see that kind of wake-up call, how close we are to that kind of wake-up call, but certainly reminds me of that period.
It reminds me of the disconnect between the financial world, where everyone says, buy the dip, and the physical world, where people are saying, we don't have what we need, and that's a problem.
Equity futures right now in the S&P up by 0.25%. Up next, Alex Altman of Barclays, the former U.S. Deputy National Security Advisor Dilip Singh, Nathan Sheets of Citi, Jason Thomas of Carlyle. The third hour of Bloomberg Surveillance, just around the corner.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a little ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top of the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility. There's still room to maneuver. We do see opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersetchi in Davos, Switzerland, and this is Bloomberg.
We're probably in the sort of global relief rally.
Markets are pricing in a resolution.
Equity markets have started living in the future. This type of environment, you just stay in large caps.
There's a short-term look-through in the market. That's what keeps the stock market going.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from the nation's capital this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures adding some weight to the rally on the S&P 500, on course, poised for a 3-week winning streak on the S&P for the first time in 2026. All-time highs and another close above 7K in yesterday's session, up another third of 1% so far this morning. On the NASDAQ, a 12-day winning run could become day 13. On the NASDAQ 100, higher by 0.3%.
If we see day 14, then all of a sudden we're going back to 2014 since the last time we've seen a streak like this. It has been one of the fastest reversals in markets history as people take a look at what had been a potential big disruption, still is the potential for a big disruption, but people have moved on. I'm struck by how multifaceted this rally really has been. You talked about software. We saw the biggest 1-week increase in software stocks going back since the dot-com bust. So you really can see a huge enthusiasm to buy things perceived as cheap.
So the market basically declared mission over, mission accomplished, the war is ending. The fact of the matter is, and I'm really struck by Amos Hochstein's conversation just now about how long this might be for the Strait of Hormuz and all the mitigation we've already seen take place in Asia and what is going to be happening in Europe. Some airlines are actually having to cut routes because of the access to jet fuel. And the fact of the matter is, what we see on our screens is not the reality on the ground when it comes to physical barrels and what is going on in the oil market.
Joyce Chang at JP Morgan put it well. Cognitive dissonance. kind of sums up the story of the past 2 months, through March and through much of April. And I think sums up our conversations quite well. When we speak to someone on Wall Street, we will in about 2 minutes' time, they'll say the outlook for risk right now is positive. This market can run. It has done. When you speak to a policymaker down in the nation's capital, in Washington, D.C., particularly policymakers from outside of the United States, they are immensely concerned about what's happening in the physical world.
It seems as though the market doesn't want to price in tail risk because they've been penalized for pricing in tail risk for year after year after year, and yet the tail risks are getting fatter and fatter, and the potential for another COVID type of supply disruption is getting very real for a number of finance ministers who we've been speaking to down in D.C.
Stocks are positive by 0.25% on the S&P. Coming up this hour, Alex Altman of Barclays, with stocks looking to build on a record-breaking run. The former U.S. Deputy National Security Advisor, Dileep Singh, as the war in Iran weighs on the global economy, and Nathan Sheets of Citi Research on the path ahead for interest rates. We begin this hour with stocks adding to gains as investors watch for the next move in the US-Iran ceasefire. Alex Altman of Barclays writing, there remains a decay profile to risk. However, the longer that Iran does not retaliate, the more positive it is for risk in the market can recay. Alex joins us now for more. Alex, welcome to the show. Just translate what you mean by that and what visibility you've got on the situation abroad and what it means for your outlook.
Thanks, John. So really simply, we were looking at this whole situation almost like a reverse merger arb at the end of March. And what I mean by that is that the market was effectively decaying lower every day as it was pulling towards a base case that there was going to be escalation of this conflict. And we knew that positioning was very light. You know, we've talked about this on the show historically. And so in any eventuality of a resolution, ceasefire, basically what we've effectively seen over the course of this month to date is that the positioning dynamic wouldn't be able to keep up with the change in narrative. And that was going to effectively force a dramatic repricing of risk. And that's exactly what we've seen today. I mean, if you look at the rolling 15-day return of the S&P, it's about 15%, it's around about 11%, which is putting us around about the 99th percentile of returns or going back to 1999. So this is pretty dramatic as the positioning is scrambling to keep up with that change in narrative.
So, Alex, typically when we talk about options decay, there's a set date for expiry. There isn't a set date for expiry of this particular conflict, and it isn't just in one man's hands. It's in multiple people's hands at the moment, Alex. Does that complicate things on how we value this market?
It does to a degree, and I think that ultimately the forward returns of the S&P have become skinnier now. We have to acknowledge that when we've gone from 64, 6,500 all the way up to 7,100 in S&P futures now. And so with that, I think it's going to create a little bit more differentiation. It's also going to create a more balanced risk-reward for equity risk. But we, shouldn't lose sight of two things. Number one is that positioning dynamic. And we have to acknowledge that systematic positioning, so non-discretionary investors that were effectively removing some of their equity length are now having to put it back on, and they haven't been able to do that. That's going to create an underlying bid to risk. The second one is that just that differentiation. So you mentioned earlier about how software stocks have seen a significant rally. There are pockets of value which investors are effectively going to go after in anticipation of a catch-up trade. And we still think there's opportunities there, certainly within parts of the commodities space and indeed within the domestic US equity market as well.
Alex, we're seeing dispersion in the tech space that resembles what we saw in the dot-com bust in March 2000. And this is raising some concerns for some people that maybe it has the feelings of late stage in terms of the tech enthusiasm. Do you see anything like that, sort of concentration risk and a feeling that the market is becoming less stable?
I think we have to acknowledge that the market is becoming less stable, but I would actually argue that's driven less by necessarily dot-com analogs. I mean, ultimately, the market is trading on around about 20, 21 times, but the earnings growth profile of the market doesn't really look like the dot-com. I mean, bearing in mind, we're still forecasting as a consensus, Bloomberg consensus, as about $339 of next 12-month EPS. So that's about 18% growth. So we could debate whether you believe that number or not, but that automatically puts us into quite a different realm to dot-com in that regard. I would say that the bigger problem is, in terms of the fragility, is the fact that we've had a ballooning of fast money AUM, assets under management. And so that's just naturally driving more velocity within the market and just pushing money in and out at a quicker speed than ever we've seen before. And that's driving factor volatility, market volatility as well. And that, I think, is a different problem to what we necessarily saw, say, 20 years ago in the dot-com bust. But we have to acknowledge it, and that's one of the things that we as a team try to navigate and sort of help our clients with.
So, Alex, can you give us sort of a cheat sheet for what this weekend's going to be like for you and your team, given the fact that we are going to get some sort of discussion of talks in Islamabad, and we could see a breaking down in the peace agreement or an extension? Either one could potentially have a really significant ramification for markets. I mean, how violent could the moves be on either side? How asymmetric, given how fast-moving the liquidity has been?
Again, we have to acknowledge that we're not completely out of the woods with this. I would say that client discussions have not entirely moved on from the Iran debate here in the US, but they've certainly evolved a little bit, just trying to look beyond just the near term. There is without doubt an anticipation that a ceasefire is going to be extended, and that this effectively moves to a back burner narrative, something that's still going to rumble in the background. Just for example, like tariffs did. Tariffs still haven't gone away, but it's not like we talk about them every day. So I think there's an acknowledgement within the US investment community that there is still a fat tail, and it is fat, and it could see significant wobbles in US equity risk. But you have to counter that with what we're hearing on the ground, the negotiation that's going on, the appetite both domestically and politically to continue a war or a conflict in the Middle East. And also, let's not forget, the Congressional War Powers Act as well will potentially limit the ability for the administration to continue waging a kinetic war going forward. So, yeah, of course, there's still a physical problem with oil. We're going to be lingering with commodity issues. It's one of the reasons why, as a team, we still really like the commodity narrative, not just oil, but just the broader commodity theme of every man for himself needs to build a strategic stockpile of copper, aluminium, cobalt, everything, fertilizers. I think that's a very interesting thematic that we can still play out with, and portfolios should include. But beyond that, I think the base case for investors right now is the fact that they're looking beyond just that fat tail and acknowledging this is probably just going to linger in the background, and they need to just get back to business and studying stocks in a good old-fashioned way.
So, Alex, you're basically saying they can live with this status quo, because you're right. The appetite of the United States and Iran right now is not to continue fighting, but there's no real appetite for serious work on a nuclear deal, given what the Iranians are willing to take, and that is a huge red line for the United States.
Again, I think there's a lot going on in the background, and I'm not really in a position to comment specifically about how these negotiations are going. As we talked about the last time I came on this show, you either believe in a path of either escalation or de-escalation. And I know there's obviously a huge shade of gray between those two outcomes. But we as a team have always believed that this administration has sought a path of de-escalation for several weeks now. And the back channels would very much indicate that. So you're probably right. The deal around nuclear is not going to be easy. It's going to be fraught with difficulty. And I imagine there will still be bumps along the road, something which we talked about in previous pieces. But ultimately, the market will still look through it if it understands that there's still an improvement in the flow of traffic. That really is what it cares about, that traffic flow through in Hormuz, the release of oil back into the market, the normalization between the physical market and the futures strip, and ultimately as well, just monitoring what the futures market in oil is doing. If we can go back to even an 80 handle oil environment, the US economy is absolutely fine with that. I mean, let's be very clear, right? Between 2011 and 2014, the US economy averaged $95 to $100 oil. And during that period, it averaged GDP growth of 2.2%, and the S&P cumulatively went up over 60% over those 3 years. And although I'm not going to try and make the comparison it's exactly the same, but in today's money, that would be $130 oil average, right? So if we're talking about $80 or even $90 oil, I think it's something that the US economy can comfortably stomach. And yes, of course, there is still inflation considerations. There's margin considerations too. That 339 VPS for the S&P probably needs to come down a smidge. But the point being is it is manageable. And I think people often lose sight of that.
Alex, it's good to see you. Thanks for reflecting on some of the situation that we're going through right now. Alex Altman there of Barclays. Alex, of course, is right. $80 crude in this country is not a problem at all. It's not just price, though. It's not just a price issue abroad, particularly in Asia. It's an outright shortage problem right now that they're confronting. Whether they can afford it or not, they can't get access to some of that product.
Exactly. And it's not just when it comes to oil or jet fuel, it's LPG. It's what India is basically tethered to if they want to have cooking supplies. This is a huge problem for Asia, and we're just insulated from it in the United States. We're not feeling it the same way. But very soon, Europe is going to be feeling some of those troubles as well.
The US at the moment feels like a bit of an island, not just in financial markets.
Well, to me, it just feels like AI investment seems to be clouding and, sort of giving fairy dust over anything that might give anyone some worries. So every time that I say, well, what about this? People are like, what are you not looking at and understanding about AI? And it feels like that is the source of this incredible cognitive dissonance.
All-time highs on the S&P 500, up another 0.25% with an update on stories elsewhere this morning with your Bloomberg Brief. Scarlett Fu has more. Hey, Scarlett.
Hi, John. President Donald Trump says the war in the Middle East could end soon. Trump says it may not be necessary to renew a 2-week ceasefire with Iran before it ends early next week because the war could be over before then. He also said the U.S. and Iran could meet for a second round of negotiations this weekend. Anthropic CEO Dario Amati is meeting with White House Chief of Staff Susie Wiles later today. Axios reports that the two will discuss the company's AI fight with the Pentagon. The Trump administration is looking to make a version of Anthropic's latest AI model, Mythos, available to federal agencies. And Apple is losing another top leader. The company's marketing executive is retiring after 31 years at Apple. Stan Ng helped create the original Apple Watch and launched the original iPod. That is your Bloomberg Brief. John?
Scarlett Fu, thank you. More from Scarlett in about 30 minutes from now. Up next on the program, the Morning Calls Plus, the former U.S. Deputy National Security Advisor Daleep Singh joins us as the war in Iran weighs on the global economy. Live from Washington, D.C., you're watching Bloomberg TV.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
We've had earnings-led melt-up in the stock market for a while, actually. The earnings expectations continue to increase at a faster pace. So the analysts didn't get the war memo, and they didn't get any feedback from the companies they follow that this is just a concern for earnings anytime soon.
That's helping to drive equity markets higher, compressing multiples, earnings, and the outlook for earnings improving through the duration of this war, which is unbelievable, and underpinning this run of the equity market. The S&P 500 at all-time highs, up another 0.4% this morning, on the Nasdaq up by 0.4. If you speak to people on Wall Street right now, the future's bright for the equity market, anchored by this very robust, resilient earnings story. If you speak to policymakers at the IMF World Bank spring meetings, let's just say they're not in the same frame of mind of some of these traders on Wall Street.
Yeah, you know why they're not? Is because you see the IMF delegates who are having to have these meetings with different finance ministers who have their hands out, who are saying, please, give us money because we don't know how to buy physical crude to keep our economies open. That is the reality on the ground, and you can see that in the corners, and markets are saying, you're a small economy, you're relatively poor, the averages sort of discount you completely, we're moving on.
They're rationing. They're telling people to stay at home. They're asking them to ride their bikes. Europe is starting to cut routes. There is real physical shocks happening in Asia and Europe. And at the moment, the United States is just insulated, and Wall Street is just looking through, even with the Strait still closed.
That is not a problem right now for the S&P 500 or for the NASDAQ 100, for that matter. That's the price action. Let's get you some morning calls. First up, Barclays lowering its price target on Netflix, warning the earnings reaction may, quote, persist beyond the short term. That stock is down by more than 10%. Your second call from JP Morgan raising its price target on Charles Schwab, expecting Schwab's net interest margin to expand throughout the year. And your third and final call from BNP Paribas, upgrading ExxonMobil to neutral and boosting its price target, expecting oil prices to remain above pre-war levels even after the recent pullback. And that right there, is your third morning call. Let's get to the war. Weighing on global economies, Dilip Singh, the former U.S. Deputy National Security Advisor, writing the war and its effects have reduced global growth estimates for 26 by about 50 basis points, with U.S. growth appearing particularly resilient. Dilip joins us now for more. Dilip, good morning. Good to see you.
Good to see you. Welcome back to Washington.
Lisa was talking about the average. The average has come down a bit. Within that average, where are you seeing the greater hits?
The greater hits will be in Asia and Europe. But look, I mean, I don't know if any of you can tell me with a straight face that the world is safer, more secure, and more prosperous because of this war. I mean, we know that deficits will be larger, inflation will be higher, we'll have less and later monetary easing, interest rates have risen, growth will be slower, supply chain disruptions are certain. Those are just approximate economic effects. Then you look at the strategic ledger. The IRGC, it's still entrenched, more embittered. Still got 1,000 pounds of enriched uranium that can make 10 crude atomic bombs. They have more money, twice as much energy revenues per day than they did before the war. They control the mother of all choke points. America's key adversaries, Russia and China, they're winners. America's alliances, dysfunctional. So look, I'm not here to tell a doomsday story, but
sounds like one.
Equity valuations surpass the pre-war baseline, I'm out.
You think the world's changed permanently?
No. So, look, I mean, I think big picture, we're caught in a tug of war between two profound and opposing forces. On the one hand, we have a once-in-a-century productivity boom led by general-purpose technologies, not just AI, synthetic biology, fusion, et cetera. But on the other, we've got the forces of fragmentation within and across countries that are pulling the world apart. So we'll have more frequent conflict, we'll have more weaponization of choke points, we'll have more energy insecurity, and we'll have more erosion of institutional norms. Markets are more able to price the right tail than the left tail. But I think sometimes you got to look up from your Bloomberg screen and just open your eyes. The world is not better off because of this war.
Dilip, what do you think could be a memorandum of understanding between Iran and the United States? Not a serious, comprehensive deal, but what could be a base case that can come out of talks?
I've never heard of an MOU settling a war, but there is deal space, and I understand why there's relief in the markets from the lows. You can imagine a deal in which Iran agrees to ship its 1,000 pounds of enriched uranium to a third-party custody, Russia or China, for example. I can imagine phased sanctions relief in exchange for a phased reopening of the Strait. I can imagine some type of pledge by the U.S. to not seek regime change in Iran, and perhaps to have China as a guarantor of the deal. So it can come together. I think there's political appetite on both sides, but my point is on valuations. How much is that relief worth?
But if we were to get something like that, a deal like that, is that not better than where we were before this war with Iran?
Well, I'm not talking about a full reopening of the Strait. This was not a choke point. It was a latent risk prior to the war. Now it's an active risk. And it's not the only choke point in the world. We've got a lesson that's been learned from this conflict, which is that you can use asymmetric force, very inexpensive asymmetric force, to weaponize an economic choke point and stand down the greatest military in the world. Think about APIs, pharmaceuticals. Think about graphite. Think about lagging edge chips. Think about all the critical minerals in which China has a choke point. Those could all be weaponized. And that's going to be a lingering cost of this war, among all the other factors that I mentioned.
You said several times, I'm out. It's a valuation story, talking about the record high after record high. As Vice Chair of PJM, are you saying actively sell this market because ultimately it is not accounting for some of these risks?
No, I'm not saying actively sell, but I mean, we're talking about an equity market that is now effectively judging the world to be a better place to invest than it was before the war. That's all I'm saying. I fully understand the initial conditions prior to this war, very favorable. I still believe that U.S. growth is relatively well insulated. AI capex and wealthy consumption, it's reflexive. They're much more sensitive to asset prices than oil prices. And, probably have more fiscal stimulus. So I understand why we've recovered. And I've been calling for a recovery since late March. But we're now getting beyond the point in equity markets where I can rationalize these valuations. Markets don't always give you an undistorted lens through which to see the world as it is. And that's what this moment is.
There is a cold, hard truth about markets, which is people will look at what potentially has changed going forward. And it could be things like maybe the diminished use of the dollar. Should there be a greater use of the Chinese renminbi in the Middle East? It could be that there is persistently higher inflation for higher sort of term premia, or just this idea that yields might stay here. What are the fundamental aspects that you think have changed in markets as a result of this conflict? So, just to be clear, I think dollar primacy is going to remain intact, but the exorbitance of the dollar's privilege will continue to diminish. I think in terms of this war, there's a real historical irony. 1974, that's when Treasury Secretary Simon flew to Jeddah, and he said, how about you denominate your oil sales in dollars, and you recycle those dollars into U.S. Treasuries? The petrodollar system is born, and it reinforced dollar primacy for a generation. Now, some portion of the oil that's still being sold through the Strait is being denominated in crypto and, more importantly, renminbi. Is that a psychological inflection point? I can't judge. But does it chip away at exorbitant privilege? Yes. No question.
These are important issues, so let's go through them one by one. The erosion of dollar primacy, 1. 2, you alluded to this earlier in the conversation, an increase in the frequency of supply-side shocks potentially in our future beyond this particular crisis. I think this raises big questions about the role of fixed income in a portfolio. What do bonds do for you if that's the world we've got over the next several years?
Well, you're still going to find protection in shorter duration instruments. You're still going to find value in credit that's well secured and high quality. I think when you go out the curve, you've got to start worrying about, some of these second order effects that I mentioned, the persistence of inflation above target, a world of fiscal dominance. The shocks on the supply side will keep coming. That should raise the risk premium, the term premium in the long duration bonds. And I think we're going to start to see the yield curve steepen out as a consequence. Non-dollar assets should continue to outperform real physical assets, particularly those that are important to shore up economic security, where supply chain vulnerabilities persist. Those are all commercial opportunities, and I think that's where the money will go.
What kind of numbers are you thinking about at the long end of the curve? I don't expect to pinpoint a specific number, but a range, a new elevated 10-year yield.
So, the way I think about it is I think our star has probably risen due to the productivity tailwinds that we have, let's say about 1%. I think the new kind of normal, I call it the old normal actually, for inflation is about 2.5 percentage points. And then I think 100 basis points of term premium makes sense. So I get a 450 10-year note as kind of being fair value.
Not too far away from where we are at the moment at 430. Dilip, it's good to see you. Lots to think about. The former U.S. Deputy National Security Advisor, Dilip Singh there, thinking more about 450, and 430 is where we're trading at the moment.
Yeah, the idea of volatility and inflation is something that really keeps popping up. And how do you count for some sort of haven asset if you aren't sure what shock you're actually trying to hedge against? And I think that keeps coming up in conversations. The people who are the defenders of the 60-40 and people who are saying, you know what, I think I'm just going to buy a stash of aluminum and a barrel of oil.
Well, when Dilip talks, it's very complicated to understand the position the U.S. government is in right now. The Strait of Hormuz was opened before this conflict, and now it is part of one of their red lines and negotiating tactics, and it's the huge point of leverage this regime has.
Stocks are positive once again, 60 minutes out from the open and bell, up by 0.25%. Coming up on the program, Nathan Sheets of Citi Research on the path ahead for interest rates. Plus, Danny's back. Danny's got your morning movers. Netflix shares continuing to slide on weak guidance. That stock is down by more than 10%.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Live from Washington, D.C., let's check out the price action together. Starting with equities on the S&P 500, on the NASDAQ, on the Russell. On the S&P 500, you'll notice we're out to session highs, up by 0.5%. This story dropping from Axios just moments ago. The U.S. and Iran negotiating over a 3-page plan to end the war, with one element under discussion being the U.S. would release $20 billion in frozen Iranian funds in return for Iran giving up its stockpile of enriched uranium. This according to 2 U.S. officials and 2 additional sources briefed on the talks. You'll notice equities are out to session highs. On the Russell, up by 0.7%. If you check out the bond market, yields are a little bit lower. The 10-year's down by 2 basis points or so. The 2-year down to 375. In commodities, we're now down by more than 5% on WTI. WTI actually breaking down into the 80s, 89, 86. Brent crude at 94, approaching 95. Just a break in 95 moments ago, down by more than 4% on the session. So, the headline dropping from Axios just moments ago that the U.S. is considering a $20 billion cash for uranium deal with Iran.
So this would be very interesting. This would be really the first step to a more negotiated peace deal when it comes to that enriched uranium. But this would be basically the United States paying for Iran to get rid of it or giving them some relief. So these frozen funds, they have a lot of frozen funds over the years in these accounts, that a lot of this money has been used only for humanitarian aid. This could potentially mean a wind down of the war, but you have to think the Iranian hawks in this administration are not going to be happy with that kind of deal.
It's a very modern cash for clunkers. But look, we're looking forward to some sort of resolution maybe this weekend. And every time that we get some sense that things aren't getting worse, markets rally. And we can see that. There's sort of this drip, drip, drip of better than expected news, and people are welcoming it in markets.
Let's run through it again. So if you're just joining us, welcome to the program. Equity futures out to session highs, about 60 minutes away from the opening bell. Some reporting from Axios just moments ago suggesting the U.S. and Iran are negotiating over a 3-page plan to end the war, with one element under discussion being that the U.S. would release $20 billion in frozen Iranian funds in return for Iran giving up its stockpile of enriched uranium. That reporting coming from Axios just moments ago, driving equities out to new highs, up by 0.6 on the S&P, on the Russell, up by 0.8. We'll get you more on that story in just a moment. Let's get you some single names, some morning movers. Danny Berger has more. Hey, Danny.
Hey, John. It's been a really good week for software. In fact, the S&P Software Index is up 13.6% so far this week. That puts it on track for its best course of a run since 2001. And today, the gains keep coming. Salesforce, Adobe, ServiceNow, all up at least 2.33%. To be clear, no specific reason, no specific news for why software is rebounding this week, but it's caught in on the general risk-on tone. Maybe it's short covering, maybe it's dipping. Either way, again, a very strong week continues today. Elsewhere, we had some regional banks reporting results. Ally Financial beating across the board, and it was all due to loans for cars, despite the fact that gasoline prices are higher. There's concerns about how the consumer is feeling. That did not matter. People were taking out loans to buy cars. Those shares up 2.5%. Truist, a little bit weaker. They reported results. Their credit losses were higher than expected. Finally, Netflix, a disappointment for their second quarter outlook. There were high expectations given that they've raised prices. They're working on this ad-supported tier. They're doing more live events. We also learned that Reed Hastings will be stepping down, those shares down to 9.5%, John.
Danny, thank you. Danny Berger there with your morning movers. Look out for Danny at the top of the hour in about 30 minutes' time to guide you into the opening bell. The opening bell less than 1 hour away. If you are just joining us, moments ago out to new session highs on the equity market. We've been encouraged by the communication coming from the US side for much of the last week that we were getting closer and closer to a deal. This dropped from Axios just moments ago that the US and Iran are negotiating over a 3-page plan to end the war, with one element under discussion being that the US would release $20 billion in frozen Iranian funds in return for Iran giving up its stockpile of enriched uranium. Anne-Marie, a big question here as to whether the Iranians would actually get on board with a deal that sounds like that one.
Well, the issue right now for Iran is that their economy is absolutely battered, and they need the money, and they are really dire for that cash. So potentially this could be some sort of off-ramp. And also in this Axios report, they're talking about maybe meetings taking place once again this weekend in Islamabad, maybe on Sunday. So when the president says he's not looking to extend the ceasefire, which ends next week, April 22nd, because he thinks a deal will be before then, maybe this is the deal he's talking about.
Tyler Kendall jumping in front of the camera for us to break down some of the details of this reporting and to set the stage for us going into the weekend. Tyler has more. Hey, Tyler.
Hey, John. Well, at this point, this reporting from Axios comes on the heels of President Trump yesterday indicating that progress had been made when it comes to concessions in Iran's nuclear program. As you've already outlined, though, we have not gotten confirmation yet from Iran that any of this progress is happening, and at least publicly, the sides have appeared to be pretty far apart on some of these issues. But Axios reporting that in exchange for Iran giving up its already enriched material, we could see this unfreezing of about $20 billion in Iranian assets. But the reporting goes on to say that both sides have still put forward their separate positions on this, long maintained, including that the U.S. would like to be able to retain this stockpile, while Iran has previously said that they would like to see it diluted. We saw that, for example, in the latest round of talks before the war when the two sides had been meeting in Geneva. It is going to be something to watch for here because, as Anne-Marie has mentioned, we know that Iran would like to see this money flow through. One of their top demands throughout these negotiations is that there has to be an unfreezing of these assets and there has to be sanctions relief. So something to watch for, but definitely consider it to be forward-moving progress after President Trump indicated maybe he won't need to extend that ceasefire deal.
Tyler, have we confirmed there will be another round of talks between the U.S. and Iran over the weekend? Is that a promise?
Well, at this point, President Trump had alluded to that potential, and we heard from the White House earlier this week that they were working on another round, but we still haven't gotten that firm confirmation. The White House Press Secretary Caroline Leavitt did say earlier this week that if the in-person talks were bound to happen, they would be held and hosted again by Pakistan, as the White House has actually thanked Pakistan for being a mediator in this conflict. We know that a lot needs to happen here in order for there to be an agreement, as Bloomberg News previously reported that we could be looking at a potential 2-week extension that essentially would be to allow negotiators at the technical level to work out more of these details before senior officials ultimately meet face-to-face.
Tyler Kendall. Tyler, thank you. Thanks for breaking that down. Check out crude. 95 on Brent, a break of 90 on WTI. 89 on WTI crude and down by somewhere between 4 to 5% on the session so far. It's going to be a lot of hope going into the opening bell.
Well, there's been a lot of hope already, and people are looking to any kind of resolution. I wonder how asymmetric the risk is, given the buildup to these talks and given how much markets have rallied. Should there be any kind of setback versus the opposite? And we're seeing that kind of engagement with the rally even further this morning.
Nathan Sheets of Citi Research joins us around the table. Nathan, good morning.
Good morning.
How much damage are we doing in the meantime?
Well, I think there is significant pressure on the global economy at the moment. When you think about closure of the Strait of Hormuz, we always thought of that as kind of a third rail for the global economy. And by our estimates, something on the order of 10 million barrels a day of oil is shut in as a result of that. And if that persists, then I think that we could see oil prices well in excess of anything that we've seen so far. and meaningful markdowns to U.S. and global economic growth and appreciable recession risk. I think the key question, and this is where the markets are, is will this persist? And if we get a deal, I don't think the markets are so interested in the exact details of the deal.
Sure.
They just want to see a cessation of these pressures. And my sense is that this is a market that is ready to rip once it gets kind of an all-clear signal from the administration and from the Iranians.
The sense that we get from so many market participants is that this is avoidable because it's so bad it has to be avoided. Steve Orth, the Federated, put it nicely. He wrote the following: our collective experience has taught us that outcomes that are economically and politically untenable tend not to materialize. Is that how you think about this situation?
I think that that is a reasonable argument, but in addition and on top of that, I would also say that the signals we're getting from the Trump administration are that they are not looking for this to be an extended conflict. You know, where this is different than the tariffs, however, is with the tariffs, President Trump could calibrate them and turn them up and turn them down, and the effects of the tariffs would follow necessarily. Here, there's another party in play, and that is the Iranians. And we've seen that Iran is not always cooperative or predictable. So there is an extra dimension of risk associated with this relative to the tariffs. But on balance, it seems that the thrust of communication and kind of the narrative over time has gravitated towards some kind of a cessation or a easing of these pressures.
Even if there is some sort of easing in the pressures, how much has the backdrop changed with an increase instance of supply shocks? Talib Singh was just on, and he was painting a pretty negative picture of the world. You guys were, you know, in an argument ahead of that. You were taking the other side of it. But how do you sort of gauge what that looks like through an economic lens?
When I think about this, are there disruptions that are likely to persist? Absolutely. But for how long? And I think that many of these near-term challenges, if we have a deal, maybe they persist for a month or 6 weeks. But by the end of the year, we're going to be talking about other things. And I think the big question from a macro standpoint is this a 6-week disruption, which seems almost certain, even if we have a deal today? Is it a 6-month disruption? Or is it a several-year disruption? And I think at this stage, the only thing I'm comfortable saying about a year or longer is that there will be a couple million barrels a day of production that are going to be offline. And I think that before we were thinking that the medium-term oil price would be around $60 a barrel. And I think now we're likely to be looking at something more like $80 a barrel. And that's roughly where the futures markets are. But I think the global economy can grow nicely with $80 a barrel oil.
Do you think that there's a step change in the ramifications for the global economy if the talks this weekend break down? If the ongoing closure of the Strait of Hormuz continues for several more months and isn't resolved in the next couple of weeks?
Clearly, the markets are pricing in some kind of a deal in the not-too-distant future. If it feels like that falls apart, and what would worry me is if it does fall apart, then does the story on the ground and the intensity of the conflict and the disruptions associated with the conflict potentially escalate? Then I think that there could be a sharp nonlinear downside for markets as they price in those new realities. I think that, as you've said, the market's very much leaning towards something being announced likely over at least the next few weeks.
Well, that is a possibility, though, because the president, Pete Hegseth, has spoken about that. If there's no deal, then they can go right back to escalation. What kind of drawdown would we see, say, Monday morning if talks truly break down in Islamabad this weekend, if they happen?
It's difficult to predict just how adversely the markets would react. We have seen during periods when the situation looks more severe, the oil price trade at 110. And so if you had a full break of these negotiations, to see it pop back up to $110 a barrel seems to me a reasonable hypothesis. But to be clear, if we have 8 to 10 million barrels of oil offline for an extended period, fill in the blank as to how high oil prices could go. That could be a world with $150, $200 a barrel oil. And in some models, I can even get numbers that are much higher than that.
Nathan, it's good to see you. Nathan Sheets there, Citi. Thanks for reacting to that breaking news just moments ago. Certainly the bar got higher for talks going into the weekend. Let's get you an update on that story, that breaking news, with your Bloomberg brief. Scarlett Fu has more. Hey, Scarlett.
Hi, John. Yeah, this hour we learned that the U.S. and Iran are negotiating a peace plan with one point under discussion, the U.S. releasing $20 billion in frozen Iranian funds in return for Iran giving up its enriched uranium stockpile. This is according to Axios. The talks are expected to take place in Islamabad on Sunday. Meantime, Netflix shares are lower in the pre-market after the streamer's second quarter forecast missed analyst estimates. Netflix also announced that its co-founder and chairman, Reed Hastings, will step down from the board after 29 years. And SpaceX is moving up its vesting schedule for employees. Sources telling us here at Bloomberg it could come as early as next week as the company prepares for its IPO, which, as you'll recall, is targeting a valuation of more than $2 trillion. And that is your Bloomberg brief. John.
Scarlett, thank you. Thank you for this morning. One of the best there, Scarlett Fu. Up next on the programme, setting you up for the day ahead. Plus, we'll catch up with Jason Thomas of Carlyle, with stocks looking for their third consecutive week of 3% plus gains. That conversation up next.
What's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
The technicals in the equity market are extraordinary.
And the earnings numbers that are coming through are pretty powerful. You could have an IPO calendar this year that maybe is a couple $100 billion, maybe. We're going to buy back $1 trillion of stock this year. So we're actually, there's not enough stock to buy. I mean, it's amazing in the equity market how good the technicals are.
Rick Reeder of BlackRock there on the equity market, all-time highs on the S&P 500, and moments ago, another reason for an increase in stocks this morning. Equity futures pushing higher on the S&P 500, on the NASDAQ, on the Russell up by 1%. For the commodity market, crude, Brent, WTI down by around 6 to 7% at the moment. Bond yields down across the curve, the 10-year yield down by 6 basis points. Some encouraging signs, not just from the US side in the reporting from Axios, but also from the Iranian side.
Just moments ago, the Iranian foreign minister said in line with the ceasefire in Lebanon, the passage for all commercial vehicle vessels through the Strait of Hormuz is declared completely open for the remaining period of the ceasefire. The ceasefire ends next week. Now, does he mean vessels that are friendly enough to Iran, say maybe Turkey, Pakistan, Russia, China, or all commercial vessels? But for this market, that is definitely a step in the right direction when it comes to potentially seeing the reopening of the Strait of Hormuz.
Lisa, that headline paired with this story, the US and Iran negotiating over a 3-page plan to end the war, with one element under discussion being the US would release $20 billion in frozen Iranian funds in return for Iran giving up its stockpile of enriched uranium. That report, those words coming directly from Axios earlier this hour.
So we're setting up a really interesting situation heading into the weekend of talks potentially on Sunday between the US and Iran. It seems like this market has been ripping higher on the expectation that you would get a prolonged ceasefire. How much people who wanted to sit on their hands heading into the weekend because they didn't want to get caught off guard for a Sunday night are being forced into the market now because of these reports. It just sort of highlights how everyone's just waiting until the all clear has been announced to get back to seeing the positives in the earnings report.
We're certainly adding to gains right now in the equity market, that's for sure. On reports, the US and Iran will be holding talks in Islamabad on Sunday, and maybe some of that energy will start flowing through the Strait of Hormuz in a much bigger way. Jason Thomas of Carlyle writing, markets are increasingly being shaped by national security priorities. For investors, that means being selective and leaning into areas with real demand, pricing power, and structural tailwinds. Jason joins us now for more. Jason, good morning. Good to see you.
Good morning.
What a crazy 6-7 weeks this has been in markets. How are you reflecting on things?
Well, I think that you have 3 elements as to why we've seen this rally. First, of course, is just this stated willingness to reach a negotiated settlement. So keep getting good news on that front, I would say. Secondly, the resilience of the economy. Our portfolio data through 31 days of the conflict, so March 31st, showed real demand growth in the United States of 2.7%. Obviously, good implications for earnings. So I think people have taken comfort in that. And third, I think the underappreciated element here has been the way that markets were, I think, wrong-footed or misapprehended what was happening in short-term interest rates. You had that period of
It's come down as people reassess that. I just wonder longer term, though, is there a sense that people are underappreciating still the level of inflation that's going to be in the system for a long period of time as we face off with supply shocks that are more likely going forward?
Well, the Fed has been willing to tolerate 3% inflation for quite a long time. What's another 100 basis points among friends? So, no, so when you think about inflation, where it's likely going, you have I would expect a 100 basis point shock in Q2 that's coming, that's going through the system. But I think the expectation is that it's not continued inflation, it's that prices will peak and then either stay where they are or come down somewhat. And that actually means that sequential inflation would fall. So again, it's important to differentiate between the price level, which will, I think, remain high for many key inputs. And we talk about energy, but this is, of course, much broader. When you think about the nitrogen-based fertilizers that go through the strait, when you think about sulfur, obviously sulfuric acid necessary for metal processing and refinement. When you think about helium, you know, for which there's no substitute for extreme low-temperature cooling for semiconductor manufacturing. All of these inputs, prices are there's going to be shortages in the near term. All these prices are going to be high. But again, after June, you have to suspect that the prices will no longer continue to escalate. And so if you have sequential inflation that actually falls, the Fed could be in a position to cut by September. And I think that, so again, it's distinguishing between the price level effects of this conflict, the closure of the strait, and again, what we should expect on an ongoing basis.
Maybe heading into this, people were asymmetrically pessimistic about the potential for rate hikes and the potential for some sort of global economic shock. Are people overly optimistic, though, heading into a weekend where there's still a lot of vagaries to potentially be worked through?
Yeah, I think that, again, it may just be that people, you look at the software space. I mean, that could be a lot of short covering, of course, but that was a case where I think people were far too pessimistic about the viability of an entire industry. It was really the way that this Armageddon scenario. And you have now, obviously, this rebound of 13%. And I think that in some ways that's the broader market, just overestimating the downside, at least the likelihood of it. But there is still tail risk here. There is a range of outcomes that we should all appreciate that extend into very, very bad territory. And I think that we also have not yet seen how people digest what I do think will be some bad data in Q2, just as some of these effects run their way through the system. And so how are markets going to react to that? Are they just going to be able to look through it, or are they going to have second thoughts?
Let's work through the price action right now. We've got Jason Thomas of Carlisle alongside us. Equities out to session highs on the S&P. Crude is down by 9% now on Brent. WTI trading in the mid-80s, down by close to 10% on the session. We had a report from Axios that we broke around 8:30 Eastern time, suggesting the US and Iran was considering a cash-for-uranium deal and that talks were likely to take place this coming Sunday. Shortly after that report dropped, we heard from the Iranian foreign minister saying the following: in line with the ceasefire in Lebanon, the passage for all commercial vessels through the Strait of Hormuz is declared completely open for the remaining period of the ceasefire on the coordinated route as already announced by Ports and Maritime Organization of the Islamic Republic of Iran. That last line, I think, is really important to try and get some additional clarity on what they mean by that.
Absolutely. Devil's in the details here. What kind of vessels are we talking about? Are these Iranian vessels? Are these vessels that are paying a toll, that are close to the regime? Or is this for all commercial vessels to go in and out of the Strait of Hormuz? But it is a step in the right direction, and it'll certainly be a test for this White House on what they want to do with this information going into negotiations on Sunday.
Quite a series of headlines over the last hour or so, driving this equity market out to new highs, closing at record highs yesterday and added some weight to the rally so far this morning. Jason, good to see you, sir.
Thanks for
being here. Thank you. Coming up on Monday, reaction to the talks if they take place over the weekend. We'll speak to Cameron Dawson of New Edge Wealth, Claudia Salm of New Century Advisors, plus we'll speak to Mark Lehman of Citizens and Stephen Parker of JP Morgan. From Washington, D.C., thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
An already strong week for equities gets even stronger. 30 minutes until the start of trading. I'm Danny Berger. Matt Miller is off today. Bloomberg Open Interest starts right now. Coming up, oil takes a big leg down, 9% as stocks extend gains after Iran's foreign minister said the Strait of Hormuz is open for commercial vehicles. Netflix outlook falls short as Chairman Reed Hastings steps down after 29 years. And Anthropic CEO heads to the White House as tensions ease with the Trump administration over AI and national security. I mentioned Netflix. It is down significantly this morning, despite the rest of the market being up, down 9%. It topped estimates, but its outlook disappointed, even though they recently hiked prices, so expectations were higher. We also learned that the co-founder, Reed Hastings, is going to be stepping down from the board. Analysts are looking for more signs that the company has a plan for its future after its deal to buy Warner Brothers fell through. Now let's get back to the news breaking just in the past 30 minutes. Iran's foreign minister releasing a statement saying, in line with the ceasefire in Lebanon, the passage for all commercial vessels through the Strait of Hormuz is declared completely open for the remaining period of the ceasefire. Oil also dropping on an Axios report that the U.S. and Iran are planning talks for this weekend and are negotiating over a 3-page plan to end the war. It includes a deal to lift $20 billion of Iran sanctions in exchange for its stockpile of enriched uranium. Joining us now is Bloomberg Washington correspondent Tyler Kendall. Tyler, what's the latest?
Hey, Danny, well, a lot of developments just in the last hour. You hit the main headlines there, including this Axios report that the two sides are negotiating over a 3-page potential deal that includes potentially the release of Iran's enriched stockpile in exchange for about $20 billion in Iranian assets being unfrozen. Yet still, the reporting indicates that there are a lot of questions here about what happens next, including that the U.S. has maintained that they would like to retain this material, while Iran has said that they would like to be the ones to dilute it inside the country. Perhaps we'll see some sort of compromise agreement where maybe a third-party country would get involved. For context here, any sort of movement around the stockpile is considered to be very significant compared to, say, messaging from the White House that Iran has agreed not to have a nuclear weapon, because we've often heard that public stance from Iran throughout these negotiations, despite U.S. and regional allies' assessments. So there's a lot to watch here, but we had heard from President Trump yesterday that there was progress and some key concessions made when it comes to the nuclear program. So perhaps this is some of what he has been alluding to. Danny, the president did mention yesterday that perhaps he won't need to extend the ceasefire deadline that is set to expire on Tuesday, as this reporting does indicate that we could see another round of in-person talks this Sunday. According to Axios, the White House press secretary Caroline Leavitt had indicated earlier this week that if and when face-to-face negotiations happen, they will indeed be in Pakistan.
Tyler, when it comes to the Strait of Hormuz, the foreign minister of Iran saying that it's due to the ceasefire with Lebanon, how much of this depends on Israel in that case? Because as we know, Israel is negotiating not with the proxy fighters in Iran, but with the country itself, with Lebanon.
Right, that's a really good point. The fact that Lebanon doesn't control the Iranian-backed militant group Hezbollah. Now, this White House has repeatedly maintained that that is an entirely separate operation away from the U.S.'s military operation in Iran, but it did pose that potential to derail the negotiations, which is part of why we even saw the negotiations held directly between Israel and Lebanon take place here in Washington at the State Department. And President Trump indicated that U.S. officials will be involved in securing a potential long-term agreement between these two countries moving forward, saying that Secretary of State Marco Rubio and Vice President J.D. Vance will be involved. So we'll have to see where it goes from here, because we know the U.S. does want to see some concessions made when it comes to Iran's support for proxy militia groups in the region. So perhaps that's the common thread that we can pull throughout. But of course, significant development from the Iranian foreign minister here. Still questions, though, does this extend to all commercial vessels? According to his post, it does appear that it would, but we'll have to see what that looks like in practice, because, Danny, yesterday we actually had confirmation from the Pentagon that the U.S. was expanding its blockade, initially, of course, for all Iranian ports, but we heard the chair of the Joint Chiefs of Staff, Dan Kane, outline during that briefing that it will now extend to any vessels in that so-called dark fleet.
Tyler, thank you very much for that. That's Bloomberg's Tyler Kendall. And let's get more on what opening of the Strait means for these markets. Bloomberg oil markets reporter Mia Gintis joins us now for more. Mia, what has been the state of the flow getting out of the Strait of Hormuz, and how big of a difference will it now make with the foreign minister saying that, yes, for commercial vehicles, it's open?
So as of lately, the flow through the Strait of Hormuz has still been extremely minimal, right? So back in the day before the war, we used to see around 135 ships per day transiting through the Hormuz. Now the levels are usually less than 10. The truth of the matter is, even though this is a positive development toward a longer term opening of the Hormuz, it's not going to mean much just yet, right? We're still having a lot of disagreements between ship owners and charters about who takes the risk. As far as transiting the Hormuz, we don't know how safe the Hormuz actually is. There's some, feelings that perhaps Iran has placed mines there. We don't know the extent of what's true or what's not at this point. We need to see a confidence among insurance companies to actually be able to extend, insurances to ships that are transiting through. So in the short term, we probably won't see an immediate uptick in flows, but it's definitely a step in the right direction.
The market taking it as a big step in the right direction. WTI is now at $85. Brent is at $90. A lot, though, Mia, has been discussed that even if the Strait were to reopen, even if the conflict were to end, there are still scars to the energy infrastructure. With oil at $85 a barrel for WTI and $90 for Brent, is that being priced in?
So at this point, it is still being priced in, but there's definitely more of a feeling in the physical market rather than the paper market about the long-lasting scars that this war has caused, right? So we will probably still see a premium, like I said, via insurances flow down into the price that it takes to carry freight throughout the world. Likely, Asian buyers are not going to want to turn back to the Persian Gulf so quickly. They've seen what it means to rely on one source of energy, and at this point, they'll probably want to diversify, and those longer hauls are going to also translate into higher prices for carrying that freight. It won't be as quick of a recovery, I think, as a lot of people, at least speculators in the paper market, are assuming.
Mia, thank you so much for joining just on that breaking news. Bloomberg oil markets reporter Mia Gintis. Again, the breaking news being that the foreign minister of Iran saying that the Strait of Hormuz now is open to commercial vessels given the ceasefire with Lebanon. Let's get back to corporate stories. Netflix earnings. Investors clearly aren't pleased with the company's path forward. Co-CEO Greg Peters says that the company has plenty of room for growth without Warner Brothers.
We ended last year with more than 325 million paid members, and as that number continues to grow, we are entertaining an audience that is approaching 1 billion people, which is an exciting milestone to strive for, and it'll be an exciting milestone to achieve. But even given that number, we still have plenty of room to grow into our addressable market.
Ed Ludlow, Bloomberg Tech co-host, is here with me in New York. Ed, what was the disappointment for Netflix earnings?
Well, there's an overhang from the Warner Brothers Discovery deal. There just is.
Investors didn't want that deal.
Mechanical reasons. One, the breakup fee that Paramount paid to Netflix because Netflix walked away artificially kind of makes things look a little rosier than they probably were in the quarter gone. You know, basically, like, if you're to summarize Wall Street's attitude to Netflix, it's that the core business is good, engagement is good, demand is good. There are some short-term things that people don't like in the bottom line outlook in particular, but what is it now? What is the plan? And, you know, they're kind of quizzed on, was M&A a part of it still? Like, obviously not at the scale of Warner Brothers Discovery. It's just an overhang. You know, and what Greg Peters and his co-CEO Ted Sarandos said to shareholders is like, look, we thought the Warner Brothers Discovery fitted with our strategy, just not at the price that we had to pay if we were going to do it. Simples.
That seems completely reasonable. What then do markets, investors make of Reed Hastings stepping down?
Yeah, so like it's a bit of a 1-2 on bad news, probably, or it's perceived as bad news as a headline. You know, Reed is chairman of the board for the time being. You know, he founded this company. It's 3 decades of association, and you know the official line is that Reed Hastings wants to go and do the other things that he's passionate about, philanthropy being one. And so, you know, I think they just look at it as like, okay, it's somebody who was part of the origin story of Netflix, put it into the position it is in now, walking away. But, you know, as you and I talk with Lucas Shaw, right, who leads our screen time coverage here at Bloomberg, Ted Sarandos and Greg Peters are regarded as very capable stewards of that company. So it's just headline risk, really.
Yeah, Ed, it's so nice to have you in New York.
Thank you.
I'm so happy we get
Friday.
more of you next week. Happy Friday.
Sure.
What a day. Ed Ludlow, of course, check out Bloomberg Tech, 11 a.m. Eastern. A check on markets. Again, we have risk on rally, oil following. The dollar has erased its gains now since the war in Iran began, all on a post from the foreign minister of Iran saying that commercial ships can now traverse the Strait of Hormuz. It is wide open to them, given the ceasefire of Lebanon. The president has been very positive when it comes to negotiating talks between Iran and Israel. We also, Iran and the U.S., rather. We also had a headline from Axios about an hour ago saying that there was potentially an exchange of some of the frozen assets from Iran in turn of getting the lasting of the uranium out of Iran. Let's get a look at some of the other movers on our radar this morning as we witness a big rally in most places. By the way, software has been on a tear, and Microsoft is adding to that. It is having its best week in more than a decade. AI fears had sparked a huge sell-off since October. The group as a whole, software, is set for its best weekly gain in over 20 years. Broadcom, it's also on its longest winning streak since 2022, following deeper ties with Meta. Elsewhere, Alcoa, largest aluminum producer, they missed top and bottom line estimates. It's been struggling to convert high metal prices into earnings, but again, elsewhere, a huge rally in our hands. Rates come in. WTI and Brent down more than 10%. And stocks continue their rally after 3 straight weeks of 3% plus gains. Coming up, the White House looks to give U.S. agencies access to Anthropic's Mythos. We're going to get the details. That's coming up next right here on Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And
I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. you know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get you some high-interest stories. So look at what's making headlines around the world. China's Xi Jinping is wrapping up a week of high-level meetings in Beijing. He's hosting leaders from Europe, the Middle East, and Asia as countries hedge against the volatile U.S. and Iran conflict. Beijing is pitching stability and diplomacy, but has not outlined any concrete steps on the energy crisis. So far, China is keeping its distance from direct involvement, even as pressure builds for it to take a larger role. And hedge funds are rebounding in April, recovering losses tied to the Iran conflict. A U.S.-Iran ceasefire helped to lift markets, with .72 and Millennium each gaining more than 2%. Jane Global has nearly erased its losses for the year. The rebound is also getting support from a rally in rates and a weaker dollar. And White House officials are preparing to give federal agencies access to Anthropic's powerful AI model, Mythos, but only with strict safeguards. The tool can expose critical software flaws, but officials warn it could also supercharge hackers. Agencies are awaiting guidance as Washington races to balance cybersecurity gains against national security risks. And let's get more on that. Michael Shepard, Bloomberg Senior Editor for Technology and Strategic Industries, joins us now. Shep, first, okay, on the news itself, yes, big, they want this, but it feels like this weird contrast of them also declaring that Anthropic is a supply chain risk.
Yeah, Dandy, if you're feeling a little bit of whiplash on the whole Anthropic U.S. government saga, you are not alone. It really has been quite the story evolving in terms of this relationship that has been really fractious, especially since the beginning of the year. And it all boiled down to the whole question of safeguards that you outlined at the top. Anthropic has insisted that military use, in particular of its product, come with two key safeguards, and that is no use for surveillance, mass surveillance of Americans, and no use of it for developing fully autonomous weapons. And the argument is that, look, this technology is powerful and it is new and it can't be fully trusted. And those are some of the very arguments it made in making this new Mythos model available only to a limited number of Wall Street banks and financial and technology companies so that they could test it out and see what vulnerabilities lie in their own systems. Mythos has this superpower to be able to find holes in networks that maybe have been there for years. And the concern is that if you let it out in the wild, hackers could take hold of it and wreak who knows what kinds of havoc, including on the financial system.
Does this also just not prove to some degree, Shep, that in this back and forth race between OpenAI and Anthropic, that Anthropic is ahead? I mean, you don't see the White House asking OpenAI for the latest announcement that they said that they had some sort of model similar to this that they were also limiting access to. They're asking for Anthropic's.
They have been asking for Anthropic, and actually when you speak with federal officials, and I've talked to a number of our other reporters and colleagues here have as well, they have really embraced Anthropic's Claude as an enterprise tool. They've found it easy to use, and Anthropic, just not just in the U.S. government, has found this toehold on the enterprise level across corporate America as well, for its ease of use and for the way it's been able to integrate with a lot of other business processes. So it was a bit of a shock earlier this year to see the conflict erupt between the Pentagon and the company over the safeguards it had been asking for. And OpenAI is trying to catch up in this sense. They are offering their own version of a model that could offer some Mythos-like capabilities, also doing it on a limited release basis, and they are looking to get into the enterprise space. But Anthropic is really the first in line when it comes to this. The interesting thing, though, is that Sam Altman and OpenAI really have made all sorts of entreaties, outreaches, and built that relationship with the Trump administration that we haven't seen Anthropic do. Axios is reporting that today, Dario Amodei, the company's CEO, will meet with Susie Wiles, the chief of staff to President Donald Trump, and perhaps we might see a breakthrough. That could include the access that the White House is seeking for government agencies to Mythos so that they can test it on their own systems to make sure that some of these very old products that they have been using to handle lots of different government services, that the vulnerabilities in those can be found and patched. They also want to test what it could do for offensive purposes as well, like what is this thing actually capable of? And it's a to be sure note for both you and me and our audience that we have not had a chance to test drive it ourselves. We don't know its full capabilities, and many cyber researchers haven't. And yet it was a significant enough breakthrough that the company actually took the step of briefing national security officials and government officials here in Washington before that limited release. And of course, that prompted Scott Bessent and Fed Chair Jay Powell to summon Wall Street banks for a short notice meeting, in essence saying, hey, look, check your networks now.
Hey, Shep, thank you very much for this. I know you've been busy down there at the IMF meetings. Michael Shepard, thank you so much for your time. And let's get a check on these markets, because, oh boy, are they moving on what started out as a quiet Friday, now no longer so. Check out NYMEX crude and Brent. They are both now under $90 a barrel. Brent crude at $89 a barrel, NYMEX at $83 a barrel. And then we have a big rally on our hands, interestingly, being led by tech and software. Software is on track for its best week since 2001. NASDAQ futures, they're on track for a 13th straight day of gains. If it does that, that will be the first time this index has posted that many gains in a row since 1992. Rates also coming in massively this morning, supporting the rally. 2-year yields in by 6 basis points, 5-year yields by 8, and 10-year yields by 7.5 basis points. We got to talk more about this. We have the perfect person to discuss markets. It's Sarah Hunt of Alpine Saxon Wood. She's going to join me coming up next, right here on Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
What a Friday this is shaping up to be. Just keep in mind, we've already posted 2 consecutive gains of more than 3% on the S&P 500 for the week. This will be the 3rd week doing that. S&P futures are up 0.8, NASDAQ 100 up 1%, but the real move is in oil markets, down 11% for NYMEX crude at $84 a barrel. Brent crude back below $90 a barrel. We are down 10%, all off the back of the Iran foreign minister saying that the Strait of Hormuz is now open for commercial vessels, given that there's a ceasefire between Iran or Lebanon and Israel and the U.S. rather. The president also putting this out on Truth Social, confirming that, saying that Iran has just announced, he misspeaks here, he says the Strait of Iran is fully open, the Strait of Hormuz as it is called, and is ready for full passage, saying thank you. And joining us now is Alpine Saxon Woods Chief Market Strategist, Sarah Hunt. I mean, Sarah, I don't even know where to begin. The volatility is on another level. Can you take comfort from this latest development and continue to buy into a rally?
I think that if you hadn't heard this from Iran itself, and if it hadn't come from the foreign minister, I think it would be more difficult. But clearly the oil markets are taking it that way. We need to see that traffic actually move now, right? So we actually want to see ships start to come through on a regular basis and pick that up, because the biggest problem has been the bottleneck and what that's done to supply chains across the world. So we need to see that start to move, and then you'll start to see whether or not this is really happening. If this is really happening, I can understand why there's so much enthusiasm this morning, because this was something that people were really starting to get concerned about from an inventory level, from a product level, from a helium, from all sorts of places. So I think that this enthusiasm is not enormously surprising.
So you say concerned, but like at this equity market, was it really concerned? We were back to all-time highs. Did we not basically already price in the straight reopening, or is there more room to go?
I think we were pricing in the reopening. I think that what we were also pricing in was all the good things that were coming from growth and higher earnings, and none of the concerns about higher oil prices and whether or not the supply chains were going to be further impacted. So I think that you're still going to see, I think, this move through, right? Because you've got to have a lot of stuff move that hasn't been moving. That's going to take some time, and prices are going to stay elevated for longer than we want them to. But just the drop in oil prices today is very positive.
It is positive, but to your point, to what degree is there already scars? Is there already infrastructure damage? How are you viewing that, even if the strait remains open, even past a ceasefire, what the impact will be?
I think these are the big questions, which is one, can you actually see traffic move? Okay, right. That's going to be a good thing. So far, they say it will. Let's see it move. The next thing is going to be those assessments of the damage on the ground. Now, from an LNG perspective, Kuwait said that they had some problems. It was going to take X number of years or this to fix it. I don't think we know, and I think that enough money and enough incentive, people can move things pretty quickly. It depends on how badly things are damaged. We don't know yet. That's going to take some time for that information to filter through. But the market does tend to look through these things as long as they understand that the lifeblood of the universe, which is energy, is going to get moving again. So I think that that is a big help here. It's really going to be a question of timing.
Yeah, and again, really enthusiastic markets. We're going to have the opening bell in just about 4 minutes time. Sarah, you're going to stay with us through that. Through the open, as S&P 500 futures up 0.8% on track for another week of 3% gains, and on track for the NASDAQ's longest winning streak since 1992. We have your opening bell on the other side of this break.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay,
I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Just moments away from the start of cash equity trading. This is Bloomberg Open Interest. I'm Danny Berger. Matt Miller is off this morning, and we have gains. They are starting to temper themselves. The president just out with a Truth Social post moments ago saying that, yes, Iran has reopened the strait, but the U.S. naval blockade does remain in force, that he still will be preventing Iranian ships from coming through as those negotiations unfold. So we were up some 1% for the NASDAQ. Now we've just taken it off the boil, just slightly, but we're still up. Over the reopening bells, capital markets are wide open. We have some IPOs. AVEX, their defense company, I think they're raising around $320 million for their IPO. So not the biggest thing, but not nothing. I mean, these small companies are able to list. That's great news. Along the same lines, Calera, they're an obesity biotech company, also looking at a listing too. So, you know, volatility, who cares? List your company on the S&P 5 or on the NASDAQ or the NYSE. Let's look at some of the stocks that are moving. Again, the price of oil has been falling pretty tremendously. We're now at an 80 handle for WTI and crude. Occidental, Chevron, Exxon, all down at least 3.6%. Again, just to remind you, Iran's foreign minister said that the Strait of Hormuz is completely open for all commercial vehicles for the remainder of the ceasefire period. One of the corporate stories we're watching, Netflix, those earnings topped estimates, but its outlook disappointed despite recent price hikes. Those shares down 9.25%. Co-founder Reed Hastings also announced plans to step down from the board. Analysts now looking for more signs that the company has a plan for its future after its deal to buy Warner Brothers fell through. So a lot of volatility. Let's head on back over to the desk, because patiently awaiting is still Sarah Hunt from Alpine Saxon Woods. Sarah, I was just talking about that post from President Trump saying that, yes, the strait is open, but the U.S. blockade remains in force. What are you doing right now with this kind of level of headline volatility? What becomes your North Star when there are so many tail risks right now?
I think, once again, we have to actually see what happens. I want to see physical ships moving through. I want to see that oil trade resumed. And I want to see stuff coming through and getting back into those supply chains, because you had stories this morning that KLM was looking at curtailing flights because the jet fuel is an issue. You have a lot of places in the world where the lack of product is a problem. So you need to see that to start really resuming. And the back and forth of the headlines is you know, it's fodder for a lot of things, but markets want to see the things actually go.
By the way, how much of this is just the huge rebound that we've seen that has been historic on many levels is also just tied to the fact that valuations came down and now look really attractive into what's expected to be strong earnings?
Well, what was interesting is that even with the war on, we were seeing earnings estimates being raised across the board. So that was part of what was driving some of the snapback in the last 8 days. This is going to be a bigger piece if this is really, this is sort of the end of what needed to happen. But the fact that earnings estimates were going higher, which, you know, was a little bit tricky with higher energy prices as well, but a lot of it was on the back of more spending and more capex. So that is the market sort of grew into its valuation because the multiple came down as the earnings estimates were coming up. So there was a point at which you could say, okay, this is starting to look more reasonable again.
And then a lot has been made, too, about software and the ride it's gone on. I mean, I was just looking at the week we've had in software. So the S&P Software Index, it's up 13.6% week to date as of the close yesterday. I'm pretty sure it's up a lot again today. I mean, what is happening? That would be its best run since 2001. As far as I'm aware, nothing has changed in our fears that AI is going to completely eat software. Is it just short covering? Is it overall market optimism? Is it cheap enough to buy in now?
Well, I think that there was, first you had the initial, AI is going to eat the world and it's going to start with software, so nothing is going to survive. And then you had a really big sell down in the entire space. And then I think people started looking at that and going, maybe it's an and not an or. Maybe there is going to be some interplay. And then there were a lot of discussions about interplay between the software companies and AI. So I think that there was perhaps an overly dramatic and overly pessimistic view, and that bounced back. I mean, it was up 13, but it was down something much more dramatic prior to that. So,
well, it has been in this bounce back we've seen for the index, where we keep hitting all-time highs. Today would be the third one. Only Alphabet of the Mag 7 is back at a record. Everything else, yes, it's rebounded a lot, but is yet to hit a record. Is there something that's still holding back these big cap tech stocks?
I think some of it is the combination of CapEx, the change to a more capital-intensive business model than they had before. And I think it's just concern that while companies are going through a big CapEx spend and not yet seeing those returns, should it have the same valuation that it had when it was in a position where it was just harvesting cash? And I think the answer is people are waiting to see how that goes before they can get very comfortable with it.
This is with all these things, Sarah. I feel like whether it's the war in Iran, whether it's where we go with spending, who knows what we're going to look like at the end of the year, let alone who knows what we're going to look like in 2 weeks' time. So how do you sort of build a thesis for that? Because, yes, it's important to be a long-term investor, but, we don't know what the long-term is going to look like. We don't know the permanent scars of the war in Iran. We don't know how much AI is going to reshape this economy. So can you plan out a portfolio for a long time horizon, given those left tails?
You can plan out a portfolio, and you have to keep monitoring it and keep looking at it and deciding whether or not things are going to be in and out of favor. It is, for longer-term investors, you stay invested because it's been the right thing to do for a very long period of time. And even if the things shift underneath and the sector shift underneath, there's still a reason to believe that there's both innovation and growth that happens if you've got global economic growth. It's really a question of timing and when it's best to pivot a little bit more, a little bit less in different directions. But I think that you absolutely can plan it. You won't know the ultimate answer, but you can certainly say this is a valuation where even if it's a 50-50 chance, then that's okay too, right? It's a probability set of distributions.
So one of the other fun things that's been interesting to noodle over about its place in the portfolio has been gold. I know I've been asking you about it nonstop, but one of the more interesting dynamics has been when a risk-on rally has been happening, as it is today, gold also moves higher, and you can see there gold up 1.5%. It's moving higher as Bitcoin moves higher. It's moving higher as all the speculative assets move higher. Is that what this thing is right now, just a speculative asset?
Well, I think it's also moving higher as the dollar moves a little bit lower. So there is there's a correlation there, but a lot of the correlations, historic correlations, have been broken. And so the argument that gold was about inflation, actually you could turn on its head and say, actually it works better in a deflationary environment. But I think it also is a way for countries and people to express a view on currencies and government spending, and it's become a different kind of vehicle than it was a couple of years ago because it sort of lingered in obscurity for quite some time until the price movement made people aware that central banks were buying, and that became a little bit of a different animal.
The other thing is sentiment for this market, and the AAII index, just looking what it's been doing, it hasn't rebounded with the market. It stayed at kind of depressed levels in terms of how bullish individual investors are in the Association for Individual Investors. Is that a bullish sign that maybe sentiment isn't fully where the rebound of this market is?
I think it's more of an overall, this has been sort of a scary couple of months. This has been an unusual period of time because it's not something that one party can say, okay, never mind, we don't want to do this anymore. So I think that there is, part of that is an overall concern about how this could impact the global economy and for how long that impact would last. I would argue that if we really do start to see things get moving here, you have a problem in terms of pricing for a period of time, but that's not going to stick around so much. And that was becoming a bigger problem. Are we going to get inflation? Does that inflation mean we can't cut rates? There's a whole lot of things that went together with that if this really unwinds, I can see sentiment starting to recover.
By the way, this economy feels like it's quite strong in terms of sentiment. The jobless claims numbers were strong yesterday. I was looking at the regional bank Ally. They had really good results because people were taking out loans to buy cars. We weren't supposed to be doing that considering that the price of oil was higher. There feels like there's this really big underlying strength still to this economy despite all of the fears.
Well, and despite some of the other soft data like the UMISH sentiment and some of the things that would imply that people were not having that kind of doing that kind of economic activity, I think the fact that it has continued does mean that there was an underlying optimism regardless of the things that were happening underneath. And that is also why, I mean, part of the reason why you've seen earnings estimates go higher, because even if people say they're not spending, they're spending. You can see it as the numbers come through.
True. All right, Sarah, you're going to stick with us. I'm so pleased to say that is Sarah Hunt. And let's get a check on your stock market right now. Again, just to recap where we stand, the foreign minister of Iran saying that the Strait of Hormuz is now open for commercial vehicles as long as the ceasefire lasts with Lebanon. President Trump confirming that on a Truth Social post, but saying that the U.S. blockade remains. Maybe forget that last part. We're still rallying. It doesn't matter. We're at another all-time high. We're on track for a third consecutive week of 3% plus gains. I'd mentioned to Sarah that the Mag 7, all we had seen was Alphabet hitting a new record high. These stocks are attempting to do that. I was just looking at Amazon, for example. If it is able to close where it is now, up 1.8%, it will be at another all-time high. Microsoft has also been on a tear, so it is big cap tech stocks doing really well. They had sold off a lot, so it makes sense that the rebound's happening with the ones that sold off the most. Netflix, the top loser in terms of points being taken away this morning, down 11.2% after a second quarter that disappointed. We're going to talk more about that with Geetha coming up. And then it makes sense that the energy names are down too as the price of oil sinks more than 10%. And I'd assume that if you look at the sectors, that energy is the worst. Let's look at that. A safe bet. Down 4.7% this morning, down a whole heck of a lot as the price of oil goes back to in the $80 a barrel range, below $90 a barrel, that is. Consumer discretionary does well, as does industrials, as does information technology, for a gain of 0.8%. Coming up, I mentioned it, Netflix investors think executives lost the plot after the Warner Brothers deal fell through. We're going to discuss challenges ahead with Bloomberg intelligence analyst Geetha Raghunathan. This is Bloomberg Open Interest.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The rally continues. We're just off of all-time intraday highs. Some of that coming back in after the president saying that there still is a naval blockade on the Strait of Hormuz, but the excitement coming over the Iranian foreign minister saying that the Strait of Hormuz is now open for commercial vehicles. The Nasdaq 100 up 0.8%, the S&P up just under that as Brent crude moves back below $90 a barrel. Let's take a look at the top calls. What the analysts are saying this morning. First up, BNP Paribas upgrades Chevron and Exxon, saying oil prices should stay high thanks to tight supplies. Maybe an awkward day for that call. The firm says that the recent dip is a buying opportunity, and they must love prices today then, because we are dipping again with the price of oil. Next up, Mizuho upgrades Texas Instruments thanks to a strong AI server and industrial demand. The firm points to a wider industry rebound this year and beyond. And finally, Wall Street reacts to a disappointing quarter from Netflix. Barclays flags risk from elevated expectations and a guidance mismatch after recent price hikes. JP Morgan says it would buy on weakness and notes engagement growth remains modest. Let's get more into Netflix. Bloomberg Intelligence media analyst Geetha Raghunathan joins us, and Alpine Saxon Woods chief market strategist Sarah Hunt is still alongside me as well. Geetha, let me just get your initial reactions to the earnings we had after the bell yesterday.
So, Danny, the print was definitely good. So first quarter earnings that they just reported was definitely ahead of expectations. But I think the street was definitely looking for a whole lot more. And they disappointed when it came to that, because guidance fell short both on the top line and the bottom line. And a lot of the other things that we were looking for, in terms of engagement, yes, they did report, their internal engagement metric hit a record high. But again, there's a little bit of opaqueness there. So we're not really sure that some of the investor concerns that we had with the Warner Brothers Discovery transaction, the questions around whether engagement was plateauing, whether those were necessarily answered yesterday. Similarly, even on buybacks, we didn't necessarily get a clear answer. So they do have a lot of financial flexibility, a great balance sheet. They didn't necessarily up their buybacks. Again, signaling a little bit of confusion and making it a little bit of a head scratcher, I think, for investors.
Did they give us any reason why they thought that the outlook was going to be so bad? I did not get a chance to look through this yet, because I think that that's one of those things that is this, I think it could be, or it definitely will be, because that could, do you feel like there's any sandbagging or anything going on there, or that there's real issues?
I don't think there's any issues, Sarah. I think it's just more a timing situation that we have going on. So the second quarter guidance was anyway supposed to come in a little bit light. They had already kind of pointed to this in terms of the expenses. So content spending this year, Netflix has flagged, would be pretty high. It's actually supposed to go up to almost $20 billion. That's a 10% increase versus historically about a 6 to 7% increase. So they're really kind of doubling down in terms of content investments. We're seeing them make this big push into live content, into sports, into different verticals, really, gaming, video podcasts. So it's a little bit of an offense-defense strategy, I would say. They definitely want to deepen their competitive moat, and they're also preparing, mind you, for a much stronger Paramount and Warner Brothers Discovery. So they're kind of really taking a look at the lay of the land here. So we knew going into the quarter that expenses would be elevated, but I think just the level and the magnitude of that. Of the expense increase in the second quarter probably was, took investors, or caught investors by surprise.
Geetha, do you think Reed Hastings stepping down, leaving the board in June, makes any difference for this company? Could that be any reason why we have such big bad losses for Netflix here at the Open?
I don't think so, Danny. I mean, I think this succession plan, I mean, if you just look across the media landscape, I mean, this is one of those succession stories that has really been executed absolutely flawlessly. He had been planning his succession all along, kind of handed off the reins to Ted Sarandos and Greg Peters. And so we knew this was coming. So I really don't think this has much to do with the share price reaction today. I think that is all really just a function of a little bit of the disappointment in terms of the lack of a guidance raise.
Hey, Geetha, thank you so much for joining us. That's Geetha Raghunathan of Bloomberg Intelligence. Sarah, yes, there's been a lot of war volatility, but we had really the kickoff of earnings season. We had the big banks reporting earnings this week. Were there any big takeaways for you, especially after we heard from all the CEOs who I feel like the message was kind of like, yeah, there are risks, but everything is great?
I think that there was definitely some positive things coming out of the earnings season. I think that because the war was ongoing when it started and we were looking backwards to earnings for the fourth quarter, it's hard to say. People didn't want to give too much of an outlook, but the outlook seemed pretty good from the financial firms. I think that taking this Iranian conflict off the table, hopefully, is something that is going to put earnings back in focus, but not only that, is going to keep people from having to worry too much about taking their earnings down because of a slower economy, which is where people were headed in terms of directionally higher oil prices. We're going to have a slowdown. I think that you can take some of that off the table, which is some of the relief.
Can we also take off the table private credit concerns? All the banks outlining how much exposure they have. Blue Owl gets a big rebound this week. Is that anywhere near the rearview mirror?
I would actually say that everybody's saying how much of a problem it wasn't. It always makes me think it's a little bit more of a problem than they want it to be, or they wouldn't be talking about it so much. I mean, I know that part of it is reassurance, but I also think that it's because it's not just the private credit people themselves, it's the lenders to the private credit funds. And I think that there is some problems in that space. There's certainly some illiquidity in that space as something that was sold as a more liquid product. And I think that that's when you have that clash between illiquidity and people expecting liquidity, it's a problem. And I don't know that the underlying instruments are that weak as much as it's too many people trying to get through the door. And I think that that's going to remain a concern. And I think without the war, it would have been a much bigger talking point.
I love the way your contrarian brain works. It's marvelous. You're like a journalist. It's so good. I love skepticism. Sarah, thank you so much for joining. Enjoy the rest of your Friday and your weekend. That's Sarah Hunt of Alpine Saxon Woods. Coming up, how to invest in the market's biggest themes. Right now, we're going to talk ETFs. It's ETF Friday after all. Global X's Shauna Smith is going to be joining us next. This is Bloomberg Open Interest.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Investors are getting more selective, and ETFs are an easy way to express that sentiment and long have been. Shauna Smith, senior investment strategist at Global X, says AI is still leading on growth to defense and cybersecurity as geopolitical risks build and maybe fade. That seems to be the case today. She joins us now. Shauna, thanks for stopping by. It has been such a wild ride in this market and a big rebound underway over the past 3 weeks. We add to that today with the idea maybe the Strait of Hormuz has been open. What have you been seeing in your ETF flow? Where specifically is the enthusiasm coming from?
You know, there's been enthusiasm, I would say, across the board, very much like you just laid out there in that intro. It has been changing almost on a day-to-day basis, a very headline-driven market. I would say where we are seeing the most excitement is surrounding some of our investment opportunities. One continues to be AI, actually, which had been a contrarian maybe view up until the last couple of weeks, but we have seen this recent run in software that has reignited some of that excitement. I think in defense tech, that is a real opportunity that we have seen at Global X. One of our ETFs, Shield, outperformed significantly last year. This year, up about 15, 16%, but we still think with that continued spend, not only the geopolitical escalation obviously would contribute to that, but also just the spending that we're expecting to see here from the U.S. government, looking out to $1.5 trillion in defense spending expected next year. We think that is going to continue and give this trade a little bit of legs here going forward. And then I also think on top of that, energy, there's still some opportunity there. Underperformer today, we've seen a little bit of volatility, obviously a lot of that being very much headline driven, but as we do think we are expected to see this continued shift more broadly speaking across the energy sector favoring U.S. energy production, we think that could be an opportunity here going forward.
One of the also huge rebounds has been in software. It's been really remarkable to watch. We're on track for the best week since 2001. I know you don't have a software-specific ETF, but I'm looking at AIQ, which seems to have a few of these names like Oracle, Microsoft. What has been the demand like for this? Has there been dip buying? And what do you make of the fact there's been dip buying? Because the narrative hasn't really changed on this idea that maybe AI is going to vastly disrupt our society.
Yeah, so this is an interesting play, and I think that we have long been talking about ever since the sector came under a tremendous amount of pressure that there was a little bit too much being scooped up there, just in terms of the fact that it didn't make sense that all of these names were being caught up with the sell-off. I think what we're seeing now, what we very much expected to see, was a clear divide between some of those winners and the losers. So you mentioned the AIQ fund, and within that you have Microsoft, Oracle, Broadcom, just to name some of a few of those, and those are names that have certainly caught a bid, to say the least, especially when you take a look at Oracle over the last 5 days or so. And we think that it's a couple of things. One, we think that this concern that we certainly have seen for quite some time around the single seat or the seat-based as single process tooling, obviously that had been a concern. We think that is going to remain a concern as we take a look at where there is opportunity within the software space. So much of that is about data access, it's about distribution, it's about AI tooling, so think about ways to monetize AI. And so we think the companies that are well positioned there, that are already embedded within that workflow, will continue or will outperform here going forward.
Hey, Shauna, not enough time with you. Thank you so much for stopping
Thanks
by.
for having me.
Really appreciate it. Shauna Smith, Senior Investment Strategist at Global X. And of course, if you want more ETF coverage, every Monday, ETF IQ at 12 p.m. New York time. Just a quick recap of some of the headlines that we've been getting. Again, the Iranian foreign minister saying that the Strait of Hormuz is open. President Trump confirming that, but saying that the blockade remains in force. Iranian TV just also now saying that ships passing through Hormuz need the IRGC coordination. Even so, we continue to rally as Brent crude comes down 10.33%. We are at all-time highs here. We are at 7,101 for the S&P 500. The NASDAQ on a historic running streak. This would be the 13th day of gains, its longest since 1992. Coming up the next hour, Crossmark's Victoria Fernandez on the relief rally, plus the points guy on rising airfares. Maybe today will bring us some relief. And Oklo CEO talking about growing support for the government. This is Bloomberg Open Interest.
cidade estava sitiada.
Isso ao começo eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. Stocks are up, oil prices down about an hour after Iran announced the Strait of Hormuz had been fully reopened to commercial shipping traffic. Correspondent Charlie D'Agata reports from Tel Aviv.
This comes from the Foreign Minister, Syed Abbas Araghchi. Pardon me while I read this up. In line with the ceasefire in Lebanon, the passage for all commercial vessels through the Strait of Hormuz is declared completely open for the remaining period of the ceasefire. This is a 10-day ceasefire between Israel and Lebanon.
President Trump immediately welcomed the news, but he says a U.S. naval blockade will remain in full force for Iran only until what he calls our transaction with Iran is 100% complete. Oil prices have tumbled about 10%. The average price for a gallon of gas in the U.S., $4.08 today. Madison Mills at Axios.
The oil traders who I talk to tell me that it's going to take a little bit longer for any substantial drop in commodities prices to really hit Americans at the pump. This comes as people have already been struggling with one of the fastest periods of inflation in American history.
The Dow is up 745 points. On the heels of that truce with Lebanon, the Israeli army says it is lifting all wartime restrictions. Ruthie Shine lives in northern Israel.
I was really pleased because we are fed up. We are fed up with the situation of being at home, of being locked at home, of not being able to go on with our lives.
People have been returning to their homes in southern Lebanon. A year into President Trump's mass deportation campaign, acting ICE Director Todd Lyons says he'll step down. CBS's Michael Toscano.
Two officials familiar with his plan told CBS News Lyons, who helped shape and implement President Trump's mass deportation operations, will depart for the private sector. In a statement to CBS News, the new DHS Secretary, Mark Wayne Mullen, said May 31st will be his last official day.
A musician is in custody in California in the murder of a teenaged girl. Correspondent Matt Gutman from L.A.
A tense scene in the Hollywood Hills on Thursday night. Video obtained by TMZ shows heavily armed officers arresting the singer David, whose real name is David Anthony Burke, on suspicion of murdering 14-year-old Celeste Rivas. Rivas first disappeared from her home southeast of Los Angeles in April of 2024. Last September, police discovered a gruesome scene, her decomposed and dismembered remains inside David's Tesla.
Pope Leo arrived in Cameroon today. He celebrated an open-air mass in front of about 120,000 young people in the main port city of Douala. This is CBS News. National Public Radio's gotten a new financial lifeline.
Connie Ballmer, who leads the Ballmer Group with her husband and former Microsoft executive Steve Ballmer, donated $80 million to NPR. It's the largest donation the network has ever received from a living donor. Ballmer says democracy requires strong, independent journalism. An anonymous donor gave NPR another $33 million. Last July, Congress cut more than $1 billion in federal funding for public broadcasting. NPR's chief says she hopes the two donations will inspire others to donate. Michael Wallace, CBS News.
Feeling the need for speed?
Captain Pete Maverick Mitchell.
Tom Cruise will head back into the danger zone for Top Gun 3. Our parent company, Paramount Skydance, made the announcement at CinemaCon in Las Vegas. 2022's Top Gun Maverick grossed $1.5 billion at the box office. No word yet on when the new Top Gun will debut in theaters. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live as well on YouTube and at Bloomberg.com. Scarlett Fu and Paul Sweeney with you here. This is Bloomberg Intelligence program for the next 2 hours. Markets are on the move. Looks like we've got some movement forward in kind of settling down the Middle East here, and we'll have coverage of that going forward for the next 2 hours. Coming up, we're going to check in with Margie Patel, Senior Portfolio Manager at Allspring Global, to get her thoughts on the market. Mark Champion, Bloomberg Opinion columnist on the latest from Iran. Don't blink because the news is flowing today. Jake Bleiberg, the Bloomberg News cybersecurity reporter on Mythos. The White House works to give U.S. agencies anthropic mythos. Mythos? Okay.
Originator of the model calls it mythos.
That's what Ed Lobo told me. May I interject? Alexis Christophorus here, your resident Greek.
Thank you.
Mythos
That's right.
is, you would say, that's the Greek way to say it, is mythos. Like there's the mythos beer, then the green bottle. Yes.
All right, I'm going
But for us,
you,
if you say it the American way, it's mythos. Mythos.
Exactly.
Go the Greek way.
Exactly. Yeah, Mark Douglas, Mountain President, he can give us some thoughts on those Netflix numbers. Stock is trading down about 11% here. And Randall Williams, Bloomberg Business and Sports reporter, there's a lot to talk about there in the world of sports. So a lot coming up over the next 2 hours with markets on the move. Let's get right to it. Alexis Christophorus with the Bloomberg Business Strategy.
All right, we've got stocks on fire. Oil is sliding after Iran said it would open the Strait of Hormuz for the duration of a 10-day ceasefire between Israel and Hezbollah in Lebanon, and that's just increasing the prospect of perhaps a wider peace deal here. S&P 500 up more than 1% or 73 points at 7114. So again, at a near record high. The Dow Jones Industrial Average up more than 1.5% or 820 points at 49,400. NASDAQ Composite also back in record territory, up better than 1% or 288 points at 24,390. As for the oil pits, Brent crude is down 11%, 88.54 the barrel. Haven't seen that in a while. West Texas Intermediate down more than 11% now at 84.21 the barrel. And the Bloomberg Dollar Spot Index losing ground and now down 0.5% at 1188.24. The 2-year yield is at 3.69%, down 7 basis points. 10-year at 4.23%. As oil slides, so are energy companies. No big surprise there. We've got shares of Chevron, ExxonMobil, and BP all trading sharply lower. And also lower today, Netflix, down about 9.5% after the streamer reported disappointing guidance and said chairman and co-founder Reed Hastings will step down from the board after his term expires in June. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We're live here with you in Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and Bloomberg.com. As Alexis was just reporting, stocks on the move big time. Let's take a look at some of the individual game stock movers here today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at these days?
Well, we can go ahead and start off with probably the biggest one today, Netflix. That's ticker NFLX, sliding now about 9.5%. That's after the streaming company's second quarter outlook came in weaker than expected. Wall Street expected the second quarter earnings per share guidance to be about 84 cents. Netflix came in at just about 78. And also worth noting that the chairman and co-founder, Reed Hastings, also said that he plans to step down after nearly 30 years at the company. Bloomberg Intelligence is also writing that the lack of a raise to Netflix's full-year guidance, despite avoiding the M&A costs to that failed Warner Brothers deal, may also be sparking investor concerns.
All right, let's move on to another company that's on the move today, United.
Oh yeah, United Airlines now currently up about 10%. That's ticker UAL. That's after a tweet that we're attributing to Iran's foreign minister said that the Strait of Hormuz will remain open to all commercial vessels for the remaining period of the ceasefire in Lebanon. Very important to mention that jet fuel accounts for nearly a third of airlines' fuel costs. So airline stocks have taken quite a beating this year as investors continue to question how these companies will manage those costs and also keep margins in check amid all of these geopolitical concerns. But that move is also making United Airlines one of the top performers on the S&P 500 today.
Scarlett, did I tell you that I'm a million-mile flyer?
Every day.
Every day. Okay.
He's so proud of it.
All right, I'm going to bring in mine a little medallion they gave me and show it off to you and Alexis. So
absolutely.
Very cool.
Do it.
Okay, RCL.
Yes, Royal Caribbean Cruises. Also jumping 10%. That's also because of the Iran war update that we got this morning. Royal Caribbean is also particularly sensitive to rising fuel costs. Analysts have warned since the start of the conflict that higher oil prices could pressure dividends and profit for cruise operators. Bloomberg Intelligence had a really great note out yesterday predicting that fuel supply disruption could hit Royal's 2027 net income by 9% if the Strait remains constrained. Also worth noting that it's not just the energy costs that are impacting these cruises. It's also prompting a lot of these cruise liners to have to cancel or even heavily modify itineraries. So as soon as that gets cleared up, you're also going to see some upside.
As soon as that gets cleared up.
Interesting. Okay, very good. All right, Avalon Purnell, thanks so much. Appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. The news today is geopolitical. It seems like we're getting a couple data points out there that things are moving forward in terms of this ceasefire, maybe moving towards something more permanent. We have negotiators going to Islamabad for Sunday negotiations, so we'll see how that plays out, and that's certainly moving the markets here today. Mark Champion joins us, Bloomberg opinion columnist. Mark, what do you make of the news today on all things Iran here? The Strait opening up, I think, and we've got some negotiators going to Islamabad for talks on Sunday. What does that all mean to you?
I think what it seems to be emerging that what happened is that a temporary deal, like an initial deal, was made in which the U.S. traded, putting pressure on Israel to make a ceasefire in Lebanon for some opening of the Strait in Hormuz. So each side got something they want. The Iranians have linked the duration of the opening directly to the ceasefire in Lebanon. So that seems to be making space for them to go back and return to the table and negotiate all the other stuff. President Trump has said a bunch of things about what the Iranians have given. The Iranians haven't, commented on that. And I think we need to wait because he often says things that are kind of pretty broad brush, to put it, mildly. So I think we'll have to wait and see, how much progress has been made or will be made on the nuclear file, on missiles, on, more broadly the proxies. There's going to be a money element. So there's going to be an enormous amount for them to talk about, and I think we shouldn't be too disappointed or shocked if they can't get it done on Sunday.
Right, but there is a sense of optimism heading into the weekend that perhaps things are moving along in the right direction. And Mark, there was an Axios report that the U.S. may release $20 billion of frozen Iranian funds in exchange for Iran's stockpiles of enriched uranium. Does that sound credible to you, given how far apart these two sides were at the start of the week?
It's conceivable, but I think it could only be. It sounds like a snippet of a deal because what we're talking about is the U.S. has demanded an end to all of the program, all uranium enrichment. The Iranians have said that that retaining the right to enrichment is a red line. So getting the 60% stockpile out of Iran is a piece of it. It's an important piece of it, but you've still got quite a lot to negotiate there. So money's part of it. Then you might have to work out some kind of extended deal where they suspend enrichment for a period of time, which allows them to say they still retain their right, and the Americans to say that it's ended. And it doesn't really help that when President Trump, talks about this stuff, he says they will never have a nuclear weapon. They have to agree not to have a nuclear weapon. They constantly say they don't have a weapon and aren't seeking a weapon. Whether you believe them is not a matter. But so it's whether they say that isn't really the issue. What the issue is, do they agree they will never be able to enrich uranium?
Mark, just focusing on the Strait of Hormuz here, you wonder if the world trade can ever go back to where it was before the war began. Will the Strait of Hormuz ever be truly free and open like it essentially was prior to the war?
Well, I would have to, my guess would be no. It's unlikely. The Iranians have, found that they have a kind of physical control, and they will want to use that. I imagine they'll want to find a way to monetize it. They're going to be in desperate need of cash after this war ends. They were in need of it before the war, but even more so now. So that would be my guess. And if you look carefully, they've said that Hormuz is open, but they've also said that, it has to be done in coordination with the IRGC, the Islamic Revolutionary Guard Corps, and so ships will have to coordinate. They will have to follow a route that is set by the Iranians. So, that doesn't sound to me like they are giving up the idea that they should have some form of control in future of, how ships go through. That's something the United States and the Gulf allies will resist very strongly. They wouldn't want the Iranians to have any form of control. But, these are the things that are going to have to get worked out.
What will you be listening for, Mark, in terms of the headlines that kind of flow out of whatever meeting does happen in Islamabad on Sunday?
Well, I think, the key is if they can find a formula that allows both sides to claim victory on the nuclear issue. If they can get that done, then I think the others are easier to take care of. There's a negotiation over money, how that's phrased. It's not going to be reparations as the Iranians are demanding, but there may be an exchange of money, the release of frozen funds, some arrangement for pilot fees in Hormuz, which is something that happens in the Bosphorus Strait for Turkey. There are lots of different possibilities, but I think the one that really will sort of allow them to announce a deal. That is finding a sort of meeting place on the nuclear file, and so that's really what I would be looking for first.
Mark, thanks so much for joining us. Really appreciate it. Mark Champion, he's a columnist for Bloomberg Opinion based in London. Again, some news flow here with the presumably a partial opening, I guess, is what we're coming to learn here, Scarlett, because again, it's not fully open where ships can freely transit. They still have to do so in coordination with Iran, and I guess not using the normal routes, using the routes now that are mandated by Iran, which are closer to its coast.
Not to mention the fact that the U.S. blockade is still in full force. So it's not free and open the way that it was before the war at all.
Yeah, but I guess it's a step in the right direction. And
it's not worse.
It's not worse. It's in a step in the right direction, and that's what we're seeing reflected in markets today. The S&P up 72 points. That's 1%. This is
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:22 on Wall Street. I'm Alexis Christophers from the Bloomberg Interactive Brokers Studio. A powerful rally underway on Wall Street after Iran announced the Strait of Hormuz is now completely open for commercial traffic, and that's prompting traders to take on more risk after an extraordinary rally. The S&P 500 up about 75 points at 7116. That's a record high. Dow Jones Industrial Average up 915 points. NASDAQ Composite also in record territory, up 288 points, now at 24,390. Brent Crude down more than 11% at $88 a barrel. West Texas Intermediate down about 12%, now at $83.40 the barrel. As for stock news, television shopping network QVC has filed for bankruptcy. It's part of a plan to cut more than $5 billion of debt caused by declining viewership and a shift to online retail. Shares of QVC down nearly 14%. Airlines as a whole are rallying today as oil slides. Of course, jet fuel being one of the biggest costs for the carriers. But we're taking a look specifically at JetBlue. That stock is down nearly 10%, or up rather 10%. It launched daily nonstop summer seasonal service between Boston and Barcelona. Also, Spirit Airlines says it could halt operations within days as fuel costs rise. And analysts say if that were to happen, JetBlue could be a beneficiary. So again, JetBlue up about 10%. And it has been a roller coaster ride for investors in all birds. Shares are now up 12%. The shoemaker made a surprise pivot this week to artificial intelligence, which caused its stock to jump nearly sevenfold on Wednesday. Then the stock shed more than 35% yesterday, at least for now. Shares of Allbirds up about 12%. And that's your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, Alexis Christoforous. And as Alexis mentioned, a powerful stock market rally underway. This week's price action really showed investors ready to look past the uncertainty of the war that is now entering its 50th day. And for those who got in early, it may very well have paid off because you're looking at oil prices plunging today with WTI now below $85 a barrel and Brent falling to $87 a barrel at the moment. Margie Patel is Senior Portfolio Manager at Allspring Global Investments, and she joins us now from Boston. Margie, for those who were ready to look past the uncertainty of the Iran war and have now been vindicated with the headlines that the Strait of Hormuz, according to Iran, is fully open, even though we know in actuality there are still some limitations there. What is it about the fundamentals of the market that look attractive to investors?
Well, I think as far as energy goes, when you look particularly at the gas side, there's still secular demand for gas growing because of the need for LNG. So we think that'll continue. We'll probably see oil prices continue to be volatile. That's just the way oil prices are. But underneath that, really, if you look out a year or so, it looks as if that even supply demand for oil is going to be rather tight, even putting aside the war that we've had here. And really, when you look at the fundamentals of the U.S. economy, it actually looks quite good. We've just started first quarter earnings, and even the 10% or so companies we've seen have looked pretty good. It looks like profits are really close to a 15% gain for the first quarter. So it really makes the equity market look pretty attractive, especially with the correction we had here over the last month or so.
So what do you think corporate America needs to do this earnings season, Margie, to kind of keep this market going?
Well, I think as we see earnings reporting, as I said, we've just really started. And I think we'll see on balance, once again, companies outperforming, pretty good outlook. And I think the market understands that some companies may have some negative effects because of the uncertainty in the Middle East. But I think looking beyond that, you have to be positive, at least at 2% GDP growth. And most important is the fact that the Fed is really on the sidelines, not doing anything. They certainly aren't going to raise rates because we've seen inflation be above their 2% target. And it looks like as if they probably aren't going to cut rates either because growth looks okay and inflation is high. So a quiescent Fed is really one of the more bullish factors for the economy. And if you look at the average PE of the stock market right now, it has compressed a little bit, maybe one turn. So it actually looks like a reasonable entry point, I think, for a year of good growth and maybe even a little bit of PE expansion over the course of the year.
Margie, how willing do you think corporate management will be to raise forecasts? It seems to me, and I'm just using Netflix as an example here, they're still fairly cautious in providing guidance because there's still so much that's uncertain and the headlines keep changing day in and day out. And they know their expenses are something that they need to keep a close eye on.
Yeah, well, that's true. And I think corporations have been cautious reporting. That's why the percent of companies surprising earnings on the upside is a continuing trend. So I think we'll continue to see profits surprise on the upside over what they might have thought from management. The other important thing is really companies have been able to maintain their profit margins, and I think that's really key. When they've had inflationary pressures, they've been able to pass on the price increases in their profits, maintaining their margins. So that's very, very positive for most companies to say we're on a pretty good growth path. Many of the companies that are secular growing or even on the cyclical upswing should actually have very, very good earnings this year, competitive with some of these, say, the Mag 7 kind earnings. So all in all, it's a pretty favorable backdrop.
Hey, Margie, what are we doing in the fixed income market this year? Are we clipping coupons, or is there anything else that can be done in terms of total return?
Well, there's really not a lot of capital appreciation left in the whole fixed income market. Yield spreads are relatively narrow. They gapped a little wider over the uncertainty. Now they've pulled back in, even in the face of very, very large supply. So that says to me the old saying about supply creates its own demand. The more new issues that are out there, particularly from some of the tech companies that have issued huge issues, it's met with very large demand from investors. Who'd like to buy those companies. As far as high yield in the public market, defaults are very low, maybe 2.5%, something like that. Again, that's very attractive. Yields are very low, say 5.5% to 6.5% for most high yield bonds. Most of those bonds are trading above their face value, meaning little capital appreciation. What you get is more income than a money market and less volatility than stocks, but not much capital appreciation. So for what it is, it's not bad, but compared to equities, it's really a pretty low bar for equities to do better. So we think equities will outperform all parts of the bond market. And I think the problems in the private credit market are going to stay more or less hermetically sealed away from the public high yield market. They really have developed two different markets. And what happens there is not going to roll over into the public high yield market. So fundamentals are great.
Margie, thank you so much. Margie Patel is Senior Portfolio Manager at Allspring Global Investments. Well, we know that there is scheduled to be another round of peace talks in Pakistan this weekend between the U.S. and Iran. Perhaps there's going to be peace talks of a different kind in Washington as well, because Anthropic CEO Dario Amodei is meeting with Susie Wiles, the Chief of Staff of the White House, today. And of course, there's a lot of tension between the U.S. government, the executive branch, and Anthropic, the AI startup, AI monster at this point. I feel like startup kind of undersells it. Let's bring in Jake Bleiberg right now. He is Bloomberg News' cybersecurity reporter, and he's been talking to us, and he's been doing a lot of reporting on what the White House is doing when it comes to Anthropic's latest AI model, Mythos, or Mythos, as Alexis told us.
Alexis is
very good. I approve.
Mythos. Okay. Jake, it's official. It's Mythos, not Mythos. Tell us a little bit about the backstory here of Mythos, because it's the latest AI model. It's very powerful for Anthropic, but Anthropic also has a testy relationship with this White House.
That's all right. So Mythos is this model released by Anthropic, not to the public, but we learned about it publicly a couple weeks ago when the company gave a select group of government organizations and banks and cybersecurity firms sort of special, tightly held access to it because the company believes it's this enormous threat and has sort of vastly more ability to find holes in computer systems that might let hackers get in and do malicious things.
If they're limiting access, why are they allowing the government to have it?
Well, we're not actually sure at this point just how much access the government has, but what we do know is sort of getting at the tension you raised earlier, there are a bunch of government agencies that are sort of eager to get their hands on it. And top government officials, the Secretary of the Treasury, Chairman Jerome Powell at the Fed, they've been urging banks and financial sector organizations to use this tool to plug their own holes. And that seems to be out of a worry that once this type of tool is out there in the public, those might become vulnerabilities.
So they want them to kind of stress test their own systems using Mythos before Mythos is released to the public. What does that mean for this meeting that Anthropic CEO is scheduled to hold with Susie Wiles, the chief of staff, today? What is the relationship right now between the White House and the company at large? Because government agencies, or at least some of them, want to use this model, but the Pentagon has blacklisted Anthropic.
It's a great question, and it's a little confusing. On the one hand, we have sort of top administrations in the Trump officials in the Trump administration saying this company is a supply chain risk, and they've been doing that as part of this dispute with the Pentagon over concerns about the artificial intelligence being used in surveillance or the targeting of weapons. On the other hand, we have top officials in the Trump administration also saying this is such a powerful tool. Hey, you banks, financial sector, we need you to use this. And this email that we got yesterday, my reporting colleague Margie Murphy and I, actually says the federal chief information officer is working on building guardrails, technical guardrails, so that the top cabinet level agencies in the government could begin using this tool. So it's a little bit confusing going into this meeting.
All right, maybe I'm a little cynical here, but it seems like individuals, consumers, corporations, trying to figure out what AI is, how I use it, all that kind of stuff. I don't have a lot of confidence that my federal government is going to do a good job with AI here. To what extent do we know that the various government agencies are trying to incorporate AI into their workflows?
I mean, I think we've seen massive efforts across the federal government, as we have in, many different industries across the private sector, to build AI into their workflows. This tool is a little different, or at least we think it's a little different based on what we've heard from the limited number of people and organizations using it, in that it poses risks of a type that we haven't really seen taken this seriously before. We've been talking to people who are using it, and one of that is, okay, AI used to be able to do the digital equivalent of picking a lock. Well, now it can pull off Ocean's 11, right? Now it's doing full heists.
Oh, I like that analogy.
Yeah, I'm going to steal that, by the way.
Okay, so the capabilities it has is kind of a different order of magnitude than what we've seen so far. What kind of AI does the federal government use right now? What do we know in terms of the application?
So different parts of the federal government use all sorts of AI tools, including ChatGPT, or the same types of large language models you or your colleagues or many people in many different sectors might consult to find a quick answer to a question, or look up where they should stay in a trip.
Jake, thank you so much. Jake Bleiberg is cybersecurity reporter here for Bloomberg News. And of course, the government has fewer people than it did in the past. So I guess AI is a good tool for that, right?
Doge.
That's right.
There you go.
This
S&P,
is Bloomberg.
Look at that.
We have the S&P 500 up 1.2%.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Stocks are rallying while the dollar and oil drop after Iran announced that the Strait of Hormuz is now, quote, completely open for commercial traffic during the 10-day ceasefire. The S&P 500 up 88 points, again climbing into record territory at 71.29. The Dow Jones Industrial Average up now nearly 1,000 points at 49,573. And the NASDAQ Composite racing ahead 353 points, again in record territory at 24,458. The Russell 2000 is up more than 2%, or about 62 points at 2781. We've got Brent crude down 12.5%, 86.89 the barrel there. West Texas Intermediate crude down 13.5% at just below $82 the barrel. As for stocks making headlines today, we've got shares of Intel up better than 1.5%, now to their highest intraday level since the dot-com era. And this is on optimism about the chipmaker's turnaround plans. Analysts expect Intel's rally to continue with the potential for new big-name customers to be announced. Some predict that Intel stock could trend toward $100 a share over time. It's now trading at just about $70 a share. We've got shares of Netflix tumbling today. That stock is now down more than 10% after the company gave a forecast for the second quarter that fell short of estimates. Also, chairman and co-founder Reed Hastings is stepping down after 29 years at the company to pursue philanthropy and what he calls personal interests. We've got shares of Alcoa down 4%. The aluminum producer posted lower sales in the first quarter as the war in Iran forced the company to reroute millions of tons of refinancing capacity from the Middle East. Once again, Dow Jones Industrial Average now up 1,010 points. WTI crude, $81 the barrel. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, good stuff. Thank you so much, Alexis Christoforous, with our Bloomberg Business Flash. And Netflix is one of the worst performers in the S&P 500 today, down about 9% right now. It's that forecast for this quarter that really disappointed investors. And I go back to the question I asked Margie Patel earlier, which is what company right now is going to be extra brave and, raise its forecast for this year when anything could happen?
Right, exactly. And I think the expectations going into this quarter for Netflix was they would raise. Particularly that they would have presumably lower costs associated with an M&A deal with Warner Brothers Discovery that would give them some margin improvement. None of that came through, so people were disappointed.
Although that $2.8 billion breakup fee that Paramount Skydance paid Netflix did help boost the bottom line in the first quarter. Right. So that was a big source of support for the first quarter numbers. Of course, no one looks at that anymore. They're all looking past that and looking ahead to what the numbers look like for the second quarter.
I'm kind of in the camp, having followed this company since day one. I'm glad that they didn't pursue that deal, because it just would have been a 2-year headache in terms of getting it closed, getting it financed, integrating it, and just like and the Netflix story is such a nice, clean story, and it's been working for years.
Well, right now, the story also includes Netflix boosting spending on programming this year, especially live sports programming. Things like the World Baseball Classic really paid off for them this past quarter, and they're in talks to expand their relationship with the NFL as well. Randall Williams is our Bloomberg Business of Sports reporter. Randall, how big a player is Netflix in live sports rights, do you think?
They're as big of a player as they want to be. If they would like to get into sports broadcasting and having exclusive things, then I think that they will be a huge factor. But right now, they've been very selective. They've done a lot of boxing things. As you said, they've been more involved in MLB, but their strategy thus far has been event-focused. And in the NFL in particular, there's few events. Like the NFL, I think, has tried to make big events. So you think Thanksgiving, you think kickoff day, you think the Christmas Day game, and then, of course, NFL playoffs. But there are also other bidders, and Netflix hasn't, I think, dove into the process of trying to win a Thanksgiving Day game. They have Christmas, and Christmas has been great, but it's a lot better when Beyonce is performing.
I'll think they're serious when they go bid for a Sunday afternoon NFL package. That's going to be the day. I want to ask you something else. Okay. Because I think, for me at least, and for a lot of people, one of the bigger stories in sports just in the last 24 hours is Live Golf.
Absolutely.
And there's some of the reporting, I'm surprised that we haven't heard anything definitive, but generally some of the reporting is perhaps the Saudi Arabian fund is going to pull back its economic support for Live. And if that's the case, people wonder whether it can continue at all.
Yeah, that's what's been what we've reported, what everybody else has been reporting. You know, there was suspected that an announcement could come yesterday, and then nothing came. And then Live Golf CEO Scott O'Neill said earlier this week that they're funded through the end of the year, and we'll see what happens next year. And so it sounds like, based on that the funding will be pulled. It's not a matter of if, it's just a matter of when. And then whoever, whether that be Scott himself, an investment bank, private equity, will have to go out and find more money to keep this tour alive.
What happens to the players who went over to Live Golf, signed with Live Golf, and then were essentially, it feels like they're blackballed from the PGA Tour? What happens to them? What happens to their careers?
They're going to have a decision to make. I think the PGA Tour obviously opened the possibility for some golfers, Live golfers in particular, to come back. I don't know if that window has closed yet or if they will reopen that possibility. But I think in any event, if they were to decide to go back to the PGA Tour, that they probably would face some penalties. And the PGA Tour has been very strict with that. So they could go to the DP World Tour. There are other different leagues out there. But obviously, if you ask golf fans where do they want the best golfers playing, it's the PGA Tour. And the golfers themselves know that. Live was an option, but it remains unclear if it will continue to be an option long term.
Interesting. I've heard that, I mean, it's been reported that the Saudis have lost, north of $5 billion, and now they're like, wait a minute.
Listen, they were cutting checks for players for hundreds of millions of dollars, and I think at a certain point, if you were a player, it was sort of silly to not accept some of this money. You're talking about $100 million in cash that was going to be paid right away, and for some of the players, it's like, am I confident enough that I'm going to be able to get this on the golf course, Scar?
Did Live Golf ever really catch on with viewers or fans in the U.S.?
I would not say so in the U.S. Now, there have been reports from Live Golf that their business is growing, that they are on track with different metrics that they have for themselves. But if you were to ask the average American, where do you watch Live Golf? I'm not sure that they would have an answer. And the reason for that is because the PGA Tour has been around a long time. It's hard to uproot any league that has been here in America, that is deeply rooted in American culture, with something new. It just doesn't happen across any sport.
I'm going to tell you what, I'm not a supporter of the Live Tour. I'm a PGA person, but I'll tell you what, every professional golfer should thank Greg Norman and Phil Mickelson for creating this whole Live thing, because what it's done is lifted the wages for everybody out there, including this weekend when the RBC Classic down in Hilton Head, which is historically a smaller tournament, it's now has a purse of $20 million. Thank you, Greg Norman. Thank you, Phil Mickelson. Now the question is, how do you put them back together?
Right. I mean, that's the thing, though. That is an interesting perspective, because for a long time, if you listen to the PGA Tour speak publicly about this, they blame Live Golf for splitting things up. And there was not a lot of accountability on how they could do things better until the Strategic Sports Group came in. They invested a whole lot of money. And since then, between the Strategic Sports Group and Brian Rolab, the PGA Tour has been on fire. And I would say that Live is running out of fuel.
Absolutely.
All right, Randall, fantastic to get your take here on a pretty momentous week here for the professional golf world. Randall Williams is our Business of Sports reporter here at Bloomberg News. And we want to go back and talk a little bit more about Netflix, because even though it didn't raise its forecast for this quarter, the numbers show that it is definitely making more money on existing subscribers than it had been. That's according to the company itself. They said customer retention has improved in every region in the first quarter, and we know they raised subscription prices in June as well. Mark Douglas is president and CEO of Mountain, and he joins us now for some more analysis on Netflix. And Mark, Netflix no longer really pushes the subscriber growth numbers. It's not even a figure that they release to investors anymore. It's all about making more money from your existing base of users. So what do we know about how much Netflix can extract from its subscribers?
Yeah, so I think that's the right way for them to look at it, and for everyone to look at it, is just monetization. And so the way to think about it is that you have subscription pricing for all Netflix users, but I think they've announced in the past half of the new users are signing up for an ad-supported tier. The numbers you typically think of when there's ad-supported content for any network is that you can make somewhere between $7 or as much as $14 additional revenue per subscriber through ad-supported tier. This is even, and those numbers kind of originate in cable television, but they've carried over into streaming. And so where in cable, sometimes networks are part of a bundle, but then they also were showing ads. Now you're part of a subscription, but there's also showing ads. So there's a lot of room to grow. Netflix is currently under monetizing those users, meaning the people signing up for the ad-supported tier. So that is just a backlog of revenue that is coming, and it's going to be coming for many years to come. I think I've said in the past, I think Netflix could be the first $1 trillion media company in terms of market cap because of the ads.
Mark, your company Mountain, you guys are right smack in the middle of all this digital advertising, television advertising. You know where the dollars go here. If for Netflix to really become a player in advertising, do they need a big sports franchise?
I don't think they need a big sports franchise, mainly because I think sports is important. But Netflix, because they own this slot as like the first place the majority of streaming consumers go to, like you turn on your TV and you kind of like, let me see what's on Netflix. They're able to turn things like WWE or a normal NFL game into these big events. They turn, I think we talked once before about the largest female professional boxing match was streamed on Netflix and things like that. So they've been able to basically take not these kind of like NBA contracts and things like that, but take other types of sports, turn them into things that are very attractive to consumers and then monetize from there. But sports is important, just not like having an NFL contract, for a whole season or an NBA contract for a whole season.
Mark, it strikes me that a subscriber to the ad tier is probably more valuable than a subscriber who opts for the advertising free tier. So how would Netflix convince a Paul Sweeney or a Scarlet Food to convert and to downgrade to that ad-supported tier?
From a subscriber perspective, I think that's going to be hard. I mean, I think it's pretty binary. You either want to pay for the full subscription or you don't. And the people paying the full subscription, I don't think are price sensitive. If Netflix is thinking, well, you're worth another, in terms of revenue, $7 if you're in the ad-supported tier, well, that'll just be in your subscription cost, maybe a little bit discounted. But I don't think that's critical, especially when 1 out of 2 new subscribers are signing up for the ad-supported tiers now. So it's not really, I think, that critical to convince everyone to do that when you're at 50% already.
So our good friends at Moffett-Nathanson were out with a research report a couple months ago where they did some work, and their work indicates that YouTube is actually the biggest media company in the world by value. What is your view of YouTube in this marketplace? They're so big. Do they still have room to grow? They're so big in the business.
Yeah, I think absolutely. So the way I think of YouTube versus the entire rest of the streaming market, but let's continue with Netflix, is YouTube kind of owns the day and Netflix and other media companies own the night, right? Like I don't think most people go home at 8 o'clock at night and like, let me put on a podcast. Like they want to watch their favorite shows across whatever networks there are. But during the middle of the day, when if they're driving to work, if they're on the subway or things like that, you're gonna tend to not be watching your favorite show while you're sitting in a subway car. So in New York City. So I mean, it's divided. Consumers want to be entertained essentially 24 hours a day. Their choices are streaming at any time, but I think generally at night, YouTube's, Instagram, TikTok, and they're not in conflict with each other. I think the streaming industry is very healthy, growing, and like owns the highest form of entertainment with consumers and the ones that they like most talk about, most look forward to. And that's why you're able to monetize these at these levels and subscriptions at these levels is because of that.
All right, Mark, really appreciate your joining us. Mark Douglas is president and CEO of Mountain, which of course does a lot on the digital advertising side, joining us to talk about the digital advertising market and how Netflix is faring in that. We got to go back to the headlines of the day, which is Iran. And there's so many of them, Paul, just over the last couple of hours since U.S. trading began. Futures have been moving up and up. And of course, the U.S. stock market opened and we're near session highs right now on the sense of optimism that the two sides, the U.S. and Iran, will move forward with another round of peace talks this weekend.
Yeah, absolutely. So that's moving these markets forward here. We're going to get the latest reporting here from Nick Wadhams, Bloomberg National Security Team Leader. Hey, Nick, I guess what we're trying to all figure out now is what does completely open mean as it relates to the Strait of Hormuz? Because there's different interpretations out there, I think.
Right. I mean, I think the key question here is not so much whether Iran and the U.S. can telegraph that the strait is completely open, but whether shippers are willing to believe it. So there are a lot of concerns about whether there are any remaining mines in the strait. There's a big question about the U.S. blockade, which was for ships going to and from Iranian ports, and there's just the broader concern from shippers that it simply has not been worth the risk over the last many weeks, given the twists and turns of this war. So you have a situation where Iran is essentially saying, hey, yes, the strait is open, and obviously the market indications are that that's being greeted with a lot of relief, but it's going to take days and potentially even weeks to really start seeing whether traffic is going to resume in the kind of numbers we saw before the war.
Nick, we heard from President Trump yesterday that a peace deal to end the war could be announced fairly soon. And this is before the Iranian foreign minister said that the Strait of Hormuz is open. President Trump also said it may not be necessary to renew this 2-week ceasefire between the U.S. and Iran before the deadline next Tuesday night. Of course, we've heard similar promises from him in the past that haven't necessarily panned out. What if we get a situation where we just are constantly renewing 2-week ceasefire deadlines?
Right. I mean, you know, the big question here is that there are so many big intractable issues at the core of the U.S. conflict with Iran that it's difficult to see what the two sides could agree that would basically make this issue sort of go away forever. Obviously, there's the nuclear concern, the U.S. demand that Iran never have a nuclear weapon, Iran's insistence that it doesn't want a nuclear weapon, what you're going to do with Iran's uranium stockpile and also its desire to enrich. Then you have the issue of its ballistic missiles, its support for proxies. So, you know, the question is, do we return to a sort of stable state that we had before the war where there was just a fundamental tension between the two sides, but ultimately no sort of final resolution over which way this thing was going? And right now, the issue is that we have a sort of vibe check that suggests things are headed in the right direction, but no definitive agreement. We have no piece of paper that we can actually look at that says, okay, here's what the two sides agreed to. Here's what takes off the threat of violence or a continued military campaign sort of forever. So, you know, the issue with President Trump has always been that he's said, listen, if you don't do what what I want, I will be willing to resume the military campaign at any moment. It still feels like a little bit like we're in that situation.
Nick, do we have any reporting as to the real position of Iran here? Do they want, or to what extent do they want peace, and how willing are they to negotiate some of these big items?
Well, I think what you see from Iran is a willingness to negotiate, but also a deep distrust of the United States, because we had at least two examples where there were negotiations going on, and then those negotiations were essentially a prelude to a U.S. attack. So you had last summer in 2025, and then again 7 weeks ago, where there were active negotiations going on, but then the U.S. essentially said, you know, those had been fruitless and began the military attack. So for Iran, there's a question of, well, what's the point of getting into these negotiations? And crucially for them, what they have always said is, how do we make sure this thing sticks? So we can agree to something here. How do we make sure that sticks in the long term? And what they really want is sanctions relief, essentially the ability to link their economy much more closely with the global stage to open up again. That's going to be very tricky for President Donald Trump to do anytime in the short term, because he's going to be under so much pressure from Iran hawks at home, who argue that doing that will only then incentivize bad behavior for Iran and not be able to sort of control and make sure they keep these limits on their nuclear program and other things that the U.S. wants them to stop doing.
All right, Nick, really appreciate your joining us and putting some perspective around all these headlines. Nick Wadhams, he's our Bloomberg News national security team leader on all these not conflicting, but just the various headlines coming out on Iran, fast and furious, all this morning, Paul.
Yep, from both sides. So hopefully we'll get some more clarification as the hours go on here. But you know, President Trump is speaking to many outlets and basically saying with the same message, which is the straits are wide open, and so we'll have to see. But I'm not sure who's going to be the first ship to go.
Yeah,
so
exactly. And also, you know, a lot of what he says is wishful thinking. He says it, and eventually it may happen.
Yep, we'll see. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour, of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Friday morning from the Bloomberg Intelligence team here at our Bloomberg Interactive Broker Studio in Midtown Manhattan. We are streaming live on YouTube. We're also available on www.bloomberg.com/videos. Paul Sweeney, Scarlett Fu, and Charlie Pellet here to take you through the second hour of Bloomberg Intelligence. We have a stock market rally underway. We have oil prices plunging as investors digest many headlines on Iran and the possibility of more talks, peace talks this weekend. We're going to check in with Mike McGlone to look at oil prices with WTI falling to $82 a barrel, Brent dipping below $88 a barrel. See how sustainable these declines are. Ranjitha Kumar is chief scientist at User Testing, and we'll talk a little bit about AI because that's another source of optimism for the equity market, at least, because we've seen tech stocks and the market as a whole climb to record highs. We're also going to check in with Nisha Patel, the SMA fixed income portfolio manager at Parametric, for Paul's favorite topic, munis. It is Muni Friday, after all.
Yep.
And we're also going to check in with David Weston, the Wall Street Week host here on Bloomberg Television.
Really?
Yes, because he talked with Hank Paulson, the former Treasury Secretary.
Tough to get on his calendar.
Yes, I know. Who's made a couple of comments, not just about what's happening with the Federal Reserve, but also we can't forget about the widening budget deficit. That's a big concern for someone with a long-term view like Hank Paulson. First, though, let's get you all set up for the trading day with Charlie Pellet.
Hi, thank you very much. And here's what's going on. Got to begin with oil because this time yesterday we were talking about crude with a 90 handle. Right now, West Texas Intermediate crude, 82.21 a barrel. A topic we'll be covering with our Mike McGlone shortly here on Bloomberg Intelligence. Down now by 13.2%. Barrel of Brent at 87.19 right now. Brent, the global benchmark, down right now by 12.3%. So oil plunging, stocks surging. Right now looking at a Dow that is up more than 1,000 points. Higher by 1,002 right now. That is a gain of 2.1%. Not a record, but we've got the S&P 500 index, NASDAQ, and the NASDAQ 100 index all climbing to new highs. 71.32 right now on the S&P, up 90. Gain there of 1.3%. NASDAQ Composite Index up 1.6%. The NASDAQ 100 Index up by 1.3%. And again, bears repeating, S&P, NASDAQ 100 Index, all at records. All of this with the VIX now at 17, the 10-year 4.23%, the 2-year 3.68%. Gold up 1.7%, 48.72 the ounce. West Texas Intermediate crude below $82 a barrel now, down 13.6%. Margie Patel is senior portfolio manager at Allspring Global Investments, and right here on Bloomberg Intelligence last hour she told us she likes what she's seeing in the equity market.
When you look at the fundamentals of the U.S. economy, it actually looks quite good. We've just started first quarter earnings, and even the 10% or so companies we've seen have looked pretty good. It looks like profits are really close to a 15% gain for the first quarter. So it really makes the equity market look pretty attractive, especially with the correction we had here over the last month or so.
Allspring's Margie Patel interviewed right here on Bloomberg Intelligence. By the way, you can hear more of that conversation on the Intelligence podcast. You can download it wherever you get your podcast. On a day when stocks are surging, a notable exception, Netflix after earnings down now by 8.6%. Again, recapping here, oil is plunging, WTI down 13.2%, S&P up by 1.2%. Big day for equities. Paul and Scarlett, Scarlett and Paul, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. And with the gains in equities, we're now looking at a third straight week of gains for the S&P 500 of at least 3%. It's been a pretty dramatic comeback from those losses that we first saw when the war in Iran began.
Yeah, I mean, it just goes to show you you just can't try to time the market. I mean, we've all been told this But I guess some people still try to do that. But boy, you just get your face ripped off in these kinds of markets. It's not just in stocks, and we'll talk to McGlone in a couple of minutes. It's also in the commodities.
Absolutely, absolutely. All right, let's bring in Alexis Christoforous for our market movers this morning. Alexis, what are you looking at?
I'm looking at Intel because it's sort of quietly having a pretty incredible day. So shares are now at their highest level since the year 2000. And it looks like Wall Street is pretty optimistic about Intel's turnaround plans. We know the chip maker is sort of in the midst of this multi-year effort to restore its leadership, after years of ceding market share to rivals. So analysts expect Intel's rally to continue. They say the potential for new big name customers to be announced is looking pretty good here in the next few weeks and months. And some predict that the stock could trend toward $100 over time. We've got Intel up today, trading at around $69 a share. So it is definitely one of our top movers today.
And folks that were back in the 90s, Intel in the 90s was the NVIDIA, was the Netflix of the 90s, just the best performing stock in the 90s, and it's taken 30 years for it, 25 to 30 years to kind of regain some of that.
But the 90s are back, Paul, so this is in tune with that.
And my boy Frank Geary's the chairman of the board there, and he's doing an awesome job, so that's good for them. What else you got for us?
Got JetBlue. So we should just say that the airlines in general are having a really good day, and that's because we're seeing oil pull back really dramatically, because this, of course, goes into the making of jet fuel, which is one of the carrier's largest costs. So having said that, JetBlue is also rallying because it got a nice upgrade today from Seaport Research to buy from neutral. And JetBlue is seen as a beneficiary of the problems Spirit Airlines is having, because Spirit is now saying that it might have to shut down its operations within days if jet fuel prices don't come down, which it'll be interesting to see if they change that now that we're seeing oil slide the way it is today, and whether or not that lasts.
Yeah, although oil is still pretty elevated compared to where it was before this whole war began. And Spirit Aviation has been, this is the second bankruptcy it's in. It's had a lot to work with.
The first one, I think, was during COVID, so you're right. And also JetBlue, good news for folks in Boston. They just expanded service now. They're going to do direct flights from Boston to Barcelona during the summer season. And I love this. They say the summer seasonal time ends October 25th.
Really?
So, yeah, the season's pretty long. JetBlue is having a good day today. And then my last one I got for you guys today is Allbirds. This is the shoemaker.
Former shoemaker at this point.
Yeah, that's right.
And I remember, Scarlett, you actually came into the studio before the show that day and said, did you guys hear about the shoe company that became an artificial intelligence company? I went, okay. So Allbirds shares, they have had such a swing this week. So they rose like sevenfold on Wednesday when they announced they weren't going to be a shoe company anymore, and they were going to stop making those wool sneakers and start doing AI in a big way. And then the market had a night to sleep on it, and the stock fell 35% yesterday. But we've got shares of Bird. Let me see. I think they're off their best levels of the day right now. I'm just taking a look at what they're doing. They're up about 12% right now.
Very good.
Still double-digit gain, but yeah, it's nothing compared to the 582% surge that we saw earlier this week when it pivoted.
It's sort of like a meme stock now, right?
I think so.
Bird.
Yeah. All right,
Bird is the ticker symbol there, by the way.
All right, Alexis, thank you so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. When I was in a training program at Painwelber back in the early 80s, I spent a couple of weeks with the oil traders, and I walked away thinking, I will never do that for a living. You just get killed, and you have no idea why. It's like one of the hardest things to trade, I think. And sure enough, we talked to a guest who's traded this stuff. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. Mike, who's buying and selling this stuff on a day when WTI crude oil is down 13%? What's going on out there?
Well, Paul, I like how you led into that, and you can't see me on radio, but I used to have hair, and you have nice hair. That's partly from being a trader, but it's the lessons like you bring out of landman kicked in. Prices went too high, and it's the #1 bull market in all commodities, it's elasticity. Now, we saw that natural gas earlier in the year was up 100%, up to 7. Now it's down below 3, around 2, down almost 20%. It's just tell us what's going to happen in crude oil. Now, there's a good reason for prices to go up, but now they're reverting backwards, and what it's doing is it's really, what crude oil does, it breaks things. It's bringing on that supply, cutting demand, and it's hurting the global economy. So right now, what I view is markets all work in cycles. We had an incomplete low price cure. Crude oil is hovering around $55 a barrel. The U.S. break-even cost got up to 100. I think by the time you get the midterms, it's going to get back down to around 55 or 50 or lower a barrel, because that's what it normally does. And it's the most unique thing I've ever seen in markets. We have the leader of the world's most significant energy producer and a net exporter of crude oil and natural gas. He wants lower prices by midterms, and inflation's the key theme. What do you think is going to happen? I think it's going to continue going lower.
You've been saying that. Mike's been saying that.
He's been very consistent with that. Having said that, Mike, you've got the prices that we see on our Bloomberg terminal, WTI at $82, Brent at $87. Yeah. But for countries in Asia that import their oil, the physical price of oil has not moved as quickly, and they are struggling. They have shortages. They're looking at cutting back on production, maybe even rationing. Some school days are being cut to 4 days a week because they need to conserve energy. When does the physical market catch up?
Yeah, that's going to be a while, Scarlett, because I hear it at minimum takes 6 weeks to get oil to its destination out of the Gulf. And the key thing is you nail it. The rest of the world's really suffering, particularly Asia, maybe not China, because China really built up its reserves, but a lot of the other countries in Europe, I mean, jet fuel spiking, distillate spiking, gas oil spiking, bunker fuel, and that's going to just crush those capital investment decisions, crush those economies. At the same time, they're facing that paradigm shift. They just can't export to the U.S. as much as they were, particularly China. You've seen the major exports of EVs from China to the rest of the world. So what's the big picture here is it's going to shift that process of technology replacing fossil fuels. In the meantime, can we get through this without a global recession? I doubt it. And the number one measure for that is that U.S. stock market. Right now, it doesn't care.
It doesn't care. What's the demand situation look out there for crude oil these days, Mike?
It's been, well, the key theme is in the U.S., we have a major surplus of supply versus demand. We mentioned that before. It's running 8 million barrels a day. It's all about China. And their demand has been flat and actually declining around 11 million a day. It peaked in 2020. And they built up reserves to very high levels. And they're building up supply of everything. They're just adopting the technology that the U.S. did in the oil patch during the Obama administration. So the whole picture for crude oil is it's being replaced by fossil fuels. You sell when it goes up. It's typical cycles. It has to get around 40 for a low price cure. So demand is going to get hurt by this. It might take a while. In the shorter term, it's going to be really hurt, as you mentioned, the issues in Asia.
All right, Mike, really appreciate your joining us. Mike McGlone is our senior commodity strategist here at Bloomberg Intelligence, joining us to talk about oil. Again, WTI and Brent, both lower by double-digit percentages. We're looking at $82 a barrel for WTI here in the U.S. All right, let's talk about AI, because AI is one of the big tailwinds for the stock market, which right now is in rally mode. The S&P 500 up 1.2%. We're looking at a third day of record highs if we close at these levels. The NASDAQ 100 also getting ready to set another record high. Ranjitha Kumar is chief scientist at User Testing, and will talk to us a little bit about what they're doing over in Chicago with AI. Ranjitha, welcome to the program.
Hi, thanks for having me.
So tell us a little bit about your company, User Testing, where you are chief scientist. What does the company do, and how does it work?
Yeah, so User Testing is a human insights platform that helps companies understand how people experience their brands, products, and services. So it could be your website, your mobile app, your prototypes, or even end-to-end journeys like ordering online and picking up in a store.
So typically, what are you looking to find out from, one of your clients' client base?
Yeah, so if you're one of our customers, typically what you do is you use our platform to run tests. You can recruit participants for this test from, our own proprietary network, which actually has over 6 million people that we've vetted globally, or you can bring in your own customers. And while these participants take the tests, they're giving us all sorts of interesting data through, what they're doing on their screens, their think aloud feedback, survey responses, even, their facial expressions. So at user testing, we then take all of that data, and our platform uses AI to translate those into actionable insights, and, then you're off to the races from there.
Right, and the actual insights is what these companies really are seeking as they try to become more productive, more efficient. When it comes to AI, there's a lot of buzz around agentic AI, this idea that AI can kind of take off and do a lot of the analysis, not just answer your questions. How do you define agentic AI in a practical business sense?
Yeah, that's a great question. I like to think of agentic loops as iterative workflows where you use LLMs to perform different roles. So for example, you might first ask an LLM to create a plan for completing a task, and then you ask it to execute that plan. And then afterwards, the LLM can actually evaluate its own performance and determine whether or not the result is good enough or needs improvement. And, if it's not good enough, you can tell the system, loop back and try again. So you can basically keep going in these iterative loops, and it's kind of cool because they're flexibly autonomous. That's kind of how I like to describe them, because at the end of the day, a human can decide where they're going to intervene and review what the AI did and guide the agent's work.
So, Rajita, we know that executives are under pressure to move quickly on AI, to adapt AI to their business. What are the biggest mistakes you're seeing in that rush?
Yeah, I think my pet peeve right now is a lot of people would like to sprinkle AI fairy dust on existing workflows. And I think what you want to do is take a step back and be very intentional about how you're creating new AI workflows and how you're bringing AI to the market. So I do think speed is important and experimentation is important, but I think my advice would be very intentional about how you're using the AI, and make sure you're applying it in the right places to solve real problems.
And of course, as we think about AI kind of taking over a lot of the rote work that we do day in and day out, there is still a real role, a real need for human judgment. How are you thinking about why human judgment, real customer insight still matter in an increasingly AI-driven world?
That's a great question. I think there's no substitute for human judgment, human expertise, human insight, and frankly, customer insight, right? Because our customers are still people, not these AIs or models. And so you have to, use AI to speed up the work that AI is good at doing. But at the end of the day, it is human judgment, expertise, experience that matters. And you want to make sure that, you're not completely automating stuff at the risk of losing that.
All right, well said. Ranjitha, thank you so much for joining us today. Ranjitha Kumar is Chief Scientist over at User Testing. Their ticker is USER. Thank you. All right, we're looking at markets heading into the weekend on a big tailwind. In fact, the S&P 500 has now gained every single day this week and is on course to close out its third straight week of gains with gains of at least 3%. So what a turnaround.
While at an all-time high. So that's,
yes.
Yeah, it's amazing that while setting all-time highs, still moving higher by 3% each week.
And the NASDAQ 100, for those keeping score, now higher for a 13th straight day as well. Also a record high. Get the latest news whenever you want it with Bloomberg News Now. Top stories from a global team of reporters available at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts. We're ending the week with gains in equities and losses in oil. The S&P 500 at a record high, the NASDAQ 100 at a record high, WTI and Brent, both global benchmarks, and the U.S. benchmark losing about 11 to 13% in their prices.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Wall Street on track for yet another winning week. We are off session highs right now, but the Dow, the S&P, NASDAQ solidly in the green. Just getting a headline on the Bloomberg right now. Iran's semi-official Fars news agency says the passage via the Strait of Hormuz will be closed if the U.S. naval blockade continues, as it would be considered a violation of the ceasefire. But right now, the Dow, the S&P, NASDAQ all advancing. Equities climbed after Iran announced that the Strait of Hormuz is, quote, completely open for commercial traffic. Oil is plunging. S&P right now up 85 at 71.26. That is a gain now of 1.2%. Dow Industrials up 950, up 2%. We've got NASDAQ up 363 now, up by 1.5%. The 10-year at 4.23% with a VIX just above 17. The 2-year 3.69%. Spot gold up $76 the ounce, 48.66, up 1.6%. And as we head into the weekend, West Texas Intermediate crude with an $82 handle. You recall this time yesterday we were in the 90s. WTI right now 82.94. It is down by 12.5%. Barrel of Brent, the global benchmark, 88.77, down now by just about 10.2%. Intel up 2.3%, trading at their highest intraday level since 2000, as optimism continues to grow that the chipmaker's ambitious turnaround plan is bearing fruit. So recapping a major sell-off in crude, WTI down 12.4%, 82.96 a barrel. The VIX just above 17. The S&P, NASDAQ 100 index all trading at records. Paul and Scarlett, that is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Well, just a few weeks ago, the city of New York, I think, did a $1.9 billion general obligation bond. And if you were a resident of New York City and you bought that bond that day, you got a tax equivalent yield of 10.1%.
Juicy.
Yes, for a extraordinarily highly rated credit. That's not bad. That's a power tax-free. Our next guest knows all about that. Nisha Patel, SMA Fixed Income Portfolio Manager at Parametric. Nisha, talk to us about the municipal bond market. How's it performing this year?
Yes, great to be here. So I think, to your point, Paul, taxes are very top of mind as investors have just come out of tax day. So what we've seen so far this year, last year was a tough year in terms of performance, rate volatility, technical, higher technicals, higher supply was a story. We had a rebound earlier this year, and then March was actually the worst month of performance for the municipal bond market in the investment grade space in roughly about 3 years. So what we saw in March was a classic rate volatility, right, macro story plus technicals. What do I mean by that? Again, higher supply, a little bit of selling due to tax time selling, and then you layer that with all the rate volatility in treasuries that we've seen because of the war. Since then, though, good news has been two things. We've seen a rebound in April, but even with that rebound in performance, we are still seeing kind of the current entry point as being very attractive. So, tax-free yield still roughly 3 to 4%. And to your point, Paul, depending on which state you're in, that can be a very, juicy, very attractive tax equivalent yield that investors can take in a market that is still relatively high grade, right, high quality from a credit perspective.
So it might be tempting for people to start buying some munis after this brutal sell-off in the month of March. But I guess the question is, you could also wait, and if valuations are low and things look cheap, it could always get cheaper.
Yes, I think that's a great point. It could. And again, we've seen a little bit of a rebound in performance. So yields have come down a little bit, particularly in the intermediate part of the curve where we're seeing a lot more demand. But I think, the main thing here is that, look, yields could stay a little bit higher for longer. A little bit of this is going to be dependent on where treasury yields are. But seasonality has a lot to do with this in the municipal bond market too. So we talk about supply a lot. We're still seeing, a very high amount of supply. It tends to be very much kind of focused in certain pockets of the year from a calendar perspective. So usually as we head into the summer, we have more favorable technicals. So what does that mean? Supply, typically moderates a little bit. You have a lot of the issuance come up in the first kind of half of the year. And then demand usually naturally goes up because you have a lot of maturities and coupons that need to come back into the market to be reinvested. So you're right. I think from a timing perspective, it can be very tricky. But I think if we look at, treasuries and we're thinking, look, we're stabilizing here. We've seen a lot of kind of the worst of it, if you will, in the municipal bond market. And if we're seeing an outlook for stronger technicals, I would argue at least legging in here at this point is probably the prudent way to do it and very opportunistic right now.
Nisha, you were talking about supply, and from what we understand, 24 was a record year for issuance. 25, another record year for issuance. Is 26 going to be another record year for issuance? And if so, does that put a headwind to performance?
Yes. So yes, we've been hearing, I've been talking a lot of supply. So few things to keep in mind, I think, just from a backdrop, right? So issuers have kind of a pent-up demand and pipeline of real projects to fund. So, utility, housing, any sort of infrastructure-related project in this country typically is going to be financed in the municipal bond market. As costs are higher, right, as we see kind of broadly across the board at household level and in every other sector, the dollar amounts of these deals are going to be bigger as well. And I also think it's very tough for issuers to time, but if they're seeing this as a generally attractive market from a financing perspective, they're going to come onto the market. So to answer your question, 2026 is also expected to be still as high as 2025, which was a record year, right? That can fluctuate, but generally the theme is higher supply. What will be different, though, and why we think this year higher supply does not equate to underperformance necessarily, is because in 2025, the demand was not there, right? So all the rate volatility because of Liberation Day, think about money market funds, what those were yielding, even just rolling treasury bills. That's where a lot of clients were parked, right? They didn't want to take on a lot of interest rate risk. This year, we could see this different, right? We do have money market fund yields lower, reinvestment risk higher. So we could see just higher demand given the yields that we're seeing in the market today.
Nisha Patel, SMA Fixed Income Portfolio Manager at Parametric. Thank you so much for our Munis in Focus. It is Friday, which means later on this evening, we have Bloomberg Wall Street Week airing. And the host, one David Weston, is with us in the radio studio. Hi, David.
Hi. Great to see you, Scarlett.
Great to see you, too. You got a chance to talk with the former Treasury Secretary, Hank Paulson.
Yeah.
How did that go? I'm sure he has a lot to say given the kind of historic moves we're seeing across markets and big questions about geopolitics and what the Fed does next. There's no shortage of topics.
Yeah, well, we used the occasion of the IMF World Bank meetings to go down to Washington because he was there to talk about that. And he talked about exactly what you mentioned, Scarlett. A lot of it was about the war in Iran and what that means for the global economy, what it means for the global financial leaders who are meeting there. And of course, he wanted to talk about China some because he thinks that's terribly important for the U.S. and China to figure out how to work with each other since they're the two largest economies. And so much of the discussion was about that. Hank, as you know, for many years has been concerned about the U.S. deficit. And although he was not at all suggesting that the war made that worse, in fact, he thinks in many ways the United States is better positioned than other people are. He is concerned that at some point, he doesn't know when, we're going to hit a wall that's going to be a real problem. This is part of what I had to say about that.
This crisis is different, right? When you hit the wall and you're trying to issue treasuries and the Fed is the only buyer and the prices of the treasuries are going down and interest rates are up, that's a dangerous thing. When are you going to hit the wall? I obviously don't know. It's impossible to know. But the law of economic gravity, you're not going to know that. So, and when we hit it, it will be vicious. So we have to prepare for that eventuality. And I think we need an emergency break the glass plan.
So that is Hank Paulson. And the crisis he mentioned was not war in Iran. It was not Ukraine. It was the larger crisis down the road at some point, the fiscal crisis he's been warning about. Actually, I went back and reread some of his book, On the Brink, and the reason he took the Treasury job originally in 2007 was because he was concerned about the fiscal crisis in 2007.
I know. Well, I've been on Global Wall Street since 1986, and it's been a story since 1986, and I'm sure it's well before that as well. But it just, but the cynics will come back to me, Dave, and say, hey, as long as people show up to the Fed and buy our bonds, we're fine. Yeah. Boy, I guess that's okay, but I don't know.
Yeah, as long as in that sentence is the one that worries me. Because Frank is, I'm sure Hank would exactly agree with that. But he'd say that's the as long as. But at some point, if it goes too far, they won't. And by that point, you're really in trouble. And part of the problem is the break the glass plan that he says we need to do. He can't really say we're any close to having that today than we were in 2007 when he was in Treasury. So he's very concerned about it down the road.
Yeah, this flares up every once in a while. Remember earlier this year when we had the Sell America trade, people were worried that we're going to start to see a buyer strike of U.S. Treasuries. That doesn't usually pan out. Maybe for a while you start to see other central banks diversify away from the United States, maybe buy some other kinds of assets. But it's not as if central banks in other countries are saying full out, I don't want to have anything to do with these U.S. assets.
And it's a political thing, isn't it, David? I mean, there's just not the political will in this country.
Well, Hank says that actually in the interview. He says Congress, he's been around Washington for a amount of time. Congress, Democrats and Republicans don't do anything until there's a crisis. You know, and that's the problem. And that's why he's saying that at some point there will be a crisis. That's why we need a plan on the shelf that we can pull off the shelf. Did you see the Deutsche Bank note actually a couple of weeks ago that suggested that actually the petrodollar was under siege because of this war in Iran? And it actually, because as you know, China would love to move away from the dollar, right? And Saudi Arabia even had been moving away from that. So there's even a question about whether this might not do away with the dollar as the reserve currency, but undermine it a little bit because there have been nicks on it. Yeah, and there have been holes being poked in it for a while now.
What is Hank Paulson doing these days?
He's got the Paulson Institute that he founded. He spends a lot of time with China and working in China and climate. Climate is a very big deal. Yeah. Climate is a very big deal for him and Wendy, his wife. But one of the things we talked about that's going to be in a different story is China's moving forward on renewables. Essentially, all the new energy China is generating for AI is coming from renewables. At the same time, the U.S. is cutting back on renewables, and he's concerned that we're really at a disadvantage in the AI race.
It seems like the rest of the world, the message to the rest from the rest of the world to the U.S. is, you guys in the U.S., you do what you want to do with renewables. But the rest of the world's moving forward.
Exactly.
We're paying for it, right? Because Americans are also paying for higher energy bills because of the surge in demand for energy from those AI data centers.
Yeah, it's interesting. But the rest of the world is not waiting for the U.S. That's what we got from the Bloomberg Philanthropies Energy Conference, 6 months ago.
You're totally right about that. By the way, I think that's part of a larger phenomenon. Again, we talked to Hank about this. When we have the stresses and strains in the global economy right now, back in the great financial crisis, he helped bring the world together to a common. At this point, it's not just China and we are on the same page. We're on the same page with Europe anymore or with Japan. And he said that's a real problem because we don't have a common approach to macroeconomics anymore.
Yeah, some might call it an America alone approach.
Yeah.
America alone. David Weston, thank you so much. We appreciate it. David Weston, he's the host of Bloomberg Wall Street Week. And for those of us of a certain vintage, Wall Street Week brand is extraordinarily valuable. I'm glad it's in the hands of David Weston and Bloomberg News. So we got that coming up here this evening. S&P, they're up 95 points. That's 1.3%. About that, the Nasdaq's up 1.7%. The Dow, I'm quoting because I like the big numbers, up 980 points. That's it, Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 Index best level of the day. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Right now, the S&P up 94, 7135. We're looking at a record on the S&P up by 1.3%. Again, any advance, any move higher today on both the S&P, NASDAQ, and NASDAQ 100 index will be a new record. Dow Industrials have been up more than 1,000, up 989 right now, up 2%. S&P keeping it all in context, up 1.3%. NASDAQ up 1.7%, and the NASDAQ 100 index now up by 1.4%. The VIX just above 17, the 10-year 4.23%. Gold at $48.70 the ounce, up 1.6%. And West Texas Intermediate crude oil, WTI down 12.4%. 82.95 a barrel on West Texas Intermediate crude. So the Dow, the S&P, NASDAQ are all advancing right now. Again, the S&P up by 1.3%. I'm Charlie Pellet, and that, Scarlett and Paul, is Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. It is Friday, and we are looking at gains in the stock market, big losses in the oil market. The S&P 500 at a record high for a third straight day. Ditto for the NASDAQ 100 as well. And we're now looking at indexes getting ready to close out a third straight week of gains of at least 3%. Sarah Ponczak is the first vice president of wealth management at UBS Private Wealth Management. She's also a friend of the network, having previously worked at Bloomberg as well. Sarah, always good to speak with you. And you note that the volatility, even with the gains that we're seeing in risky assets today, is not going to go away because really what's driving everything is geopolitics and headlines on geopolitics.
That's right. Thanks for having me, Scarlett. It's always great to see you and be back on Bloomberg. I was on the program about a month ago, and it was almost an entirely different picture. You know, geopolitics was very much front and center, as it still is, but it was just beginning. And there was a lot of tension between the United States and Iran, and the Strait was closed, and there were concerns about energy prices and oil. And we talked about how, yes, geopolitics is front and center and very important when it comes to volatility, but that's not necessarily what's going to drive market returns long term. That being said, just as you pointed out, Scarlett, sure, things are going very well today. Things are going very well this week as it pertains to diplomacy. But we all know that that can change on a dime. So I wouldn't yet say that we're out of the woods, that the volatility is behind us and that it's going to be a straight shoot higher. That's not the case. Volatility is the price of admission when you're an investor, and we expect volatility is very much going to continue. But that said, we're now in an earnings season that's going to highlight the fact that fundamentals of the stock market and profits are still very strong. And at the end of the day, that's truly what drives markets.
Sarah, within that equity call there, are there certain sectors that you guys like here? We have seen a little bit of rotation late last year out of some of the tech into some of the more value trade. That seems to maybe reversing a little bit here. How do you guys think about stock selection?
So we still very much like technology stocks, and we actually use some of the volatility that we saw over the last couple of months to add to those positions. With that said, this is not an all or nothing market solely driven by technology anymore. For years now, we've talked about the Magnificent Seven and a bunch of different acronyms and names that we came up for a select handful of stocks that were the only constituents of the market that were really bringing stocks higher. That's not the case anymore. So yes, we still like tech. We still believe that artificial intelligence has a long runway ahead of it. But technology is not the only sector that's going to benefit from that. So instead, you can also look to other areas of the market. And what's interesting is if you look at, earnings expectations for the first quarter. Yes, that was the first 3 months of the year. We're beyond that, but now we're starting to see those numbers actually come through. Our chief investment office is expecting 17% year-over-year earnings growth for the S&P 500 as a whole. And that growth is broad-based. It's not only being driven by technology, it's being driven by other sectors as well, which is what we want to see. And by the way, that 17% year-over-year growth is the strongest pace since 2021. So again, fundamentals are strong. Companies are making a lot of money right now. We're about to see it most likely. And in addition to just moving out of sectors away from technology, we've also still been interested in international stocks, looking overseas. For over a decade, the U.S. was the only place to be. That changed last year. We still feel that has legs, and there's reason to diversify out of the United States as well. And then also looking to other asset classes if it makes sense for you as an investor too.
But if you don't want to take on the currency risk and you'd rather stay in the U.S. and feel that big caps have run their course, you could also go smaller when it comes to market cap, right? The Russell 2000, for instance, has outperformed the big caps, the S&P 500 and the NASDAQ so far this year, as well as over the past 6 months as well. What do the earnings picture look like for these smaller companies that tend to be more geared to the economy, certainly more dependent on lower interest rates, and also more dependent on a U.S. economy and U.S. domestic demand as opposed to global demand?
Right, you're absolutely right, Scarlett. As we've seen interest rates come down, we all know the Federal Reserve cut interest rates last year a few times. Now there's been some questions surrounding, are we going to see further interest rate cuts in 2026? Our economics department is still expecting that we could see about 50 basis points of cuts potentially, more so in the latter half of the year. So later in the year, but still as interest rates come down, a lot of small companies, those are the very companies that need to borrow because they're not cash heavy. They don't have a lot of cash on their balance sheets like some of these major mega caps do. So they need to borrow in order to fund their businesses and grow. So as interest rates come down, that very much helps small and mid cap companies because that debt burden that they're dealing with, the interest rate just isn't as high. So you're absolutely right. We've seen small and mid caps perform well so far this year. And if interest rates do continue to come down, that's a trend that we could see continue.
Sarah, what's the fixed income conversation you're having with your clients these days?
So, it's interesting. I think there was a lot of, not hype, there's never hype around bonds, I would say, but there was some excitement around bonds, entering 2025, as we all knew that interest rates were going to come down. So at that point in time, the story was, okay, if you are a bond investor, you want to be locking in interest rates now because they're the highest that they've been in years. So lock in these interest rates. And also, by the way, when interest rates move lower, that means that your bonds are going to appreciate in value. And that's exactly what we've seen over the past, 2 years or so. It's been a great environment for bond investors. I would say some of that luster has gone away a little bit. There isn't as much, excitement surrounding bonds, but we always, we're still reminding our income-oriented clients, those who are retired, they need income in their portfolio. They also need stability. We have to remind everyone that if you look at the stock market over the last 3 years, it's up over 60%. Yes, there's still a lot of reason to be optimistic, but if you're someone who's spending down your portfolio or you need income, bonds are still a great place to be. And especially after the run-up in yields that we saw over the, from the start of the year, it might be a good time to lock in yields again.
Sarah, very quickly before we let you go, how concerned are your clients about what they're hearing? And I say hearing because there's usually headlines about private credit.
Great question. It feels like we're fielding questions about private credit almost every day. Because look, we do believe that private credit is a good place to be in a portfolio. No, you don't want to be over allocated to it. Yes, it is an illiquid asset class. You might have been sold the story that you have quarterly liquidity, but that's only up to a gate, which a lot of investors, as you know, are learning right now. So, we've been in contact with a lot of the private credit issuers. To date, it still sounds like the loans are performing really well. They're optimistic on the underlying investments, but you still have to be selective as it relates to the issuer. So for some of those larger issuers that we work with, we're still very comfortable being invested in those portfolios, but I know that there are a lot of, smaller issuers out there. We're not involved with them, where there are maybe some concerns about loans, but more so than not, we do feel at this point in time, a lot of it is headlines.
All right, good stuff. Sarah, always a pleasure speaking with you. Sarah Ponczak is First Vice President of Wealth Management at UBS Private Wealth Management. Senior Vice President. I'm sorry, we did not promote her.
Promoted again.
Oh, there
That's
you
how
go.
Good she's doing.
Sarah Ponczak, one of our favorites here
Yes.
at Bloomberg. And as she was talking about it, you have a market that is on fire at the moment. The S&P 500 at a record high, up 1.25%. The NASDAQ also gaining to a record high, up 1.5%. And this comes as oil prices decline. Iran basically saying that the Strait of Hormuz is open. And President Trump just now saying that Iran has agreed to an unlimited suspension of the nuclear program. We'll have more details as we get them. But that is the latest headline here on Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out there. Lots of M&A out there. The question is, what can get, I guess, past the regulators? And we have an administration here that M&A bankers, M&A lawyers felt like they can get a lot done in this environment, and we'll see here. But there's a lot of cases that the regulators are going to have to deal with here, and who better to do that? Look us up is Jennifer Reed, Senior Litigation Analyst for Bloomberg Intelligence. Jen, let's just talk about the one that popped up this week, and I was involved with as a banker back in the day. Live Nation, Ticketmaster. Everybody's out there feels like our ticket prices are way too high. There's way too many fees, and what's going on out there?
Yeah, well, you know, it's a perfect example of what's happening in this administration because the Department of Justice has been pursuing that company for years. I mean, they had a settlement when you were involved, right? When they acquired Ticketmaster, they violated that settlement. They were found to be in violation. They entered a new settlement, and now still, we've had a trial. The Department of Justice had sued. The Department of Justice wasn't part of that trial because they settled the case in the first week with Live Nation. It was a pretty big surprise to a lot of people, but apparently it's been reported that there were lobbyists hired that influenced the administration and got a pretty good settlement for Live Nation out of it. But we have states that also enforce the antitrust laws. They can enforce the exact same laws the Department of Justice can, and they continued, most of them, a few settled, but most of them continued to pursue Live Nation, and they won a liability verdict from a jury that Live Nation has monopolized certain aspects of the live concert industry.
So put it all together, what does that likely mean for Paul Sweeney when he wants to buy tickets to a summer festival next year?
Well, let's just hope it means that those tickets are a little easier to get and less expensive. Probably not by next year, though. These things take a really long time, and it's highly likely that once the judge issues his remedy, which could take another 6 months, that Live Nation will then appeal that. And usually a remedy, particularly if it's fairly intrusive, it will be stayed pending the appeal, which means nothing's going to change. So when Paul buys his tickets next year, he's still going to face a lot of fees. And until this gets through the appeals process, possibly even get all the way through to the Supreme Court.
What happens with the ticket resellers, those other companies out there, Access, I'm thinking StubHub, did they have a role in all of this?
You know, they do, because several of them have really been trying to get into what we call the primary ticketing market, not reselling, but being hired by the venue to sell the tickets for the concert in the first hand. And they've really struggled because Live Nation has such a stranglehold. So right now they're watching and waiting, hoping that whatever this remedy is that the judge imposes will open up competition and allow them to gain a little more market share, get a few more contracts with some venues, and sell more primary tickets.
All right, let me just get to some Iran news here. President Trump said Iran agreed to suspend its nuclear program indefinitely and will not receive any frozen funds from the U.S. Trump said in a phone interview on Friday that a deal to end the war, which the U.S. and Israel began with Iran in late February, is mostly complete. Talks over a lasting agreement will, quote, probably be held this weekend, the president said. Bloomberg Balance of Power with Joe Matthew will bring you all of the details in just a few minutes. Jen, let me get to another deal that's near and dear to my heart, which is Paramount Skydance.
Yes.
Acquiring Warner Brothers Discovery, mega deal in the media space. What are the regulators going to say about this?
Well, in the U.S., they've already spoken, and they said, we're fine with it.
Nice.
Yeah, I mean, the Department of Justice allowed the Hart-Scott-Rodino waiting period. That's the period the companies have to wait before they can close to allow for antitrust review. They allowed it to expire. Now, I've seen news that some subpoenas were sent out since then. I don't really think that means much, because in the U.S. right now, legally, the companies can close. The reason they haven't is because they're waiting for Europe and UK, which also have jurisdiction to review the deal, and they cannot close until they get that. But I'm not so sure that the European regulators are going to have much of an issue with this because the impact is more on the U.S. in terms of labor and putting together those movie studios.
But we know that there's a lot of opposition, especially in the Hollywood creative community, to this deal. In fact, more than 1,000 Hollywood actors and screenwriters have, written this letter of opposition, really pointing out the harm that it will do. The goal, according to these folks, is to get state attorneys general to stand up and oppose this deal. Does that have any legs to it?
Absolutely. The states, as I said, can enforce the same antitrust laws as the Department of Justice. And they've been talking for several years now about stepping in. If the new Trump administration was lax on antitrust enforcement, they would step in and pick up the mantle and run with it. And we're seeing that they've done that. They have a lawsuit right now pending against the Nexstar Tegna deal, which was also cleared already by the FCC and the Department of Justice. And if they get enough pressure, if there's enough consumer concern about the Paramount deal, I could see the states bringing a lawsuit, and they have a shot.
30 seconds, Jen. There was a story recently, United and American Airlines getting together. No way.
I think no way. Textbook anti-competitive. Of course, I said that about Sprint and T-Mobile, and that deal got done. I think that it's just posturing. I don't really see that deal coming together. I think even if there's lobbying to the Trump administration, I don't know how the Department of Transportation or the Department of Justice clears that deal without massive divestitures, and I don't even know if that's feasible.
I mean, JetBlue and Spirit weren't allowed to get together,
Yes,
and I know that was
exactly.
under a different administration. If you put together American and United, that becomes the biggest airline in the U.S.
By a lot.
Yeah, just extraordinary. So there's a lot of deal flow out there, and so for the M&A bankers that were expecting this administration to be supportive, that was a pretty good assumption.
You know who's at the top of the league table? Goldman Sachs.
Oh, of course.
Same as last year.
Exactly,
Of course.
Exactly. All right,
Not
Jen,
really
thank you
much.
so much. Jen looks at the legal league table.
There you go.
Exactly.
All right, more on that later on.
All right, Jen Reese, Senior Litigation Analyst with Bloomberg Intelligence. Appreciate getting a few minutes of her time. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest and Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Balance of Power with Joe Matthew. Boy, are they going to have it jammed. I just said rip up the script, Joe, and just bring us
Pretty
the
much.
latest.
The gains in equities are just piling on right now. The S&P 500 now up 4.6% so far this week. It's third straight week of gains of at least 3% on a weekly basis.
Just extraordinary. We're going to have more coming up for you. This is Bloomberg.
This is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. Iran says as long as a ceasefire holds, the Strait of Hormuz will be open to commercial shipping. The news sent oil prices lower and stocks higher. CBS's Natalie Brand at the White House.
The president says the U.S. military blockade on Iranian ports in the Strait of Hormuz is not changing for now, will remain in effect until a deal is 100% reached. That's what he said in his initial post, applauding this news by Iran to open the strait to commercial ships.
And President Trump also indicated on social media the U.S. would help Iran remove undersea mines in the strait. It all comes as gas prices do drop a bit. AAA says the average price for a gallon of regular is now $4.08. A week ago, it was $4.15. CBS's Lana Zach is in Iowa City, Iowa.
There are a lot of people that I've spoken with that feel their patience has really run thin on this. And part of the problem is that they feel like this entanglement with Iran is something that hasn't been clearly explained to them as to why the United States needs to be involved.
There's news about the top-selling vehicle in the U.S. as we hear from reporter Jeff Gilbert of affiliate WWJ Detroit.
Ford is now recalling about 1.4 million 2015 through 17 F-150 pickups after driver reports of very sudden deceleration. The issue has been traced to an electrical connection that can wear down over time. Ford has had 444 warranty claims, and this has been connected to one crash and 2 injuries.
A Republican member of the House of Representatives is raising suspicions about a Democratic senator without revealing many details. Florida's Anna Paulina Luna told CBS News she wants an investigation into Ruben Gallego of New Mexico. CBS's Nicole Killian.
Congresswoman Luna says she has been in touch with Leader Thune's office. He told us the matter has been referred to the Senate Ethics Committee, but a spokesperson for Senator Gallego says he has not been notified or contacted by the panel.
And Gallego denies any kind of wrongdoing. CBS's Michael Wallace tells us about the woman President Trump has picked to lead the Centers for Disease Control.
Dr. Erica Schwartz is a Rear Admiral currently serving as the Coast Guard's Director of Health. She was a Deputy Surgeon General during Trump's first term. Schwartz has praised vaccines as a cornerstone of prevention. Her nomination is a sign the Trump administration is turning away from Health Secretary Robert F. Kennedy's vaccine skepticism ahead of the midterm elections. If the Senate confirms her, Schwartz would be the CDC's fourth leader in just over a year.
And checking Wall Street, right now the Dow Jones Industrial Average up more than 1,000 points. This is CBS News. A piece of Titanic history is up for sale.
Titanic was called the Ship of Dreams. The life vest with 4 cork-filled pockets worn by Laura Mabel Francatelli, a first-class passenger on the Titanic, is being auctioned off in England. The 22-year-old survived after she and 11 others were rescued on a lifeboat that had the capacity to hold 40. The life jacket is still stained from that fateful April night in 1912. The vest had stayed with Francatelli's family for almost 100 years before it was acquired by a private collector. The opening bid will be $200,000. Auction watchers expect it'll sell for up to $500,000. Deborah Rodriguez, CBS News.
Air New Zealand plans to add triple-tier bunk beds for economy travelers on long flights beginning in November. Those pods will be on the Auckland to New York route. That's one of the world's longest commercial flights. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It's the day Wall Street was waiting for. Welcome to the Friday edition as markets rally on hopes for an end to the war with Iran. Bloomberg just got off the phone with President Trump a couple of minutes ago. He said Iran has agreed to suspend its nuclear program indefinitely and will not receive any frozen funds from the U.S. It's unclear if this is definitive, but oil prices are sharply lower. Stocks are moving higher. We're going to talk it out with Adam Ferrer in just a moment from Bloomberg Economics. Cliff Young from Ipsos will join with fresh polling data as the president continues his West Coast swing to promote tax cuts. And we'll have analysis this hour from our political panel as the news breaks before our eyes. Let's get to Wall Street right now and start with the markets. Charlie Pellet has his read from World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Best level of the day. That headline you just mentioned certainly bears repeating. President Trump says Iran has agreed to suspend its nuclear program indefinitely and won't be getting any frozen funds from the United States. All of this sending the Dow, the S&P, NASDAQ higher. Indeed, best level of the day on the S&P did see the Dow up by 1,100 points just a moment ago. Right now, the Dow is up 1,085, higher by 2.2%. S&P up 96 now, again, best level, up by 1.4%. NASDAQ up 384, up 1.6%. And the NASDAQ 100 index up by 1.3%. Bottom line here, looking at records for the S&P, NASDAQ, and the NASDAQ 100 index. All of this with the VIX above 17, just above 17 right now. The 10-year, 4.23%. The 2-year, year, 3.68%. Gold is up $78 the ounce to $48.67, up by 1.6%. Crude, the big story. This time yesterday, we were talking about $90 plus oil. Right now, West Texas Intermediate crude, $83.16 a barrel. WTI plunging 12.2%. Barrel of Brent at 89 even. Brent crude down by 10.4%. Amos Hochstein is managing partner at TCW Global and a former White House senior advisor under President Biden. And on surveillance this morning, he told us President Trump does want to see continued stock market gains, all a part of his Iran strategy.
I actually think as the President of the United States, he's managing a crisis. And if the markets are down, his window is narrower and his capability, his capacities and capability is narrower. So, and the Iranians get leverage. So he's doing everything he can to keep the markets up. And that's why for 4 weeks straight, he has said, we're probably done in the next few days.
And you can hear more of the conversation with Amos Hochstein on the Surveillance podcast. You can download it wherever you get your podcasts. We've got Netflix shares plunging on a day when the rest of the market is surging. Netflix after earnings down now by 9%. Again, West Texas Intermediate crude, $82.94 a barrel, down 12.4%. Oil majors selling off as well. Case in point, ExxonMobil down 5.2%. Chevron down 4.1%. ConocoPhillips down by 6.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And that, Joe Matthew, lots going on, is a Bloomberg Business Flash.
That was quite a report. Charlie Pellet, thank you so much. We're going to stay close to Charlie today because this is one of those days that we will likely remember in the markets, and he'll be back in about 15 minutes, even less, with another update here. We're at our highs of the session. Did you hear everything Charlie just said? This is wild. S&P 7,000 seemed like a distant memory just a couple of days ago. We're at 71.39. VIX is 17. Even Bitcoin's moving higher with $82 a barrel oil. We were at 92 yesterday on hopes that something like this might develop. We were, of course, above $100 last week. Thanks for being with us on the Friday edition. You picked a good one to join us here on Bloomberg Radio. We're streaming live on YouTube right now. Search Bloomberg Business News Live. Keep us on the satellite radio at channel 121 or, of course, on the Bloomberg Business app. This is the moment the market has been waiting for. And I could sit here and just read the Truth Social posts. There have been, I just counted 13 of them since 8:30 this morning. Actually, 8:12 was when the president started posting about Tucker Carlson and his IQ. The topic changed pretty quickly. By 9:06 a.m., Iran has just announced the Strait of Iran, as he called it, is fully open and ready for full passage. Thank you. That's when things started to move. Then he moved on to the dust, as he likes to call it. The USA will get all nuclear dust created by our great B-2 bombers. I could keep going on here. It's been a bit scattered. But the fact of the matter is we just got him on the phone. Bloomberg News just spoke with Donald Trump right before the beginning of the show. And so I'm going to stick to that script right now because it's difficult to know exactly what's going on in the Middle East at the moment. He did say to Bloomberg News, and this is why we're at new highs, that Iran has agreed to suspend its nuclear program indefinitely and will not receive any frozen funds from the United States. A deal to end the war is mostly complete, he said. Talks over a lasting agreement will probably be held this weekend. Probably. We had heard reporting of a potential meeting on Sunday in Islamabad. And he said he's not decided who would lead a U.S. delegation for talks with Iranian officials to sign an agreement. Strange. I thought that was already assigned to J.D. Vance. I don't know. He says, I may. When he was asked if he'd go to Pakistan, yeah, I may. That would be a moment, too. So where are we in sports? Because we're waiting to hear from Iran, not just the president, a day after a ceasefire was declared between Israel and Lebanon. This is important stuff. The first call we made was to Adam Ferrer, senior geoeconomics analyst at Bloomberg Economics. Imagine trying to follow this and write a story. It's dated by the time you publish it. That's your world today when it comes to analysis. Adam, just give me your first read here on whether you're believing what you're hearing, if this feels authentic.
So I think the first thing is that it's clear the president feels that the ball has moved forward, that the conversation has advanced to a point where he can get out in front of it.
Yeah.
And certainly it's not new that the president has sought to get out in front of deals.
That's
right. And so on one hand, by the minute we're getting a little more clarity, but we're also, getting new questions as well, right? In what you just went through, we had real certainty on what Iran has and has not agreed to, but then a caveat that we don't even know when negotiations are coming and what the final deal will look like and who will even lead those negotiations and whether the president will go to finalize the negotiations himself, which obviously another thing the president likes to do is get in the room and kind of push agreements through himself.
And he wants to own it and take a victory lap as well, so might cross an ocean to do that.
That's right. But at the same time, again, I think we have to take a breath and think about what he has said and what questions remain, right? The president was most clear about this idea of Iran's highly enriched uranium, that 400 kilograms whose disposition remains unknown, but he insists that in whatever deal, the United States will be removing that and taking ownership of that. So that's consequential, given the United States' concern about Iran's ability to produce a weapon with that highly enriched uranium. The second big reveal is that Iran supposedly, according to the president, has agreed to suspend uranium enrichment indefinitely. Now that comes as a real surprise.
Huge.
Not only because Iran historically has made that a key red line for their negotiations and was obviously a key outcome of JCPOA was that they maintained an ability to enrich, but more importantly, in just the negotiations that we saw in Pakistan recently, supposedly the United States offered just a 20-year stop on those, not indefinite. So it's interesting that Iran would have agreed to something that was actually worse than the United States' starting position.
Although indefinite is not the same as permanent, right? Is this a way for Iran to wiggle out of something?
Potentially. Yeah. But again, we also haven't heard from Iran. But in the small bits that we have heard from Iran has already started to poke holes in parts of what the president has said. So the president said the Strait of Hormuz is open, but at the same time that the blockade will remain in effect. And Iran has clarified that from their perspective, if the blockade is in effect, the ceasefire is violated and the strait is not open. So where do we stand at this moment? By our math, that means the strait is closed, and therefore oil's still restricted. We're still missing that 20%. Right. And again, taking that breath and step back, we were just talking before. The reality is that even if this really is all pointing to a conclusion in the coming days or week, the recovery of the oil market, the recovery of the region is not a question of days. It's maybe weeks, but more likely months and to the better part of a year or more, depending on what part of the market you're talking about. Yes. And we heard that from the Saudi finance minister yesterday here in D.C., cautioning everyone to not get ahead of themselves on the recovery.
So if that's the smart analysis, then you start wondering, well, what in the world? Brent's below 90, WTI is below $83. But that's a 13% drop for West Texas and a 10% drop for Brent. Everybody's trying to call the end of this thing and realize this could be volatile. The president last night, though, in Las Vegas, where, he was taking a victory lap on tax cuts, did get into this. And he said, we were lucky that oil didn't go even higher. Here's how he put it.
I don't think so. I think we're going to be good. We always find a way. You got to find a way. But, sir, don't do it, sir. $300 a barrel. It's going to be a wild thing. It's going to be horrible. The depression is going to happen. Well, not going to happen because we just hit a brand new all-time high.
He's referring to the S&P 500, not oil, at an all-time high. I don't know who is forecasting $300 a barrel, but is the idea of $150, if the market wakes up to the fact that it could be months or years before this is rationalized, still be plausible?
So I think our estimates right now from Bloomberg's side is that it would take a re-escalation in the conflict to see prices go that high, but that's not off the table, right? I mean, this remains a fragile situation.
We still have 10,000 troops en route.
That's right, and the president has made clear he has options to re-engage, and we see stories that the United States is still planning for what comes next, whether it be attacking energy infrastructure or other targets. And Iran has a lot of tools they can still use, and that could include leveraging their forces, their allies, the Houthis in Yemen, and threatening the flow of oil that has become so important in the Red Sea. But today's message certainly is one of optimism, but it does seem that the president is way in front, and as we heard from Amos Hochstein earlier, potentially trying to increase his leverage in this final stage of the talks by elevating the market, lowering the price of oil, and decreasing pressure on himself at this moment.
Fascinating. Trump just got off the phone with Axios now. Is he doing anything but taking calls from journalists? I mean, why have a news conference when you just get on the phone with everybody? This is fantastic. Telling Axios Iran meeting is likely over the weekend. Yeah, Justin, if we can just have him call in and get rid of the middleman, that would help here. Sunday, Islamabad then is back in play? Or could we do this with a phone call?
It certainly seems like they will have to get in the room to hammer this out, considering the space that seems to exist with the Iranians.
Yeah.
But time will tell, right? The president seems very focused on ending this. And I think that is something that maybe markets are most attached to, is that whether or not the details are there, the president's intention is there. And that may mean that he is flexible and willing to find a way to land a deal. You know, one point could be, as you said, you know, the president said very explicitly, the United States will not be giving frozen funds to Iran.
That's right.
But the United States only has a very small portion of Iranian frozen funds, right? There's a large, better part of $100 billion in other places.
Yeah.
And, you know, if it doesn't come from the U.S., maybe that's okay. Maybe the semantics matter here.
This will change by the time you're back to your desk. Let's keep talking about it. Adam Fair is the best at this. Bloomberg Economics, our senior geoeconomics analyst. And big hat tip to Kate Sullivan, our White House reporter, who got the boss on the phone. Cliff Young is on the way in next from Ipsos on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks surging. In fact, right now, the S&P 500 index just about the best level of the day, on track for its best month since 2020, on hope for an end to the war. On the week, S&P 500 index looking at a gain of 4.7%. That would be the third weekly gain in a row, and the third weekly gain of more than 3.4%. Here's where we stand now. The S&P 500 index up 96. That is a gain of 1.4%. That is a record. Dow Industrials up 1,071, up 2.2%. NASDAQ also at a record up 383, up by 1.6%. The NASDAQ 100 index, record there as well, up 1.3%. The 10-year, 4.22%, but the 2-year, 3.67%. The VIX just above 17. Spot gold at 48.71 the ounce, up 1.7%. And West Texas Intermediate crude plunging 12.4%, 82.91 a barrel on WTI. Brent 88.68. Barrel of Brent is down by 10.8%. We're keeping an eye on Intel shares up 1.8% today at 69.71. Intel trading at their highest intraday level since 2000 as optimism continues to grow that the chipmaker's ambitious turnaround plan is bearing fruit. And just getting word that Air Canada is going to be suspending daily flights to John F. Kennedy International Airport in New York, citing soaring jet fuel costs. It will continue to fly to both LaGuardia and Newark. Again, recapping, S&P up 96, up 1.4%. The VIX at 17. 10-year, 4.22%. Energy, the big story. West Texas Intermediate crude, 82.95 a barrel, down by 12.4%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie's working for the money today. I mean, you got a market like this, that actually is kind of fun to tell the story on the air. We'll have more with Charlie in about 20 minutes' time as we keep tabs on the markets here. But this is a powerful move. Always happens to coincide right around that lunchtime hour when the news breaks, the markets respond. That's why we have balance of power here on Bloomberg Radio and streaming live on YouTube. We're going to talk to Cliff Young in just a moment, so dial us up. Also, we're going to connect with Kate Sullivan. If she's calling the president, we're calling Kate. She's following him on the West Coast. He's out in Arizona today following the speech in Las Vegas last night. If you're just joining us, Kate Sullivan, a Bloomberg White House reporter, got Donald Trump on the phone earlier today, and it's a big reason why the markets have reached new highs since this rally started. It told us that Iran has agreed to suspend its nuclear program and will not get frozen funds from the U.S. Blammo, here we go. And, of course, that follows the headline this morning that Iran, he says, has reopened the Strait of Hormuz. And it is pretty good timing, I guess, for a president who's trying to make the case about lower prices and the benefits of tax cuts, which are being obscured by $4 or maybe $5 a gallon gas, depending on where you live. You wouldn't have known that that was an issue last evening when he spoke to the crowd in Las Vegas. It was all about no tax on tips, and the president came with a message. Listen.
Thanks to our tax cuts this week, thousands of Nevada waiters, waitresses, casino dealers, bartenders, bellmen, barbers, caddies. So I love those caddies. They're very good if you have the right caddy. And valets receive the biggest tax refunds of their entire lives, and you see it. And I just want to say you're welcome. You're welcome.
Just came here to say you're welcome, and I guess he'll do that again tonight in Arizona. A couple of important swing states he's talking to about the most important issue, yes, the economy. Cliff Young's been running numbers on this and public opinion surrounding the war, rolling right through this whole experience, and it's great to have him back. And I'll tell you what, Cliff, first of all, happy Friday. Good to see you. The headline on your polling deck before these developments today kind of still applies. Trump in a precarious holding pattern. So we don't know what's going to happen in the next couple of days. We don't know what Iran is actually thinking, and we don't know where gas prices and oil prices are going. This is a precarious moment indeed.
Well, it is indeed, and it was supposed to be a lazy Friday.
How about that?
And now it's not a lazy Friday. But the primary point is, when you look across all the polling data, Joe, I think the operative word is stability over the last month.
Yep.
Obviously, Trump took a hit on his approval ratings. He lost about 3 points. Support for the war itself is stuck at a plurality, about 35%. Americans don't like it. They don't like its potential impact on the economy. They don't like increases in gas prices. So they're surly. But the numbers haven't changed over the last month. And one of the primary points we wanted to double down on is, while there was an impact of the war, especially when it comes to gas prices, public opinion has kind of baked it in. And we should expect, unless things change radically, it to sort of hover around where it is today.
Interesting. There is damage done. The president likes to talk about how prices will fall precipitously as soon as the war is over. Do polling numbers bounce back in the same way? If he can get gasoline back to where it was, is he good for the midterms?
Yeah, well, polls do go up and down, but for presidents, they tend to go in the long term down, right? And I think we have to put it in proper perspective. Gas prices do have a negative impact on approval ratings. What we know is a 35% increase in gas prices like today have historically had about a 3-point impact on approval ratings.
Is that right? You can measure it that carefully?
Exactly, yeah. Looking at the history of over the last, let's say, 70 years or so of polling, Donald Trump is right at the average. We also know that when gas prices go down, people are more optimistic and approval ratings go back up, but never to the point or the level of status quo ante. Usually they get at about 50%, 60% or so. So what goes down doesn't always go completely up. And so, once again, the damage has been done from a political perspective in our mind.
Iran has had a negative impact on finances, which you presented to voters. Overall, this is more than half. 54% agreed with that statement. Interestingly, Democrats more than Republicans. Is that what drives a partisan angle on finances? Everyone's paying the same prices.
True. However, Republicans are also taking in consideration the security threat, the national security threat, the fact that Iran could have nuclear weapons, and the reason we were intervening was to deal with that issue. They're willing to take that into consideration and sort of couch their answers that way. But overall, whether you're Republican or Democrat, you do feel the pinch at the pump. You are worried about your finances. Indeed, the number one issue today for Americans is affordability, and obviously high gas prices do not help.
Yeah, wow. What'd you make of that line we started with? You're welcome. How would that test with a focus group of voters?
Yeah, people, Americans, humans in general, tend to prefer people that are gracious. In general.
But does this president get a pass? They know who's coming to town.
Yeah, there's a lot of partisanship there. A lot of this is already baked in. Ultimately, Americans still are having problems making ends meet. That will be the primary issue come November. That's an issue that Democrats have an advantage on. And all these interventions are, I would say, aligned. That is, administration's interventions and messages and initiatives are aligned, but really the Democrats are in the driver's seat when it comes to affordability.
Well, security is, of course, another big issue, certainly for this president, and we can wrap it up on this because this is not great. The impact of Iran on U.S. security. This was supposed to make the world safer, right? That is the most clear objective that the president has outlined, no nuclear weapon. 41% said it made things worse. Only 26% improve. You've got another 30% almost. Not much impact. That's not an imminent threat that we have just eliminated, according to most people.
Neither that, nor do you have consensus with public opinion about what this thing was specifically. And even that security, the ones that think it did help, there's the economic aspect, which they too are feeling the pinch at the pump. I would say at the end of the day, the specific actions in Iran didn't really have an impact on public opinion. You either love them or hate them. You either love Trump or you hate Trump. It was really gas prices that took the bite out of the administration's numbers.
Really interesting. $4.07 today. In Nevada, where he was last night, $4.95. In Arizona, where he will be later, $4.62. It's tough on the West Coast, and it's summertime, too. So we'll see where these prices go. And bring you analysis with the help of Cliff Young. It's great to see you.
Great
From
to be here.
Ipsos, have a great weekend, and thank you for bringing us fresh numbers on a regular basis here on Balance of Power. He's become a regular voice for us, and always good to spend some time with Cliff. This is good stuff to think about when we come back on Monday. Let's see where the news flow is, because it might not reflect what we're talking about today. In the meantime, though, it is go time on Wall Street. We've got a more than 1,000-point rally on the Dow as we speak. The S&P 500 up 100 points, 1.5%. NASDAQ up over 400 points, more than 1.5%. Eric Weiner is watching all this from his post up in New York. Our senior editor for America's Equities joins us live right now just to walk through what we're seeing, Eric. This is pretty remarkable. And that report from Bloomberg, Kate Sullivan, we're going to try to get her on the horn in a minute here, with the president saying that Iran has agreed to suspend its nuclear program, sent the markets to new highs. Are you getting a little bit worried about the nosebleed section here?
Well, it is a huge risk-on rally. Last I checked, there were about 400 stocks that were up, and the stocks that were moving were really like the riskiest part of the market we had, or the most beaten down. Software is heading for its best week in since 25 years or something. But we're also seeing a lot in small caps. We're seeing a lot of movement in profitless tech, which is up like 20%, which is its best week ever. So, I mean, it's all kind of following oil. It's all kind of following rates. But it is this huge sort of built up relief that maybe there is an end coming to the war in Iran.
Amazing. Obviously, you just pointed it out. Oil and interest rates appear to be the drivers here. But do you worry that the market is so obsessed with trying to catch the bottom, with buying the dip? These headlines aren't even baked yet, that we could potentially give this back if the news doesn't end up sticking for the weekend.
We could end up giving back more. The concern, and I mean, look, we talked to different kinds of traders, and the concern among the, say, bears would be that it's not just that the headlines aren't baked, it's that we're responding to one side. So Trump says something, and then, about peace or about, the Strait, and we haven't heard it from Iran. We hear about Israel and Lebanon making a deal, but we don't hear from Hezbollah. So that if Iran sort of counters this and says we're not ready to do this, or tries to drag it on, or does anything that's different, people are going to peel off some of that. If Hezbollah decides to violate the terms of a truce that they weren't involved in because it's between the governments of Israel and Lebanon, well, then things could fall apart too. So there seems to be what I keep hearing from the people who are kind of skeptical. That would be the best way to put them as skeptics, is that we're responding to the upside. We are not taking into account the risk, and that leads to this big move up. And particularly in the sectors that we're seeing it move, and it does not take into account the idea that some of this may not come to fruition. A lot of this may not come to fruition, and that's going to eventually play out in prices too.
Boy, this is quite a moment. Eric, come back in our second hour. We'll see if these gains are holding up. Eric Weiner, live from New York. Thank you for the clutch analysis here. This market is absolutely taken off, thanks in part to $83 a barrel oil. That's down 12% for West Texas. And interest rates, 10-year right now at 4.22, the 2-year at 3.68. Now, I've been dropping Kate Sullivan's name all over the place since we came on the air at noon for good reason. She's partly why this rally is happening. This is the reporter who you see in here on a regular basis, White House reporter at Bloomberg, who got President Trump on the phone this morning and generated these headlines that are moving markets to new highs. Trump says Iran to suspend nuclear program won't get funds, and she's with us now, straight off the byline to your radio. I love this, by the way, Kate. We never do phoners anymore on the radio, and we've got Kate Sullivan on the line from Arizona. I presume, unless you're still in Nevada, Kate, you can tell me. This phone call was remarkable. How did the president sound, and how long did you have him on the line?
Joe, it's great to be with you. We're still in Vegas. I'll be flying on Air Force One with the president in just a few hours to Arizona for this Turning Point event. I'm in the pool with him today. So I spoke to him for a few minutes on the phone this morning, and it was a very revealing phone call. He made a lot of news. I asked specifically, how long did Iran agree to halt its nuclear program? Because, as you know, Joe, there had been reports that the U.S. might have been offering a temporary, 20-year suspension that Iranians were countering with maybe a 5-year suspension. We were really wondering whether this would be something that would be temporary or indefinite. And he was very clear. He said, no, unlimited. And then I followed up saying, it's completely halting. It's completely halting. And he said, no years, unlimited, when I specifically mentioned that 20-year suspension. He also talked about, there have also been reports that perhaps in exchange for this suspension of the nuclear program, that the U.S. would be releasing perhaps billions of dollars in frozen funds. Axios had a report saying that perhaps $20 billion in frozen funds would be released. The president, again, was very stern on this, was very to the point. He said, no. And then I said, are you going to release any funds at all? He said, no. So he's very clear on that. So we spoke for a few minutes. He said that there were some other things, Joe, I just want to run through. That he said that most of the points are finalized. I asked if a deal had been finalized with Iran. He said most of the main points have been finalized. He said that it'll go pretty quickly. Now, we'll have to see if that actually happens, but this is how the president is thinking about it this morning. And he also said, I asked if there would still be in-person talks this weekend. He said probably. And I thought this was very interesting, Joe. He said that he had not decided whether he would be sending Vice President J.D. Vance to lead those talks. Of course, Vance led the last round of talks that did not produce a deal. I thought it was really interesting. The president said, I have not made that determination yet. He said, we might send the vice president with Jared Kushner and Steve Witkoff, who have also been key negotiators here. And he also praised the vice president. He said, JD's great. And he said, we'll have a team. But I thought it was very interesting. He said he had not decided whether the vice president would be taking the lead on those talks.
Wow, that was an incredible summary of your call, Kate. Thank you for walking us through all of that. I hope everyone had a chance to follow along. Kate, what is it like to get on the cell phone with the president? You identified yourself as a reporter from Bloomberg. He's taken so many of these calls. Does he care who it is? Did you just start talking? How did it actually transpire?
That's a great question, Joe. So I called him and I identified myself. I said, this is Kate Sullivan with Bloomberg. I have a few questions for you on Iran. Do you have a moment? And he said, okay, go quickly. So he clearly, the president has a lot on his plate, and he said, go quickly. And I was expecting, to be honest, a shorter phone call. I know sometimes you just have sort of one or two questions that you get in, but I was able to get several questions in. He did want to talk about this. He is answering. There are other reporters who have been calling him. He clearly, is feeling very optimistic, it seems, about the potential for this Iran deal that could come together. Again, we do not have. He did not say that it is finalized. He said the main points have been finalized, but there are still outstanding issues here. But he was very willing to speak on the phone for a few minutes and answer several questions. And clearly, I think that also shows just how he's feeling in this moment, that he wants to talk to reporters about this.
Right, yeah. How many times did it ring? And were you on a speakerphone?
I did put him on speakerphone, and it rang. I want to say, I will check this for you, Joe, but I want to say it rang about 3 times before he picked up.
All right. I mean, imagine if you got the voicemail. Would you have left him a message?
Oh, I think I would have tried again. I think I just would have tried again. But I did, it's just, there were 3 rings, and then he picked up. It is remarkable. I don't know of any other president who I don't believe any other president has been taking as many phone calls as President Trump has with reporters.
It's unheard of. Kate, you're at the tip of the spear. This is the way it's done now. This guy doesn't even hold news conferences in the East Room like a president normally would, because Kate Sullivan is calling, and it's easier to get the news out that way, right?
Well, it's also interesting because I'm in the pool with him today, so I'm with the traveling. There's a small group of reporters traveling with him. I will most likely have the opportunity to ask the president questions on Air Force One later today. He regularly does these gaggles with reporters, but I think there's also, we're in such a fast-moving moment where he was posting a lot about Iran, and I think I just decided that instead of waiting several hours for this potential, for him to take questions on Air Force One in several hours, it was important to get him right now. So there definitely is, a sense of urgency, and it is interesting, just the way that things move so quickly nowadays, and that reporters, you have to really be on it very quickly instead of, waiting several hours. Things could have changed by then.
Well, I'm just blown away by it. This is amazing. Hey, when he calls on you in the back of the jet later, make sure you tell him it was you who called. Tell him you're following up on your phone call. We got to connect the dots on this, Kate, all right?
I will. Thanks, Joe.
I'm so glad you got on the phone. You're doing a great job. Kate Sullivan with us live from Las Vegas. Then they'll go to Arizona. That's where the speech is going to be later on. Was that great? Fascinating day in politics. The markets are loving this. Now, it was that story, it was that phone call from Kate Sullivan that generated the story that sent the markets to new highs. And I promise we're going to stay in touch with Charlie. Before we get to our political panel, let's do that right now. It is rally time on Wall Street, and Charlie Pellet has the numbers live from New York. Charlie?
Hi, thank you very much, Joe Matthew. Best level of the day right now. I'm going to begin with the weekly numbers because on the week, I'm looking at an advance for the S&P 500 index of 4.8% for the week. If it sticks, that will be the third weekly gain of more than 3%. Right now, again, best level of the day with the S&P at 71.43, up 102 now, up 1.5%. The Dow is surging more than 1,100 points, 1,121 on the Dow. That is a gain of 2.3%. NASDAQ Composite Index right now up 402, up by 1.7%. Yes, records today for both the S&P and NASDAQ. I'll throw in the NASDAQ 100 index as well. All of this with the VIX above 17, the 10-year 4.23%, the 2-year 3.68%, and spot gold right now up $78 the ounce, up by about 1.6%. West Texas Intermediate crude, major story. This time yesterday we were talking about crude in the 90s. Right now, WTI $83.18 a barrel. It is plunging 12.2%, taking energy stocks with it. And Brent crude, of course, the global benchmark, down 80 at 88.95 a barrel, down 10.5%. Among some of those oil majors now, looking at Chevron, it is down 3.4%. ExxonMobil down 4.7%. ConocoPhillips down by 5.8%. So again, recapping here, S&P 500 index trading at a record, up 1.5%. All of this as oil sells off. Joe Matthew, that is a Bloomberg Business Flash.
All right, my man. Thank you. Charlie Pellet will be back at the top of the hour, 1 p.m. Eastern time, and we'll see if we have new highs yet. This is wild. The S&P 500 up over 100 points now, and as long as oil stays depressed, maybe we keep setting new highs. Maybe Kate Sullivan gets the president on the phone again. We can keep doing this all day long. And I'm delighted to have a great panel for you today to weigh in on what's happening here in real time. Bloomberg Politics contributor Jeannie Shanzano is with us, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Lester's back too, Republican strategist Lester Munson. BGR Group, the head of the international practice. It's great to see both of you here. Lester, I'm going to start with you and what your spidey senses are telling you at the moment here. Is this it? People woke up this morning and they said, I think maybe the war is over. Now the president's saying that Iran has agreed to suspend its nuclear program. Are you taking him at his word here?
Well, it certainly seems like things are progressing in a really positive direction. I don't know whether we've nailed everything down yet or not. It seems like there's still some negotiating going on, and we're almost seeing it play out in real time on all of the various social media platforms and on TV, and of course, Bloomberg reporters driving the story and perhaps even driving the negotiation. But I think it certainly looks like things are headed in the right direction. President Trump is handling the Israel-Hezbollah Lebanon situation. He's talking to Iranians. We're getting rid of the mines in the Strait of Hormuz. We've still got this blockade that he can use as necessary. And the Iranians, I think the significant thing here, Iran appreciates what he did with respect to Israel and Lebanon, but also I think they take Trump at his word when he says he's willing to continue this blockade as long as it takes. So it all seems to be trending in Trump's direction.
Maybe taking him at his word that he would use those extra 10,000 troops on the way. Jeannie, I'm waiting for somebody to pour some cold water on this. We don't actually have a deal. It has not been codified, and we really haven't heard from Iran. What do we do with all this information?
So you come to me for the cold water. Good thinking, Joe.
I did this time, Jeannie.
Let me give it to you, Joe. First of all, there are a number of saboteurs in this equation. Let's start with Israel. Let's start with Benjamin Netanyahu's statement. He says, just as one example, he is not leaving southern Lebanon. So that is, of course, a sticking point. Hezbollah says there is not going to be an agreement without them leaving. So that's one example. We've got Hamas. We've got the Houthis. We've also got the IRGC, many members of whom are interested in keeping this war going on. Why? Iran is in dire economic straits. So why end the war and have a population uprise the way they were prior to the war? So it's just so many moving parts here. And those are examples of saboteurs. And of course, just to come back home, we have a president who almost since day one of this war, not to mention the war in Ukraine, has been telling us this thing is over. And it's not quite been over as of yet. And so you want to talk about opening the strait? Let's look at Maersk's statement. They said, we're not moving anything until we have guaranteed safety for our crews, our vessels, etc. So we've got a little ways to go here before we declare this thing open. And we should also mention, and Lester mentioned this is all being done online. We are hearing Donald Trump's interpretation of reports from Pakistan, from the Pakistan mediators in Tehran. We're hearing less of what Iran is saying. And when you listen to what they're saying, it's not quite as optimistic that this thing is over as the president is saying on Truth Social. There's your cold water, Joe. Thank you very much.
Well, it's, that's kind of lukewarm. I'll be really honest with you, because I think you're still allowing for the potential for some progress here. The president took a call from Axios as well. I mean, it's just, I can't even imagine. He's in the hotel in Las Vegas. Iran meeting likely over the weekend. Lester, is that when we are finally encouraged, when we see people getting on airplanes, whether it's J.D. Vance or someone else, when the delegation gets in the air to sit down at the table again, what will that tell you?
Well, Joe, I'll agree with Jeannie on this part. I think this is going to be a movable feast for a little bit longer, and probably past this weekend. There's a lot of details to work out. She's right. There's a lot of actors that can kind of stir the soup here and make it a little hotter than people want it to be. So I'd be hesitant to say we're going to see the end of it in the next couple of days, but it seems to me like structurally the hydraulics of this are pretty good for the USA right now. The Iranians are making some moves. They appear to be agreeing to some of these fundamental issues over the enriched uranium. The future of the Iranian nuclear program is kind of the big question out there. Is it going to be a 5-year moratorium, a 20-year moratorium, or an infinite moratorium? So there's a lot to talk about, and that could take weeks. On the Strait of Hormuz, I suspect things will move a little faster because that seems to be very important to both sides.
Well, that's right. You seem to be suggesting that some things could be lost in translation here, Jeannie. When you hear the president telling Kate that it's indefinite, that suspending the nuclear program indefinitely, that's a really important word. And I just wonder how much work it's doing in this case. How about you?
If that was true, that would be an enormous breakthrough. And it may be true. Again, we just don't have verification. And go, Kate, what a call. And Joe, I think the president should call live on Balance of Power with you and Haley, because of course, this is all you talk about. So, but if it was true, but I'm hesitant to say it is true, because let's not forget, this is the same regime, maybe a little bit more hard line, So we are to believe that they found leverage in blockading, or not blockading, closing the strait. And all of a sudden, they've agreed to indefinitely give up their nuclear program. That would be a huge, Donald Trump should be celebrating and win the Nobel Peace Prize. But is that really the case? So that's one thing. And the other thing we have to remember is in all of this, what did Iran find? They found that if they want leverage, close that strait. And so they did it before, they can do it again. And this is the problem here. So there's a lot of, as Lester said, a movable feast, a lot of parts. If that is true, that's an amazing concession. But I find it hard to believe that after 50 years that Iran has suddenly decided that things are so bad, they're going to give up that program. Let's not forget, all they have to do is look at Ukraine. The situation Ukraine is in is because they agreed to give up their nuclear program. Why in the world would anybody give up their nuclear program now? Between that and the strait, this is the leverage they have. We wouldn't be dealing with them without that. So I'm hoping the president is right on that, but we need to see some verification.
Really interesting parallel, Jeannie. All this talk of a movable feast, I'm getting ready for Tom Keene to walk in here in a minute, but I'm drawn back to Truth Social, Lester. This was one of, what did I count, 13 posts since 8:30 in the morning. This one hit just after 10:30 a.m. Iran has agreed to never close the Strait of Hormuz again. It will no longer be used as a weapon against the world, exclamation point. What's he talking about, Lester?
This is, as Jeannie says, this is fantastic news. Let's write it down. Let's turn it into a written agreement signed by both sides. Let's have the president submit it to the Senate as a treaty. I think it would get 100 votes. And then we're cooking with gas here. Everybody wins. We've got a peace deal with Iran. International law is restored to its wonderful place in our lives. And the stock market can go up even further. That would be great.
There you go. Oh, wow. See, you see how Lester just did that? And then you're back to Dow 50,000. We've got 10,000 troops still on the way. And I'm wondering, Lester, if we're going to need them no matter what happens, even if this ends now, and I realize the leverage that they could apply here in any number of ways, but if this ends now, we're still going to need a security presence, correct? And that isn't just going to be in the Strait. This is potentially going to be an unstable region for some time. Should those 10,000 Marines and soldiers prepare to stay a while?
Well, I do think, Joe, I don't know about those specific personnel, about what their future holds. It's probably going to be a temporary measure, but there is a need for the U.S. to reassure allies in the region that our word remains steadfast. We're committed to this. We're going to see this through to the end. We already have any number of military bases and tens of thousands of U.S. troops in the region already, even without these new folks coming in. So the U.S. has made a commitment to the region. There's a little bit of wiggle room here on the U.S. relationship with European countries in particular. There's going to be some questions about NATO in the next few days. I think the Trump administration can do a lot here to reassure friends and allies that we remain steadfast. You can rely on us. We get things done. And when the president says something, he means it, and he's going to stick to it.
30 seconds, Jeannie. Does that worry you, the idea of a longer presence in the region? There are 50,000 there, 10,000 on the way. What kind of force protection would that require?
Enormous. And let's not forget the beneficiary in all of this is Pakistan's main backer, which is China and Saudi Arabia. But let's look at China. They're the biggest beneficiaries here overall, not the United States.
They're back in our second hour, I'm glad to say. Jeannie Shanzano and Lester Munson, thank you both for a great conversation. This is the story of the day, and we're going to keep digging with our great panel in our second hour. Kaylee Lyons will join us. We're going to talk as well with Natasha Hall, an expert on the region, all ahead right here on Bloomberg.
Washington, D.C. This is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump tells Bloomberg that Iran has agreed to suspend its nuclear program. Welcome to the Friday edition as markets rally to new highs on the Bloomberg headline with new hopes that the war with Iran could be ending. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, crude oil plummeting here, and we don't even have a deal yet.
No, although the president did tell Axios he thinks a deal could happen in the next few days, potentially more talks in Pakistan this weekend to finalize things, as he told our colleague Kate Sullivan that everything is pretty much hammered out at this point, including, of course, the Strait of Hormuz, which, according to President Trump, Iran has agreed to never close again. Iran, of course, maintaining today that the strait transiting it still would need coordination with its armed forces, according to state media, also saying that if the blockade is to continue that the U.S. Navy has in place, as President Trump suggested, then the strait would close again. So we still do have some remaining questions at this hour.
We have a lot of questions, actually, and thankfully, Kate Sullivan got the president on the phone to answer some of them. We're going to actually spend some time with Natasha Hall from Chatham House, an expert on the region who might give us a little peek behind the curtain when it comes to negotiations. I found it fascinating that he told Kate Sullivan that he was not sure J.D. Vance would even go to this next round of talks, presuming it takes place this weekend. I thought that was his assignment.
Yeah, at least it was the first go around, maybe not so on the second. We also need to consider as well what this ultimately means for the restart of energy production in this region, knowing how many countries have had to shut in production because of inadequate storage capacity and infrastructure that has faced some damage. It's one thing for the strait to be open, which is not necessarily guaranteed at this point. It's another for things to get back to normal. And we've been repeatedly told on this program and across the network here on Bloomberg TV and radio that that is a process that could take some time.
So when you see crude oil now in the low 80s, at least for West Texas, it makes you wonder if there could be a lot more volatility ahead.
Yeah, well, a lot of volatility certainly is taking place today, though it's in the positive direction if you're long equities. Let's get a check on all of the activity now as we turn to Charlie Pellet up in New York. Charlie, happy Friday.
Thank you very much. And here's what's going on. Happy Friday indeed for the bulls, on track for a winning week. Looking at a week in which the S&P 500 index right now is up by 4.5%. That would be the third week of gains, 3% plus for the S&P. Today's numbers, here's where we stand. We got the S&P at 71.44, rallying 102 right now, up 1.5%. And the Dow Jones Industrial Average, 1,113 points higher, up by 2.3%. NASDAQ at a record, as is the S&P. NASDAQ up 401 now, up 1.7%. NASDAQ 100 index also at a record, up 1.4%. All of this with the VIX just above 17. The 10-year, 4.23%. The 2-year, 3.69%. Gold up 1.6%, 48.67 the ounce, while West Texas Intermediate crude. This time yesterday, we were talking about crude above $90 a barrel and moving higher. 83.43 on WTI right now, down 11.9%. Barrel of Brent, 89.19 right now, lower by 10.3%. So on a day with a lot of optimism, just about everything higher. One notable exception after earnings, Netflix shares, they are plunging. Netflix down 9.7% right now. This is the company gave a forecast for second quarter that fell short of analysts' expectations. Again, recapping, big move to the upside for the equity market. S&P up 103 now, up 1.5%. West Texas Intermediate crude, 83.46 a barrel, down by 11.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet, thank you so much. Clearly on track for a positive end to the week on what has already been a positive week for equities. On track, in fact, right now, at least, for the S&P 500 to have its best month going back to 2020. It's just incredible, the relief we are seeing in these markets that seem to be perceiving the conflict with Iran as pretty much over, or at very least taking solace in the idea that the Strait of Hormuz is back open for business, though that isn't necessarily guaranteed at this point. But it was, of course, at 9:06 a.m. that President Trump took to Truth Social to say Iran has just announced that the Strait of Hormuz is open. Unclear if that was a typo, Joe, or a Freudian slip of some kind. Of course, he followed that up with the Strait of Hormuz is completely open and ready for business and full passage, but then said in that very same Truth Social post that the naval blockade will remain in full force. And Iranian state media is suggesting that could be an issue that could close the strait once again. So clearly nothing is final until it's well and truly final, and we're not quite there yet.
Well, no, that's also why we're going to talk to Bob McNally from Rapidan later this hour. As he says, it's all about the barrels. And we're watching crude oil tumble 12% today without a sense of when the market will rationalize itself. And the president has not detailed, to your point, exactly what the exit plan is going to be here.
Although he did give some detail to our colleague Kate Sullivan on the phone earlier today, as we've mentioned, on the nuclear program specifically, which we understand the first round of talks with Pakistan was the real point of difficulty. And he says, though Iran has yet to confirm this, that Iran has agreed to no further nuclear enrichment, not a moratorium of some period of years, indefinite.
That's kind of like permanent. So we're curious about that. And he says there's also a deal to collect the dust, as he calls it, that highly enriched uranium that is presumably missing, or I guess he says it's deep underground thanks to the B-2s. That would be in itself a huge operation to unearth and get that out of Iran. So we've got a market that is clearly extremely excited about what's happening, but also we're going to try to acknowledge the reality of the moment while we're at it.
Indeed. And of course, Bloomberg's Tyler Kendall's pretty good at acknowledging reality and the facts we know as we know them.
Let's go to the White House right now with the aforementioned Tyler Kendall on the North Lawn of the White House with the very latest that we're hearing from the administration. Tyler, take it away. Are we going to hear from the president before his speech tonight in Arizona? Has there been any messaging outside of the phone call with Kate Sullivan?
Well, Joe, at this point, we have been watching President Trump's posts on Truth Social, a flurry of posts today that have really put out some more details, but also, as you and Kaylee are discussing, a lot more questions as well about if, when, and how this potential deal will be implemented. Now, as you mentioned, this call with Bloomberg News' Kate Sullivan earlier today, saying that Iran has agreed to suspend its nuclear program indefinitely, and that in exchange, the U.S. will not be unfreezing any Iranian assets. That appears to push back on reporting earlier today from Axios that one of the potential options on the table was that the U.S. would get this stockpile of enriched material in exchange for an unfreezing of about $20 billion in Iranian assets. Now, we should say that we have not heard Iran comment on any of these potential concessions, and at least publicly leading up to today, a lot of these points were points that Iran was publicly pushing back on. So we'll have to see where the diplomacy ultimately lands and goes from here, because we're getting these posts out from President Trump. And in terms of that stockpile, any sort of developments around enrichment levels or the stockpile would be very significant, because the messaging ahead of today was President Trump saying that Iran was not going to obtain a nuclear weapon. But experts had pointed out that that wasn't necessarily a development, because at least publicly Iran has been saying that they're not trying to pursue a nuclear weapon, despite assessments by the U.S. and regional allies to the contrary. But the fact that we're trying to glean some details here about those specific enrichment levels and what would happen to the stockpile is significant. Joe and Kaylee, though, when it comes to this stockpile, earlier reporting today indicated that there was still some gap between where the U.S. and Iran do feel on this issue. We know that the U.S. wants to retain that stockpile. They want that stockpile to go to the U.S., whereas Iran has previously said that they want to dilute it inside the country. That is raising questions about whether or not perhaps a third-party country would somehow get involved here in overseeing what ultimately does happen to that material.
All right, Bloomberg's Tyler Kendall live on the North Lawn of the White House. Thank you so much, as always, for the latest reporting as we try to keep track of what exactly is happening here. And let's get some analysis on what at least we're being told is happening, and if that matches what the reality may actually be in the region, as we turn to Natasha Hall, Associate Fellow at Chatham House, who is back with us on Bloomberg TV and radio. Natasha, good to have you, as always. Given the fact that we have not yet heard from Iran confirming much of what the president has indicated in terms of how close a deal is and what all the deal is going to entail, would you join what is clearly some degree of euphoria we are seeing in financial markets today in terms of your confidence that this really may be on track to being over?
Thanks for having me. I think that this might be some short-term euphoria, because we've already seen the IEA essentially say that it would take about 2 years to get back to normal, especially for LNG markets, because we've seen about 80, oil and gas facilities damaged in the region, and there's a backlog essentially. So we'll see what happens with the markets once this euphoria dies down and once we see what's actually going to happen with these negotiations, because we've seen a lot of mixed messaging on whether the negotiations are even going to continue. We saw Iran say that it's going to open the Strait of Hormuz, and yet we also saw Trump say that he's going to continue the blockade on Iranian ports and vessels. So it's really unclear what's going to happen. We should know more and get better clarity within the next few days. But then I've said that before, and it's actually gotten even more confusing as time has gone on. But right now we're in a very fragile ceasefire, I would say. So good to see that markets are rebounding, but we'll see if that is actually maintained.
If there were a breakthrough, if there were a peace deal, Natasha, some might argue that the hard work begins with the idea of political saboteurs in Iran and throughout the region. Bring us inside that conversation. Who would you be most concerned with when it comes to maintaining a peace following this conflict?
I mean, I think that's an excellent question, because I think too often with the media, with headlines, we concentrate on the ceasefire, on the agreement being signed. But on the ground, political and military dynamics shift as those agreements are signed. And we've seen that in Gaza, and we've seen that in Lebanon, and certainly we'll see it here as well. There are a lot of details to be worked out, as your reporter mentioned, when it comes to enrichment, which again, we've been talking about for a long time. And if the Iranian regime is saying things like it's going to freeze its nuclear program or its efforts towards a weapon, that doesn't actually differentiate its points in the past. So a lot of very complex technical questions when it comes to enrichment, enriched material, and there's a lot of spoilers here, and there's a lot of ways that Iran could continue to make money through these negotiations, either through released assets, though the administration has denied that, or by applying tools to vessels as it goes out. I mean, the fact remains that Iran now knows that it has this leverage, not just over the United States, but really the global economy. So there's that, and we haven't really seen the Houthis come into play. We're still waiting to see what happens in Lebanon in the fragile first hours of this ceasefire, but a lot can go wrong.
Well, it's an important word of caution, Natasha. And as we consider the notion specifically around the Strait of Hormuz, the idea that Iran is now declaring it open today, even if there may be some caveats to that, does that not mean that at any point in the future, Iran, if it so chooses, could also decide once again to declare it closed? I just wonder if we should really be treating this as if it's some kind of return to normal, if we're ever going to be able to go back to what the pre-normal was in that regard.
I think this is the biggest geopolitical loss of this entire war. Essentially, we saw that Trump said that Iran will never, ever close the Strait of Hormuz again. But the entire reason that Iran closed the Strait of Hormuz, something it's never done in the past, was because the U.S. and Israel went to war with Iran. So now it knows that it has that leverage, and that's a real loss. I think a real geopolitical loss for the United States, for the Gulf countries, and for the rest of the world, that this now probably more extreme regime knows that it can do this.
More extreme regime. The president says exactly the opposite. Less extreme, more reasonable. Who will we be sitting across the table from if this, in fact, does resolve into another meeting this weekend? The president says it won't be J.D. Vance on our side. Who will be on Iran's side if we get back together in Islamabad?
Well, if the last talks are any kind of measure, we know that Araghchi is a very skilled negotiator. He knows the details of the nuclear program and many of these issues, so he will likely play a part. And we've seen other figures that have been involved in Iranian politics for some time. But the more we see of these figures, we see that they're much closer to the IRGC and more extreme elements of the Iranian regime. We're not really necessarily seeing reformists. But again, these are sophisticated, skilled negotiators. They know the ins and outs of the nuclear program, obviously, of the past negotiations with the U.S. administrations. And so I think what we need to be focused on is who's going to be on the U.S. side negotiating, because it's unclear to me that those that have been involved have that level of detail to be able to really hammer out some kind of real agreement that doesn't see a return to war or a freeze on the global economy.
Well, Natasha, on this idea of hammering out detail, we have seen kind of a repeated pattern with this administration. Historically, I'm talking about in the context of trade deals, where an agreement is announced in principle, that there's some kind of understanding, and we don't actually see everything finalized and codified, if you will, in terms of a formal treaty. That a lot of those details just never fully worked themselves out. And I wonder if you think that we could see something similar taking place this time around, that the president could declare, there's an agreement in principle, we have a deal, but nothing is signed, approved by Congress for some kind of a period of time, and what kind of volatility we might expect in that interim period.
Yeah, and I think that's a great point. And that was my point about the details being worked out, because the Iranians probably know how to sort of manipulate those details so that President Trump has some kind of win so that he can save face, but saving face superficially, in fact. And so, I get a little bit concerned about the original problem, which was Iran's nuclear weapons program, because I do see a lot of ways for the U.S. to want to walk away from this in order to lower gasoline prices here at home, amongst many other things, for the midterm elections. So there's a lot of political reasons for him to walk away from this, or to have some kind of superficial agreement that doesn't actually solve any problems.
The president has said that he's reopening the strait not because we need it, but he's doing it as a gift to the world. Enter the UK and France, and this was before these headlines broke, had planned to host a summit to set up their own naval force, a new sort of coalition of the willing that they're calling the Maritime Freedom of Navigation Initiative. Keir Starmer says the summit will include about 40 nations. Natasha, will that still be needed if the strait is reopened, so to speak, reopened during this period in a peace deal with the United States, or is every nation or every region going to be on their own with their own defensive force like this?
I think so. I mean, I think that even if this summit doesn't take place, this is going to, alter many countries, various contingency plans. And we saw this coming, with, I think, the increasing irrelevance of the UN and its ability to solve problems, that you would have increasing numbers of so-called coalitions of the willing, some of which would not include the United States, in order to get things done. And we've seen this with Canada's leadership talking about, moving away from the United States, having its own, economic and political and military deals with other countries. I also don't think that bodes well for the United States as a superpower in the future as well, because you'll increasingly see that the United States isn't solving problems, it's creating problems that others need to solve amongst each other. And so, with this closure of the Strait of Hormuz, most certainly we're going to be talking about alternatives to the Strait of Hormuz more significantly, in terms of pipelines, in terms of other countries creating coalitions in order to secure their own resources. So I don't think this is a sign a deal and done and we're back to normal. I think many countries are working on what their contingency plans are for the future.
She's one of the smartest voices on the region, and I'm delighted that we could get some time with Natasha Hall. Thank you so much, Natasha. From Chatham House, Associate Fellow with insights that we will carry through the hour here, and more news developing from the Middle East. We've got our eyes on Truth Social, and we've got our eyes on the markets. We'll update things coming up and assemble our political panel on this day that Wall Street is betting the war may be ending. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all advancing right now. The S&P 500 index at 7125, looking at a record up 84 points right now, higher by 1.2%. The Dow also advancing up 964 now, up by 1.9% on the Dow. NASDAQ at a record up now by 1.4%. The 10-year currently yielding 4.24%, with the VIX just above 17, the 2-year 3.69%. Gold at $48.61 the ounce, up 1.5% now, while West Texas Intermediate crude $83.88 a barrel, WTI down 11.4%, barrel of Brent $89.87 now, lower by just about 9.5%. JetBlue shares are surging today. JetBlue up 6.8%, just adding new seasonal transatlantic service from Boston to Barcelona. Air Canada, meanwhile, suspending summer flights to JFK over rising fuel costs. And the Norwegian budget airline Norse Atlantic has cut all of its flights to and from Los Angeles, citing the high cost of jet fuel. Also, just getting word that New Jersey Transit will be charging World Cup fans heading to MetLife Stadium just outside of New York $150 for a round-trip ticket. I'm Charlie Pellet. Kelly and Joe, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much indeed, running us through the market reaction to the headlines that we are getting pertaining today to the Strait of Hormuz and Iran's nuclear program. Some of those headlines being driven by a phone conversation that took place today between our colleague, Bloomberg's Kate Sullivan, and President Trump. Yes, she got him on the phone, and he says Iran has agreed to no more nuclear enrichment, not a moratorium for some period of years, indefinitely. They will not be doing this. At least that's what President Trump says. We have yet to hear from Iran on that matter, but we are hearing from Iran on a separate matter. Back to the Strait of Hormuz, Joe. Remembering that President Trump said the Strait of Hormuz is completely open and ready for business in full passage, but the naval blockade will remain in full force. Iran's foreign minister, through a spokesperson, is now saying a naval blockade is considered a violation of the ceasefire, and Iran will take action if that U.S. blockade persists.
We're just running headlines on the terminal now. Indeed, Iran, a naval blockade is considered a violation of the ceasefire, which we are technically still in until Tuesday, even though people are talking about a peace deal today. We don't have one, Kaylee, and I think Natasha Hall just described that ceasefire as very fragile. So this is important, and we're watching Wall Street pull back a bit from the highs. It's not necessarily on this headline, but an S&P that was up over 100 points is now up by 92 points. We reached new highs for the session, though, as Kaylee mentioned, because of the most important reporter in the world today. That would be Kate Sullivan, who joins us right now. We got her on the phone. We figured if she's calling the president, we'll call her. Trump says Iran to suspend nuclear program won't get funds. The headline. Kate, what mood was the president in when you got him on the phone? Was he as optimistic sounding as this market today?
So when I spoke to him for a few minutes this morning on the phone, he did definitely sound optimistic. You know, he was saying that most of the points are finalized for the deal. He said it'll go pretty quickly. He did say that there were probably going to be talks this weekend. It definitely seemed like the president, and I think, you know, we've seen the posting that he had, the post that he had on Truth Social definitely seemed very optimistic about a deal that could come very quickly. There are two big points that I wanted to highlight. I asked and I tried to drill down on whether this would be an indefinite suspension of their nuclear program, or we had seen reports that perhaps the U.S. had proposed a 20-year suspension, so a temporary suspension that would expire after 20 years, and that Iran had countered with a 5-year. There were all these questions about whether this would be a temporary or indefinite, and the president was very clear. He said, no years, unlimited. He said, I asked him a couple times whether this would be indefinite. He said, no, unlimited. And there also were reports that the president wanted to clear up about whether the U.S. would be releasing billions of dollars in frozen Iranian funds. The president was very adamant that that was not something that he was going to do. I asked him twice about this, whether he was going to release the $20 billion that had been reported on. He said no. And then I asked, are you going to release any funds at all, any of these frozen funds? And he said no. There were a lot of things that we covered in this phone conversation. One other thing I wanted to highlight was that he said he hadn't decided whether J.D. Vance would be leading these talks that he said were probably going to take place this weekend. I thought that was very interesting because Vance, of course, led the last round of in-person talks, the first round of in-person talks that did not produce a deal.
Well, so on this notion of who goes to Pakistan, Kate, it's worth pointing out the president did tell reporters yesterday as he was leaving the White House that he would be willing himself to go to Islamabad if it was for the purpose of inking a deal, if we finally got to the signing point. He didn't indicate to you, did he, that he himself might be making the trip if he really thinks a deal is this close?
He did. He did. Actually, I asked him if he would go to Islamabad to sign a deal, and he said, we may. And he hasn't, throughout this entire process, had a lot of positive things to say about Pakistan, the prime minister, the field marshal. He praised them on during our phone conversation. He said, I have great respect for the prime minister and the field marshal. He definitely left the door open for he himself to travel to Islamabad to sign any kind of deal. It wasn't my impression that he would be leading any kind of talks. I believe that would be at the lower level. He said we'd be sending a team. He mentioned Jared Kushner and Steve Witkoff, who've been key negotiators throughout this process. And he also praised Vance, but he said he hadn't decided who he was going to send. But the president did again say, after telling reporters yesterday, I asked him if there were any scheduled plans for him to actually go to Pakistan. And he said that he may go. He may go himself.
Amazing stuff. Kate Sullivan, after being on the phone with the president, now on the phone with us, live from Las Vegas, Nevada, where she, of course, is traveling with the president in the press pool. And that means Kate will be keeping us up to date on whatever else we hear from the president today as he makes his way from Nevada to Arizona for a Turning Point event later today. Kate Sullivan, we so appreciate it. Thank you for being here on Balance of Power. And I also will extend a pre-thank you to our political panel who is joining us now. Jeannie Shanzano is with us, Bloomberg Politics contributor, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, and Democratic analyst, alongside Republican strategist Lester Munson, head of the international practice at BGR Group. Thank you both for joining us. Lester, as we consider the notion of to what extent we should expect President Trump to be the face of this, ultimately, if a deal is to get signed, knowing he wanted to be the one to announce on Truth Social the progress that has been made to this point. He's picking up the phone with, it seems like, a lot of different reporters today because he's clearly enthusiastic about these developments. Would you be surprised if we see him going to Pakistan, if not this weekend, sometime soon for this?
I think he'd be happy to do it. There'd be questions about security and just the logistics, of course, and that may be a bridge too far. But this is clearly going to be a big part of President Trump's legacy, for positive or negative. So I think he's right to say, I'm willing to do whatever it takes to make this thing work, because at the end of the day, his entire presidency and maybe his life will be in part, in a significant part, judged on the success of this particular policy.
What questions are you asking right now, Jeannie? Because we have a lot of them and not too many answers. Kate Sullivan brought us directly to the source with the President of the United States, but we're not even sure, as he just told Kate, who will be representing the United States if there are talks this weekend. Is the market getting ahead of itself?
First of all, one question I'm asking is if you and Kaylee have your cell phones on, because you may be getting a call that you need to go to from the president. Yeah, that's right. Yeah, there's so many questions. Let's just take a step back and say in the last 48 hours, we've had a ceasefire agreement that is very unstable and a lot of saboteurs who could get in the way of that. And we've had the reopening of the strait. That is what is prompting we're going back to the negotiating table talk. And as you and Kaylee were just talking about, the strait reopening is precarious itself. But even if you got the ceasefire and the reopening of the strait, all that means is we are going back to the negotiating table. We don't know who will be there. I don't think the president should be there unless this thing is wrapped up with a fine bow. But let's think about where we are in those negotiations. That 10-point plan, they want withdrawal of the U.S. military from the region. They want sovereignty over the strait. They want billions of dollars in reparations. They want the ceasefire with Lebanon to stick. And they want a lifting of all sanctions. And they want to be able to renew their nuclear program in potentially 5 years. That is going to take a lot longer than a weekend. So I have questions when the president tells Kate that, they've given up their nuclear program. This thing is pretty much wrapped up and we're good to go. I think he's really, really wishful thinking on his part? I'm not sure we've seen any of that in sort of the fine print we would need it to hang our hats on it the way the market seems to be doing right now.
Well, and of course, the market reaction is one thing. How investors choose to interpret these developments, Lester. Actual businesses operating in the shipping space, these commercial vessel operators, crews, with consideration of their cargo, need to decide if they think it's worth the risk at this point to transit the Strait of Hormuz. And I wonder if the most difficult step is the one that has yet to be taken, which is actually seeing more flow of transit through the strait, or if there needs to be a lot more guaranteed in order to unlock that actually happening.
Well, I mean, just as basic a thing as are there any mines in the Strait of Hormuz? It's my understanding demining activities are ongoing there. So I think if I were running a global shipping company, that'd be my first question: is it clear of mines? And yes, of course, there's the shippers are the ones who are going to be really taking the risks here. And when we see the first commercial shipping start to go through the strait, then I think we'll have a pretty good idea if this, how real this thing is. Right now, a lot of it is perception. Is the glass half full? Is the glass half empty? I do think President Trump, with the glass half full kind of viewpoint here, does seem to have a lot more credibility than maybe 36 hours ago. The Iranians seem to be coming around to an approach that works on his end. Of course, we have to work out all the details, particularly in the nuclear file. It can be quite complex. And then keeping open the Strait of Hormuz for commercial shipping. Yes, this is going to play out for several more weeks, I think, but this is certainly a good trend.
We should note the markets are pulling back quite a bit from their highs now. An S&P 500 that was up over 100 points is now up less than 80 points. The Dow's up 924, having been up over 1,100 points at one time. The Nasdaq's doing pretty well, still up almost 1.5%, up 314 points, but was up over 400 points at one time today. Jeannie, there's been a real reluctance to go long into the weekend the past couple of weeks, and I don't want to force you into being our stock analyst today, but you wonder, do people need to hear more concrete news to trust what's going on, especially with this most recent indication from Iran that keeping the strait closed by blockade is actually violating the ceasefire? Jeannie, we only have about 30 seconds. What are your thoughts there?
Yeah, they absolutely do. My read of it is there's exuberance. Like so many people, you get the pop-up. The strait is open. This war is almost over. There's exuberance that follows that on the market and with all of us. And then as you try to sort of look at some of the details coming out and you hear what Iran has said and you hear what the president has said and you realize how much more has to happen, I do think that sort of puts a damper on that exuberance.
Jeannie, thank you. We'll meet you on the late edition of Balance of Power. Jeannie Shanzano, our Democratic strategist and Bloomberg Politics contributor, alongside Republican strategist Lester Munson. We're going to talk to the sage of the oil markets coming up. Bob McNally will be with us from Rapidan. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at records for the U.S. stock market today. We're also looking at a gain on the week of more than 4.5%. The Dow, the S&P, NASDAQ all surging today. Wall Street extending its April surge on peace prospects in the Middle East. Here's where we stand right now. The S&P, we're off session highs, but still at a record 71.24, up 83 right now, up by about 1.2%. The Dow at 49,505, up 926. We were up more than 1,100. Still a gain right now of 1.9%. NASDAQ at a record up 1.4%. The NASDAQ 100 index up by 1.1%. All of this with a VIX at 17. Our Eric Wiener's going to have a whole lot more on the surging markets for you coming up in just a moment. 10-year on this Friday, 4.24%, with the 2-year 3.70%. Gold is up 1.4%, 48.56 the ounce. West Texas Intermediate crude oil, the big story today, tumbling 10.8% with an $84 handle right now on WTI. This time yesterday we were north of 90. Brent 90.55. It is creeping up right now, but still remains lower by 8.8%. So again, recapping here, stocks higher. A notable exception to the rally today, Netflix. After earnings, the stock now plunging by 10.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, Kaylee Lyons, Joe Matthew. That is a Bloomberg Business Flash.
Yes, sir. Charlie, thank you. He'll be back coming up top of the hour, 2 p.m. Eastern time, as we kick off Bloomberg Business Week daily, and we've got our eyes glued on these markets. To Charlie's point, we want to dig a little bit deeper because we have seen stocks come off their highs and we've seen oil come off the lows. Still both big moves here today, but all things are, of course, relative. And when we saw the headlines from Iran, a naval blockade is considered a violation of a ceasefire that, of course, is in place until Tuesday. There might be some questions about exactly what situation we are in. Eric Wiener is our senior editor for America's Equities, and it's great to have you back with us here, Eric. We're trying to follow the bouncing ball here in a day that brings a lot of news here, and sometimes I know it's difficult for the markets to digest. Are we going to see a reluctance to go long into this weekend as we have in past weeks as we get closer to 4 o'clock?
Possibly not. It's a good point in that, you know, when you have this kind of uncertainty, you tend to have traders who are reluctant to do some buying towards the end of Friday and kind of wait and see. And yeah, there is a ton of uncertainty heading into the weekend. However, some of this is really structural. So you have this big move up this week, and you also had a bunch of traders who were, for lack of a better term, underpositioned. So once the S&P made this sort of decisive move above 7,000, a bunch of people had to buy in. And that's kind of what we're seeing. I mean, heavy volume today, and, you know, this advanced move doesn't necessarily reflect huge bullish sentiment. What it does, you know, look at is that you have these traders who really need to get in, participate in this rally, and they're buying in at these rates. So it sends things up, and you do need, those portfolio managers do need to hold those shares. So that's real, but what this means for Monday could be very interesting.
Well, especially considering as well that this market is contending with the idea that we're now in earnings season and they're getting a good look at fundamentals as well. And it right now seems like we're not seeing any material earnings erosion at this point from the energy shock we've seen in the Middle East, Eric. So I wonder how much we should be attributing what we are seeing, what we have been seeing over the course of the last many days, to the idea that fundamentals are holding in there beyond just the idea that some people were betting that this war was going to mean worse things for risk assets and now are feeling the rush to get in.
That's a big part of it. So when you look at, it's not just that earnings are coming in strong, it's that the estimates are rising. So really what you have is like traders hoping for an end to this, just getting back to a base level so that we can look at fundamentals. Because underneath the hood, when you look at individual companies, you're seeing really good returns. You're seeing really strong outlooks. You're seeing, you know, an economy that remains resilient. But then, like you talked about Netflix, Charlie did just a little while ago, and you're seeing them get punished. And that's where, a bad outlook, and that was a kind of a surprise because everybody thought they were sort of insulated, but a bad outlook will really punish a stock. But overall, when you look at the base of what the market is right now, things are pretty good, and the earnings are strong. So if we can just get past some of the uncertainty and some of the hurdles of risk, things should do well.
All right, Eric Weiner, helping lead our equities coverage for us here at Bloomberg, joining us from World Headquarters in New York. Thank you so much, as always. Of course, what we're seeing in equities also is largely, at least in some part, tied to what we're seeing in other asset classes. Bond yields moving lower today. Oil moving substantially lower today. As both Joe and Charlie mentioned, yes, we are off the lows of the session, but still we're we were sub 90 on Brent. We're at 84 on WTI right now. So these are materially lower levels than we were at, as this market is clearly anticipating that the flow of energy is going to start to pick up now that Iran and President Trump have declared that the Strait of Hormuz is once again open for commercial shipping. But is the market getting ahead of itself on that front? Let's pose that question now to Bob McNally, who is back with us on Bloomberg TV and radio, founder and president of the Rapidan Energy Group, also former special assistant and senior director for international energy on the National Security Council in the George W. Bush administration. Bob, welcome back. It's always great to have your expertise. I wonder what you make of the move we are seeing today and whether you view it as overdone, considering that the catch-up of flows, if you will, is something that has not yet fully materialized.
Hi, Kaylee and Joe, and happy Friday. Yes, here we have another instance. And really what's remarkable about this conflict is how repeatedly successful the administration is, and they had an assist from the Iranian foreign minister, in inducing optimism and sell-offs in crude, rallies in equities through what we used to call in the markets verbal intervention. Let's just step back for a second. What has really changed? The blockade by the United States remains in place. Even the Iranian foreign minister clarified, yeah, the straits are open, come on through, except you have to go through the toll booth and you have to comply with the Iranian armed forces, which means it's closed. The Iranians have also said, look, if this blockade stays in place, all bets are off. So we've had very good headlines, very pleasing headlines. In this market, your previous guest, he had it right. He said, look, traders want this to end. This is a nightmare that no one thought was possible, and they can't believe is happening, and they just want it to stop. And so this is a market that's amenable, it's receptive, it's responsive to positive verbal intervention, and today is a great example of that. I think it's unwarranted. Unless we have a real breakthrough here this weekend, I think it's going to reverse, and I think we still have the world's largest oil disruption, which actually got a little bigger with the blockade on Iran's oil exports, still in place, and we have to deal with that.
Unwarranted, says Bob McNally from Rapidan. Bob, as you always say, it's all about the barrels. Even if this war ended now, say there's a deal this weekend in Islamabad, how long would it take for the market to rationalize itself back to the level of traffic we saw in the Strait before this began?
Joe, optimistically, so no more, no incremental damage to facilities, et cetera.
Yeah.
3 to 4 months at least on the oil side. For natural gas, Ras Laffan, my analyst tells me, Alex Munton, it could be years before those two trains are repaired. So gas, it could be longer. And in some cases, we may never get back in certain fields, like Rumelia in Iraq. We're concerned that huge field may never get back to where it was before, or it won't because we won't spend the money on it. On the other hand, other fields, believe it or not, come back stronger. You let them rest and actually come back stronger. So, but we're talking 3 to 4 months at least before the fields, the facilities, and the boats sort of queue up and line up and start getting things moving again. And even then, I would say, there will be a security premium because we will have learned Iran can do something that no one thought possible, or few did. As you know, Rapidan saw this, but few thought that anyone could strangle Hormuz for more than a couple days. Iran shows that it has, and it could again in the future.
Well, so let's get to then the shortages that either we are already seeing, which arguably we are, at least in certain parts of the world, or have yet to materialize, Bob, knowing that there obviously is a lagged effect in energy products leaving the Middle East in the first place and getting to their end destination. Those shortages are starting to be felt now. The IEA obviously warned yesterday that Europe could run out of jet fuel 6 weeks from now. Where will you be looking to, and what products do you think are going to have the most acute shortages first?
Right. You know, it reminds me of COVID a little bit when that started unfolding. It started in Asia. They had all the problems, the lockdowns and the pain, and we watched that. And then it rolled into Europe and then came here. And it's going to be a similar phenomenon. The famine is first in Asia, especially in diesel and jet. They just don't have it. They're too close to Hormuz. They're too dependent on Hormuz. And you have the Chinese and the South Koreans are big exporters of jet, of gas oil, of diesel, and they've stopped or they've slowed down. So Australia is having shortages, and other countries are having to drop their petrochemical facilities. So we're seeing demand destruction right now in Asia. Now those desperate Asians are now coming into Africa and the Northern Atlantic Basin and pulling barrels out of here, and then they'll come to the Gulf as well. The president tweeted that tweet from Rory Johnston of all the boats heading to the Gulf Coast to pick up oil because it's the only gas station in town, if you will. And so it's coming here. We may not have the physical shortages like Europe may have in some places for especially jet fuel. Jet fuel is the real one. And what we're going to be watching is product stocks, gas oil, what the Europeans call gas oil, we call diesel, jet in the ARA in Europe, even the Gulf Coast. Those are Rotterdam. Those are the places we're going to watch for big inventory draws. And eventually, when all those boats show up in the United States, and we were within a whisker of all-time crude oil exports last week, a few 100,000 barrels a day away, we'll see our crude stocks go down because we're going to empty out and send those crude stocks out. And then it'll become real in a way that we're not seeing it yet in the data that we get here in the United States.
Why? So it sounds to me like you're suggesting that physical shortages are inevitable. It's already too late to avoid them. Bob, correct me if I'm wrong, and I'm looking at a research note that you put out recently suggesting that China has large import surpluses to enjoy from before the conflict that eases some of the pressure on Beijing. Will China suffer the same fate as the rest of Asia?
No, China's doing better than Asia. China stockpiled like mad. They went on a tear for the last couple of years, importing oil and other commodities. So they have 1.2, maybe 1.3 billion barrels of crude in storage. Wow. Look, they're not enjoying the high prices. They're not going to enjoy not getting that discounted oil from Iran. But they are not facing the shortages that other Asian countries are. Indeed, they're on a case-by-case basis parceling out some of their precious refined product to curry favor with some countries that are starving in Asia for that.
Well, it's incredible to consider. And as we get back to the notion of, okay, China may be more insulated, other parts of Asia are going to hurt, Europe could be hurting shortly as well. Bob, we already know Europe had a problem post-Russia's invasion of Ukraine as it was trying to wean itself off of Russian oil and natural gas, get more from the Middle East and the United States as well. Clearly, there's now going to be problems in everybody wanting to source it from places like the United States. Is there anywhere left to turn for the Europeans? Ultimately, if they can't reliably bet on exports from the Middle East, but they also don't want to have to turn back to Russia, and there's only so much that the U.S. is able to produce at this point, right?
That's right. That's why, unfortunately, it may not come in the form of, in some cases, it'll be shortages like jet fuel, but they will have to either pay the going price to bid barrels away from the Americas, away from here, bid those expensive barrels, or they will have to go without. And I think you're starting to see that. Refining margins in Europe are negative now. So refiners are starting to down tools, if you will, or reduce runs. And that's going to really create a situation where you have extreme price increases, and there'll be rationing to the people who can pay. And many people who can't afford to pay won't. And you're seeing airline flights, unfortunately, getting canceled. I'm supposed to go to London in May. I hope I go. But you're going to start to see market price-induced demand destruction, even in Europe.
Wow. Bob, we've only got about a minute left here, and I'm just looking at your most recent note that just went out this morning. With 20% odds, you assess 20% odds of a meaningful near-term increase in Hormuz flows, 50% odds that the status quo will continue. It's great to have you with us, Bob. Thank you so much for the insights. The sage of the oil market, Bob McNally, and the founder of Rapidan Energy. Really interesting and not encouraging at all, Kaylee.
Well, it's so fascinating to hear the sobering words of analysts like Bob McNally, of geopolitical analysts like Natasha Hall, who are operating with a significant degree more caution than we are seeing play out in financial markets.
Yeah, we got a lot of cold water on this story over the past hour, although the S&P 500 still up 88 points, WTI $83. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, happy Friday, everyone. Carol Massar, Tim Stanovic across Bloomberg platforms. Radio
what a week. What a week, Carol.
I got to tell you, I showed somebody my calendar for the week, and they're like, I don't even know how you read that, because there's just been so much.
And just a heads up, she's got
everybody.
the paper version. It's the book. Lots of Post-its.
I like my paper.
I know.
I'm a visual kind of gal. And I got to tell you, speaking of visuals, look at the markets. We're on quite a run. We continue this run on Wall Street. Again, another rally underway. You've got speculation that the Iran war is poised to end. A lot we're going to get into on that front. Sending those riskier assets surging, extending a month-long rally that we've seen in U.S. equities, lifting the S&P to a succession of records, NASDAQ 100 as well. And then Bitcoin, your baby, in quotation marks.
Baby. Yeah.
Adding, right?
Yeah, they said, yeah, it's not my favorite child.
Okay, but adding a lot of value here.
Yeah, $12,000 over that series of days, this rally that we've seen over the last few weeks.
Pretty significant.
Oh, it's extremely significant.
And oil sliding, no surprise, and you'll see that play out in the discretionary space on equities. More on all of that to come. Hey, ahead this hour, though, one thing we thought about a lot, reading in this morning, seeing the headlines, is Iran really, really ready to give up its uranium? We're trying to understand this, if they're ready for a new way forward.
That's the question. That's the question. On the war, or the end of such, Bloomberg's Michelle Hussein will join us on Pakistan, stepping in as a mediator and a broker of peace. We got insights from her conversation with a former Pakistan ambassador to the United States.
We're going to get into that. Also, Citi's Wealth Head of Portfolio Construction and Analytics weighing in on what it all means for the markets, because when it comes down to it, right, all of these headlines, we know that all year long, all since this war, has certainly impacted the trade. So we'll see what she has to say about all of this.
All that to come over the next hour right here on Bloomberg Business Week Daily. It is a packed program. Charlie Pellet is standing by in the Bloomberg Business Week studio for an update. He's looking at markets. Hey, Charlie.
Thank you very much, Tim and Carol. Happy Friday. What a week. Got to begin with the weekly numbers. We are on track for our third week of gains on the S&P. On the week right now, up by 4.5%. Going to be very interesting to see how this final hour of trading shakes out. Keep it locked into Bloomberg Television and Radio for the very latest. The yearly numbers as well. Worth pointing out that on a record-setting day for the S&P 500 index so far this young year, the S&P is up by 4.1%. Today's numbers, S&P advancing to 7128, up by about 86 points right now. That is a gain of 1.2%. The Dow up 962 points, up 2%. Have been up more than 1,100 points, so we're off session highs, but still a sharp gain nonetheless. NASDAQ up 357, up 1.5%, record there. NASDAQ 100 index, also a record, up by 1.2%. All of this as oil plunges. The VIX just above 17 now with a 10-year 4.24%, the 2-year 3.70%. Gold is up 1.5%, 48.63 the ounce. Crude, the big story. WTI right now, 83.49 a barrel. It is down 11.8%. Brent crude trading for much of the day in the 80s, now breaking just above $90, 90.02 on Brent. It is down by 9.4%. On a day when stocks are ripping higher, one notable exception to the rally, Netflix. After earnings, the stock now plunging. It is down by 10.2%. Recapping, S&P 500 index surging 1.2% for the week, looking at a gain of 4.5%. Tim and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks, you are caught up to speed on the markets. You know they are rallying. This is President Trump said Iran agreed to suspend its nuclear program indefinitely and will not receive any frozen funds from the U.S. The president saying a deal to end the war is mostly complete. Talks over a lasting agreement will probably be held, Tim, this weekend.
Iran saying Hormuz is now open to commercial traffic, but transit must be coordinated with the IRGC. And President Trump said a U.S. naval blockade to persist for now. The claims, though, with Iran to remove the sea mines. He sent that out on social media earlier today.
And I feel like I keep hearing fragile ceasefire. Like there is still some questions out there about whether or not we can say that this is one and done.
Especially with regard to the uranium.
Yeah, exactly. And that's where we want to go. It's something we talked about on our morning planning call in a big way. Our question is Iran really ready to give up its uranium and chart a different path forward, a different regime, if you will?
Spencer Ferragasso is here. He's senior fellow at the Institute for Science and International Security. It's a nonprofit, nonpartisan institution that's dedicated to informing the public about science and policy issues affecting international security. North Korea, Iran, Russia, and the use of advanced drones in the war in Ukraine is what he focuses on. He joins us once again from Washington, D.C. Spencer, good to have you back on the program. We last spoke a couple weeks ago when the situation was actually quite different. Now the U.S. and Iran are talking via negotiators, and perhaps in Pakistan again this weekend. Based on what you can tell from the open source intel, is Iran ready to give up its uranium and actually chart a different path?
First off, thank you for having me back on the program. Ultimately, it's hard to tell. We're getting mixed statements out from each side over the course of these negotiations. Trump says something, Iran says something. We're waiting for Iran to release their own statement on this. A few days ago, the administration, U.S. officials were floating a 20-year ban on enrichment. Iran came back with a 5-year ban on enrichment. So we'll see how this actually goes. But I think the bottom line here is that getting rid of the highly enriched uranium, so the stockpile 60% and ideally the 20%, doesn't end Iran's nuclear program. Iran still has the ability to produce centrifuges and build enrichment plants and enrich its low enriched uranium stocks of uranium. And hypothetically, given enough time, investment, and commitment, it could produce weapon-grade uranium from those stocks alone.
So what changes here? So is this really, a ceasefire where Iran is different going forward? It sounds like that's not the case here.
Well, I think only time will tell. It's hard to understand what the motives of the Iranian regime is at this moment. Clearly, their economy is being battered by the war. The blockade that's happening at the Gulf of Oman is preventing them from trading. Most of their trade comes from seaborne trade itself. So payment, for example, of $20 billion would be a great boon for its economy. It's hard to tell ultimately what the ultimate goal here is.
How would we know? Let's say we get to a point, and look, I'm putting the cart before the horse here, but ultimately this is the goal of the United States, is to get Iran to stop enriching uranium and to abandon its plans for building some sort of weapon. How will we know that Iran is actually following along with those plans, if the U.S. indeed does get to that point in these negotiations?
Yeah, ultimately it would have to be verified through international inspections led by the IAEA. The IAEA will need unfettered access to Iran's nuclear facilities. Since the June 2025 war, they haven't been able to access the facilities that were destroyed, such as those in Natanz, Fordow, and Esfahan. So without on-the-ground, unfettered access where Iran is providing a full and complete declaration of their activities, we won't truly know fully what is happening. And just to remind everyone, Iran has never come clean with the fact that it actually had an explicit nuclear weapon program in the early 2000s called the Ahmad Plan. And this is something it continues to deny to this day. But ultimately, these efforts need to be led by the IAEA because they have the experts and the capabilities to conduct these investigations.
All right. So in investing and in the financial world, how many times do we say past performance does not guarantee future results? So we know how Iran has acted in the past for a long, long time. Is that what we should take away and say, that's not going to change? Or is there something here that says to you, Spencer, that it is going to be a different Iran going forward, or we really don't know? I mean, based on the regime, it doesn't necessarily feel like there's going to be anything significantly different.
I remain pessimistic. Wild cards and crazy things do happen in foreign policy, but with this regime, knowing that it's led by hardliners, many of them who are fully in support of a nuclear program, maintaining an enrichment program, it's hard to see significant change without a breakthrough in negotiation. But, I can't predict the future, and if I could, I wish,
Oh, go ahead, Carol.
Well, but if you were a betting man, are you going to say that you said Iran can come back in terms of uranium, that they can come back? Would you expect that they will ultimately?
If there's a will, there's a way. If they're given the opportunity, certainly they've been extremely resistant on any guarantee that they would abandon the enrichment program. You can take that the 5-year moratorium as a sign of that. They want some sort of capability in the future. And essentially any deal that provides a 20-year ban, which, to be very clear, that's a very long time. And in that time, you can lose tacit knowledge that's required and that's built up over time to actually operate an enrichment plant. But it's essentially kicking the can down the road again. Yeah. But it is a longer time period than anything that was guaranteed during the JCPOA, for example.
Yeah, I want to go back to what you said about the inspectors and getting unfettered access, because it would be I would imagine, I'm not a nuclear physicist, but I would imagine it could be probable that a country, a regime could give access to inspectors to certain areas, but have an entirely different facility where something like enrichment could still take place. Again, I'm not a nuclear physicist, but wouldn't that be possible to do in like a secret underground location?
Iran's a very large country. For example, in the early 2000s, when they admitted to having the Natanz enrichment plant, they put that under safeguards. All the while, they were still hiding and building the Fordow enrichment facility, which was eventually revealed by the international community in 2009. Anything is possible, but this is why the IEA and the United States need to negotiate an ironclad deal that enables them to conduct the investigations that they're capable of doing to fully verify the peaceful nature of any nuclear activities.
Is it safe to say, 30 seconds here, Spencer, as we wrap up, that there's going to be pressure, obviously from the U.S. and from the developed world, but also from the region for Iran to do this and change its course going forward?
No doubt. This nuclear program is a source of tremendous issues and problems for not only the Iranian people, first and foremost, but the region itself. It's a source of conflict. It's a source of instability.
All right, good stuff. As always, so glad that you were back here on Business Week Daily. Thank you so much. Spencer, of course, Ferragosto, he's Senior Fellow at the Institute for Science and International Security. It's a nonpartisan group. All right, you're up to date on the war at this hour, but of course we're going to keep an eye on it and continue to track.
Yeah, equity markets surging. We just heard the latest from Charlie. Worth repeating and worth looking again. The S&P 500, a new record, up 1.1%. The NASDAQ Composite up 1.3%. The Dow up 1.9% as we speak. This over optimism after the reopening of the Strait of Hormuz promised to ease this oil shock that's really clouded the global economic outlook since the U.S. launched its war against Iran. That was at this point 7 weeks ago.
Yeah, we're seeing the tech-heavy NASDAQ 100 hitting a record, S&P 500 also hitting a record. So we're curious to see what our next guest has to say about how this all trickles into the markets. We're certainly seeing a reaction today. With us is Ola Aganga. She is head of portfolio construction and analytics over at Citi Wealth, joining us right here in our studio. Thank you so much for our patience. We're trying to make sense of the latest on the war. What's your read on the news today? Is it all right, time to look forward?
Well, firstly, thank you all for having me. This is really, really good. So at Citi Wealth, under Kate Moore as our CIO, we have had, it's 4 months in, it's almost felt like a year, really.
Yeah.
Like we've absorbed multiple shocks just in the last few months. Now, on a week-over-week basis, we've seen conflict in the Middle East. Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down, right? So you have a real risk of being whipsawed. And that's frankly what we've experienced just already. Part of what we do, and a big part of what we have to really be focused on, is looking through the noise, because it's been changing so much. So overall, we've been looking at fundamentals. We've been looking at a lot of the macroeconomic data as has been coming out. We've been looking at earnings
Throughout the
revisions.
war, you've been looking through the noise?
From the beginning, we entered the year constructive. So we entered the year constructive in global growth. We entered the year pro-risk. We have made adjustments since the war, actually. More focused on resilience, more focused on quality, more focused a little bit on defensiveness, but then also really looking for opportunities.
Do those changes that you made during the war, do you go back to what you had before the war, if this is indeed the end?
So one of the changes that we made was our regional equity exposure. We trimmed a little bit in Europe, and we added to the U.S. Now, even if...
Because the concerns over energy, and Europe is much more reliant on that part of the world.
Much more reliant on that.
So that's why you made the switch.
We made the switch. It showed the exposure. But even if the war was to end tomorrow, officially, we're still looking at the read-through on the companies and the earnings revisions and where that growth is coming from. And the U.S. is still delivering resilient earnings and more consistent earnings. And earnings revisions are coming through more strongly in the U.S. and the fundamental and macro backdrop in the U.S. is much stronger, much more insulated from a lot more of the macroeconomic environment and the shocks. And Europe is a bit more of a challenging period.
So U.S. exceptionalism is back? Or did it ever go away, really?
There's a bifurcation on that when you look at the asset classes. So from an equity standpoint, yes. From a fixed income standpoint, it's a little bit more nuanced there, I will say.
Good point.
So the credit picture we've trimmed in credit. We actually moved to a little bit more shorter duration
For the U.S.
For a fixed income standpoint.
Yeah.
And this is beyond the war. Spreads are at historic tights. That's the way it was. Even when we saw the shock, you didn't necessarily see that same pickup in yield to be able to compensate for that.
You said you moved away from Europe a little bit to exposure to equities here in the U.S., partly over what you think will happen as a result of a hit to earnings. Do you think the U.S. companies see a hit to earnings as a result of higher energy prices?
There's some. As you start looking at raw materials and fundamentals, so input costs, how much could U.S. companies pass through? Just today, of course, it looks like we're at a little bit of a ceasefire. The Strait is opening. Airline stocks are surging.
I know.
But
cruise lines too, yeah.
And cruise lines as well. But if it was persistent for longer, you'd see some areas that could be more affected. So there'll be sectoral type of dispersions as a result of this, some winners, some losers, but then also opportunities.
Although, one thing I want to ask you, things like energy, which we've seen just on a tear, is that a longer term theme for you guys? Defense stocks, we're going to talk later on our broadcast about the president's budget and how much looking for defense spending in the United States. We're talking about $1.5 trillion that they're asking for. And we know defense around the world seems to be a sector, or countries are all beefing up their presence. And just raw materials, commodities as a whole. Like all of a sudden we're talking about it a lot because everybody wants to make sure they have a healthy supply chain to it. And I wonder what the costs are or the investment play off of that. So all of that, go ahead.
So in what you said, the critical thing that we see persisting, regardless if, again, conflict ends tomorrow, is supply chain. So the supply chain with regards to energy, supply chain for raw materials, supply chain for infrastructure, and the need for that, and fortifying that, the conflict in the Middle East really just highlighted and exposed what should have been in play when we were going through the pandemic. And that we needed to be able to fortify that. Now it's brought it to the forefront. We really need to focus on that, and we think that theme will be consistent regardless. We need to be able to fortify those supply chains. Now, the supply chains for commodities, for raw materials, for energy, but then also another thing that I know we're not necessarily talking about today because the conflict in the Middle East is top of mind, AI and the supply chains around that, we don't see that as reversing. So as we're looking at opportunities, and there's a lot, as you said, of noise back and forth, which could cause some short-term disruptions, we're focused on what could persist and what would play out for the more medium and longer term.
What would that be? 30 seconds.
AI.
But I mean, like data centers, and like, what's the play?
Everything associated with the critical needs of AI, robotics, supply chains, energy, infrastructure. So we're doing a lot of work around that thematically, and we're talking to our clients and advising them, and that's where we see opportunities going forward.
So good, so good. Ola Olu Aganga, of course, head of portfolio construction analytics at Citi Wealth. Thank you so much. Yeah, come back soon.
Good to see you. Hey, coming up next on Bloomberg Business Week Daily, it's one of the day's top decliners, even though there aren't that many stocks that are actually lower. It's a standout. It's one of the best known names around, a great read on streaming. We're, of course, talking about Netflix when Bloomberg Business Week continues. That's next on the program.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the green right now, on track for a record close, also on track for the S&P for a weekly advance of over 4%. It will be the third week of gains in a row on the S&P 500 index. Right now, we are trading off our session highs. The S&P is up 75. That is a gain of 1.1%. And to be sure, it is a record now. The Dow up 888, up by about 1.8%. NASDAQ at a record, up 1.3%. The NASDAQ 100 index up by 1%. The VIX just below 18 right now with a 10-year, 4.24%. Gold is up $69 the ounce. Spot gold up 1.5%. $48.59 the ounce. West Texas Intermediate crude tumbling 11.5%. $83.78 a barrel on WTI. Brent right now at $90.52. A barrel of Brent down by 9%. Keeping an eye on Intel. The stock now trading lower. It is down by 0.5%. Have been higher for much of the day, but Intel trading close to its highest intraday level since 2000. As optimism continues to grow that the chipmaker's ambitious turnaround plan is bearing fruit. And one other tech note, Apple's marketing executive in charge of the Apple Watch, AirPods, health, and smart home initiatives says he is retiring. Stan Ng is leaving the company after 31 years. We got Apple today up by 2.5%. Again, recapping here, the Dow, the S&P, NASDAQ all in the green. S&P up by 1.1%. The VIX just above 17 now, and we've got West Texas Intermediate crude down 11.6%. Lots going on. Tim and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here at Bloomberg headquarters in New York City. Yes, indeed, a stock on our radar. You know, it is a top decliner in the NASDAQ 100, a top decliner in the S&P 500. We're talking about shares of Netflix. Stock's still down about 10%, tumbling the most in 4 years on an intraday basis after the company gave a forecast for the second quarter that fell short of expectations on Wall Street. Underwhelming the street just months after it lost out on that bid for Warner Brothers Discovery, which, when they did finally lose out, investors kind of cheered it.
They were really happy about that.
Yeah.
The stock had been getting punished, and it's up quite a bit since then, even with today's decline. The streaming pioneer also announcing that chairman and co-founder Reed Hastings is stepping down after 29 years at the company to pursue philanthropy and personal interests. So we are extremely interested in the quarter and what Netflix looks like without Reed Hastings, the guy who really helped create and change the way that we consume TV now. Covering and guiding the media and entertainment coverage here at Bloomberg is Bloomberg News media and entertainment editor Felix Gillette. He's the author of It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. He joins us here in the Bloomberg Business Week studio. We'll talk about the quarter a little bit in the guide, and you know, I think that's a big part of the reason the stock is moving. But we're also really interested in Reed Hastings leaving, you know, officially. I think it's fair to say he's had a foot out the door for a couple of years since he hasn't been CEO, and he handed that off to people who I think investors would describe and analysts would describe as very capable people.
Yeah.
Maybe you would describe them that way too?
Yeah, I mean, I think compared to some of their competitors, this is an example of succession that's worked very well. But at the same time, it does feel like Netflix is at this fascinating crossroads right now, right? They just went out and tried to make this enormous M&A deal to buy Warner Brothers Discovery, then backed out of it. And, you know, just a couple months after all of that goes down, now Reed Hastings is leaving the company for good. So, yeah, it's a really interesting time to think and pause and be like, well, what is Netflix's future? What's their next move? And I think, you know, there's some question about where the growth is going to come from.
Step back. If they had gotten Warner Brothers Discovery, do you think we'd be talking about Reed Hastings leaving the board?
I think it's possible. I mean, he was never, you know, into the M&A deals. He was always very much about growing organically. He always had concerns about how these huge deals play out culturally inside of companies. I really do think this was driven by the current CEOs. But at the same time, yeah, there might be more interest to stick around and figure out how that, you know, transaction would have gone down. He's always been super interested in the cultural engineering. How do you put together a workplace culture?
Yeah,
and
the
so
2009 culture deck that got so much attention.
Yeah.
This idea that you don't treat your colleagues as family, you treat them instead as teammates.
Yeah.
And I think he said, you know, average employees will get generous severance. Like, he doesn't want average people. He encouraged people to go out and actually get other job offers, come back with them so that Netflix could beat them, so they'd actually look, at what they're worth in the marketplace, like pro athletes.
Yeah, I mean,
did that shape the company?
Yeah, I mean, from the beginning, it was he always treated it as this experiment, almost like a laboratory, and how you make people work together. And I mean, what's fascinating when you look back at the history of it is like, Reed Hastings had no initial ambition to even go into the entertainment business, right? They were like, we just are interested in online retail with the internet. And they were thinking about dog food or baseball bats or all these other surfboards. And then they're like, these new little things called DVDs would work perfectly in the mail. We could send them out. People could, put in the request via the website. And, you think of how much entertainment history has changed because of that decision. But yeah, I think that like the entertainment side was almost separate from his initial interest, which was like web-based retail and also that component of like the experimental workforce.
And yet here we are. Netflix is the streaming company to beat, right? Ahead by a long margin or wide margin based on everybody else. But having said that, investors are disappointed. And I guess one of the things we were trying to get after the company reported earnings yesterday, Felix, is it because they didn't get the content from Warner Brothers, or what's going on here?
I think part of it is
expectations.
Yeah, I mean, it's expectations. It's also looking at the engagement with Netflix content, which has kind of, flatlined a little bit over the last couple of years. And I think people are wondering, where does the future growth come from if it doesn't come from a Warner Brothers Discovery acquisition? They've tried to do things like video games. That hasn't really proven to be a big hit yet. More recently, they've started going into podcasting and more topical content, sports. But I think it is a question, like, where is that growth coming from? What's the plan exactly? You add in the charismatic founder leaving, and yeah, people have questions.
Ted Sarandos on the call yesterday said podcasts on the service are, quote, doing great, and that the price hike, Greg Peters saying the price hike hasn't changed customer behavior. I want to talk about AI with you. We're going to get to that in a second because they made some comments about AI on the call yesterday. But before we do that, to Carol's point about diversifying away from the core product.
Yeah.
Like, if we were talking 5 years ago, 6 years ago, Netflix would never do live content. Netflix would never do games.
Yeah.
Netflix would never do sports. Like, leave that to the traditional players.
Right.
Now, the Netflix of today is, I think, almost maybe unrecognizable to people who knew this company 5 or 10 years ago.
Yeah.
Is that as a result of what it views as competition, which is whatever anyone is doing on their phone or on their screen when they're not watching Netflix?
Yeah, I mean, I think that very early on they pivoted from being, our competition is HBO to our competition is YouTube, Twitch, sleep. I think they said that at one point, like just anything that like takes people's time. Like we're in the time business, we're in like getting people, and there's so much competition on all these different fronts, and they're trying to do this at a global scale, which also is like part of the ambition and vision for that. And I think that that's great, except for the fact that the original programming has worked. And the advertising business is growing. They've proven that they can do live sports, which again 10 years ago you would have said they're never going to have an NFL football game. They have an NFL football game. You can watch it. It doesn't glitch. They're serving advertisements in there. So that is again it's adjacent to what they started off as, but it is different. But the podcasting is a huge question mark. Is that actually, so they've struggled with topical content forever. They've tried all these different talk shows that there's just a long roster of comedians that have come in there, done a season of episodes and then just disappeared. And so I think that challenge of getting people to show up at a specific time to watch a specific thing, which you need to do in order to grow your advertising business, is really at the forefront of what they're doing. And I think that they're showing some real progress there.
I'm looking at, our story by Lucas Shaw that's out on the terminal, and it just talks about, under Hastings, which he introduced the Netflix service ultimately in more than 190 territories, outmaneuvering Hollywood studios to build the most valuable entertainment company in the world. Like, you really think about its place, right? When it comes to content creation, it really is a behemoth. I do wonder, though, getting back to that idea of, at some point, is there just too much stuff out there? Is there an excess capacity in this industry where it just starts to kind of eat into some of these services? It's just going to have to.
Yeah, I mean, I think that's been one of the challenges for everybody that's built a streaming service. I think Netflix has been more successful at building discovery options, creating an algorithm that serves up viewers things that look interesting, but it's still a challenge. It's still like, as everyone knows, they jump on a streaming service. What do I want to watch? Oh, there's only 50,000 options sitting there. Like, and there's a paralysis that's involved with that. And they're continue to work on that and trying to figure out like what is the best technology for surfacing things that will get people to watch and keep watching. But that's like the endless, that never will end. I feel like that's the challenge that just goes on forever for Netflix and
all of
everybody
them.
else in this
I always
business.
feel like I look and I'm like, nothing to watch, which is crazy, right? And I don't know whether it's being overwhelmed.
It's okay. My friend has this like notes doc with all the recommendations that he shares with us. I'll share it with you.
Don't we talk about the makeup room? What are you watching? What are you watching?
It's also fun to look at someone else's Netflix like front page because it's just so totally different. You're like, wait, that's the same service as mine? Yeah.
And that's the ideal for them. I mean, to create, to surface stuff that it thinks will keep you engaged. Hey, speaking of technology, that Netflix acquisition of Ben Affleck's Inner Positive for $600 million, as much as $600 million.
You're obsessed with this.
I am, because the AI story is so important in Hollywood.
Yeah.
Ted Sarandos yesterday on the call said AI will give great artists better tools. Netflix has to thread this needle where they don't alienate creators, but also make sure they adopt these technological tools that allow for, I guess, things to be more efficient. How do you see this?
I mean, I think everyone is grappling with this in the industry. All the studios are trying to walk that, tightrope between, you don't want to alienate the creators who are very worried about AI replacing them, but at the same time, the history of television and film and animation, all of that has always been this incredible mix of storytelling with technological advances. And, you don't, at what point do you cut off and say, oh, we're not going to, play around with any new technology? Like, that would be crazy. We'd still be watching, silent black and white films.
Claymation.
Right? Yeah.
Like, just remember
Gumby's awesome.
Gumby and Pokey are cute, very cool, but, right?
So
like,
I think the question is
evolve.
like, who is going to be able to use this technology in a way that, it's clearly you can do it to create low grade, cheap content that doesn't really move the needle for anybody, but can you use it in a way that actually inspires and pushes things forward? Netflix, like everybody else, is proactively trying to get involved in that and figure it out. I think part of it is, special effects, part of it is, CGI adjacent. But I think, it's still, that's going to be the huge question for the next year, 3 years, 5 years, 10 years
We're trying
for
to figure
Netflix.
it out. We're trying to figure it out.
Fortunately, we got Felix to help us figure it out. Felix Gillette. He's Bloomberg News media entertainment editor. Also, check out his book. It's Not TV, The Spectacular Rise, Revolution, and Future of HBO.
Hey, when we come back, we're going to get back to the war, what's top of mind for investors. We'll continue to do that. We have President Trump saying Iran uranium will be brought back to the U.S. This is from CBS.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are holding on to gains. We're looking at records for the S&P, NASDAQ, and the NASDAQ 100 index. Meanwhile, the U.S. is now said to be eyeing Monday talks with Iran in Pakistan. That according to a headline right now from the Wall Street Journal. S&P up 83 at 7125. That is a gain of 1.2%. The Dow up 901, up 1.9%. NASDAQ Composite Index up 345 for NASDAQ, a gain of 1.4%. All of this with the VIX at 17, the 10-year 4.24%, and the 2-year currently yielding 3.69%. So stocks are surging, extending a record-setting run. The S&P 500 index on track for its biggest monthly gain since 2020. Also on track for a third week of gains for the S&P. Spot gold up $71 the ounce now to $48.61, up 1.5%. West Texas Intermediate crude now down 10.6%, $84.64 a barrel. This time yesterday we were talking about $90 crude. Brent, by the way, back above $90.94. It is down by 8.5%. Oil majors moving lower. Shares of Chevron down now by 2.5%. ConocoPhillips among the names declining, down by 4.7%, and ExxonMobil down by 3.8%. Recapping, stocks higher. S&P up 83. That is a gain of 1.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we have some interesting headlines. About 2:35 p.m. Wall Street time, we got a report go across the Bloomberg that the U.S. and Iran are meeting this weekend. This was coming from CBS News, citing a phone interview with President Trump. The president also telling CBS that Iran needs to stop backing proxy groups like Hezbollah and Hamas. Meantime, Tim, then we got something from the Wall Street Journal.
Yeah, the Wall Street Journal reporting that the U.S. eyes Monday talks with Iran, those once again in Pakistan. The Wall Street Journal cited senior administration officials on those talks, which the journal reports as, quote, likely.
All right, so all of this going back and forth. We do want to point out, though, that Pakistan has emerged as the unlikely facilitator of U.S.-Iran peace negotiations, and with the prospect of additional talks looming, as we said, some interesting developments, whether it's the weekend or on Monday. The man at the center of those efforts is the country's army chief, and we've written about this a lot on the Bloomberg. We want to talk about that aspect and more. Great to have back with us journalist and author Michelle Hussein. She's the host of the Michelle Hussein Show. It's a podcast from Bloomberg Weekend. She's also the author of Broken Threads, My Family from Empire to Independence. She joins us here in studio. It is great to have you here. It's a gift, truly.
So nice to be with you, Carol and Tim.
So talk to us a little bit about this news flow and how you're kind of taking all of it in terms of the U.S. war in Iran. Do you see it as a fragile ceasefire? Do you see it as progress? Are we moving back to normal, whatever that may be?
It has been a long and difficult 7 weeks, and it's extraordinary, really, how many countries, while there are only 3 countries actually involved in this war, so many others have been drawn in economically and diplomatically in other ways as well. So I think that the last 24 hours have offered us a moment of hope, but this is a continuing moment of peril because even hopefully, if there is some kind of outcome from this process in Islamabad, it might well still be fragile. But I think the story of Pakistan emerging as this broker at this moment in time is one that goes back to the early days of the Trump administration, primarily because Pakistan handed over a terrorist suspect to the United States, someone accused of being involved in a bombing in Afghanistan at the time the U.S. was withdrawing. So that was the first sign that brought about a moment of bonding between the Trump administration and the army chief. And it's that relationship that has developed. But it is important to remember that the relationship of one man, even in this setting, isn't everything. And therefore, there has been frantic diplomatic work on the part of Pakistani diplomats and the government of Pakistan. And that's been happening all this week between Islamabad last weekend and whatever happens this weekend.
So if talks in Islamabad are successful, and ultimately this war does come to an end as a result of negotiations that happened between the U.S. and Iran in Pakistan, what does Pakistan look like after the war in terms of an emergence as a different kind of country, perhaps viewed differently on the world stage, perhaps viewed differently by President Trump?
Well, primarily what they will be hoping for in Pakistan is that it looks different economically, because there's an immense amount of self-interest involved from the Pakistani side. It imports 90% of its energy, most of it from the Gulf. Schools have been closed, universities have been closed. The government was desperate to avoid scenes where there are long lines of vehicles waiting at gas stations, and the only way it could avoid that was to basically say that children were not going to go to school, and that a lot of people couldn't get to workplaces either. So there's been an immense economic impact. So that will be the primary hope, that changes. But there's no doubt about it that, of course, this gives diplomatic status. In the words of Maliha Lodhi, the veteran Pakistani diplomat we spoke to last weekend, it's another indication of the importance of middle powers. This is a kind of Mark Carney, another previous guest on my podcast, line. But that there is a role. Often we just think about the superpowers, but there is a role for others. And Oman previously was involved in mediation, had its fingers badly burnt. Turkey was sort of talked about as a player, but really only Pakistan had enough of a relationship with both the US and Iran to be able to play this role.
We have some of your conversation from Maliha Lodhi, former Pakistani ambassador to the US. This was from your conversation, and I believe it aired last week. Let's listen up, everybody.
Certainly the Middle East has changed forever. It will not be status quo ante at all. Things are not going to go back to what they were before, that's for sure. Now, what comes in its place, it depends on, I think, realignments that will take place, reassessments that many Gulf countries may have to carry out. I mean, what happened to them? Many of them are feeling abandoned by the United States. Many feel that this American security umbrella, when the push came to shove, it was of no value to them because America didn't defend them.
All right, so again, Maliha Lodhi, former Pakistani ambassador to the U.S., that was last week on the Michelle Hussein Show. Significant voice and giving us some really good insight, because I think one of the things we keep trying, it's very easy to hear, the American perspective, what we're hearing from the White House, but as you said, the impact of this war on Pakistan, I don't think we don't have the energy lines or gas lines here, but it's impacting many different nations on that side of the world very differently.
And Carol, I'd also say the UK, where I live, has been what the government has been hoping to do in terms of policy terms, its financial calculations, those have been upended because the UK is also a significant energy importer. And so it is not only places in Asia, it is also countries in Europe, and certainly the UK of the G7 nations is particularly exposed. So the ripple effects of this have been enormous. And I think Maliha Lodhi is right. The world, even at the point that we have an actual agreed ceasefire, the world is going to look and feel different.
Well, let's push that forward a little bit, because I'm wondering about the view of the United States and its role in the world, because you spent a lot of time looking into what happened in Venezuela and featuring guests on your program from Venezuela after the U.S. invaded Venezuela, or rather the U.S. took Nicolas Maduro here to New York. What about what's next and the way that the U.S. is viewed? It's certainly driven MAGA apart in the U.S., but has it put other world leaders on notice?
Well, look, it's understandable that the United States, the Trump administration, but more broadly, other elements of the United States are going to want to portray this as a positive moment. But other parts of the world will look at the events of the last 7 weeks and think that we also saw the limits of U.S. military power, that with all its overwhelming military might, the United States had to send a high-level delegation to Pakistan to discuss things with the Americans. If you have overwhelming military power and other power, you don't need to have that kind of conversation.
So, Michelle, who feels emboldened then by this? And we've just got about 40 seconds.
Well, I think Xi Jinping and Vladimir Putin will both have learned interesting lessons. The international attention has shifted away from the Ukrainians, and that will have been of benefit to Vladimir Putin. So I think that, of course, it's grabbed the international headlines. And, no one really wants to mess with the United States and risk anything like this. But equally, I do think that we have seen limits to American power in these last 7 weeks.
Yeah, it definitely does feel like a different way forward for the world at large. Michelle, thank you so much.
Great to be with you.
Great to have you here once again. Michelle Hussein, host of the Michelle Hussein Show, a podcast from Bloomberg Weekend. She's also, as we mentioned, the author of Broken Threads, My Family from Empire to Independent. But be sure to check her out on the Bloomberg, on your podcast feed, and at Bloomberg.com.
Still seeing stocks higher. In the last 5 days, the S&P 500 is up 4.5%. Right now, the S&P up more than 1.1%. The Dow up 1.9%. The Nasdaq Composite up 1.4%. Stocks on the move next on Bloomberg Business Week.